They have confirmed their growth goal, rejecting the claims made by a short seller, and so we keep an eye on that one at the start of trade.
I'm clinging to summer. I'm trying to cling to summer. I see Keir Starmer's just arrived in Copenhagen. We'll come back to that moment in just a moment. For now, though, we focus on what is happening with the European equity market open. Let's show you some numbers, give you an idea of what is going on. The FTSE 100 hitting a record yesterday, and it looks like we're going to continue to move higher on that market. We'll watch what happens with the grocery stocks today. We're also going to watch what happens with some of the defence names. Keep an eye on names like Rolls-Royce today, BAE Systems. Both could be interesting. Elsewhere, we'll wait and see what happens. We'll see what happens on the DAX today. There is an AI theme also running through these markets too, which is worth paying attention to. There's a lot of kind of different factors that you need to focus on. Clearly, obviously, what is happening in the bond market will have an influence on what we saw overnight in Japan, and what happens in the United States a little bit later on will be significant. But for the moment, looks like the European market is doing pretty well, and the CAC 40 in particular, out of the gate strongly, up by 0.7%, Chrissy.
Absolutely. It feels like, the party just continues, and it is a tech theme, to your point, Guy, because I'm looking at the biggest index contributors. It's a lot of what's in your core six, if you will. ASML, for example, Novo Nordisk, Schneider Electric, AstraZeneca, tech and healthcare seem to be the real drivers of today's session. But if you look at the screen right now, there isn't much that's in the red today. So, Anna, again, the party continues.
Yeah, absolutely. Only, 5 sectors in negative territory. Utilities is the worst performer. So does that give you a sort of broadly risk-on feel, at least at the margin? Autos and auto parts, the best performer. Stellantis, there was some news out of Stellantis, I think, wasn't there? Just yesterday. Yeah. Ferrari up by 3%, Stellantis up by over 4%. Valeo not doing too badly. So that's the movement at the upside. Technology also trading higher along with healthcare, so that one has turned around. But ASM International, up by more than 4% this morning, and ASML also up pretty strongly.
417 stocks up, 155 down. This is a market that's definitely on the front foot this morning. And as you say, it is the kind of the heavyweights that are driving that. The market does seem to be moving away from some of the more defensive names. Look at this. British American Tobacco is the biggest drag. Iberdrola, National Grid, Unilever. These are the kind of the more defensive end of the market. That is where we're not seeing maybe some of the strength coming through. Some of the energy names are a little bit weaker as well. But it is a continuation of yesterday's move in healthcare. Healthcare stocks are strong. You're seeing a move to the upside in the tech space, and that pharma story is there. We mentioned what's happening with the energy story. Siemens Energy also rising as well. This is a really positive mix of stocks here in terms of stocks that are moving on the upside. Luxury is also on the front foot as well. Is that the
Bruno Cucinelli story?
Well, it's been Bruno Cucinelli has been hit really hard of late as a result of some of the allegations that have been made. So, yeah, I'm not sure it's more to do with what's happening with the arrival of autumn and maybe more to do with the unwind of that story.
Bask in the glory of the green on the screen. Let's bring in some analysis here who can give us a better idea of what's going on. Remy Olu-Piton, head of multi-asset growth and income over at Schroders, joins us around the table. Pleasure to see you. Good morning. Does the party continue?
Well, the market's flushed with liquidity. And so, as a consequence, the path of least resistance is for markets to continue rising. So we have liquidity globally, both in the US, in Asia, and investors need to buy.
What gets in the way of that? We're in the fourth quarter. We're still expecting a lot of the geopolitical threats to surface. We are day 2 of a U.S. shutdown. There's fiscal debt worries on this side of Europe. The list goes on and on in terms of the worries. Does any of it matter going into year end?
I mean, the key thing is that we don't get a growth shock in the US. Now, ADP yesterday was a little bit concerning, but the markets decided to look through that. As we move into the fourth quarter, particularly the month of November, we will start to get more with regards to the labor market. And so right now, investors believe that it is just a softening. If we do get a big shock, a big negative print on payrolls, then that could derail this party that you mentioned.
And that's the difference between stocks going higher and lower, maybe, Remy, because if it's just a softening, the market assumes Fed cuts, that bad news becomes good news and stocks go higher. So what does it take for that story to become more definitively negative because it's a judgment on the state of the US economy and the jobs?
Exactly. I mean, right now, there is a view that the labour market data is mixed. It's unbelievable. But if we continue to see material weakness and really move into negative territory, then investors will pay attention. That means there's something more sinister happening.
Now, you upgraded recently US stocks, and that was partly to do with the Fed's reaction function. Is that because you're just assuming that the Fed will be more willing to backstop the market with rate cuts?
Absolutely.
That's not their primary motive.
Absolutely, good cuts, because one of the key things that the Fed mentioned is that monetary policy in the US is tight. And so if we do see a loosening in monetary policy with the data okay, and that is crucial that the data is okay and the economy is resilient, this is a fantastic environment for buying stocks.
What should I be buying that others aren't at the moment? Like, if I want to diversify my portfolio, everybody's bought gold, everybody's bought US stocks, even the FTSE 100 hit a record yesterday. Where are you looking for the outperformance that I can generate in this market? Or is this just a crowd-following story? FOMO, just everybody keep buying, it's liquidity-driven, we're disassociating ourselves with fundamentals. How do I differentiate myself, my portfolio, from what everybody else is doing at the moment?
I mean, from a multi-asset point of view and looking across asset at the top-down level, we think emerging markets is a very interesting area. Avoided for a long time. We have the dollar weakening, and we do believe it's a structural weakening right now. This is very positive for EM, particularly Asia. Now, markets in China, particularly Chinese tech companies, are very cheap relative to the US, and we think that actually there is a catch-up story there.
So I've been thinking about this trade, and what I can't... Does it all happen sort of neatly and nicely? Do people take money out of the US markets and just put it to work in emerging markets? Because that feels like that feels like nice and easy and neat and tidy. If the US market goes down, does it drag the rest of the world down?
It will drag the rest of the world down, but I think what's different to the past is the magnitude of the drag down. And so what we're arguing right now is that if the US goes down, unfortunately, everywhere else will go down.
Right.
But the US now has a much larger beta because it will be driving that downside.
Okay.
The benefit of having you on the program for many reasons, but one of them is that you're looking multi-asset. We've got one eye firmly on a fixed income market that is kind of range bound lately. I'm looking at 410 on the 10-year. What is the impact of 4% yield on a US 10-year on stocks? And is it the same impact as 3.5%?
A 4% yield on the US 10-year is a relief for stocks, definitely, because we were discussing 5% at the start of this year. So that is a big relief. 3.5%, what would get us to 3.5%, in our opinion, would be a growth shock. So that might be a bad scenario. But 4% is a very comfortable scenario. However, what you are seeing is a lack of demand for those bonds, despite the fact that we're at 4%. Investors want more, and that's why gold is doing well.
Yeah, and you don't see us getting that severe a growth shock, so you don't see yields getting that low, I think, Remy, but you do like gold. So we just carry on with more of the same. Stocks higher, gold higher. Do those, from your multi-asset perspective, do those things fit together? The fact that we have gold at record highs and stocks at record highs?
They do fit together temporarily, but they are giving us a sign that something's not quite right. I think what we need to focus on is inflation, and that is why investors are not buying into bonds right now. There is a view that, for now, we have this benign environment. But what are we going to look at in 2026? If the Fed is cutting because the economy is okay, surely this means inflation is going to come back. So as investors, we need to start looking for real assets. And that's why you are seeing that demand for gold. Unfortunately, other commodities are not moving with it. We think that once we get that sign that inflation is coming back, perhaps other commodities will wake up. Perhaps energy may also join that party, but that's definitely something we need to think
You don't think gold's
about.
at an extreme level at the moment? You think it can go higher?
I'm struggling to evaluate, to give you a level for gold, but the momentum is strong and the trend is strong. And what is different this time round is that we are questioning the role of bonds. And so the only alternative for that is commodities like gold. So it can definitely go higher, in our opinion.
Okay.
Do you go to, ultimately, in terms of playing gold, do you just do the physical commodity? Do you do the ETF, GLD, or is it looking at ways of either playing international bonds or sovereign bonds based on holdings from central banks? Is it mining stocks? Is there a second derivative play from the physical commodity?
I think the second derivative play is very interesting today, and that gives you a very, from a capital efficient point of view, for investors that can, the second derivative by owning gold equities provides significantly more upside. And one could argue that a lot of those companies are trading at a very attractive multiple relative to the price of gold. But not all investors are able to do that. So primary is the bullion, and silver is also interesting right now. Again, that's a little behind gold, so that could also continue to do well. But for investors that can, gold equities, mining stocks, absolutely.
And Remy, you're not too excited by European stocks right now. And I mean, some people are nervous about US valuations, diversifying a little bit into Europe, given what Germany is doing, all that spending taking place fiscally. But you're not all that convinced.
I think there are some areas in Europe that's still very interesting. For example, the banks. We believe that with the yield curve staying quite steep, the banks can continue to do well. But the vast majority of the European equity market is quite challenging. Right now, Europe is playing catch-up because for some reason, European equities paused in terms of outperformance around the summer. So there was a summer lull in Europe. And so there is a catch-up play, particularly around the defense stocks. So there are some really interesting themes within Europe, banks, defense stocks. But broadly speaking, the entire European complex, I think that if we're comparing apples with apples, there are more interesting themes outside of Europe.
It's great to see you. Thanks for stopping by to see us. Covered a lot of ground this morning. Remy Pitan, Head of Multi-Asset Growth and Income over at Schroders. Core 6 looks a little like this morning. Let's take a look at some numbers and figure out what is happening. Just remember that there are some XDs in the market today. I misspoke about BAT. It's gone XD today. That is one of the reasons why it is softer. But elsewhere we see strength. We see strength in the pharmaceutical space. Look at what is happening with Novo this morning. LVMH is up quite strongly. The defense space is up. Tech is up. Even names like Nestle are tracking a little bit higher. I think we're off our highs, but there's plenty to focus on this morning for Chloe Mele.
Good morning, guys. Let's start with the chip sector this morning. And it's up across the board. We've got this wall of green for Infineon, SM, STMicro, and ASML because of some positive news flow linked to AI investment, including Asian chip companies signing a supply agreement with OpenAI's Stargate project, as well as news of investment from Intel and Western Digital as well. So there seems to be this rising momentum, rising investment in that sector, and there's really driving the shares across that semiconductor industry in Europe this morning. Moving on to luxury, where Brunello Cucinelli is up, and that is because it reaffirmed its growth target. It also reported a jump in sales, and it denied allegations made by a short seller that it was still operating in Russia despite sanctions and despite the fact that it had said it was no longer operating there. So it seemed that investors are quite positive on all of this, on the denial of allegations, as well as the positive earnings this morning. Moving on to Germany, where Siemens is also up, and Siemens Healthineers as well, on the back of reports that that Siemens is exploring a spin-off of its majority stake in Siemens Healthineers and kind of refocusing on being an industrial tech company rather than this really diversified conglomerate that it is at the moment. So a little bit of positive movement on the back of that this morning. Moving on to Novo Nordisk, that was upgraded to a buy rating at HSBC. HSBC said that the company was now turning a corner and that its direct-to-consumer channel would really help with that. And that is driving the shares up 3% this morning. And finally, another movement for positive movement for Stellantis, which is also up 6.4% this morning after getting upgraded at banker Akros to a buy rating as well, after a little bit of weakness for the car maker.
Chloe, thank you. Chloe Melly from our equities team. We are monitoring what is happening over in Copenhagen. Of course, we saw European Union leaders meeting there yesterday. Today, the meeting widens to that wider cooperative group around Europe set up by the French president. And so we're watching to see, we saw Keir Starmer arriving just moments ago, other European leaders currently passing by the world's media and giving their thoughts on, no doubt, the state of European defence, which is the big topic of conversation over in Copenhagen.
Absolutely, and defence stocks are, so we've seen a really sort of mixed performance so far this week from defence stocks. In the run-up to this meeting, we saw actually some performance yesterday, actually some weakness today. We're bouncing back quite strongly. Names like Rheinmetall are doing really well, and the kind of the technology story that you have to follow to keep up to speed with what is happening here, the advancements in drone technology, in missile defence technology, really, it is fascinating to watch what is happening and how it feeds into the European defence space and the global defence space. There's concerns now that Patriot missiles are not hitting some of the ballistic missiles that are being fired at Ukraine at the moment. How does that feed back into some of the US defence names? So much is the technology in the space is moving really quickly. The AI story in this as well is moving incredibly quickly.
So the technology moves really quickly. The politics moves pretty quickly, actually, for Europe. I mean, our guest coming up in just minutes, in fact, from Alpha Value, argues that we are at a tipping point. This summit, what is happening around Copenhagen, represents something of a tipping point for actually realising some of that defence investment by Europe.
Absolutely, and I think from to your point, political point of view over in the States, a sentiment shift as well in just the last 7 days from the White House in terms of just how tough they want to be on Russia and just how much support they're willing to give to Ukraine.
Yeah, certainly something we will watch as it evolves. Coming up on the programme, we check in on Volvo after its sales update and also look to the Chinese EVs, which are competing with European car makers for market share. Some really interesting stats out on hybrid sales in Europe. That's next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. Watching the opening trade. We are 18 minutes into the session, and as you can see, Europe and its equities are on the front foot this morning. There's a lot of green out there. Tech is driving it. Pharmaceuticals continue to have a very strong performance. We are watching what is happening in the auto space as well. Shares in Volvo Car trading a little higher. It's reporting a 1% rise in September sales, but sales of fully electric cars fell by 3%, which is interesting because actually the market feels like it's kind of actually gaining a little bit of traction at the moment, and the hybrid story is really gaining quite a lot of traction too, and you're certainly seeing the car sales numbers there reflected with some of the Chinese deliveries looking really good. Let's pull it all together. There's a lot to talk about in the global auto space. I barely know where to begin, therefore, with Craig Trudell, our autos editor. Is there anything useful that comes out of the Volvo numbers this morning that tells us what the bigger picture is?
Yeah, those headline numbers you talked about, 1-3% change, doesn't look on the surface like a whole lot, but if you dig into the U.S., I actually think is probably the most interesting story for me, and it was consistent with what we heard from a lot of manufacturers yesterday, that a huge jump in fully electric vehicle sales, both for the month of September and the quarter as a whole, with American consumers rushing to take advantage of the $7,500 tax credit before it goes away. A 52% increase for Volvo, pretty substantial, and they've more than doubled fully electric vehicle sales in the U.S. That is off somewhat of a low base, and I would also expect to see those numbers really sort of flip. We're hearing a lot of manufacturers say they're going to try and sort of put off the pain by extending some deals to sort of, I guess, take on some of the burden from the federal government stepping back and no longer supporting that segment.
Let me ask you about the role of Chinese manufacturers right now then, Craig, because we've been watching them get a pretty small percentage share here in Europe, and obviously the politics has been playing out pretty quickly in terms of making that more difficult for them. But then looking at the hybrid market specifically, they're above, 9% in terms of the European hybrid market now. This is gaining momentum.
Yeah, and there was a lot of sort of theorizing that this was going to be a sort of bridge technology, right? And that it's turning out that bridge is going to be much longer than I think a lot of the manufacturers reckoned. Yeah. I think this is also a consequence of sort of loopholes in the trade policy, where we saw Brussels say, the Chinese manufacturers are coming in here with battery electric vehicles that are substantially, sort of funded or supported by the government. They left open an opportunity for these manufacturers to come in with plug-in hybrids as opposed to battery electric vehicles, and those plug-in hybrids are not subject to the tariffs that were put in place last year. And so we've seen the battery electric vehicle sales actually hold up decently despite those tariffs, but the hybrids have not been subject to higher duties, and they've really taken off in the last year.
You see a lot of BYDs. I'm starting to see BYDs in London in a way
everywhere,
that I've never seen. Just almost in the last few weeks, they're starting to show up in quite a big way.
You got to pay attention to the cars in London. I just avoid them. Talk to us about Tesla.
It's going to be a pretty interesting set of numbers later today. I think the question will be with the U.S. support going away, just how lasting a potential increase that we could see for the quarter. I think the consensus that we still have is for a small decline, but a lot of sell-side analysts toward the very end of the month were coming out and sort of projecting actually a bit of an increase from a year ago. I think it's pretty sort of widely held that the expectation for the last quarter of the year being quite weak, and a sort of continuation of this trend of them having trouble with their sort of core business, even as they've talked about trying to bring a lower cost Model Y to market once these tax credits go away to kind of support their sales, particularly in the U.S., still their biggest market.
All right, Craig Trudell, Bloomberg's global autos editor, giving us a worldview of all things we need to know in the world of cars. We thank you so much. Let's go to another Bloomberg scoop. We've learned that ChatGPT maker OpenAI has completed a deal at a valuation of, get this, $500 billion. That's roughly around the market cap of Netflix, making it the world's most valuable startup Bloomberg's Valerie Titel is all over this story. Val, walk us through the details of the share sale.
Look, some positives for OpenAI in the details of the share sale. Not only, as you mentioned, they notched yet another record for their valuation, this time reaching $500 billion. But the take-up of the secondary sale was actually less than what OpenAI said that they were going to allow. They basically offered employees up to $10 billion of liquidity in their shares if they wanted it. Employees only took up $6.6 billion. So to me, this really shows that employees at OpenAI are really convinced in the long-term picture of the company. Now, remember, they offered this share sale as a way to keep and retain employees and maybe prevent them from talking to Meta and those 100 million plus deal offers that they were offering AI researchers. But I think this does show that at least employees at OpenAI are convinced in the long-term picture.
It was previously valued at $300 billion. When? Like just a couple of months ago?
End of March.
Yeah. So the rate is pretty extraordinary in terms of what we're seeing here.
Yeah, so that implies around, a sub 70% gain from the end of March until now. But if you compare that to how NVIDIA has actually done since then, NVIDIA has gained 80%. Right. So it is basically marking itself to market when it comes to this
NVIDIA
AI trade.
Money,
yeah, guys still in search of the revenues. Yes, but essentially it's not a bombastic valuation that they announced today in the share sale. Yeah, even if it is still a private company. Now, Sam Altman is heading to Taiwan today. He was recently in South Korea, and South Korean stocks went up 3%, Valerie. So what do we conclude? Well, look, the discussions today could potentially be more impactful for OpenAI's future. He is reported to be meeting with TSMC, the world's largest and most advanced chip design manufacturer, and with Foxconn, who is the world's largest contract manufacturer when it comes to electronics. A key discussion point, which might be on the table, is OpenAI's own chip design ambitions. We know this is something they've been thinking about. Perhaps it would pave a way for them to be less reliant on NVIDIA when it comes to AI accelerators. So these discussions...
Did NVIDIA just invest lots of money in this business?
Well, essentially, they need all the help they can get. I think that's what the deals with South Korea showed as well. But they're looking for other ways to maybe cut the reliance on NVIDIA. And today's discussions with TSMC and Foxconn might be paving the way for them to do that. Valerie, thank you very much. Bloomberg's Valerie Titel with the latest on technology. We are going to be heading to Copenhagen shortly. We're still seeing European leaders arriving for this expanded European leaders meeting. Yesterday it was the European Union. Today it's this wider group. He's not speaking now, but we just saw NATO's Mark Rutte at the podium, at the microphones with all of the assembled press. And we're going to have a conversation about defence and where the European story goes from here. There's been a lot of talk about a drone wall. I'm interested to get the analyst at Alpha Value's view on whether that really is a thing or if this is just sort of nice slogan to have, whether that really means anything.
But the real shift here, there's this... I'm starting to see articles being written about whether or not Europe just needs to recognise that it is at war. The whole of Europe is at war, and that is the narrative that we now need to be plugging in these kinds of meetings into, that Europe is now thinking about this on a completely different footing to where it was before, even just a few months ago. But also the fact that Trump, there's a story floating around as well, I think it was in the Journal earlier, talking about the fact that long-range missiles can now be used. That is a big step forward in terms of how this conflict could develop. If you're striking much further in, if you're going offensive into Russia from a Ukrainian point of view, in a more meaningful way, that's going to change the narrative.
And you put that question to Francisco Blanch earlier in terms of energy infrastructure as well. But from a political point of view, they've done a full 360 in terms of coming right back to where the Biden administration was on their stance on Ukraine.
Well, we'll see. Yeah, we'll see how that stance evolves and think about that in the weeks ahead. We'll head back to Copenhagen shortly. We will also get analysis on the defence sector. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. Some slight underperformance for the FTSE 100, unchanged there. We'll give it to them. They're barely in the green. We'll call it a win. The outperformer this morning, I thought was going to be the DAX, given the defense story, given the tech story. It's actually the CAC Huron higher by 0.8%, guy.
Luxury's on the front foot this morning. Farmers on the front foot. Banks are on the front foot. All of that driving the CAC Huron. FTSE 100 hit a record yesterday. We'll give it a pass maybe today. Let's talk about what we're seeing in the market today. Definitely the balance is favouring the winners this morning. 403 up, 186 down, 2-1. You've got a really strong volume story that is backing all this up as well. Let's talk about some of the 52-week highs and what we're seeing there. Hochtief. Let's talk about what is going on there. A double upgrade at Bank of America being well received by the market. That stock is up by nearly 6% this morning. Kering, Gucci just had its best quarter ever. Luca De Maio, the new boss over at that business, is starting to gain traction. Is it too early to tell whether or not that traction ultimately sticks? Well, at the moment, the market continues to like the story. Kering is up by 1.6%. The luxury story is on the front foot this morning. We are seeing gains across the piece when it comes to that. Just keep an eye on Valentino. ASML. We are obviously seeing gains in tech. We've been talking about the AI story this morning. ASML is up very nicely on the back of what we're seeing in the chip space, up by nearly 5%. So some really interesting 52-week highs today, Anna.
Yes, absolutely. Interesting 52-week highs and interesting news flow surrounding the United States. Let's talk about the shutdown. President Trump says he plans to use the shutdown to fire federal workers. This as the White House holds billions in funding for projects in Democratic states. Sources say House lawmakers have been told that some agencies will terminate workers within 1 or 2 days, although it's unclear which positions or agencies would be affected. The U.S. Supreme Court has refused to allow President Trump to immediately fire Fed Governor Lisa Cook while she sues to keep her job. The decision deals a setback to President Trump's efforts to exert more control over the central bank. The order means that Cook can remain in her position until the justices rule. That will take place after the hearing of arguments, which is scheduled for January. And European Union leaders are building momentum for a plan to loan Ukraine 140 billion euros from immobilized Russian central bank assets. The proposal has gained backing from several EU nations and comes as European political community leaders meet in Copenhagen today. And Chrissy, that is where our coverage heads next.
Absolutely. For more on that European defense story, we're joined by our very own Oliver Crook, who, of course, is live on the scene. Ollie, what can we expect from the leaders' meeting?
Yeah, so listen, Credit, I won't go into all of the nitty-gritty about the sort of broad strokes of how the Europeans are looking to unlock that 140 billion euros of assets that are being held currently in Belgium. Just to say that basically this is an idea that has got a lot more momentum now, and it seems to be on this question where there is a will, there is a way, and there is a will chiefly from the Chancellor of Germany, Friedrich Merz, who came out last week basically in favor of trying to mobilize these assets, trying to monetize them through some sort of inventive financial engineering so that it's not actually stealing the assets, so there's not sort of a question about sort of private property, which would put into question the reserve status of the euro and a lot of but it seems that they're able to find a way to work around it, and that was really one of the main points that they were talking about yesterday. That's going to be kicked down the road to the next 2 weeks in order to get a sort of finalized approach to this at a formal leaders meeting in a couple weeks' time. But then the other question is this roadmap, defense readiness that the Europeans have been talking about for 2030, and this has to do with the European Commission's proposal on how to get the European continent as a whole ready to basically fight Russia if they have to in the next 5 years. And in order to do that, you need to have, yes, the spending, but there also needs to be concrete plans, concrete milestones that money is spent, and sort of collective projects, and really thinking conceptually about European defense, not as the defense of Poland, of Italy, of France, of Portugal, but really the European continent as a whole. And that is really where the European Commission would like to take the thinking, and taking the thinking into the concrete is the next step. And one of those things that sort of got a lot of attention is this idea of the drone wall. This is something that we've been talking a lot about over the last couple of years, but really has gained momentum over the last couple of days in meetings here. And what it actually means clear. So I spoke to the CEO of Kongsberg, the Norwegian defense giant, who actually would be participating in some of these things, about what exactly this drone wall is and how it would work. Have a listen to what he had to say.
The drone wall is a part of a bigger air shield defense. Kongsberg are into the air shield defense. We are having our air defense systems, which is a medium range today. We are expanding that, ambition to expand that to the long range. I guess it's also quite, recent what we have seen here in Denmark and in Copenhagen. Yeah. But it's for me, it's a part of the entire air defense system.
Mm-hmm. So it's one thing hearing from all of these leaders and hearing all the rhetoric around it and actually speaking to the CEOs who are going to be really responsible for developing these systems and getting the orders. There's a little bit more skepticism and a little bit of concern that basically they don't have all of the order certainty that they require, and that the Europeans are not working yet totally in unison, because this is an air system that, yes, will be going across several countries. They need to be interoperable. They need to be able to function with one another. And of course, joint procurement is one of the ways to unlock all the benefits of the scale that you get for the Europeans. We're not quite there yet, but that is the roadmap for 2030 that the Commission has just put out, and that is where the work for the European leaders is going to continue over the next couple of weeks.
Oliver, thanks very much. Bloomberg's Oliver Crook in Copenhagen. Let's stick with the defence theme. We're joined by Simon Hussain, equity analyst at Alpha Value. Simon, nice to have you with us. Thank you so much for giving us your time. I want to start by asking how much of a tipping point this is, these meetings in Copenhagen, this push towards actually turning some spending commitments into reality. That's how you describe this, as a tipping point. Why so? Why does this take on such significance?
I mean, first of all, thank you so much for having me today. So I feel like Copenhagen is really a continuation of what we have seen over the past couple of years. We really see that Europe has waken up to the reality that defense is no longer optional. And the political tone here in Copenhagen is really urgency. So the matter is really about Europe defense cooperation, support to Ukraine, as well as accelerating capabilities and deliveries.
Okay, so things got more real. You also referenced, Simon, that Europe needs to become a combat-ready defense economy. How far away is Europe from being that now?
So right now, European defense contractors are still lagging behind in terms of defense. We are not yet there. So this is the reason why European budgets is increasing a lot. So we were talking about 251 billion euros back in 2021. Now we are at 343 billion euros, and we will move from 2% to 5% of GDP spending. So this could mean 1 trillion euros in spending for defense. With 300 billion euros that will go directly into procurement. And I think it is crucial for companies to have this budget in order to ramp up and scale up quickly to meet the demand.
Good morning, it's Guy. There was a story yesterday suggesting that the German government, led by Friedrich Merz, wants to maintain control of how this spend happens, rather than letting it happen centrally at a Brussels level. Who do you think is going to end up determining how Europe spends money, where it gets spent? Who is going to control the purse strings when it comes to deciding what happens here?
So I believe there is more and more cooperation at the European level for sure, with the EU Council, the EDA, and every organization that are trying really to help organize and cooperate in terms of procurement programs. But at the end of the day, it's really the national governments that and the treasuries that are signing the budgets, with defense ministries setting the requirements. So, I mean, of course, there are some guidance at the EU level, at the NATO level as well, but at the end of the day, it's really national governments who decide.
Saima, it's Kriti in London. Is there a question of valuations when it comes to defense? It feels like defense in Europe is akin to technology mega cap stocks in the States. How much investment can that really attract at these levels?
I mean, if you're looking at defense stocks, European defense stock valuation have rated a lot. So we've been, in alpha value coverage, we went from 11 times pre-war PE to more than 36 times now. But I feel like defense stocks are now considered more as growth stocks, as you mentioned, than classical industrial stock. And a metric which is more appropriate for growth stock would be PEG ratio, which is basically the PE divided by the forward-looking growth. And a lot of companies are still well below 2, which means that there is still a lot of room for upside going forward as contract materialize.
Saima, when we talk about that growth trajectory, though, defense companies, at least if you go by the roadmap you see in the States, so much of that revenue is tied to federal contracts. When you look at the government contracts being awarded, or at least even promised, but then also balancing that with some of the fiscal debt issues and the balance sheet issues, does that undermine the case for a sure thing that is defense?
I mean, of course, there's the risk that we don't have the actual budget. It's really an issue. But the thing is, the Ukraine war has really led to a paradigm shift for European countries, so they really need to focus on defense. So I believe that there will be inflow for defense companies. The budget will be there. I mean, it's a matter of time. Of course, execution will be key. The scalability, the ramp up, how much time it will take is really key. But I think the budget will be there, as Russia is seen as a threat for European country, and it really shows the urgency of the matter.
Can I just draw a parallel as well back to the technology story? When I talk to defense experts in Europe, they talk about the fact that there is a capability need, that we need to develop hardware, that we need to make sure that Europe has the capability to be able to defend itself. But they also talk about the gap that exists currently in AI and the technology that goes with that. And I'm just wondering where Europe sits in terms of its ability to develop that software, the technology that is going to be needed, that is so evidenced on a daily basis in terms of the conflict that Ukraine is fighting right now. How strong is Europe? Do we have the startups? Do we have the technology necessary to deliver not only the hardware we need, but the software we need in Europe?
I mean, of course, there's the risk that we don't have the actual budget. It's really an issue. But the thing is, the Ukraine war has really led to a paradigm shift for European countries, so they really need to focus on defense. So I believe that there will be inflow for defense companies. The budget will be there, as Russia is seen as a threat for European country, and it really shows the urgency of the matter.
Can I just draw a parallel as well back to the technology story? When I talk to defense experts in Europe, they talk about the fact that there is a capability need, that we need to develop hardware, that we need to make sure that Europe has the capability to be able to defend itself. How strong is Europe? Do we have the technology necessary to
I mean, it's a very good question. Actually, I feel like a lot of companies are still lagging behind. We're not at the level of American for sure. But there has been a lot of investment on research and development by many companies. We can mention Thales, which is developing AI-related software. We can mention BAE, as well as Leonardo. So they are all trying to have this AI-related software. So, I mean, cybersecurity, electronic warfare, and AI is really becoming important in today's warfare. And I feel like it's also interesting to include Ukrainian companies that have this know-how as well as the battlefield knowledge, so that we can like European company can really start to catch up with American peers.
All right, Saima Hussein, equity analyst over at Alpha Value, walking us through some of the dynamics in the defense space. We thank you so much. I want to switch to the UK, where it's being reported that the government is weighing a plan to exempt shares of newly listed companies from a tax on trading. According to the Financial Times, Chancellor Rachel Reeves could announce up to 3 years of relief from stamp duties for newly listed companies, all coming in her budget next month. The tax, of course, seen as a key drag on the City of London. Meanwhile, the chief executive of the London Stock Exchange says the flagship market is, quote, not for sale, even though it could have a willing buyer in rival Euronext, a conversation we had right here on this show. Julia Hoggett also made the case for investing in the UK. Take a listen.
You asked about mandation. For me, it's much more about saying if you want to be designated as a default pension scheme in the UK, then you should have a globally diversified portfolio, but not necessarily index weighted, which is not diversified because that basically means 70% of your money is in the US with a declining dollar right now. And actually, say 20-25% should be invested in UK assets of whatever description you have. Now, you can then opt out as a pensioner, get your full tax credit in the non-default scheme. But if you want to be in the default scheme, and the interesting thing is we've run scenarios on this, we've actually done a survey on this, or New Financial did. The average pensioner that was surveyed thought that 41% of their pension funds' equities were invested in the UK. It's about 4. Okay? 72% wanted the government to support their pension money going to invest in the companies that were the future that their kids would be employed by, simply put. And
so again, it's the story.
It's perceived as a political risk, but perversely, we have made choices in the last 25 years to actually create incentives to subsidize the cost of capital of the S&P 500, not the cost of capital of the FTSE 350. And most countries in the world look at us sideways. So I genuinely think that the thing that I'd love to see is the confidence to make that choice, to say, yes, we want Britain to be investing in itself again. And I'll say one thing, I have heard the argument, but there's nothing to buy here. Now, you just mentioned Revolut, okay? I see a remarkable number of entrepreneurs up and down this country doing remarkable, groundbreaking things every single day, you know? And I think if you look at it, the major pension funds in Canada, in Australia, the major endowments in the US, the sovereign wealth funds, where do they set up their first office to buy assets overseas? London.
Well, look, you've talked about remarkable fintechs, including your own, and overseas interest. We had the Euronext boss on Bloomberg TV saying that he might be interested in buying the LSE. It's easy to say it on Bloomberg TV. Have you actually had a knock on your door with an offer?
It's not for sale. No, look, I'll be very clear with you. It matters to me that I run the only primary exchange in the London Stock Exchange Group. That means I'm not in the slightest bit conflicted to be the biggest possible advocate for the health of the UK equity capital markets. And I operate in a group that has a market cap bigger than Euronext does. And I've seen what's happened to other exchanges in the group, because it's quite difficult to prioritize one when you own several.
London Stock Exchange CEO Julia Hoggett there speaking to Lizzie Burden. Coming up on the programme, we'll bring you the latest on the US government shutdown, with concerns over delayed data and potential firings looming over markets. Where does this story go next? This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. About 50 minutes into today's session, green on the screen across the board, except for right here in the UK. That was a flip dynamic yesterday. We saw the UK be the outperformer, down only 0.1% this morning. We'll see if in the rest of the trade if it all shakes out. In the meantime, we're of course digesting what is going on the other side of the Atlantic. Bloomberg has learned that the White House budget director is planning to swiftly dismiss federal workers within 1 to 2 days. Those comments coming from the press secretary, Caroline Leavitt. Joining me now, Bloomberg News desk editor Jill Deasy's. Jill, just walk us through the shutdown story. Is this a very quick, by the end of the week, the government is back up and running, or is this here to stay for a bit?
Yeah, I mean, Kriti, I think that's an open question at this point. So now Vice President J.D. Vance says he thinks the shutdown is going to be over quickly, but I think that depends on whether either side can kind of resolve some of these issues that they're looking at. So on the Republican side, they're obviously, they're starting to use sort of this pressure of either laying off federal workers or even targeting actually funding for programs, particularly in blue states, as maybe some levers that they can pull as they try to bring this to a close. They're trying to get more Democrats to vote with them. Ultimately, the Republicans really only need 8 Democrats from the Senate to actually come over so that they can pass that stopgap spending bill. During the last vote on Tuesday, I think they got 3, so they're really looking for maybe about 5 more. So that's where it looks like on the Republican side, maybe that's possible. But at the same time, you also have Democrats who are kind of digging in their heels and saying, look, we really want to address at least some of the concerns that they've brought. Key among those issues is health care. So I think that the main issue they're looking at is the idea of extending subsidies that would be expiring under Affordable Care Act premiums. So the idea that people's premiums may be going up if these subsidies aren't extended. That's one sort of wedge issue for the Democrats. I think ultimately ending the shutdown anytime soon kind of comes to whether they can actually reach some kind of an agreement, or again, ultimately, if those Republicans can pull more Democrats over to their point of view.
Let's talk about the pressure that the White House is putting on the Democrats to get this done. We're talking about hydrogen. We're talking about all kinds of things that are being used by this administration to put pressure on the Democrats. Just walk us through how big this is.
Yes, that's right. So it looks like what the administration is trying to do is ultimately target federal funding for certain programs. So now there's one looking at New York State. There's a couple of infrastructure projects in around New York City that have been, sort of pulled funding for. Ultimately, what we've heard from the administration is that this is due to what they've called DEI, so diversity, equity, and inclusion initiatives. But the timing around the shutdown and the fact that it would directly affect, constituents of, some people like Democratic Senator Chuck Schumer, I think kind of raises that question of whether that's really, again, one of those pressure points. And then the other thing that we're looking at is this idea of pulling federal funding for projects, renewable energy projects in states that voted for Kamala Harris in the last presidential election. So those are some of the pressure points that the White House seems to be using here. Again, I think whether that actually works, open question, but we'll see what happens and if ultimately they can kind of reach some kind of an agreement. But I do want to point out that what we're talking about here is really just a stopgap spending bill. I think all of this kind of debate ultimately could come up again in just a few matter of weeks, if not, by mid-November again.
All right, Bloomberg News desk editor Jill Deasy's walking us through the dynamics of Washington. I feel like the message is hold your horses, basically. We thank you so much. Plenty of day book data to keep an eye on. 10 a.m. Euro area unemployment is going to be hitting the Bloomberg terminal, but the read-through from the shutdown likely mean delayed U.S. data, as Jill was just mentioning. Jobless data, factory orders as well, all on the docket. Again, we'll see how spotty that actually comes. Some commentary, though, expected from the Federal Reserve. Lori Logan due to speak at about 3:30 p.m. UK time. And then at 5:30 p.m. UK time, some ECB speak as well. Villeroy and de Guindos due to hit the wire.
Yes. Interesting that the Fed doesn't shut down during a shutdown.
Essential services.
Right. Yes. Let's bring in Valerie Titel for more. Valerie, so it's likely we don't get the jobs data, but we had ADP yesterday. Looking at that now, a few hours on, does it seem like we overreacted? I mean, the market read a lot into that because it probably thought it won't get any more.
No, it definitely did. Definitely did read a lot into it, given we had the biggest move in the front end that we've seen in around 4 weeks' time since the previous non-farm payrolls report. But I think it was just more evidence that the labor market is on a weakening trend. And honestly, it seemed like that was enough for the market to really be confident of an October Fed cut, regardless if we get any more data.
The market really wants a rate cut. And basically it's hanging its hat on anything, but how many and how far do they go? And without the data, how convinced can we be that we can extrapolate? Maybe we get one more. But without any data at the moment, it gets really foggy beyond that kind of next rate cut.
Well, it's hard to see the Fed at least becoming incrementally more dovish in their language at the end of October without any more incremental data for them to rely on. But when I say that, the market is really keen to price this in. We saw it yesterday with the reaction to ADP. But remember, we still get some sorts of data coming out. I know we don't get the big ones. We don't get NFP or CPI, or likely not CPI unless it reopens.
Like a long way away,
it does, yes. Yeah. But we'll still get things like we got yesterday ISM manufacturing, we have ISM services on Friday. So we still get some sort of hints for how the month has been developing.
I mean, negative ADP, we just don't get it very often. Just looking back, a few months ago we did, and a couple of years ago we did, but these are just, 1 month here and there.
And now we've had 2 consecutive months. If you take the revisions into account, the ADP is now contracted for 2 months running. And there was decent breadth of weakness in yesterday's report. 70% of industries reported declining hiring in yesterday's print.
But bad news is good news.
For the equity market, it is at the moment.
Valerie, at the moment. Keywords, Valerie Titel. Tomorrow we're going to bring you a conversation with the Chief Executive Officer of Goldman Sachs. Tom McKenzie is going to be speaking to David Solomon about the impact that AI is having on infrastructure in the financial services sector. It's a conversation you're not going to want to miss. This is Bloomberg.
Middle East, and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The White House plans to use the shutdown to fire federal workers. Meanwhile, the Fed's Austin Goolsbee warns the delay to data will make it harder for rate setters to interpret the economy. OpenAI's valuation rises to a record $500 billion after a share sale, overtaking SpaceX as the world's most valuable startup. Plus, tech stocks drive global markets to fresh highs as stocks shrug off the U.S. government shutdown. So there is quite a lot going on in the market. Certainly, there is a move in treasuries, but also a dollar. Look, that's spurred by private payrolls data that reinforce bets that the Fed will lower rates this month. Now, the other story, of course, is what's happening with the tech stocks. S&P futures gaining some 0.1%. Again, technology stocks driving these global indices overall to fresh highs. There does seem to be that fresh deal catapulting OpenAI to the world's most valuable startup, and that's just bolstering optimism from AI full stop. Euro dollar 117.51. I have gold at 3,867. Let's also take a look at the European markets map. Now, I am expecting a little bit of move when it comes to the technology stocks. The CAC 40 and the DAX getting some, between 0.7 and 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bloomberg has learned that White House budget director is planning to swiftly dismiss federal workers within 1 to 2 days as the government shutdown enters its second day.
We are going to have to lay some people off if the shutdown continues. We don't like that. We don't necessarily want to do it, but we're going to do what we have to keep the American people's essential services continuing to run.
This comes as the Trump administration targets Senate Democratic leader Chuck Schumer and House Democratic leader Hakeem Jeffries, both of whom represent New York and Congress, by halting $18 billion in federal funding for infrastructure projects in New York City. Now let's bring in Bloomberg's Valerie Teitel for more. Val, how are the markets reacting to this? Not much.
Not much. Frankly, what the market told us yesterday is that a government shutdown is bullish for global equity markets. We had many global indices notching record highs in yesterday's session, adding to them today, whether that's the FTSE 100, the Euro Stoxx 50, or over in the U.S., the S&P 500 and the NASDAQ, both notching record highs, and the enthusiasm doesn't end there. MSCI Asia Pacific also notched another record high in the Asia session. So global stocks at record highs amidst this government shutdown. Was all really down to the weak ADP data yesterday that really had cemented in traders' minds that this Fed cut in October is well into place. We saw a decent rally when it comes to two-year yields in yesterday's session, Francine. The biggest rally in the front end that we've seen for over a month now. Those two-year yields moving some 7 basis points lower in the session yesterday. The ADP figure, the market is really hanging their hats on it, given we won't have jobless claims, we won't have NFP this week to give us a better steer on the labor market. But the breadth of the weakness in the ADP report was quite deep. Over 70% of industries said that they were reducing their hiring. Now, when it comes to the data that is at risk of delay, jobless claims today we are not going to get from the BLS. Some individual states will still be reporting their numbers, but really the market's attention is on NFP. The BLS still needs a few days to finish this survey. So even if the government shutdown ends next week, it's unlikely we'd get this data straight away. We'd be waiting for an update from the BLS on their rescheduled date.
Valerie, thank you. Valerie Teitel, with a look at the U.S. data there. Now, we're just getting also some breaking news out of Monte Paschi. Now, Banca Monte Paschi's purchase of Mediobanca could mark the start, we understand, of a new wave of consolidation for Italy's banking sector. This is according to the chief executive, Luigi Lovaglio, who's come on the program a couple of weeks ago, now speaking to our colleagues over in Rome. And out of that, the main thing is that basically he will be much more aggressive, or he seems to have appetite for more. It could mark the start of a new wave of consolidation for Italy's banking sector. We don't know what he'll go after afterwards or how much he'll pay for it, but certainly it's an interesting development. This is according to the Mediobanca CEO speaking in an interview for Bloomberg's Italian language podcast, Quello che I soldi non dicono. Now, as Val was saying, the U.S. shutdown means markets having to contend with a lack of official economic data from the world's largest economy. The Chicago Fed President, Austin Goolsbee, says this poses a problem for policymakers.
The data dogs are howling because, we're not getting our usual supply of information. I will say, I consider the Bureau of Labor Statistics job data to be the absolutely best data source on jobs and statistics in the entire world. If we aren't going to have those, it's problematic. That said, the Chicago Fed has come out with some new job market indicators, and we'll be releasing them tomorrow.
Well, joining us now, Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management. Kim, as always, thank you so much for joining us. I mean, there does seem to be like a full conviction in the markets that the Fed is ready to cut, full stop.
Yeah, I think even, with this data not being available at the moment, I think there is enough in the data, the weakness in the labor market, to see the Fed, on our view, to cut 3 more times into the first quarter of next year. I think if you really dig into the labor market data, it's not just the AAI structural story. It's not just the lower immigration story. You are seeing that cyclical demand weakness. And I think the clearest part to this puzzle is wage growth. And there is a lack of wage growth in the U.S. If you are in the U.S., the difference between your wage growth of a job stayer, a job switcher, that's no longer any difference. And surveys keep pointing to wage growth, more weakness in wage growth to come. So we think there is enough for the Fed to cut, and we don't see the inflation side of the mandate being a challenge to these 3 cuts either.
I mean, what's the right way to think about it? Go big and then see what the effect is, or actually gradual cuts?
I still think it's gradual risk management cuts. You do still have upside risk to inflation, although we don't think it's going to stop that gradual mantra. But I think to do something faster than that, you are going to have to see a negative payroll print, unemployment rising at the same time, and getting claims rising as well. And on the inflation side, we see pretty clear disinflation coming in services from rent, from wage growth. But we are only about 1/3 of the tariff pass-through into goods. So there's still 2/3 to come. So there is going to be upside pressure, but the magnitude has been smaller than expected. I think businesses have learned to adapt in different ways. Inflation expectations are still anchored. That then gives the Fed enough to cut gradually, but not more than that.
When you look, Kim, at some of the biggest, hottest debate is basically what inflation does next year. Does that change the thinking of Jay Powell?
Yeah, so this was actually the bigger part of our debate at our recent investment quarterly, what the inflection point for the U.S. economy is going to be next year. I think for the first quarter, the balance of risk to growth is going to be more balanced. So the Fed would have cut a few times. You then get stimulus from this One Big Beautiful Bill Act, hit the economy as well. Then the question of whether that is actually net positive for the economy or just an offset to the tariff-related weakness will depend on just how weak the economy becomes in Q4 this year. But then if you look even further ahead as well, we're almost a year away from the next U.S. midterm elections, believe it or not. And the question for us is then, are you going to get more fiscal stimulus from the U.S. administration then, maybe some deregulation, at the same time that the Fed chair is probably going to be more dovish?
Kim, but at the same time, earnings are actually not too badly at all. So we have chief executives sometimes like sitting on their hands saying, look, I'm not sure what I'm investing into, so let me not invest the 100 million, 200 that I was going to have to spend. But how do you match up the two, like what the economy is doing and actually earnings being more than fine?
Yeah, I think it's the classic K-shaped economy. I think earnings are looking good because firms are cutting costs. They're not hiring. We see that in the labor market data. But at the same time, they are really increasing capex of investments. And that K-shaped economy is just going to continue, I think. But again, the Fed's mandate is labor market, it's inflation. So I think the labor market weakness will still lead the Fed to cut.
Kim, let's also talk, of course, about some of the tech stocks. Bloomberg has learned that ChatGPT maker OpenAI has completed a deal at a valuation of $500 billion, making it the world's most valuable startup. Now, for more, let's bring in our Bloomberg's deal reporter, Manuel Baigorri. Manuel, so good morning, first of all. Give us the details of that share sale.
Hello, Francine. Yeah, fantastic deal, right? A remarkable valuation, $500 billion, becoming the world's largest startup right there. I mean, we've seen a number of secondary transactions in some of the most fashionable tech companies these days. There is a lot of pent-up demand from investors to jump into the bandwagon. And at the same time, these companies need big liquidity events to try to reward and retain talent. And that's what we're seeing right now, right? Like current and former employees sold $6.6 billion worth of stock in OpenAI. And that provides liquidity to them. It's also a way not only to reward some of that, but also to try to retain some of that talent. Let's bear in mind that this has become one of the most competitive fields out there, and companies are really pushing hard to retain employees. We've seen the likes of Meta, for instance, poaching company employees, from other rivals as well. So that continues to be a trend. And at the same time, companies like OpenAI are deploying a lot of capital into new products, into infrastructure, and so on. So they need a lot of investments to keep up growth pace as well.
Manuel, thank you so much. Bloomberg's deals reporter there, Manuel Baigorri. Now, Bloomberg has also learned that Apple has hit pause on a plan to overhaul to its Vision Pro headset. Now, it's said to be redirecting its resources towards developing smart glasses to rival product from Meta. Sources say Apple had been preparing a cheaper and lighter variant of the headset for release in 2027, but that those plans have now been shelved. We're back with Kim Crawford. Kim, I know you're global rates portfolio manager, so you don't look at some of these earnings or some of these quirks, but is there any, I don't know how quickly we can start talking about technology or AI may be changing the economy, would also change the models that the Fed is looking. Is that 2-3 years, or do we need to start thinking about it now?
Yeah, it's something that we are looking at closely. What level of unemployment rate is the new NAIRU, where inflation pressures then matter to the Fed? Maybe that changes. I do think it's early days, and we have to see as well just how long the AI cycle can continue. But we're just going to have to keep watching it.
I mean, how does the Fed look at, again, the shutdown? I know they're looking through it. It's just a lack of data. But could it have more permanent effects if, the Trump administration uses it differently to past administrations?
Yeah, so historically, the macro implications haven't been large. Partly, we didn't have these firing of the federal workers as well in past shutdowns. But I think It's all a question of how long it lasts. Historically, the longest that it has been 2 weeks. That's just been a temporary effect on the economy. But the longer it lasts, the more the non-linear effects will kick through. Paychecks don't arrive, consumption gets hit. But for now, we're not expecting it to last for longer than that.
Kim, talk to me about the Bank of England. So we had a fantastic interview yesterday with Catherine Mann, who's talking about inflation, and actually the fact that she's still worried about inflation, where many of her colleagues, certainly on the embassy, are not. What are you expecting the BOE to do?
Yeah, I think it's going to be a slow burn for the Bank of England. The data is moving in the right direction, but just very slowly. So inflation is still sticky, like Mann talked about. Services inflation is at 5%. Wage growth isn't far from that either. So there's not a lot the Bank of England can do at the moment. At the same time, activity data, it's not strong, but it's not weak enough to really pull inflation down. I do think the growth narrative will continue to weaken, though. We get the autumn budget news. I think that package there should be contractionary, away on growth further next year. And you still continue to see slack growing in the labor market. So all those should pull wage growth and inflation down. But I think it's just going to be quite a while. On our estimates, core inflation only really comes back below 3% in the UK spring of next year.
I mean, Catherine Mann really made me laugh because she was talking about, the boogie interest rates. Like, it's up and down and you're like dancing all the way around. When are you expecting it to cut? Is the next move definitely a cut? And actually, how quickly could that come?
Yes, I do think it's a cut. I think primarily the growth data is still weak. It's just going to take time to feed through the economy. Like I said, core inflation comes below 3% in spring next year, when a lot of these resetting of the administrative prices happen and the base effects pull inflation down. I think that's probably that's my base case on when the Bank of England will be able to cut. But if there is very clear signals from pay settlement data at the end of this year, or the labor market really materially weakens very quickly, then they can go earlier.
I mean, the ECB seems to be in a better position. I don't know whether that's because they just front-loaded some of the cuts, and so they can afford now to see what happens next.
Yeah, I think the inflation picture has been almost the easiest. Yeah, it's just very different in Europe. So yeah, I think the ECB it's a very clear message from them. They are done for now. They're very happy with where they are. You need to see a real material deviation from and sustained deviation from the inflation target in order for them to cut again. I think the proof will be in the pudding, though, in Q1 next year, when inflation actually is at 1.6%, whether the majority of the General Council members are willing to still stay on hold with that data.
I mean, what are you expecting when you look at, some of the defense spending from Germany? I know that there was a little bit of a boom in the market. It's expected, but it's not really expected to even filter through 2027. I don't even know if it's next year, actually.
Yeah, so we're already relatively optimistic on German federal spending, but it is going to take time. Like, defense can happen a bit quicker, but the multipliers are going to start lower, because a lot of it's going to be import content. And then on the infrastructure side, there are constraints to just how quickly they can ramp it up. That being said, I think there has been good progress that has been made over the summer. There are multiple procurement acceleration acts that have been passed, reducing regulation. So I think the government is making all the right steps. But even with that, don't forget Germany is a quarter of the Eurozone economy. So for it really to stoke inflation at the Eurozone level for the ECB to react to, I don't think that's for the next couple of years.
I mean, France is still a bit of a mess politically because we don't know whether the budget passes, when it passes, with what inside. Do you favor what you buy in terms of European bonds?
Yes, so France, I think, we're going to have a compromise between the government and the Socialist Party, not quite the 4.7% that Le Cornu currently has on the negotiating table. I think it'll be more like 5%. But for us, it's still a structurally quite weak and deteriorating story, just given how fragmented Parliament is there. So our top picks in Europe are Italy or, say, long-end European Union bonds. I think that's where value is still attractive. Politics are stable in Italy. They have been for a while, but the next general election isn't for the next 2 years. The message around fiscal discipline has been very consistent, and we're seeing even incrementally positive upside news. The deficit in Italy was 3%, supposed to be 3% next year. They might even hit that this year because of better than expected growth and tax revenues. That contrasts to something like France, which is like targeting 5%. So those are the two things that we like in Europe.
So interesting, Kim. As always, thank you so much for joining us. Kim Crawford, their Global Rates Portfolio Manager at JP Morgan Asset Management. Coming up, Arab leaders are pushing Hamas to accept Trump's plan to end the war in Gaza. This comes as Israel intercepts a flotilla heading towards Gaza. We'll have the latest from the region next, and this is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Now, Arab and Muslim national leaders are pushing Hamas to accept the Gaza plan unveiled by President Trump, saying the need to end the fighting surpasses concern about the finer details. Let's go to Dubai now and speak to Paul Wallace, Bloomberg's managing editor for Middle East and Africa. Paul, how are efforts going to push Hamas to accept the proposal to end the war?
I've seen, like you said, Arab states such as Qatar and Egypt and others like other Middle Eastern states like Turkey are pushing Hamas quite hard on this, according to our reporting. They want the group to accept the plan, the 20-point plan unveiled by Donald Trump on Monday evening. I think at this stage, it's still unclear when Hamas will respond. Donald Trump sort of, in a vague sense, gave them until tomorrow or Saturday to come back with an answer. I think there's a very good chance that Hamas doesn't flat out reject or accept it, but comes back and says, look, it's essentially okay, but there's some points we need to negotiate and get clarity on. It's probably around things like the speed of the IDF's withdrawal from Gaza. So I think we could still be in for several more days of waiting until we know whether this plan will result in a ceasefire or not.
Paul, at the same time, a United Nations Commission report concluded last month that Israel was committing genocide against Palestinians in Gaza. What do we know about leaders worldwide trying to put pressure on Netanyahu?
It's the pressure on Netanyahu and the Israeli government as a whole has certainly been growing, and it's almost not that much of an exaggeration to say that beyond the U.S., Israel really doesn't have support among world powers for the continuation of the war in Gaza. If you look at Europe, I guess that's where it's been most startling. It's there's fierce opposition to almost everywhere to Israel continuing this war. They want it over. We saw last week at the UN General Assembly in New York several countries, allies of Israel, pretty firm allies of Israel, unilaterally recognizing Palestinian statehood. Places like the UK, Canada, Germany, Australia. That did not go down well with Israel at all, and even the US said it was a bad move. But the point is, pressure is growing, and I think you could see that on Monday when this plan was announced in Washington by Trump. Benjamin Netanyahu was alongside him. He looked, Netanyahu didn't have quite the same energy as he usually does, and he certainly had to concede some things in this plan that was announced. There was wording about potential Palestinian statehood. Eventually, Hamas fighters who surrender will be given amnesty. Things like that, which have made this a pretty hard sell for Netanyahu to the far-right members of his cabinet. So that that pressure is growing on in Israel. And if Hamas does come back and say we want to clarify certain things or tweak certain things, I think there will be a lot of pressure on Israel to basically go back into negotiations, at least in the short term.
Yeah. Paul, activists on board a flotilla sailing towards Gaza also say that the Israeli Navy has now intercepted 3 of their boats. What more do we know?
So far, it seems to have gone off, this interception has gone off pretty smoothly as far as the Israeli Navy is concerned. They've intercepted some boats. It's a big flotilla, I think about 44 boats or something like that. They've intercepted some of them, including the one that Greta Thunberg was on. The activists on those have been taken to an Israeli port, and they'll probably be deported to Europe in the next 24 hours or so. There have been no reports of violence or casualties so far, but it is a developing story. And like I said, it is a big flotilla, and it sounds as if at least some boats are still out there. So there's still the potential for something to go wrong and for there to be violence or casualties among either Israeli Navy personnel or the activists themselves.
Paul, thank you so much for the updates. Paul Wallace there with the very latest, of course, on the Middle East. Also making news, the U.S. Supreme Court has refused to allow President Trump to immediately fire the Fed Governor Lisa Cook while she sues to keep her job. Now, the order issued Wednesday means that Cook can remain in her position at least until the justices rule after hearing arguments in the case in January. Now, the decision deals a setback to Trump's efforts to exert more control over the central bank. And U.S. President Donald Trump says he will press Chinese President Xi Jinping to restart purchases of soybeans when the two meet at the end of the month. Well, China has not bought a single soybean cargo from the harvest now underway, instead relying on Argentina and Brazil. Well, American farmers are increasingly worried their crops will go unpurchased this year without a trade deal with Beijing. Tesla shares have soared recently, climbing 33% in September alone as investors rally around the chief executive Elon Musk's renewed focus on the company. That's drawing attention to whether key third-quarter sales figures due before the U.S. market open today will be strong enough to sustain the momentum. Well, let's talk to our Kartzar, our global automotive editor, less boring title, Kartzar, Craig Trudell. Craig, thank you for joining us. So what can we actually expect from these third-quarter sale numbers?
When we look at the consensus, it's a story of sort of less bad, a small year-over-year decline in the third quarter. I think we did see a lot of analysts as the quarter was coming to an end, actually come out with estimates predicting a small increase actually from a year ago. So we'll see whether some of that optimism that maybe helped drive the shares even higher toward the end of September comes to pass. I think the big question, of course, is how much of this can be sustained because of the effect that the tax credits in the U.S. going away sort of drove so much momentum, not just for Tesla, but for the broader industry, where every manufacturer that had EVs to sell in the third quarter was selling a heck of a lot more of them in the U.S. because you had a lot of consumers sort of knowing that this $7,500 tax credit was for the taking and not for any longer than past September.
Yeah, and the stock is also something we need to watch out for, right? Because it's been going great for the moment. Craig, as always, thank you so much. Too short a time. We'll have to get Craig back on. Craig Trudell there. Now, coming up, an acute lack of new developments has caused a severe supply squeeze in the London office market. We'll be discussing this and more with CBRE's Ana Esteban. That's next, and this is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The White House plans to use the shutdown to fire federal workers. Meanwhile, the Fed's Austin Goolsbee warns the delay to data will make it harder for rate setters to interpret the economy. OpenAI's valuation rises to a record $500 billion after a share sale, overtaking SpaceX as the world's most valuable startup. Plus, tech stocks drive global markets to fresh highs as stocks shrug off the U.S. government shutdown. So European Union leaders are building momentum for a plan to loan Ukraine 140 billion euros from immobilized Russian central bank assets. The proposal has gained backing from several EU nations and comes as European political community leaders meet in Copenhagen today.
There's a growing consensus among us that it's not only the European taxpayers that should pay for the support to Ukraine, but that Russia has to be held accountable. Russia is the perpetrator, it has caused the damage, and it has to be held accountable. And I think we have now a sound legal way to do this.
Well, for more, we're joined by Oliver Crook, our Chief Europe Correspondent. Ollie, always great to have you on The Pulse. What can we expect from the meeting?
Yeah, Francine, so for the European political community, remember, this is the largest format of European leaders that ever meet in this sort of European Union. It's a meeting that was devised by Emmanuel Macron after the invasion of Ukraine, and this is the 7th one, and this is everybody from the EU to the United Kingdom, Norway, Turkey, to all sort of discuss a number of different issues. Of course, principally, the last few years has been a focus on defense, but what was really sort of interesting yesterday was when EU leaders held their informal meeting in preparation for their formal meeting, which is just a couple of weeks away, and what we're gathering there is the topics of Ukraine and defense momentum on two issues. The first is that loan that 40 billion euros worth of basically on the Russian immobilized asset. The European sort of nations will sort of back a loan that would be sort of guaranteed as collateral those Russian assets. And this, you'll remember, Francine, has been a massive debate within the European Union. What to do with those immobilized assets? Is there a legal way to basically monetize into the future?
I think we're having a little... we can hear Oliver. I mean, it's in and out, so we're having connection issues. Breaking news. We'll get back to Ollie in a second for a full round of that meeting in Copenhagen. Now, also, French unions are holding a new round of anti-austerity protests today, seeking to maintain pressure on Prime Minister Sébastien Lecornu on his expected budget proposals. Now, walkouts are planned in sectors including education and transport. Air traffic disruptions should remain limited, with only Paris-Beauvais Airport expected to reduce flight schedules. schedules. High-speed trains and the Paris Metro should run normally. Now, switching to the UK, and it's been reported that the government is weighing a plan to exempt shares of newly listed companies from a tax on trade. Now, according to the Financial Times, the Chancellor, Rachel Reeves, could announce up to 3 years of relief from stamp duties for newly listed companies in her budget next month. The tax is seen as a key drag on the City of London. And staying in the UK since the pandemic, London office vacancies have more than doubled. But a shortage of new projects has created a severe supply squeeze for top-tier accommodation. Now, rents are climbing sharply in the most coveted districts, especially for the few new developments nearing completion. Well, joining us to discuss the outlook for commercial real estate is Ana Esteban, Managing Director of Leasing and Occupier Accounts for Europe at CBRE. Ana, thank you so much for joining us. What do you see as the most surprisingly, developments at the moment? People seem to be going back to work, maybe not full-time, but there's much more appetite for premium properties.
That is the case, and we're still seeing, despite people coming back to the office and occupancy levels stabilizing, there's still a gap between what employers are expecting, which is 3+ days in the office, and what employees are delivering, which is 3-, and that gap is especially significant in financial and professional services companies.
So what can you tell us in terms of how, office spaces are being changed to 4 or 5 years ago? Do people want it differently? Is it location, or is it actually inside how they're done?
Well, I think the definition of offices has changed overall, and that's probably post-pandemic. And they're not only a container of activity, they're a very valuable part of the service delivery and the talent attraction and retention tools that a company has in order to make sure that they get the best people in the office. So they're designing these offices in order to make sure that people don't have to go to the office, but they want to. And that's why we're seeing this polarization in the real estate markets between top-tier, not only locations, but assets, and the secondary or more peripheral locations with maybe less public transport, less car park facilities, maybe less collaboration spaces. So we are seeing a big difference between these two kinds of locations.
Anna, how is AI actually impacting company space needs, and how do you expect it to impact it even more going forward as we use AI more?
Well, I think AI has two effects. Obviously, one in data centers, we can discuss a bit later, but on offices, it's the space planning that is tough for companies. When you sign a lease, you usually sign a lease, especially for a big headquarter project, it may be a 5, 7, 10-year lease, and it's difficult for companies still to predict the effect of AI in their workforce. And that's why we're seeing a lot of shift into flex models, managed spaces, and a bit of agile models in which they don't have to commit to that space for so long because it's difficult for them to predict their headcount needs in the future.
How are RTO trends different across the markets you cover?
The trends you mean between the countries or the asset classes?
All of them.
So we're seeing, I think trends are very common in Europe. So we're seeing offices in industrial logistics maybe with softer demand, and we're seeing a differentiation and a polarization, especially in the office sector between, as we said, the prime offices and the periphery. We're seeing retail performing very well, consumer consumption is good, and we're seeing strong demand for very prime locations and some of the prime shopping centers. And we're seeing then data centers and residential, I would say these are the sectors that are growing the fastest in most of our countries.
Is it new builds, office spaces that people want, or actually things that have been retrofitted? Does that make a difference, and does it change for country to country?
I don't think it changes country to country. I think because public transport accessibility is a key factor when deciding the location, centric locations are the ones that are more sought after. It's difficult to find new developments in central locations, so there is a lot of redevelopment and refitting of existing buildings into new offices.
And in London, we've written about how large companies are struggling to find suitable space. Are you seeing a similar phenomenon across Europe?
Yes, and that's causing something that we had never seen before. Usually when you have higher vacancy rates, the rents get softer because there's obviously more supply than demand. But we have both increasing prime rents and increasing vacancy rates because of the concentration of demand in this kind of location. So we are, yes, it's indeed having an effect on both the availability and the rents in these locations that are more sought after.
I mean, when you look at, for example, the green credentials, is that something that's still being prioritized, or is that moving to the wayside?
No, it is being prioritized because it is a value preservation play. Yeah. So whilst the legislation comes and goes and the pressure comes and goes, everyone knows that in the mid to long term, that is something that will maybe be regulated. So everyone, especially for long leases or for investors who are investing in long-term assets, they all want to make sure that they have the green/ESG sustainability factor covered.
How are you expecting rents to actually change in the next couple of quarters?
For office?
For office.
I think we will still see there's still pressure in the central locations and in the buildings that have these amenities, these ESG and sustainability certificates. So I think we can still expect rents to increase in the next couple of quarters, but we will see also vacancy rates and rent softening in those areas that don't comply with those criteria.
Anna, thank you so much. Anna Esteban, they're Managing Director of Leasing and Occupier Accounts for Europe at CBRE. Now, the Chief Executive of the London Stock Exchange says the flagship market is not for sale, even though it could have a willing buyer in rival Euronext. Speaking at Bloomberg's Women Money Power event, Julia Hoggett also made the case for the UK to change its pension fund policies to better support domestic companies.
You asked about mandation. For me, it's much more about saying if you want to be designated as a default pension scheme in the UK, then you should have a globally diversified portfolio, but not necessarily index weighted, which is not diversified because that basically means 70% of your money is in the US with a declining dollar right now. And actually, say 20-25% should be invested in UK assets of whatever description you have. Now, you can then opt out as a pensioner, get your full tax credit in the non-default scheme. But if you want to be in the default scheme, and the interesting thing is we've run scenarios on this. We've actually done a survey on this, or New Financial did. The average pensioner that was surveyed thought that 41% of their pension funds' equities were invested in the UK. It's about 4. Okay? 72% wanted the government to support their pension money going to invest in the companies that were the future that their kids would be employed by, simply put. And
so again, it's the story.
It's perceived as a political risk, but perversely, we have made choices in the last 25 years to actually create incentives to subsidise the cost of capital of the S&P 500, not the cost of capital of the FTSE 350. And most countries in the world look at us sideways. So I genuinely think that the thing that I'd love to see is the confidence to make that choice, to say, yes, we want Britain to be investing in itself again. And I'll say one thing, I have heard the argument, but there's nothing to buy here. Now, you just mentioned Revolut, okay? I see a remarkable number of entrepreneurs up and down this country doing remarkable, groundbreaking things every single day, you know? And I think if you look at it, the major pension funds in Canada, in Australia, the major endowments in the US, the sovereign wealth funds, where do they set up their first office to buy assets overseas? London.
Well, look, you've talked about remarkable fintechs, including your own, and overseas interest. We had the Euronext boss on Bloomberg TV saying that he might be interested in buying the LSE. It's easy to say it on Bloomberg TV. Have you actually had a knock on your door with an offer?
It's not for sale. No, look, I'll be very clear with you. It matters to me that I run the only primary exchange in the London Stock Exchange Group. That means I'm not in the slightest bit conflicted to be the biggest possible advocate for the health of the UK equity capital markets. And I operate in a group that has a market cap bigger than Euronext does. And I've seen what's happened to other exchanges in the group, because it's quite difficult to prioritise one when you own several.
Well, that was the London Stock Exchange Chief Executive Julia Hoggett speaking to our Lizzie Burden. Now let's return to European political community leaders meeting in Copenhagen. Ukraine's President Zelensky just speaking to reporters, saying they need to consider sanctions on Russian oil terminals. President Zelensky also saying that tankers under sanctions are being used by Russia. Now, for more on all of this, we're joined by Oliver Crook, our chief European correspondent. So, Ollie, we were just explaining actually what you think will be drawing on European leaders' attention, first and foremost.
Yeah, Francine, where were we? I mean, basically the main thing that's occupied the minds of European leaders here is that basically ever since the United States has stopped sending checks to Ukraine, they've had to figure out how to finance the Ukrainian war efforts against Russia. And that was what has brought them now until this point basically unwilling to look at legal ways. We're saying it was basically impossible to touch the Russian state assets that are currently being held in Belgium to the tune of about 140 billion euros. That has all changed since Trump has become president of the United States, and the Europeans have found that they they are basically on the hook to basically fund Ukraine. So as a consequence of that, there is now a large renewed sort of will to try to get those assets and to monetize them in some sort of way, in some sort of creative accounting, in a way that makes it so that it's not actually taking the Russian asset, but using them as collateral against loans that basically the Europeans would furnish to the Ukrainians. The reason that this is really very important from the European perspective is that it sends a signal to Vladimir Putin that basically there are 150 billion euros worth of Russian assets that are going to basically fund the Ukrainian war effort. That means that the Ukrainian military will be funded basically for the years to come, and that if Vladimir Putin wants to wait out the Europeans, he will have a great deal of difficulty doing so. At the other side of that coin, there's been an initiative by the G7 finance ministers meeting that has sort of concluded yesterday to try to find new ways to put more pressure on the oil revenues that the Russians are taking in. So we're having that as a sort of larger effort by that large coalition, the United States being involved in that. And what would be really key there is to start to execute on one of the ideas that the Trump administration has put forward, which is this idea of secondary sanctions on countries and companies that are still involved in buying the Russian crude oil and refining it. And that is something that they're advancing on. They're not there yet in terms of actually implementing them, but that is the statement that we got from the finance ministers of the G7, who are meeting in parallel to the European political community, which is meeting here in Copenhagen, where they're also discussing defense functions, including, Francine, this idea of the drone wall, a very catchy idea by European leaders here, and one that is really put into prominence given the amount of drone activity we've had over Denmark over the last few days, to such a point that the Danish government has banned all the flight of drones over the next few days over this EPC community meeting here in Denmark.
Ollie, thanks so much. Oliver Crook there with their very latest, of course, on that meeting in Copenhagen. Now, coming up, we'll get a view of what family offices are investing in despite global trade uncertainty. We'll be speaking to Citigroup's family office group head, Hannes Hoffman. That's next, and this is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
I am incredibly optimistic about Google's position right now. This is just beginning.
I think in many respects, we're still early innings. These are questions that we get from our clients all the time.
We then have 15 different products that each reach 500 million users. There's a lot of capital that needs to go in. We estimate about $7 trillion. I mean, that's a large number.
Number one, you have an investor base that is very open to want to invest here. Number two, you have, great formation of capital in the private markets and in the public markets to support this need.
A lot of money still needs to go in. It's an incredibly exciting, invigorating moment in the space, and the pace of innovation, I think, has never been more thrilling But I think that Google has all the ingredients to succeed.
Exactly what the outcome is, I think, is still to be played out.
Well, guests there speaking at Bloomberg's Women Money Power event in London yesterday. Now, nearly 80% of adults worldwide now have access to at least one financial account, and over 60 countries have implemented a national financial inclusion strategy. Queen Maxima of the Netherlands is spearheading efforts to put financial health at the center of how financial systems are designed and delivered. Now, she recently delivered a report detailing the key findings during her first year as the UN Secretary General's special advocate for financial health. Now, I spoke with her on the sidelines of the UN General Assembly in New York last week.
We did a lot of work in the last 15 years to get people access to financial services, and that is actually very good. But the thing is, financial inclusion, access to financial service for what? We want actually, in the end of the day, to become better, to be able to manage the day-to-day finances, to be able to make long-term investments. Is it a pension? Is it a home? Is it the education of your children? We want them, to be, life being improved is they get a shock, health shock, job loss shock, climate change shock, floods destroying the things. And you to feel confident, it's also about mental health. So where are we at now? We know that the numbers of financial health are actually not really great. 31% of Americans are considered financially healthy, so that means the rest are financially unhealthy. In a country like the Netherlands, 1/4 is considered financially unhealthy, and another 1/4 is actually vulnerable. What I mean by that is just this one shock away of actually getting into real financial trouble. And globally, 1 in 3 people actually have enough money to have 2 months of no income. So, 1 in 3 people. So there's a lot of work to be done, and I think that this issue of financial health has been resonating across the board, and because the realities are there.
That was Queen Maxima of the Netherlands speaking with me last week. Now, U.S. family offices are professionalizing their operations, paying their chief investment officer at least $1 million annually. That's according to Citigroup. This push for top talent is matched by a growing appetite for risk, with many family offices embracing private markets and seeking direct equity stakes in companies. Well, joining us now is Hannes Hoffman, head of the Global Family Office Group at Citi Private Bank. Hannes, thank you so much for joining us. It's very clear that family offices are getting bigger with more money, getting organized, and recruiting top talent. How much diversifications do they want? What kind of conversations have you had with the head of family offices?
Look, I think what we're seeing is family offices being a very important and increasingly asset-rich long-term investment segment in the market, right? So what sets family offices apart is really the ability of families to think multi-generational and to take an approach that goes over like multi-decades. And we see that all around the world. So when you're asking about diversification versus concentration, family offices in their investment approach, when we work with them, put a lot of emphasis on diversification, regional, asset class-wise, and in terms of taking risk positions. Now, what we're seeing is 70% of family offices have concentrated stock positions somewhere in their holdings. 78% own operating companies. So there's a lot in terms of concentration already existing, but diversification is a key tenet. Now, what we found this year...
Hannes, but give me a sense, for example, so does it mean that they want private markets more than public markets? And actually, do they worry about valuations in terms of, the asset classes that they want to enter? If they're thinking 5, 10, 15 years down the road, then what are they thinking about today?
What's interesting for us, so we've done this survey 7 years in a row now, so we got a good handle on how things have been developing, and we always get new insights every year. What struck us about the survey that we just published 3 weeks ago was it happened 2 months after Trump's tariff announcements, and so a lot of disruption in the market. But the sentiment that family offices expressed was very positive, very bullish on overall returns. When it comes to asset classes...
In what time frame?
1 year time frame. going forward.
Despite Liberation Day, despite the tariffs, and despite everything, which is quite unusual.
It is very unusual. It's something that some people would not have expected, but of course it reflects a lot of the fundamentals underlying the market. It also reflects that family offices...
AI and valuation.
Yes. So look, what you see is family offices are looking for long-term trends and investments that expose to themes like AI, exposed to themes like security, exposed to themes like healthcare, sports, and really it's become a security selection market. So when we look at what's driving that positive return expectation, people have invested more into private equity, they've invested more into directs and more into public equity.
Hannes, everyone's chasing the same deals. So how are family offices different from, pension allocators, longer-term pension fund? Is it really, if you have a longer time horizon, are you going after the same things? Or is there something about family offices that make them behave differently?
So I would answer, there's two things that we see in the behavior of family offices that set them apart. One is a true long-term outlook, this ability to be able to think 20-year time horizons, and in many cases also to not have a liquidity need within the time because they have operating companies that generate revenue. So we're seeing only 50% of family offices are borrowing at all. The second thing, though, that's important is speed. So one of the things that family offices do that sets them apart from many other investors, because the assets are being held by a very well-defined entity, one family, many of them, in cases where they believe there's real value, can act very, very fast.
Yeah, the interesting is the fact that they're also outsourcing. Is that because of family feuds? So you have someone that's more professional, so it makes the family dinners that little bit more enjoyable?
Yeah, look, I mean, what we found is that about 50% of family offices use outsourcing in one way or the other. I would say in general, from our work in the survey, 75% of family offices have less than 10 employees.
Right.
And we're working with 1,800 family offices around the world, average net worth over $2 billion. So what you have is family offices with not too many staff who then professionalize the investment function primarily, and the other functions are being outsourced where it makes sense. So an example would be cybersecurity, typically outsourced. An example would be asset reporting and asset aggregation, typically outsourced, can be done better by suppliers. So, yeah, we see a lot of outsourcing.
Hannes, thank you so much for joining us today. Hannes Hoffman, they're head of the Global Family Office Group at Citi Private Bank. Now, tomorrow, don't forget, we'll bring you a conversation with the chief executive of Goldman Sachs. Tom McKenzie will be speaking with David Solomon about the impact of AI on building financial infrastructure for the future. That's at 9:40 a.m. London time on Friday. Now, a couple of other things we need to watch out for. Technology stocks driving global indices again to fresh highs. This is a big story of today, and this is after a deal catapulted OpenAI into the world's most valuable startup, bolstering optimism for artificial intelligence. Now, today, there's a lot of news. Packed news, 10 a.m. Euro area unemployment. That's in 3 minutes from now. What's likely delayed is U.S. jobless and factory orders. Then at 3:30 p.m., of course, the Fed's Logan will speak. Interesting right now, given the context also of what we heard yesterday for Lisa Cook. And then 5:30 p.m., ECB's Villeroy de Gallo and Mr. de Guindos speaking from the ECB. At 9 p.m., of course, the Tesla shares. We were fully briefed by our Craig Trudell. A couple of other things we're watching out for. Look, Treasury's mostly holding on to Wednesday's gains. The yield on the 10-year note steady at 4.1%, but it's very clear that the Fed rate cut expectations pulling yields down from January's high. Traders now contending with a temporary blackout in economic data amid the U.S. shutdown. But then at the same time, money markets fully pricing in a quarter-point Fed cut at the end of the month, saying now an 80% chance of a December cut to support a cooling labor market. Up next, it's a Bloomberg Brief, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
America today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Sky-high valuation. OpenAI becomes the most valuable startup at $500 billion, surging past SpaceX. Tech optimism in general. Markets shrugging off U.S. shutdown concerns as tech drives stocks to fresh highs. And the White House plans to fire federal workers this week as the government shuts down into a second day. So let's take a look at those markets because, sure, negative jobs print, albeit in the private sphere. We're not likely to get initial jobless claims today, nor durable goods data. But, you know, we got some private data, showed negative jobs print. Why not send stocks to record highs, right? Healthcare and tech leading the way. We saw a 0.3% increase in the S&P 500 yesterday, bringing the monthly tally to a 3.5% gain. Futures pointed higher again today. Same for the NASDAQ 100. Also for the Russell 2000. The NASDAQ 100 gain in September was 5.4%. Now let's take a look at yields because this is the story. We have traders pricing in more easing. So they saw ADP and decided they know what the Fed is going to do. We saw the 2-year yield drop 7 basis points yesterday in the session. We're at 3.54 today, 4.71 on the 30-year and the 10-year just above 4.10 again. Will we see more movement? We do get challenger job cuts today. That might give us some more indication of what's going on in the private sphere. But clearly traders think that they know what's going on. We also saw gold at a record yesterday and we're just off that record once again today. So what is that telling us? Let's get, though, to some individual stocks moving in today's session. For that, we'll go across to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's get started with some positive movements across the AI sector this morning. After a wave of good news coming from that industry, we had OpenAI's record $500 billion valuation, as well as reports that Intel is in talks to add AMD as a customer. So there's clearly a lot of bullishness across that sector and really a momentum being driven by that fear of missing out. Moving on to Tesla, which is also up this morning in pre-market trading after the pace of sales decline is expected to slow. So there will be sales dropping helping in the third quarter, but perhaps not as much as dramatically as it did in the first half of the year. And that is providing some sense of relief there for those Tesla investors that have seen so much weakness recently in that stock. And finally, let's go over to Equifax, which is down this morning on the back of FICO launching a new program that allows mortgage lenders to distribute those credit scores directly to customers. That, of course, will reduce that reliance on those credit bureaus like Equifax, and that is really driving down the stock this morning.
Chloe, thank you so much. That is Chloe Melly there for us in London. And later in the show, we're going to ask why so calm. We'll be speaking with Amy Wu Silverman of RBC. She says markets aren't freaking out just yet on the government shutdown. We are in day 2 of that first government shutdown in 7 years. President Trump has taken to Truth Social to declare that Republicans must use this opportunity to, quote, clear out dead wood, waste, and fraud, end quote. Vice President Vance says he didn't expect it to last long, but says firings will take place.
We are going to have to lay some people off if the shutdown continues. We don't like that. We don't necessarily want to do it, but we're going to do what we have to keep the American people's essential services continuing to run.
Meanwhile, billions of dollars earmarked for infrastructure projects in New York and hydrogen projects in California have already been frozen. Those contracts cancelled also by the White House budget director. Data also affected, with Austin Goolsbee of the Chicago Fed saying the shutdown will make the Fed's job more difficult.
The data dogs are howling because, you know, we're not getting our usual supply of information. I will say, I consider the Bureau of Labor Statistics job data to be the absolutely best data source on jobs and statistics in the entire world. If we aren't going to have those, it's problematic. That said, the Chicago Fed has come out with some new job market indicators, and we'll be releasing them tomorrow.
Bloomberg's Paul Dobson joins us now for the market read-through. So, Paul, we're not seeing, obviously, since we're at records, much of a reaction to the showdown and the shutdown yet. How long before the tone shifts, or does it even?
Yeah, hi there, Vonnie. Good morning. So absolutely, as you say, as far as the equity market is concerned, no slowing of the momentum that we've been seeing over recent days, with that tech-driven rally continuing to push us to new highs and futures, indicating more gains again for today. I think that there's a sort of indirect and then a more direct impact from the shutdown. Indirectly, of course, because we're not going to get all of that labor market information. We have to go on what we do have, which is the private sector data. That, with the surprise drop in the ADP yesterday, really convinced people that by the end of this month, the Fed will be cutting interest rates again and drove down those bond yields. Another supportive factor, incidentally, for the equity space. But on the other hand, you know, what people are telling us is that the longer that this shutdown drags on and the more sort of it sort of reduces consumer spending, the more it sees job losses rack up in the economy as well, the more harmful it's going to be. And that may, in turn, swing the pendulum in the other direction. Of course, keeping yields maybe going down, but also having people question a little bit maybe the validity of the treasuries and the the US's sort of long-term credentials in the debt market. And then on the equity side, you know, people worrying a little bit more about the outlook for the economy in the fourth quarter. So it could flip depending on how long it endures. But, you know, I think that I was reading a quote earlier saying we've been through 20 shutdowns already in the US government and it's reopened every time. And there's no reason to doubt that at some point, you know, that's going to happen again here.
You know, Paul, Austin Goolsbee there is saying this is all making the Fed's job harder. The fact that we don't get NFP and some of the other hard data that we would get out of, you know, federal agencies. The most likely scenario is we do get that CPI data, though, in a couple of weeks. I mean, unless this shutdown lasts for longer than that. If we get hot CPI and we know there's negative jobs print and so on, what does the Fed do?
It's going to make it much more difficult for the Fed. They've definitely been leaning more on the jobs data rather than the inflation data in recent weeks, and that was what seemed to be the clincher in terms of doing what, you know, the insurance cut, as we heard from Powell at the previous meeting. But the dot plot is indicating that more members of the Fed would see the case for further cuts, unless, you know, there really is that sort of like storming inflation surprise that we're not really expecting and hasn't been showing through so much in the data in the meantime. time. If we get to the end of the month and we still have the shutdown and we're still not getting any more data, then, you know, you could argue, if you were feeling a little bit naughty, that the Fed has the cover from the politics in order to do another cut. And, you know, we're working on the best information that we've gotten, and so be it. And, you know, kind of if it does result in higher inflation over time, then at least they have, you know, sort of like a little bit of a fallback and some cover and that kind of thing. But I think, on the whole, it would take a very big inflation surprise to deter the Fed from considering the jobs data being the more important input at the moment and being minded to move towards another cut, which is what the market's pricing in.
Absolutely, and a few extra basis points of easing priced in since yesterday. Paul, thank you so much. That is Paul Dobson there. Well, tech optimism driving the market rally. OpenAI has completed a share sale that has sent its valuation up to $500 billion. That makes the owner of ChatGPT the most valuable private company in the world. For more, we're joined by Bloomberg's global head of private company coverage, Neil Callanan. Neil, OpenAI's valuation has been in the headlines several times in the past 3 years. This latest figure, though, it's particularly significant. Talk to us about that significance and the pace that OpenAI has risen to it.
Absolutely, Bonnie. Today, OpenAI became the most valuable privately held company in the world, overtaking SpaceX, Elon Musk's big rival in that space in terms of private companies. And really, it's a great indicator of just the pace of growth and investor interest in AI and the boom that's happening there at the moment. Effectively, OpenAI's valuation has tripled in a year versus earnings growth of just over 100%. So people are paying more for slower growth, which means that they believe that there's going to be exponential growth in earnings going forward. But for people who are skeptics around this, it's going to add to the evidence that perhaps we're moving from a boom into a bubble. There's been a lot of chatter in recent days about the deals being done by OpenAI and NVIDIA with related parties. People seeing echoes of the late 1990s where there was vendor financing deals done with fiber optic and cable companies, and that all went wrong. At the moment, AI is still very much a bet on the future. The user case is not fully justified at the moment, but people do obviously believe that the growth rate is such that they can make a lot of money in this.
Well, and what was so fascinating was that the company allowed $10 billion plus worth of stock for sale, and that total amount of eligible units wasn't even sold, so people were holding onto their stock even at this valuation. So more broadly then, how much has private companies' landscape changed due to AI in recent history?
It's been completely changed by this. I mean, historically, a lot of private companies, they grew over centuries. They're family-owned, they're billionaire-owned at this stage in many cases. And now you're seeing these startups that began life less than 5 years ago, in some cases, in Anthropic's case, 10 years ago in OpenAI's case, and they are becoming the biggest companies in the world with massive power and clout, yet very little revenue to back it up. And so what we're also seeing as a subset of that is now rapid growth in companies that are related to them. So in the neo-cloud space, you're seeing companies that were set up less than a year ago that couldn't win a government contract are being given deals worth billions of dollars by these bigger companies like NVIDIA and OpenAI, and that's supporting their growth as well. And those deals are often, you know, involve equity, etc. So the bet is by the people above that these growing companies beneath will also lift their fortunes. And so you're creating a circular economy here that is completely independent of the traditional private company space, much of which was based around manufacturing, commodities, etc. This is very much a tech-driven space. So new paradigm as well.
New paradigm. Neil, thank you so much. That is Bloomberg's Neil Callanan there. Now to other top stories trending on the terminal this morning. UK Chancellor Rachel Reeves's next budget is taking shape and may include a potential freeze on income tax thresholds and changes to welfare spending. The budget is seen as a make-or-break moment for Prime Minister Keir Starmer amid frustration with the Labour Party's decline in the polls. Sources say Eric Trump has signed up as a client of Citigroup and established a trust at the bank that holds some of his father's money. The relationship started after CEO Jane Fraser reached out to congratulate President Trump on his election win in November. A Citigroup spokesperson declined to comment. The Trump organization neither responded to a request for comment either. And Chinese car makers grabbed a record 9.8% of Europe's hybrid vehicle sales in August. It's the fourth time this year that Chinese brands have reached a new peak for hybrid car share. This is all based on figures from researcher Dataforce. Chinese automakers have pivoted to selling more hybrids this year after EU officials slapped tariffs on EVs made in the country. Well, coming up, EU leaders plan to help Ukraine, but Russia is prepared to push back. We'll be live in Copenhagen next. This is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There's a growing consensus among us that it's not only the European taxpayers that should pay for the support to Ukraine, but that Russia has to be held accountable. Russia is the perpetrator, it has caused the damage, and it has to be held accountable. And I think we have now a sound legal way to do this.
EU leaders meeting in Copenhagen and building momentum for a plan to loan Ukraine 140 billion euros from immobilized Russian central bank assets. Joining us live from Copenhagen is Bloomberg's Oliver Crook. So as Ursula von der Leyen said there, Ollie, a growing consensus. But is there a consensus on how that money should be used?
So that is part of the debate that we're having here among European leaders. We heard from Friedrich Merz, the Chancellor of Germany, last week out in the pages of the Financial Times, basically putting Germany's weight behind the idea that these Russian assets should be mobilized. They should be monetized in some way. This is something that the Germans had resisted for a very long time under Merz and under his predecessor, Olaf Scholz, despite pressure from the Biden administration, you'll remember, in the last few years. And of course, now that Trump basically has stopped sending money to Ukraine, the Europeans have been dealing with the very real reality that they will now have to foot the bill. And as a consequence of that, they are going through great efforts to find sort of legal ways to monetize those Russian state assets that are being held in Belgium without basically taking them. And they say that basically they have a way and a path forward to do that. The reason that that is so important is that will basically guarantee a check for about 140 billion euros for Ukraine. And the importance of that, of course, to fund the war, but it'll also send the message to Vladimir Putin that there is footing for the military expenditure within Ukraine. That is a military that is funded not for 1 year, not for 2 years, but for up to 3 years from basically Russian money. Now, there's still some debate about where that money should be spent. There are some that are saying it should be going towards reconstruction, others saying that it should go just towards military purchases, and of course some in Europe saying it should go to military purchases only of European hardware, because obviously they want to also stimulate their own economy. So that is sort of the debate, but it is significant that basically it seems that more world leaders here in Europe are coalescing behind this idea, and where there is a will on this, there certainly seems to be a way, and that may be ratified ratified in the next couple of weeks when the next EU formal meeting happens in about 3 weeks' time in Brussels.
And then where are they all standing on oil, sanctions over Russian oil revenue in particular?
Yeah, so this is another question that is also now being discussed not just by the European leaders, but also by the G7 finance ministers over the last couple of days. And we got a statement out from them yesterday, the fruits of those discussions. So obviously the G7 significant because it also includes the United States as well as many European nations and, of course, Canada, looking at ways to basically constrict the money that is going into Russia. So on the one hand, you have European leaders here trying to find the money to go to Ukraine, and the G7 leaders trying to find a way to constrict the money that is going into Russia, which is obviously critical because that is what is funding the war machine. So there are ways in which they're looking at trying to target more of the ships in the shadow fleet, but the key, Vani, will be if there is any traction behind this idea of secondary sanction on those countries like China and India that are still buying Russian crude oil, where will the pressure be exerted there? That is something that Trump put forward. Could the G7 sort of align behind that? They're having discussions about it, but they're not quite there yet.
Yeah, there's a little bit of a reluctance right now. Oliver, thank you so much. That is Oliver Crook in Copenhagen. Coming up, President Trump proposes new rules to colleges for access to federal funding. That and a look at what else is making headlines in your front page news. This is Bloomberg.
When we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
For your front page news. First up, ABC reporting that 2 Delta regional jets collided at low speed while taxiing at LaGuardia Airport. Video footage posted on X showed flashing emergency vehicle lights on the tarmac and damage to a jet's wing. The pilots reported damage to their windshield and at least 1 injured, according to the air traffic control audio. Next up, the Journal reports that the Trump administration wants colleges to sign an agreement in exchange for preferential access to federal funds. The terms include that schools ban the use of race and sex in hiring and admissions, as well as freeze tuition for 5 years. The White House sent letters inviting an initial round of 9 universities to sign on to the agreement. And on the New York Times front page, the Trump administration announcing that it would withhold $18 billion in federal funds previously awarded to New York City. The expansion of the 2nd Avenue subway line and new rail tunnels under the Hudson River will be held up. Those are already underway, we should mention. The freeze is the largest yet in New York. Well, now let's head over to Singapore. Robinhood co-founder and CEO Vlad Tenev says that tokenization of assets will rewire the financial system. He spoke with Bloomberg's Haslinda Amin earlier from the sidelines of Token 2049, Asia's flagship digital asset conference.
I think tokenization is a freight train, and it'll eat the entire financial system. But I think it'll be a very positive thing. I think that the financial system will be largely willing to go through this transition. I think what you're going to see is outside of the U.S., where there's a little bit less legacy infrastructure, and the big incumbents can consider it net new business. You'll see it, getting market dominance first, and then it'll be somewhat backported. You could see this in Robinhood's business. We launched stock tokens in the EU, which are tokenized versions of several hundred top names. We also introduced and demonstrated tokenization of OpenAI and SpaceX private companies. And as soon as that happened, we started getting lots of calls, not just from companies that wanted to know how to get involved, but also from large established counterparties, market makers, institutions. And they were asking us, they were like, wait a minute, how do we get involved? Can we provide liquidity here? Can we plug into your European offering? So I'm very optimistic that this is going to be a big shift, and we're at the very beginning of it.
You talk about a big shift, and we have to throw it out there. It's not just about stocks. It could be about bonds, real estate. And today we ran a story on the Bloomberg about how Zach Witkoff is talking possibly about tokenizing Trump's real estate. How realistic is that? How soon might that happen?
I'll tell you, it's not a technology barrier. We have the capability to tokenize all sorts of real-world assets. You saw that in our European announcement. We could tokenize privates. Obviously, we're live with tokenized versions of public equities. Real estate, art, all of these assets that have been typically the domain of high net worth individuals. They've been illiquid. They've had high fees for transactions. I think you'll see those being tokenized and being packaged up and made available to the mass market. And I think real estate's a big opportunity. I think it's smart that they're aggressively pursuing that because everyone wants access to high quality real estate, particularly the mass market.
But isn't it true real estate is actually more complex? I mean, they tried this before. It hasn't really worked.
It has some similarities to a private company, actually. If you think about what a real estate investment looks like, you create a corporation. Using that corporation, you acquire some assets. It has some costs, which you want to minimize as much as possible. Maintenance. It has revenues like rent, receivables, or depending on how you use it. So if you can tokenize a private company, that same technology can actually be used to tokenize real estate.
It was Robinhood CEO Vlad Tenev speaking to Bloomberg's Haslinda Amin. Do stay with us. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Sky-high valuation, OpenAI becomes the most valued startup at $500 billion, surging past SpaceX. Tech optimism, markets shrugging off U.S. shutdown concerns as tech drives stocks to fresh highs. And the White House plans to fire federal workers this week as the government shutdown stretches into a second day. And we weren't kidding. We saw records yesterday on most of the major benchmarks, and futures look to be pointed higher once again today. This all because we got negative jobs, albeit in the private sector, sure. But we don't get jobless claims today either. Neither do we get final readings on durable goods orders, factory orders. We do, though, have enough, it would seem, to have traders adding to easing bets. The S&P ended September with a 3.5% gain. The Nasdaq 100 was up 5.4% in the month. Let's look at yields because we are looking at them moving lower. In fact, the 2-year dropped 7 basis points after we got that ADP negative print yesterday. The benchmark 10-year was down 5 points, and we have them roughly at around the same levels today, 3.53 on the 2-year, the 10-year at 409.23. We do get challenger job cuts a little bit later on. And I do want to bring you this headline. The EU is to propose doubling the tariff rate on steel imports to 50%. Once again, keep an eye on steel stocks today. The EU is going to propose doubling the tariff rate on steel imports to 50%. All right, let's get to some individual stocks to watch now. Over to London and Chloe Melly. Chloe.
Good morning. So AI-related companies are up this morning on the back of a wave of really good news from across that industry. So we had, of course, OpenAI's $500 billion valuation that you mentioned, as well as reports that Intel is in talks to add AMD as a customer. So there seems to be a lot of momentum in that industry, and investors seemingly not too worried yet about that AI bubble potentially. Moving on to Tesla, where the pace of sales decline is expected to slow. So that is driving the shares up and providing some sense of relief for those Tesla investors after quite a lot of weakness in that stock. And finally, let's move over to Equifax, which is down this morning after FICO launched a program that will allow mortgage lenders to directly calculate and distribute credit scores to customers. So that will, of course, reduce that reliance on credit bureaus like Equifax. And this is really driving the shares lower this morning for Equifax.
Yeah, it's a fascinating story. Chloe, thank you so much. That is Chloe Melly there. Amy Silverman of RBC says investors have been, quote-unquote, angsty for a while. She writes this: the markets have not started freaking out yet as the government shuts down, but I do think they will if this becomes a protracted fight. I'm pleased to say now that Amy Silverman joins us. She is head of derivative strategy at RBC Capital Markets. Amy, what will it take? I mean, it seems like every time we get a tech headline like the OpenAI valuation or somebody doing a partnership with somebody else, it just shunts everything else to the sidelines. Do we need for these other tech headlines to go away in order for the market to feel that there's actually a government shutdown?
Yeah, perhaps, or perhaps, Bonnie, it's just that the impacts are quite early right now. We haven't felt anything yet. I think even personally, if you start going through that TSA line and it's taking a lot longer, then it starts to hit the market and investor psyche a little bit more. Look, we're really only in day one of this. We've seen government shutdowns, specifically going back to December 2018 to January 2019. That was quite protracted. And then you did see a move both in the market and volatility. We're certainly not there yet, but I do think that could create some potholes if it becomes lengthened in time.
Yeah, the VIX has crawled up between 16, 17. Is that an appropriate level for the level of risk that's out there right now? What is the term structure of the VIX curve telling us?
Yeah, two great questions. The first is, I think this is a big source of debate in our world. So a 16, 17 wicks, it's above long-term averages, but it is still relatively sanguine. I think most people think of that psychological 20 level as starting to get angsty, if you will. But at the same time, you do have relative steepness in term structure. That's something we saw almost immediately heading out of Liberation Day 2. And just to translate, that just means that future concerns are greater when you look at them on a normalized basis than they are now. And it's sort of reflecting the fact that there are a lot of can kicking, certainly both from the government side and the market side, but it doesn't mean that you won't hit a reckoning at some point in time.
Yeah, we were just looking at a chart which showed us where the VIX was the last time that we had a shutdown 7 years ago, and it was, close to 36. That said, the S&P had dropped 18% to that point, and it does seem like we do get S&P support whenever there's a VIX spike. Now, I want to ask you, we have gold and stocks pretty much at records. Is that a market that's contradicting itself, or are these two very different cohorts of investors here?
No, I think that's actually, when I think about the rally, a lot of investors say to me, it feels like a reluctant rally, meaning they feel like they must participate. And we've written about this, essentially this idea that right now, this right tail, this FOMO that you get in the market where the concentration is so high in benchmarks that you as an investor must be in the market. When you think back to gold, it kind of shows you that it is to some degree reluctant, and to some degree people are thinking about the left tail. They've just chosen to express it in a different vehicle, because when you look at something like the S&P, because it's beholden again to that one day we'll get some OpenAI news or we'll get some AI tech theme news and it can just continue to rise up. You have to prosecute that right tail in a different way than you have in the past.
Who is hedging right now, Amy, and what kinds of hedges are they putting on? It doesn't seem like there's a lot of macro hedging going on, but there must be.
So the short answer is a lot of folks, when we kind of left Liberation Day and we had that spike up, they were still pretty skeptical. You saw that in term structure. You did see people hedge. Now, essentially what happened is after the Fed spoke and they did their first rate cut, a lot of those hedges rolled off and they have not been reinitiated. One of the reasons is, Vonnie, people just didn't make money on those previous hedges. The market has a short-term memory and people don't like remembering that they paid premium and watched it burn away. So the answer to your question is not many people are hedging now, because a lot of hedges that were placed didn't make any money and they're reluctant to do it again. I think sometimes it actually takes a drawdown first to see more hedges come back into the market.
It's funny, you tell this anecdote in your notes that, you speak to investors a lot, obviously, and when you speak to more than 30 at a time, you ask by a show of hands who thinks the market will be up by year end. And even though they've all been bearish throughout your meeting, the preponderance of hands goes right up, right? So there's some kind of a dislocation here. If we see any kind of catalyst that starts to poke at this market, will we see a complete capitulation?
Not necessarily complete capitulation, but I do think the velocity is something that you have to watch out for, because that's exactly right. It's one of my favorite anecdotes, because anytime I get into a room where that end sample size is fairly large, I've got to take my poll. And again, these people aren't happy about it. They feel like they have kind of under participated, but they do think the same thing. And so I think if you start to get either, this could be earnings or could be a protracted delay, you finally get that drawdown that, I don't know if you remember, everyone was talking about this this drawdown that we're definitely going to get because of seasonality in September, October. Where is it? I don't know. I don't see it yet. But, the idea that that expectation is still there, I think, can place that velocity a lot quicker than we expect.
Amy, are there any spots you see where downside protection is cheap, or maybe even cheap to the point of being mispriced?
Yeah, I think a lot of just your indices, your S&P, your Qs, your IWM, they're all relatively inexpensive relative to history. That often happens when you've had the rally and then a lot of these hedges get rolled off and they don't get replaced. So just simple things like that. The second thing I would say is when you think about, the left tail as what people typically talk about downside versus the right tail, that spread is becoming larger, especially in areas where it's like those big themes like mega cap tech versus something like small cap, for example. We've continued to see those volatility spreads widen because people also want to play these themes of valuation being too expensive in one versus the other. And so there are a lot of pockets of opportunity. The question is, do we keep riding this momentum wave, or do people finally get to take advantage of it?
Yeah, I mean, to the extent that we've seen a run-up, what is it responding to? Is it responding to Fed rate path uncertainty, Fed independence being perhaps questioned, the rally going on too long, Amy? And where are you seeing protection being bought?
Yeah, I'd say two things. I'd say first, when you see protection being bought in the indices, a lot of time what happens is you just get that capitulation. So what we're actually seeing people do is instead of owning something, for instance, like owning the small cap rally, they're renting it. So what they're doing is they're buying call spreads, for instance, in IWM. And so this is a way of an investor saying, look, if we believe that at some point you're going to get a breadth widening, which they think is healthy, they're still not ready to kind of put all their chips in that basket because they continue to see that concentration rally in names like mega cap tech. And so they're going to rent rallies in other places as opposed to putting on protection in names where there are concentration risks, because again, that FOMO makes it very difficult when you're at the end of the year and the indices have run and you haven't. So we're actually seeing these right tail placements as a way to proxy instead of using downside protection in many places.
Amy, cannot wait for the next update. Much appreciate your time this morning. That's Amy Wu Silverman of RBC. Coming up, billions withheld from the coasts and federal layoffs loom. It's day 2 of the government shutdown. More next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We are going to have to lay some people off if the shutdown continues. We don't like that. We don't necessarily want to do it, but we're going to do what we have to keep the American people's essential services continuing to run.
The U.S. government shutdown entering a second day. President Trump has taken to Truth Social to declare that Republicans must use this opportunity to, quote, clear out dead wood, waste, and fraud. Bloomberg's John Harney joins us now from D.C. John, what do we know about the government's scope to actually lay off federal workers?
Well, President Trump has clearly gone on the offense here. He indicated that some of the workers who've been furloughed may be out of work, put out of work permanently during this shutdown. And he and others in the administration have said that this will give them an opportunity to dismiss perhaps hundreds of thousands of federal workers. Now, Republicans have said, some even publicly, that this may not be a great idea, as the DOGE campaign by Elon Musk earlier this year, in which thousands of federal workers were dismissed, agencies were, budgets were slashed, that proved to be rather unpopular with many voters.
Yeah, I mean, the press secretary, Carolyn Levitt, said that we'd see these layoffs begin within 2 days, and that would, you know, take us to Friday. Meanwhile, New York and the West Coast are seeing billions in funding either frozen or pulled. Can you give us some more details, John?
Well, the two projects were held up with our federal money was cut off, at least temporarily. Now, those projects both happen to be in New York, the home states of Senator Chuck Schumer, the minority leader in the Senate, and Hakeem Jeffries, a minority leader in the House. The projects in question, the extension of the Second Avenue subway in Manhattan, and the rail tunnel under the Hudson River between New York and New Jersey. Now, nobody seems to have, perhaps, I don't know how much consideration went into this, but this project is important to New Jersey. The rail project is important to New Jersey as well as New York. And Jack Ciattarelli, I hope I'm not pronouncing that right, the Republican candidate for governor, is trying to become the first Republican governor in New Jersey since Chris Christie, and that's a very Democratic state. So we'll see how that goes over politically in New Jersey.
Certainly the screws are being turned. Bloomberg Washington editor John Harney, thank you so much. Well, markets shrugging off shutdown-related concerns as tech drives stocks higher this morning. Now, OpenAI is driving that optimism with a new valuation. It's eclipsed the $500 billion mark now after the firm completed a share sale. It makes the owner of ChatGPT the world's most valuable private company. For more, we're joined by Bloomberg's global head of private company coverage, Neil Kalaman. So, Neil, OpenAI's valuation, it's been in the headlines several times in the past 3 years. How significant is this latest figure and the pace that we've seen OpenAI rise to it?
Yeah, it's huge news, Vonnie. OpenAI is now the most valuable private company in the world. It overtakes Elon Musk's SpaceX, continuing that tension between Sam Altman and Elon Musk. But also, it's just a sign of just how much interest there is in AI at the moment and how much demand from capital there is. So effectively, OpenAI's valuation has more than trebled in the space of a year versus revenue growth, which is annualized at just over 100% at the moment. So effectively, people are willing to pay more for less earnings growth. which just shows the kind of exponential nature of what they think is to come. SoftBank among those being investors in the latest round. And these people are basically playing bets that AI is going to be the dominant industry of the next 25 years. For those who are a bit more skeptical, this is going to add to that evidence. They're worried that the boom is turning into a bubble, and we're going to see more deals like this going forward, and that's going to, we're going to see whether these deals will lead to actual revenue, which will justify the valuations and the growth that's there at the moment.
Yeah, but not even everybody sold their shares, which was very interesting. How much has the private companies landscape changed due to AI in recent history?
Yeah, it's a huge shift, a paradigm shift as it were, because while companies have been staying private for longer in recent years, Stripe is a good example of that. Effectively, all these companies have emerged in the last 10 years, and suddenly they are the biggest companies in the world, or at least some of the biggest companies in the world. So OpenAI and Anthropic, for instance, are now 2 of the 5 biggest privately held companies in the world. And that shift, it just shows that there's going to be an ongoing trend to stay away from listings. These companies don't want regulatory oversight. They don't want to have to publish earnings. They don't want to have to answer to short-term shareholders. They're taking a long-term view on their spending, and that's part of a wider shift. The number of U.S. publicly traded companies has fallen about 50% since 1996. AI is just merely an accelerant on that trend, and it is a huge trend. We're starting to see companies, they might have revenue of 0 to 20 million at the moment, but in 2-3 years' time, they could be some of the biggest companies and some of the most powerful companies in the world.
Fascinating. Neil, you're going to cover it all for us. That is Bloomberg's Neil Callanan. Thank you. Well, one stock we're keeping an eye on, Tesla, as the EV maker is scheduled to report third quarter deliveries. For more, I'm joined by Bloomberg's Craig Trudell, who leads our global autos coverage. So, Craig, what can we expect from Tesla's third quarter sales numbers?
Yeah, we look at the consensus estimate, and it's for a small decline, about a 5% drop. But I think many analysts, just as the quarter was coming to a close, were a little bit more bullish than that. So there's some possibility that we see a slight uptick actually year over year. And of course, that would be in keeping with a trend we saw yesterday with a lot of manufacturers coming out with really positive sales results for their EVs in the U.S., where consumers were trying to take advantage of the consumer tax credit for EV purchases before that was phased out at the end of September. So going forward, we're not going to have that big sort of tailwind for EV sales in the U.S. And so the big question is, putting aside whether or not we see a small increase in Tesla quarterly sales for the third quarter, just how much of an impact is that taking away of incentives going to have on Tesla in the quarters to come? We've heard Elon Musk talk about some possibility that Tesla could be in for a few rough quarters going forward.
Yeah, well, it's interesting. Year over year, the stock is up 84%, but just this year alone, only up 13%. And some of that has come just recently since Musk renewed his focus on the company after a little bit of a diversion. So does it really matter what the delivery numbers are?
It's honestly a good question. I think there's been not a whole lot of attention paid to sort of the fundamentals of this company. It's more a narrative of, Musk sort of putting aside politics, and at least that's the narrative. I think he's still sort of very, very active on X and fighting the culture wars. And yet, the fact that his board has arranged this pay policy and put out a lot of ambitious targets, I think that was, sort of pivotal for these shares. And I also think, the emphasis that the company is putting on, the shiny objects in the future, the humanoid robots, robo-taxi services, those sorts of things are what sort of get the bulls animated, as opposed to the sort of boring business of just selling cars.
Will it be very affected by, China's pivot to hybrids, particularly now that those EV credits are going away?
Yeah, I think we're seeing, particularly here in Europe, the Chinese manufacturers getting huge traction with their hybrids. And we saw just this past month them setting a record in terms of their share of the hybrid market. I think, in the U.S. as well, we're seeing, even before the Trump administration sort of took away a lot of this support for electric vehicles, we weren't seeing this sort of huge uptick in sales that we maybe were hoping for, would be a sort of byproduct of the Biden administration's level of support for this industry. So, a much greater strength in terms of even conventional hybrids without a plug. The likes of Toyota have really been benefiting from that in the U.S. We may see more of a trend, sort of across the industry where we're hearing a lot of manufacturers putting more emphasis on that because of the pushback that we're seeing at the showroom level of consumers just not being ready to make that full jump yet to fully electric.
Yeah, exactly. Craig, thank you so much. Looking forward to those numbers a little later this morning. That is Bloomberg's Craig Trudell. Coming up, we'll get you set up for your trade today, so stay with us. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
First up, Tesla today set to report its third quarter sales data. Now, we don't get jobless claims data as the U.S. government shutdown enters a second day. We won't get those final durable goods orders or anything like that. We will get challenger job cuts, though, and we do get some Fed speak from Dallas Fed President Lori Logan at 10:30 a.m. Eastern. Let's take a look at some of the pre-market movers. Obviously, chip makers higher after the industry saw its market value soar, adding $200 billion in a global rally on AI optimism. Tesla higher by 1.4% ahead of that latest round of deliveries data. And Equifax, this is a really interesting one, dropping more than 11% pre-market as FICO says it's starting a direct licensing program, which could mean that Equifax wouldn't be as important a player in the system anymore. Let's take a look at the macro environment as we enter day 2 of a shutdown. We have futures pointed higher after a great month in September. We're kicking things off in October on a nice note. We do have a weaker U.S. dollar, though, and the 10-year yield under 4.10. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
Let me break down our CapEx into the buckets that we spend. A big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This isn't a thing where it's going to be a long-term shutdown.
Trump is playing a different game by a different set of rules than I think the Democrats on Capitol Hill.
The market doesn't seem to really be paying attention to what's happening from, the government shutdown perspective. The data is the data, whether it comes out or not.
This means we're flying blind in a highly foggy environment, and this is very risky.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday, shaking off the politics. Equity markets kicking off October, adding to September's rally as Washington shows little sign of delivering a breakthrough. The limited data we do have is keeping the Fed well on track to cut interest rates.
And look, yesterday's ADP data is controversial, especially with some of the revisions. But what's fascinating to me is how the economic data, the limited that we have, is being interpreted completely differently in the bond market or the stock market. The bond market is saying, oh no, weakness ahead, the Fed's got to cut. The stock market is saying, yay, the Fed is going to cut, risk on. And how much does this reflect two different economies in parallel that the Fed is responding to in one hand and the stock market's responding to in another hand?
Now, typically we'd say, wait for the data, jobless claims, payrolls, to see if it confirms what we got from ADP, but you're going to have to wait a little bit longer. No claims later on this morning. Perhaps no payrolls tomorrow morning at 8:30 Eastern Time.
It doesn't look like we're going to get the payrolls report tomorrow. We do not have right now a working framework for Democrats to be willing enough to sign up for the continuing resolution to keep the government open. And I say that because Senate Majority Leader John Thune had this interview with Politico and almost acknowledged that there has been outreach between these two groups and that they would be willing to have a conversation when it comes to health care and these subsidies when they had 8 or 10, preferably 10 or more, Democrats sign up, base a little bit more mass, that they're willing to have a negotiation if more Democrats are willing to keep the government open through this continuing resolution.
Typically, investors don't really care about it. The market looks through it, the economy bounces back. Timing matters. Is it different this time? Neil Dutta, Ranmac, had this to say. It's coming at a fragile time. It could go on for a while. Government workers might save more if they think this will happen again. He's a little bit more nervous about the position we're in, the timing this comes at, and what could happen to this economy.
And that's from the economic perspective, and that's without the potential job cuts that we hear being threatened from the White House that could come in the next few days. There's an additional aspect, which is this is a highly confusing moment economically with even less data. We're in a dark room, and now we've got blindfolds on, and now we've got big helmets over those blindfolds. And there's a question here, especially as Austin Goolsbee of the Chicago Fed comes out.
think what you will of some of his proclamations. He said this just makes it incredibly difficult for us to really have up-to-date information as we head into that meeting, as it's unlikely they're going to be able to get CPI the longer this drags on.
So you've got the data, and then Brammer pointed out you've got the equity market close to all-time highs, at record highs, and then you've got private markets too. Valuations. Do you remember the definition of a unicorn? Private startup, valuation of $1 billion. We've got herds of them now. Check this out. $500 billion valuation for OpenAI. Let's get your head around that. A few years ago, unicorn, super rare. $500 billion valuation for that company.
Yeah, now we're selling My Little Ponies. Look, I'm looking at this and I'm thinking to myself, at what point does this indicate froth? And at what point does this represent the sea change that OpenAI really represented, that catapulted a lot of the tech valuation from 2022 and completely transformed the way that AI was viewed in terms of its potential in this economy? So one of two ways of looking at this is a Rorschach test, as people kind of game out valuations of other companies as well.
Nasdaq futures up this morning, on the S&P as well, high by 0.2%. Coming up this hour, John Stolfus of Oppenheimer as markets shrug off the government shutdown, Vito Spaduto of RBC Capital Markets on a surge in deal-making, and Kelsey Barrow of JP Morgan Asset Management on what labour market weakness means for the Federal Reserve. We begin this hour with stocks rising after closing at record highs. John Stolfus of Oppenheimer calling for a street high 7,100 on the S&P by year-end, writing this: economic resilience along with revenue, earnings growth and innovation across the sectors remains key in our view to the market's ability to continue climbing the proverbial wall of worry. John joins us now for more. John, good morning.
Good morning.
Is that government shutdown just another brick in that wall of worry?
I think it's another brick in the wall, to quote Pink Floyd. And that said, we've seen the markets really overcome and traverse hurdles all along this year. And it is indeed, it's the innovation, it's the resilience, and it's a different structure in terms of the market itself, we believe, in terms of participants. You know, the market is not just the guy with the monocle from the Monopoly game, you know. It's all kinds of people. And in the U.S., it's multi-generational people investing for longer-term goals. So the disturbances that are caused by the potential for a short-term or intermediate or longer-term shutdown are of less concern to them right away, as opposed to getting money positioned for goals that may be 3, 5, 7 years out.
Can I build on that, John? Do you think there's some tension between different generations on how they view how this market should be valued? Some tension between the boomers and what they think the appropriate multiple is for this stock market with a different sector mix?
Most certainly. I think, you know, when you look at people who've been, the boomer generation, stocks are cheap at a 16 forward multiple. As you go forward in generationally, people are willing to pay higher multiples for growth. And I believe the reason why, a lot of it comes from Ed Yardeni, who's for years said that the Wilshire 5000, there aren't enough stocks to really qualify that are publicly traded anymore for that indices anymore, because it's, about 3,500 stocks or 3,400 that you actually have to choose from. And the thought is here is it's supply and demand. It's the basic thing of economics. The demand for your technology, your hyper growers, the ones who are well established, deeply embedded in the lives of both business and the consumer, where we're all on the upgrade cycle, whether we like it or not, as I always like to say. This is what's driving this market in many ways, and it differentiates, not just generationally, but the difference between traders who are looking at risk to capital put at risk on a day-to-day, minute-to-minute basis, and intermediate to longer-term investors. When I started in this business 42 years ago, hard to believe. It's not that I didn't think I'd live this long. I didn't know how long it would happen. But it was the retail investor would always come into the market, usually once the market was up 20% and everybody knew it, and the cab driver was asking you for a hot tip if he saw you had a copy of the Wall Street Journal under your arm. Today, people are very well informed by the financial media. They have all the arguments. You get to see the players actually express themselves, and you see the body language that people are using, you know, and it makes it's remarkably more intimate than it was ever before, and people are better informed and better able to work, we'd like to think, with financial advisors who are working as fiduciaries.
They also are better sold on the story of the hopes and dreams of just how much AI can do. And there is a lot of truth to it. And history doesn't repeat, but it does rhyme. And back in the dot-com bubble, boom and bust, There was AOL. You've got mail. We don't do that anymore. I mean, some people still do, and God bless you. But I'm just wondering, going forward, how do you identify all of the money that's going to be wasted at a time when there's a lot of projections and not a lot of data on what ultimately will happen or how it's going to be applied?
Well, I think for one is if we just go back to if we just go back to as recently as the tech bubble, things were practically primitive versus where we are today. I can remember working at another well-known firm headquarters on Broadway in 1997, and suddenly you would find the internet would go out, and when you would go home to connect to the corporate, you'd have some kind of little device would be and all that stuff. Today, we still have problems with technology, but it's very well established. And the idea is, I can remember putting dimes in a payphone. People don't even know what a payphone used to look like. Sometimes I see an old architecture in our building, which another firm had before us. There's actually a group of things, no phone anymore, but what are these things for? They're for the press as they exited to write things down. But where we are today, I think a lot of the stuff will likely prove disappointing, but the core will be, it's already being invested in and utilized to create greater efficiencies.
I guess that you talk about the babies being thrown out with the bathwater. I don't see any babies, and I don't see any bathwater being thrown out either. Nothing's being thrown out. So how do you identify what that means?
Well, I'd say actually on a day-to-day basis, I'm not solely a strategist. I also manage money for the firm, both an ETF portfolio with passive indices and then individual stock portfolio. And we've seen a considerable broadening of the rally that has suddenly rewarded sectors like industrials. We've seen better attention played to utilities, both on, as it looks like the Fed is going to be cutting rates going forward, not necessarily enthusiastically, but on a down payment kind of basis to show that the rate hike cycle is over. What you have effectively is you've got utilities are no longer considered as much of a risk as a bond proxy because it looks like interest rates are coming down. Healthcare has caught a bid as a result of one company's efforts to reduce prices in the last couple of days. I'd mention the name of the company, but because I manage money, the firm doesn't let me. They don't want me pitching stocks that I might or might not own.
Staying on the Fed, how difficult is the end of October's meeting going to be if this government shutdown is prolonged? We know we're not likely going to get tomorrow's payrolls report, but then what about CPI on October 15th as well? They might not have all the most relevant, up-to-date data.
I think, I think it's close enough to the September meeting that I think we kind of got a fairly good idea that the dot plots showed that there would likely be a cut in October. And I think we're close enough in terms of the data. I think the question would be to December, what's going to happen there? And hopefully by then this will be behind us, this whole question of the shutdown.
John, never mind the bathwater. This has been a pool party now for 6 months. And it's getting wilder. I think spring break. Don't want to go there. Look at the valuations we're seeing in private markets. $500 billion on a startup. Now, John, I'm just trying to work out, never mind the risk aversion. I don't see any. I saw a bunch of debt issuance in September, and people starting to get pretty excited about the future still on top of that. When do you start to get concerned?
Well, I play in the public markets as opposed to the private markets.
Doesn't one inform the other right now?
I think to some extent, but the selectivity there and what is chosen to move into the private equity market is not necessarily everything at play. I think that's something to look at as we go forward. And that, as you mentioned, the money that's being thrown at this one particular deal is like, the valuation is rather worrisome, except if you consider how much is already developed. This is this isn't the primitive stage of people saying, someday we will have 1 million eyeballs on our website.
Sure.
This is companies that know you need billions of eyeballs. And you need to be well capitalized, and it's not just well capitalized, but the likelihood of cash flow generation pretty quickly from here to there. Because this week I was at a due diligence meeting at an ETF firm, a management firm that has ETFs,
right.
And their technology people just talking about all the investment that's being made here, but by smart people who are educated and deeply involved in tech for maybe 40 or 50 years.
John, it's good to see you. Always is to get your thoughts. An experience spanning 40 years plus. John Stolfus there of Oppenheimer. Fascinating story just dropping from Reuters. Check this out, the lead paragraph. Eli Lilly was asked to produce more insulin. Pfizer to produce more of its top-selling cancer drug, Ibrance, and its cholesterol drug, Liptor. And London-based AstraZeneca asked to consider a new headquarters in the US, according to two news sources. This dance between the US and the private sector. Trump seeking deals in 20 to 30 critical industries before the midterms. The White House and agency staff are seeking deals that can be announced by the president. Deals include taking equity stakes and regulatory relief in exchange for concessions. That dance has been a dominant feature of this story for the past 6 months.
Sounds like Trump RX wants to expand. Further in the story, they talk about how these executives are getting near daily calls from Chief of Staff Susie Wiles, and it comes at a point where during the shutdown, the debate that Democrats want to have is around health care. And this is something that Democrats actually, one of the few areas right now they are polling better than Republicans. So if Trump can make this a Republican issue that we are delivering, maybe on bringing drug prices down, at least seeing that they are in active engagement with some of these pharmaceutical companies, that could be a political win for them going into the midterms.
That's the latest story from the team over at Reuters this morning. Let's get you an update on stories worldwide elsewhere with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Good morning. The White House is preparing for mass layoffs of federal workers as the U.S. government shutdown stretches on. Budget Director Russell Vought told lawmakers that agencies will move to terminate workers within 1 to 2 days, according to people familiar. Details about what agencies or positions would be targeted remain unknown. The U.S. Supreme Court refused to allow President Donald Trump to immediately oust Federal Reserve Governor Lisa Cook as she sues to keep her job. The court's order means Cook can remain in her position at least until January, when the justices will issue a new ruling after hearing arguments over her alleged mortgage fraud. OpenAI's valuation soars to $500 billion. That makes it the world's most valuable startup. Sources telling us here at Bloomberg, current and former employees sold more than $6 billion worth of stock, pushing the company past its previous $300 billion valuation. This all as negotiations are underway with Microsoft to convert OpenAI into a for-profit company. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, bracing for layoffs.
If this thing drags on for another few days or, God forbid, another few weeks, we are going to have to lay people off. I actually don't think it's going to be that long of a shutdown. You already saw some evidence that moderate Democrats are cracking a little bit.
That's up next with Michael Townsend of Charles Schwab, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
typically, given it's Thursday, we'd be about 2 hours away from jobless claims. Not getting jobless claims today. On to tomorrow. Looking for payrolls, 8:30 Eastern Time. Probably not getting payrolls at 8:30 Eastern Time. So your big event tomorrow could be the ISM services at 10 a.m. Eastern Time tomorrow morning. Now, typically, sometimes, that does end up being the bigger event on payrolls Friday. ISM services, big chunk of the economy, important read for the month of September. I'll be glued into that one. Never mind payrolls.
Yeah, that's why I was really excited yesterday for ISM manufacturing, and then it came out and it was just sort of meh. It kind of doesn't give us any clear sense of where things are going. Same with some of the other data that we got ahead of what was supposed to be jobless Thursday, and then potentially non-farm payrolls on Friday. I am curious, though, to see whether you are seeing any acceleration or any clarity in how much that could inform what the Fed ends up doing.
The data we have got, ADP, the lowest number since March 2023. Lisa talked about factory activity shrinking for a 7th consecutive month. New orders slipping back into contraction. That was slightly unnerving yesterday. That was bad news, and that was good news for the bond market, and apparently good news for stocks too. Equity futures up again this morning by 0.2% on the S&P, on the Nasdaq up by 0.3. Under surveillance this morning, bracing for layoffs.
If this thing drags on for another few days, or God forbid another few weeks, we are going to have to lay people off. We're going to have to save money in some places so the essential services don't get turned off in other places. That is the reality of the government shutdown that Chuck Schumer and the Democrats have foisted upon the administration. I actually don't think it's going to be that long of a shutdown, because I think you already saw some evidence that moderate Democrats are cracking a little bit.
That was the Vice President of the United States on the government shutdown. Here's the latest so far this morning. The White House and the Budget Office warning the administration will begin firing federal employees due to the government shutdown. Bloomberg's Laura Davison joins us now from Washington for more. Laura, welcome to the program. Walk us through the next stages of this. What happens today, tomorrow, through the weekend?
So as soon as today, we could start seeing some of these mass layoffs that Russ Vought, who's the budget director at the White House, has teased. He is playing very hardball tactics here and is playing a politically astute game. He's not just cutting random spending or looking to cut random jobs. He's looking to cut the government where it most affects Democrats, particularly key Democrats in this fight. So we saw yesterday one of his first moves was to cut infrastructure funding, about $18 billion for New York City. Of course, Hakeem Jeffries, the Democratic House leader, and Chuck Schumer, the Democratic Senate leader, are both from New York. We then saw he cut green funding from only states who voted for Harris. As we move into this job phase, which again could start as soon as today, it's likely that these jobs will be either for programs that Democrats like or in places where Democrats live.
Laura Davison with the latest down in Washington, D.C. Laura, thank you. Michael Townsend of Charles Schwab joins us now for more. Michael, welcome. I just want to build on some of that with you. What you're looking at the moment, and ultimately who's benefiting from any of this in the court of public opinion. Is anyone winning?
Yeah, I think it's really hard to see anyone winning at this point. And, I think the administration is trying these kind of hardball tactics that target Democrats. And I think the question is whether that actually hardens the Democrat position rather than, sort of making them cave. The vice president in the quote you played, referenced that there has been a couple of Democrats that have voted for the most recent iteration of the temporary extension of funding. But it's only been a couple, and they still need several more. From the Republican perspective, they need at least 5 more Democrats to get on board. I'm not sure that these tactics are the way that's going to happen. So I think this is going to play out over a longer time than maybe the vice president thinks.
So when OMB Director Russ Vought, though, gets on a call with House Republicans and says, we're going to have these mass reductions in the workforce, firings are going to begin, is that going to be legal when the government reopens?
Yeah, I think this is an interesting question about whether it is legal, because typically, as we've gone through shutdowns in the past, right, workers are furloughed, and then, they get their jobs back when the government reopens, and in most cases, they're retroactively paid for that time. So, I think this is like so many things in the administration. It's likely to end up in the courts, and the decision on whether it's legal or not is going to play out in real time, and then possibly after whatever happens with the end of the shutdown. So I think that's an open question.
This is one tool the Republicans are using to try to make this as uncomfortable as possible for the Democrats. We also saw, obviously, the freezing of funds when it comes to blue states, like what's happening here in New York. What else can the Republicans do?
Well, I think first of all, though, it's important to remember that you can't target just Democratic voters, right, on this. I mean, if you're laying off federal employees, there are plenty of federal employees who live in Republican districts who are Republicans who voted for the president who are probably going to be frustrated. So I think that's the first point, is that you can be as targeted as you want, but you're still going to end up affecting a wide swath of voters than maybe your own voters. And so I think how the public and the voting public feels about this is going to be something that's really, really important to watch over the next week or two as this plays out. But I think you're going to continue to see the administration, target programs and areas that are predominantly Democrats. They're going to try to target Democrat priorities to make this more difficult for Democrats. But I think the flip side of that is, do you end up in a situation where you're sort of hardening the Democratic position because it becomes so transparently political, what the administration is doing? So, the dynamics of a government shutdown are always really, really strange. I think this is going to be one of the stranger ones, and we're just going to have to see how it plays out.
Sort of like some of the imagery coming out of the Oval Office yesterday with President Trump and the Democratic leaders that sent a pretty strong message. I guess my question is, you said that some of the hardball tactics could harden the Democratic views. I'm just wondering if you believe that this shutdown could go on a lot longer than markets are currently pricing in and have a greater ramification for the economy.
Yeah, I think there's a possibility. I'm sort of the view that either this gets resolved relatively soon, like say sometime next week, or it extends for quite a while, and perhaps through the month of October. And I think that's going to really depend on where Democrats feel like they can come out victorious in this. This whole battle over the expiring enhanced subsidies for purchasing health insurance through the Affordable Care Act, that's something that there are Republicans that are in support of, and particularly in the Senate, where I think there are Democrats and Republicans talking behind the scenes about ways to get that done. The question is whether, even if you got some kind of deal in the Senate, could that pass the House, where I think conservatives are much more hardline against those. So I think there are a lot of machinations that are going on behind the scenes. Right now, those don't appear to involve leadership very much. But, as shutdowns drag on and the public gets more and more frustrated, maybe you can get to some kind of deal in a relatively short term. But I do think there's a decent possibility that this could last for multiple weeks.
Michael, thank you, sir. Michael Townsend there of Charles Schwab. That's not where this market is. I don't think it's where many people are. Peter Chi of Academy said the same thing yesterday in a note. He said, I wouldn't be surprised if this one lasts weeks or even months and not days.
It really is informed by what happened in March when Chuck Schumer allowed the government to stay open and cut a deal with the Republicans, and then it came under scathing criticism for having folded, not doing enough. As you start wondering, what is, to your question, the idea of the political blowback? How much is there? And right now, it's unclear. Nobody's particularly happy. You point out airlines. I think that you're right.
Well, if it's prolonged, curmudgeon travelers is what's going to do it. When you had the 35-day shutdown, Trump's first administration, the same day the FAA started closing and talking about delays in some of major airports is the same day Trump agreed to a temporary government funding measure.
Most people I know are curmudgeon travelers.
Everyone's a curmudgeon.
And this is going to make it that much worse.
Coming up on the program, Vito Spaduto of RBC Capital Markets on a big year for deal making.
said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Four-day winning streak on the S&P 500, the longest daily run in around about 3 weeks. This morning we add to it, up about 0.2% on the S&P, up around 1/3 on the Nasdaq, up by 0.4 on the Russell. Lisa talked about yesterday's bad news being good news for this bond market across the curve, particularly at the front end, the return of the so-called bull steepener. 2-year yields down, a decent chunk. We're back down to the 350s. And this move for gold, what a move for gold. Precious metals taking off this year. We're talking about something like a 50% move year to date. Goldman Sachs, good friend of this program, Dan Struyven, said this in a note: the potential for private investors to diversify significantly into gold presents a large upside risk to a forecast of 4K for mid-26 and 4,300 for the end of next year.
Well, in fairness, we've gotten to almost 4K this year, potentially even at the end of this month. I mean, we've talked about the biggest month of gains for gold going back to 2011 in the month of September. You start wondering why? Well, it's exactly the dynamic you were talking about. The front end of the yield curve is responding to a labor market. The equity market and risk assets are responding to something completely different. You put the two together, and it seems like this economy is going to be run hot. It's going to lead to some marginal increase in inflation, and that's going to debase on the margins the dollar even further.
Getting closer and closer to 4K on gold, up again this morning by 0.4%. 3 hours away from the opening bell. Let's get you some single names and morning movers. Here's Vonnie Quinn with more. Hey, Vonnie.
Hey, John. Yep, I thought I'd start with Tesla because we are waiting for third quarter delivery numbers out this morning. Investors are hoping to be pleasantly surprised, looking for just under 440,000 deliveries, in fact. Now, as we know, the stock has been languishing for part of this year, but since Elon Musk renewed his focus on the company, we have seen a nice run-up. And again, shares pre-market up 1.5%. If we do get something around the 440,000 mark, that would still be a 5% decline year over year and a third straight quarter of declines. But it would mean that the company was doing better than the first half of the year, where we saw sales down 13%. So next up, I want to take a look at Equifax. This is a really interesting one. Shares plummeting this morning. It might be getting disintermediated to some extent from the Fair Isaac Corporation. So FICO saying late yesterday that it's going to start giving mortgage lenders the option to calculate and distribute FICO scores directly to consumers. Now, that's a threat to companies like Equifax, also TransUnion and Experian, the three big credit reporting firms, and we're seeing the halo effect across the industry this morning. So we'll see if those companies can try to change how they do their business, change their business model to some extent to meet this threat from FICO. Fair Isaac, I should mention, is higher pre-market. And then Fermi, this is a fascinating one. This company was just founded in January, but by former Energy Secretary Rick Perry. It's an energy REIT, and obviously it's aiming to get in on the AI energy story. It's developing energy campuses. It already has 5,000 acres of land leased from Texas Tech. And just to let you know, it also refers to itself as the Donald J. Trump Advanced Energy and Intelligence Campus. So the story with this is it IPO'd yesterday at $21, opened at $25. closed the session up 55% at just over $32 a share. You can see where it's trading at pre-market. It also starts trading in London today. And this all values the market value of this company at more than $19 billion. Not bad for a 10-month-old startup, right, John?
Not bad at all. Not bad at all. We'll have more on that kind of thing in just a moment. Vonnie, thank you. Thank you very much. On a radar this morning, delaying the data, the Labour Department confirming the weekly jobless claims will not be released as scheduled today. This also puts Friday's crucial payroll report in serious doubt as the government shutdown continues. Elsewhere, the Supreme Court refusing President Donald Trump's bid to immediately remove Federal Reserve Governor Lisa Cook, the order allowing Cook to keep her seat until the justices hear her case in January. And finally, OpenAI is now the world's most valuable startup after employees selling about $6.6 billion in stock. That move pushing OpenAI's valuation to $500 billion, propelling the ChatGPT owner past Elon Musk's SpaceX.
I love what you were talking about before, that we used to look at who's the next unicorn at $1 billion, and now I'm thinking about this sort of flock of unicorns where there's like squirrels trying to get rid of them. I mean, at a certain point, you're wondering, at what point does this indicate froth, and at what point is this worthy, given the fact that ChatGPT single-handedly changed the conversation around AI, and single-handedly changed the investment structure of a lot of these big tech giants, and single-handedly changed the concept of what search was on the internet, and is raising questions about the future of internet as we knew it. So on one hand, oh my gosh, froth, bubble. On the other hand, well, it's kind of a transformative moment.
But it does feel kind of like a bubble when earlier this year, this valuation was at $300 billion, and now we're October and it's $500 billion. It's pretty incredible, but also comes at a time when people are saying this might be the right strategy if you don't want to go for an IPO, because it's a way to make sure you're also retaining top talent, because they are getting some of this money back, and you want to retain some of your best when you have the likes of Meta pulling out, what, $1 million contracts?
Do you remember Long Island iced tea? We talked about this just last week. Remember when they renamed themselves?
I remember for
and
lots of
put
reasons. Carry on,
blockchain
John.
on the end? Do you remember
Lisa.
that?
Yes, I do.
Do you remember that?
I
They
do.
put blockchain on the end of the name, and there was this big rally for those kind of stocks. I remember having that conversation at the time, and someone correctly pointed out to me, don't allow that, the craziness, to distract you from the real things that are going on. And my response to some of that is don't allow the real things that are going on to validate and justify some of the crazy stuff happening elsewhere. And I think you've got to draw a distinction at the moment between both.
Part of the problem is this is sort of a science fiction moment, so people don't know what to believe. I'm just thinking back to the Long Island iced tea blockchain and think about Overstock, a furniture company, a furniture reseller that put blockchain in its name. It said the word blockchain, and suddenly it was, oh my God, the furniture is going to be on blockchain. At a certain point, you are absolutely correct. I think a lot of people are suspending belief because they don't understand the parameters of what kind of sea change we're in.
Some real things going on, particularly over at OpenAI. What a valuation. Elsewhere, the AI-fueled frenzy in capital markets driving record valuations and sparking a wave of deals. Investors weighing whether the M&A sprint will sustain its pace. Joining us now to discuss, the head of RBC Capital Markets US, Vito Spaduto. Vito, good morning. It's good to see you, sir.
Great to see you, Jonathan.
Thanks for being here, buddy. 6 months today since Liberation Day. I don't know where the time has gone. Can you describe what it was like then and compare capital market activity now?
It's been 3 quarters of what feels like 3 years, to be honest. So I think at the beginning of the year, one of the things we published was we said that we expected that everybody came into the year with a lot of euphoria, expecting significant deal flow, very much of a significant upside, less regulation. And we always said, well, calm down. First Trump administration, it took about 12 months to get to a place where everybody was comfortable and kind of knew how to manage in that environment. We thought that it was going to take about 6 months this year, not a full 12 months, and certainly that played out. And if you look at the different quarters, up until Liberation Day and just right after it, there was some concern. But if you look at the volume of transactions, so right now we sit about up 28 to 30%, whether you're looking at the US or globally in terms of announced M&A volumes. It's all being driven by larger transactions that are up somewhere between 50 and 65%, again, depending on whether you look in the US or globally. What's interesting is the 3 summer months, June, July, and August, were each in total up 55%. So you just saw a sprint to the races starting in June, and it's continued into September. I think we were talking about whether the rate cut was going to drive more M&A, and my response was always, well, it's already happening. I'm not sure that we're thinking about that. And obviously the news this week, there's the question of does this shutdown impact things? And again, I think there's still a good amount of activity.
Do you consider this activity just the consequence of pent-up demand old ideas that have been delayed, or are these new ideas? Is this new business? Is this the start of things to come?
Well, I think it is a lot of pent-up demand. I think we came into the year with the conditions being very positive for the markets, very positive from a transaction perspective. And there were some self-inflicted wounds in terms of we had to get through some of what the government's trying to do on different policy. And I think now that the companies are feeling more comfortable with where they are and, feeling more confident and aligned between, say, the C-suite and the boards so that they can actually make decisions, they're going back and reevaluating transactions they've considered for some time. And so I would tell you, when you're seeing some of these large announcements that have been happening, those are transactions that have been considered for some time. It's not, just waking up one day and going, oh, well, the next week I'm going to go and acquire this business. It's really, okay, we've looked at it before. Now let's reevaluate in the current conditions. Our board is very educated on this potential opportunity because we've kept them up to date. They're fully informed on the opportunity, but let's update it to today's conditions. Oh, now it aligns and makes sense. So now let's figure out how to finance it, how to structure it, how to make it work in this regulatory environment. Oh, the regulators are allowing larger opportunities. How do we position for that?
Do you like the idea that more of it comes in debt in terms of the financing?
I'm not sure if I would say more of it comes in debt. I would say that it's structured to what the appetite of the market is.
Which is debt.
It is debt, but I also think that, look, I've been at this for over 3 decades. I've seen when the debt component was even much larger than it is today, and then it pulls back to what's more reasonable. I think corporates are much better prepared today than they were, say, when we were in the global financial crisis or 10 years ago, because they understood what happened when their balance sheets weren't as nimble. And so I think they have more cash on their balance sheets. They're able to borrow at better rates. And even with the rates being higher than they were, say, it's still a situation where they're at all-time levels in many cases.
I wonder how much of the M&A activity is being driven by the idea that big companies have benefit right now. They are better able to be resilient in the face of supply shocks. They're better able to negotiate deals. They're better able to potentially get economies of scale. It seems like there is an emphasis on that now in a way that's different than, say, even 10 or 20 years ago. How much is that driving some of this?
Well, I think the key word you said is resilience. I think they're better able to manage their businesses, adapt quickly to external conditions. And so when they're faced with something that they haven't faced before, I mean, look, 5 years ago we went through COVID. And so we went through something that had never happened before. Businesses shut down for a period of time. They weren't able to do business. They had to quickly adapt. They've learned now they need to be able to plan for various forward-looking markets and businesses and be able to be prepared depending on what's thrown at them. And so I look at the large corporates, they're probably best positioned in that than they've ever been in the time I've been in this business. And so as a result, you're able to make decisions quicker. You're able to move when windows open. I mean, right now we're telling clients that the remainder of this year and into the first half of next year, we feel pretty good about the market conditions in terms of driving activity. When I look at it, it's the things that could derail it are some of the external noise, and do you stop and listen to that noise, right? The shutdown this week, if it gets cleared quickly, it'll be a blip, right? Even the shutdown in 2018, 2019, yes, markets came down. They came back and went even higher afterwards. And so I think businesses are prepared to get through it. Now, if we go through a longer period and all of a sudden we get through the end of October and the Fed is making decisions blind without data that they would normally look to, and does that cause companies and boards to say, well, let's take a pause and wait on this decision? And I think that's the other key thing I see is business and activity is not going away. It's more of a pause. So it's kind of moving to the right. And so, Jonathan, when you say pent-up demand, it's like, well, I've just been waiting to execute on that transaction. I haven't put it on the shelf.
So could the shutdown work as a catalyst, potentially, the way the April 2nd Liberation Day worked in terms of having businesses hit pause?
I think It could a little bit. But again, it'll depend on what we see going forward. Right now, it looks like, and I was talking to one of my favorite analysts, Lori Calvasina, last night, and I asked her about Polymarkets. I said, has Polymarket made a market yet on how long this shutdown is going to be? And I think the leader in the clubhouse right now is October 15th or later, which is kind of interesting. And so she, very nicely pinged me about that last night. I think that, look, I worry about it being too long. I do get concerned in one way about the shutdown, which is it does hurt the IPO market. And so if I think about transactions, oftentimes you want, if you're selling something and you're able to go public, that's a viable competitive alternative that you want to hold out there. And so having less alternatives makes it a more difficult market to execute.
Can we spread the love a little bit, Laurie, Francis, Amy, just so people don't get jealous over RBC?
I spend a ton of time with Francis and Amy and Laurie.
You're doing great.
And it's all good.
Yeah.
You're out of trouble now.
There's only so many I can throw out.
You've got so many different favourites. Vito, thank you. You're one of ours. Favourites. Thank you, sir. Appreciate it. Vito Spaduto there of RBC Capital Markets. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The European Union is planning to boost tariffs on steel imports. The European Commission will propose a long-term mechanism to reduce existing quotas for foreign steel and impose a new tariff rate on imports beyond those quotas. The EU steel industry has faced a severe crisis due to cheap imports from Asia and increased tariffs imposed by the US. President Trump says he will meet with Chinese President Xi at the end of the month for discussions on trade. Trump posted on social media saying that soybeans will be a major topic of discussion, with the crop remaining a key sticking point. China hasn't bought any soybean cargo from the current harvest, instead relying on Argentina and Brazil as retaliation for Trump's tariffs. Two Delta Airlines regional jets reportedly collided at low speed while taxiing at New York's LaGuardia Airport on Wednesday night. According to an ABC affiliate, no injuries have been reported. This is the latest in a string of incidents at LaGuardia in recent months that have prompted federal safety probes. And that is your Bloomberg Brief. John?
Nope. Vonnie, thank you. So your face too. Don't want anything to do with that stuff.
I was just thinking about the curmudgeons, the traveling curmudgeons. I mean, that just sort of adds to that joy that you feel when you get into it.
Every time there's an airline story, it's never a good one.
Well, but the truth is, we're publicizing more of them now. They happen all the time. I don't know if that should be comforting or not so much, but, yeah,
I'm not taking much comfort in any of it. Okay, up next on the program, signals and the data adding up.
These surveys are giving a consistent signal that we are seeing some more concerning weakness in the labor market. We think that means the Federal Reserve has room to cut interest rates here.
A conversation up next with Kelsey Barrow of JP Morgan.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obed. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We've got baseball bans. Do you want to do baseball bans?
So I like what Vito left the studio saying. The only shutdown he likes when the Yankees shut down the Boston Red Sox, which we did last night. Fantastic game.
So that's game
and
2.
Vito was there, so I'm a little jealous.
When's game 3?
Tonight. Do you want to go?
Okay, no, I don't.
I'm looking for someone to go with.
Okay, if anyone's listening and would like to go to the baseball, maybe you have a suite. I don't know.
Yeah.
I don't think you can accept that.
Yeah, well,
You know, all right, okay. Let's move on very quickly. Equity futures on the S&P 500, positive by 0.1%. On the Nasdaq, up by 0.4. Under surveillance this morning, signals in the data adding up.
These surveys are giving a consistent signal that we are seeing some more concerning weakness in the labor market. We think that means the Federal Reserve has room to cut interest rates here. They still have rates that are above neutral. Getting back to that is very reasonable. We think they cut interest rates, a couple of more times this year.
So here's the latest this morning. Traders betting the Fed will cut interest rates twice this year after private sector payrolls unexpectedly dropped in September. Kelsey Barrow of JP Morgan Asset Management writing, recent labor market data confirms that slack is still growing. A soft labor market justifies additional rate cuts by the Fed. Kelsey joins us now for more. Kelsey, good morning.
Good morning.
Do we not need NFP tomorrow or claims today? We're just on a one-way street to another rate cut?
I think we probably are. I'm sitting here looking at the echo screen kind of longingly, knowing that we're not going to be receiving that data. Yeah, I mean, it's a bit of a strange feeling. But I do think that we have enough corroborating evidence, whether it be in the ADP data or whether it be in surveys, like the Conference Board has the jobs labor differential, so jobs easy versus hard to get. Those are all really trending very similarly in the same direction, which is slowing. We're seeing it on the private sector side. We have risk of more job cuts on the public sector side coming, depending on how this government shutdown evolves. And so I do think that, the Fed still views policy as at least modestly restrictive. And so there's space to cut rates at least through the end of the year and then pause and reevaluate.
In the quote we used, you used the word slack. Now, we've certainly had a step down in payrolls growth. Have we really seen an increase in slack? Two kind of different things. One can inform the other. But given the supply side developments that we've seen over the past year, how are you measuring where we are with the slack story?
No, I mean, that is a really good question. And I think one of the reasons why the market has been taking the slowdown in jobs growth in stride. Now, the reason that I'm skeptical that we can just dismiss the slowdown in jobs growth as exclusively a function of falling labor supply and falling immigration is when I look at those surveys of consumers, whether it be the New York Fed or the Conference Board, if this was all about just slowing hiring because there wasn't immigrants to fill the roles, then why would respondents be saying that it's so hard to find a job? Particularly those of the lowest income and lowest education level, which is also the area where immigrants tend to be the highest share, non-legal immigrants tend to be the highest share of employment. So to me, I think that there is evidence that it's not just a labor supply story, it is a labor demand story, and there is legitimate reason to to be protecting against the downside risks to jobs.
I buy the story about real weakness in the labor market. You look at the quits data and you look at how much the quits rates come down. A lot of it verifies this idea. It's not so great to get a new job. It's not terrible, but it's not so great. I just wonder if rate cuts are the answer, given the fact that financial conditions are as easy as can be. And ultimately, what rate cuts are supposed to do is prompt investment from companies that already are investing at some of the fastest paces that we've seen in years.
Yeah, so this is a really interesting point about investment. So what I've been doing recently is really trying to understand this dichotomy between the strong growth data, the strong GDP data, and the weak labor market data. And what I think people, not in the equity market, they're definitely appreciating this, but on the bond market side, you know, you've mentioned that it seems like the bond market is looking at the labor market data and interpreting it as this is a bad sign, the Fed's going to need to cut rates more, while as risk assets are saying, it's great, the Fed is cutting rates and growth is still fine, layoffs are still low. What we've noticed is, you know, the GDP data has been very highly concentrated in the AI sectors. So if you look at software investment, intellectual property investment, those are running around a 30% annualized rate in the first half of the year. If you exclude those, GDP growth is actually pretty muted, pretty close to zero, and more in line with the labor market data. So it does go some of the way in explaining some of that divergence.
Yeah, but if you overlay the idea of rate cuts and trying to juice the rest of the economy through the monetary policy mechanism, isn't the risk of a bubble or a risk of some sort of excess that much greater, given the fact that everyone is betting on this and saying, look, they've got our backs. We can buy anything and we can pay whatever we want for it and we'll be made whole?
I don't think that that's a new phenomenon. I think we have experienced a series of shocks over the last 5 years since COVID, where policymakers have shown to the market time and time again that they're willing to step in with unique and unconventional policies to backstop things. And so far, they've been successful.
Are we breaking down the traditional correlation between the labour market and credit? How does this all shape your views about what's happening with fixed income on the credit side?
Yeah, and this does go to this idea that, you know, we talk about the K-shaped consumer, but there's also a K-shape in terms of businesses, you know, and when we're talking about capital markets and IPOs and all of the M&A and all of those discussions you're just having with the last guest, you know, that's only a subset of America. And when you look at the majority of hiring in America, it's done by small businesses. And so our credit analysts continue to look at that subset that is linked to public markets, capital markets, can raise debt, you know, by investors here in asset management, and their balance sheets are solid. So I do understand, you know, why those spreads are tight because of those fundamentals. They have the flexibility to maintain their operating margins. It's just a question of the haves and the have-nots, because if you're a smaller company, you don't have that flexibility to manage supply chains and to absorb the cost of tariffs like the small companies. And that's why you see in the ADP data yesterday, the only area where jobs were growing was in companies with 500 or more employees.
Yep.
The rest of the economy was seeing job losses.
Two different worlds. Kelsey, great explanation. Good to see you. As always, thank you. Kelsey Barrett there of JP Morgan Asset Management. Coming up next, Sarah Hunt of Alpine Saxon Woods, Krishna Gua of Evercore, Yelena Shiratieva of the Conference Board, Mike Parle of BlackRock. The second hour of Bloomberg Surveillance, just around the corner.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it. And so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is a year full of disruptions, contradictions.
The market is in a very strong place.
That sort of streak of upgrades, that's the most bullish thing that you can imagine.
You need pockets of rationality, but you ultimately need rationality to prevail.
There's still money that can be dragged kicking and screaming into this market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Have you heard this little voice going out to commercial break about
so
5 minutes ago? That was the most half-baked Go Mets I've ever heard.
They're so bad.
Well, honestly, Stevie Cohen, if you're there this morning, good morning. I hope you didn't witness that.
It's ridiculous.
You've got any more pride than that?
Well, it's not about pride. It's about I had to sort of defend after the just evisceration.
Whispering Go Mets is your way of defending
frankly, at
your
this
club.
point, that's about as good as I can get right now. Yes, that's correct.
Let's start again. From New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures on the S&P 500 positive, up 0.1% following a 4-day winning streak coming into October. First trading day, all-time highs. We had some weight to the rally. In the bond market, yields down to the front end of the curve, across the curve through yesterday's session off the back of worse than expected data. Both ADP, ISM manufacturing not too great either. 2-year bond yields this morning, 354. As for the economic data, what you will get, what you won't get. What you probably won't get is jobless claims later this morning at 8:30 Eastern Time. Likewise for payrolls tomorrow morning. What you will get, ISM services is going to take on even more importance going into the weekend.
Yeah, I just wonder how much the market's going to really respond to bad data. And when I talk about the market, I'm talking about equities, because right now bad data seems to signal to bond market risk on. And it's sort of in terms of buy bonds, and at the same time it signals to stocks, buy stocks because bonds are rallying, so yay. It seems like there are 2 different tracks right now, and I just wonder, to your point, whether ISM services is different than the labor market and indicates something more about consumer appetite that could filter in to equity appetite.
Well, we're not getting the data this week, and I think the big question is, are we going to get the data in the next 2 weeks? Are we going to get CPI on October 15th? How long is this government shutdown going to last? At the moment, no one's blinking. The Republicans aren't blinking, and the Democrats aren't blinking. What the Republicans are doing, though, is they are making it incredibly uncomfortable to try to bring the Democrats to the table when it comes to freezing, talking about layoffs, freezing of funds and layoffs, things like this. but does that backfire? And if it does, we could be here for a much longer time.
Lisa said this yesterday, and I think you're absolutely right. It's not just that this data might be delayed. The data points we are getting this week might be the last clean data points we get for maybe a couple of months.
Yeah, and here's the problem. It's muddied by a lot of the data that already has been revised. I mean, I'm thinking about even ADP. It came out 2 consecutive months of job contractions. Oh my goodness, falling off a cliff. But, to use Libby Cantrell's phrase, we're looking at a revision based on the quarterly household survey that probably was overestimating how much of a downgrade. So people are parsing through this and saying it probably doesn't matter, but the bond market says let's rally anyway because that's going to be what the Fed uses. I just wonder how long this can continue. For the bond market to rally on one thing, for the stock market to completely ignore that weakness, rally on something else, without anything breaking down.
If you're at the Federal Reserve and you've got a bias to cut interest rates right now, I think you've still got a bias to cut interest rates at the end of this month. If you're just joining us, welcome to the program. Equity futures on the S&P positive here by 0.2%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods as Wall Street shrugs off the shutdown. Krishna Gua of Evercore with data delays muddying the Fed's waters, and Mike Pyle of BlackRock as big tech investments make the US the AI leader. We begin this hour with stocks reaching record highs despite the chaos on Capitol Hill. Sarah Hunt of Alpine Saxon Woods writing the government shutdown may or may not impact a raft of data. For investors, this may be the trickiest part, at least in the near term. Sarah joins us now for more. Sarah, good morning. Good to see you. Do you think this will hold back risk appetite this month? No sign of that just yet. Do you think it will?
It depends a lot on how long everything takes and what kind of data comes out in the interim and and the kickoff of Q3 earnings season, right? So all of these things are going to be important. Earnings season is going to take on even more importance if we have a lack of government data because people want to see what companies say. But I think this morning the news on ChatGPT was one of those, OpenAI was one of those things that certainly helps the situation and doesn't hurt it.
Just build on that a little bit more. Why does it help the situation sitting here this morning and understanding that you've got this private company staying private worth $500 billion? Why does that help?
It helps because the question has been all along, the AI has been fueling this rally, right? You take that out and all of a sudden the statistics do not look nearly as good. And if you see cracks in that story with the other problems that are going on, I think you have issues. The fact that you saw a data point that's positive, take it as you want, whether or not that's too bubbly or whether or not it's anything else. The bottom line is people are willing to put up some serious money to be a part of that story, and that's still the case. That is going to help the equity markets just because it underlies that foundation and it gives it more confidence.
So don't fight AI. Is there increasingly a feeling in your mind, don't fight the Fed in terms of supporting the rest of the non-AI universe that hasn't fared as well?
Well, I think the Fed has a very tough job going into the next couple of months. A lack of data doesn't help it at all. And yet, to your point, the ADP numbers, people are going to look at that. They're going to look at any non-government data that comes out because until we get government data out, you don't have enough information. But directionally speaking, I think that one of the reasons you saw that happen yesterday was that people thought, well, this is another excuse to cut rates. Whether or not that actually solves any problems or does what it's supposed to do is another question. But the idea that it's coming is still positive for equity markets.
I just wonder how long you can turbocharge growth before inflation becomes a problem. So a lot of people have said it's not, and at the same time, you start thinking if we're already above that 2% target and you add juice to what already is a strong economy, albeit concentrated in AI, doesn't that become a real concern later this year?
Well, I still don't think that we've seen the true dynamics of the tariff pricing in pricing, right? So whether or not that's going to come in as the price level raised or it's inflation, I don't think that that's really come through. You've seen big waves of inventory every time there's been a pullback in timing on those tariffs. So the companies have been absorbing a lot. There's a point at which that flips, that script flips. And I don't know where we are with that yet. But as that sort of comes in, I don't see how it can be beneficial.
So what are you worried about now? Because you don't sound like you're that worried about a bubble when it comes to AI. You don't sound that worried about a government shutdown.
I worry about a lot of things. I wouldn't go so far as to say I'm not worried about a bubble, but the problem with that is that bubbles can go on a lot longer than we can think about whether or not they should. And if there is enough real money chasing that right now, as opposed to the whole argument about debt and debtor financing that came back around with that big deal, right? So as long as people are putting up money to help solve that problem, I think it's less of an issue. I think it becomes one when people start to worry about whether or not there's any actual productivity that's going to come out of this, efficiency that's going to come out of this. And I think that that's still one of those questions that we're struggling with.
It's a good point. The end of the 90s, when Greenspan talked about irrational exuberance, we had a bull market run for 4 years. But how do you time it?
That is a great question, and that is the problem, because you only see that in retrospect when people finally start to look back and go, you know what, we were wrong at X point, at Y point, at Z point. Right now, we're still looking at that and saying there's still a lot of promise. We collectively as investors, I'm not speaking about us just generally personally, but the investment community is willing to look at that and say that there's a whole wave coming. And even though you know there will be inefficiencies in that wave, people aren't sure where they're going to be yet. So at some point, it starts to be kludgy where you don't get some people coming out and saying, this is helping our margins, this is doing that for us. We need to see that come through. And that's still a promise right now, and market loves a good story.
There seems to be some great division over the balance of risk. I think the Fed's got one view and the market's got another. The Federal Reserve believes the biggest risk right now is downside risk to employment. And a lot of people in markets are coming around to the idea that the biggest risk might be upside risk to inflation. And they're chasing that because the Fed's going to respond to one and not the other. This is what Torsten Slock of Apollo said just yesterday. Upside risk to inflation are growing, particularly if the Fed continues to cut interest rates. And he believes his whole profession continue to underestimate this economy and the resilience of it. Are you coming round to that side of things as well?
Well, it's interesting because the resilience of the economy also bakes in a number of things. So Kelsey Barrow was just talking about the difference between big corporations and small corporations. So it bakes in a lot of positive movements across the entire strata. I don't know that the entire strata is performing that well, but from market's perspective, it doesn't really matter. Lower-end consumers aren't doing that well. Stock market doesn't mind. They don't spend the most money anyway. If you can continue to see cash flow in those big companies, it's less of an issue than if Main Street is struggling on the smaller side. So it really does depend, but I do think that inflation is an issue, and I do think that it could be a bigger issue going forward, but if we're not going to get some of that data, it makes it easier to ignore. On the other hand, I think that it is definitely something that continues to flow through, and that's going to be tricky because what happens with that is you fix margins by getting rid of people, and then the labor question becomes even more problematic. And then the Fed is in a very difficult place, which I sort of think they are anyway.
I'm looking at where to buy gold bars right now, and I'm wondering. Costco. I mean, there's Costco. There are places, though, they limit how much you can buy. You have to be a member, and then it's only 1 bar per person. I'm looking at this. How much is that sort of the solution increasingly for people? I know that you say that personally is one thing, but increasingly, how mainstream is that type of investing really becoming?
Well, I think that gold and to some degree Bitcoin, and I wouldn't call gold Bitcoin, digital gold or anything else, but they are ways to express an opinion that the system itself is going to have some problems, and that government, all currencies are going to have to devalue against something, right? So gold is one of those things that people look at and say, I can buy gold. It doesn't matter if it's a Euro U.S. thing or if it's a Japan U.S. thing. I know that if currencies are going to be devalued, I've got something that should rise in value. And whether or not that's a truism or people argue it or it's just, people are chasing it, central banks are going back to buying gold to some degree. They certainly seem to have been on the non-OECD side. So I think that there is room for that to move because it hasn't moved in so very long. And we just topped inflation-adjusted gold prices in the 70s and 80s. And that is one of those, technical markers that people look for.
Well, is that something where you're starting to credibly look at that as a real slice of the sort of more risk-averse side of the portfolio in a way that you hadn't before?
Well, I think the tricky thing is that after it's had such a big run, it almost seems difficult to say, now this is the time to go ahead and say that this should be a part of your portfolio. If it was before, you're feeling pretty good about it. If it isn't now, you're looking at that going, can I jump in here and buy something that's elevated so much? And I think this goes back to all risk assets are going in one direction and whether or not that can continue. And it's difficult to jump in and say, yes, I want to put a chunk of something in the asset that's run that much. But you could certainly layer in a little bit and see what happens so that it gives you a chance to layer in a little bit more, just because it's an opposite to larger financial systems.
Another record high, creeping up towards 4K, 6-day winning streak up almost 48% year to date, which is just wild. Sarah, thank you. Sarah Hunt there of Umpire Saxton Woods. Gold up again this morning. Let's give you an update on stories elsewhere with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump is seeking deals in 20 to 30 critical industries ahead of the 2026 midterms. Reuters is reporting pharmaceutical executives at Eli Lilly, Pfizer and AstraZeneca are getting near daily calls from White House staff. The deals would include taking equity stakes and offering regulatory relief in exchange for concessions. Intel is reportedly in talks to add fellow chipmaker AMD as a customer for its manufacturing business. Semaphore is reporting that the companies are in early-stage discussions about having AMD rely on Intel. AMD currently depends on Taiwan Semiconductor for much of its manufacturing needs. The U.S. Supreme Court refused to allow President Trump to immediately oust Federal Reserve Governor Lisa Cook as she sues to keep her job. The court's order means Cook can remain in her position until at least January, when the justices will issue a new ruling after hearing arguments over her alleged mortgage fraud. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate the update. Up next on the programme, Flying Blind.
Supply-side dynamics are very different this time around than they've been any time over the past few decades. This means we're flying blind in a highly foggy environment, and this is very risky.
In just a moment, we'll cash out with Krishna Gua of Evercore to get his view on things, and Mike McKee will break down the data you will get and the data you won't get in just a moment. From New York City this morning, good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Stocks are up following a four-day winning streak. We're up again by 0.2% on the S&P. On the Nasdaq 100, up by 0.5, up by 0.4 on the Russell 2000. Under surveillance this morning, we're flying blind.
We are still in the midst of an environment where there are a number of supply shocks affecting the economy. Too many people are still reading the economy as if it were guided by demand shocks. This is not the case. Supply-side dynamics are very different this time around than they've been any time over the past few decades. This means we're flying blind in a highly foggy environment, and this is very risky.
So here's the latest this morning. U.S. economic data at risk of being delayed due to the ongoing government shutdown. The Labour Department already sharing jobless claims will not be released later this morning. So what will you get? What won't you get? Here's Mike McKee with more. Morning, Mike.
Good morning, John. Well, what won't we get will outweigh what will we get, and it's going to be hard for the next week or so for the Fed and for investors to really get a good picture of what's going on in the economy. What won't we get? Well, we're not going to get jobless claims, as you mentioned today, not going to get factory orders either, and the big one, September payrolls, is going to be delayed to some point. Tuesday, the trade balance is not going to come out, and Thursday, once again, jobless claims, and then wholesale inventories. It's not a big week next week, so it's not as bad as it could be, but it is definitely bad news that we're not getting tomorrow's numbers. What will we get? Well, there are a few things on the private sector side that are coming out. ISM services will be out on Friday. The New York Fed inflation expectations number is out Tuesday, and then next Friday, the University of Michigan sentiment. Going to be interesting to see what Americans say about all that. And just because we got nothing else to do, the Fed is stepping in and is going to have a lot of Fed speak next week so that we can keep up with their thinking on all of this. Almost something every day. Today, Logan and Goolsby. Tomorrow, Williams, Logan, Jefferson, and Myron. Tuesday, Myron and Kashkari. And as you can see, more on Wednesday and Thursday, including the Fed minutes from the last meeting, may take on a little bit of extra import because there's nothing else.
Mike, as you know, we've got a low confidence consumer, but we've got a high confidence investor. And we're seeing companies, or at least investors in companies, get excited about the prospect of growth in 2026. Now, you'd expect that to correspond with hiring intentions, Mike. And I just wonder whether the economic data is contradicting that message.
Well, the data we're getting so far suggests that it is, in the sense that companies just aren't hiring. Challenger, Gray, and Christmas, with their job cuts announcements, also announces hiring plans. And they're reporting in September that companies announced plans to add 117,313 jobs. That's down 71% from a year ago. It also suggests that they are going to hire fewer people for the holidays. It's the lowest since 2011. From January through September, hiring plans are the lowest since 2009. So right now, companies are not hiring, not firing as many people. Firings were down 25%, but the number of people who are going to get hired, very low still.
Mike, stay close. Always good to catch up. Mike McKee breaking down the economic data you will get and probably won't get. Krishna Gua of Evercore is looking for a rate cut month end. He says this: our further lean into October reflects the even lower probability post-shutdown the Fed will get enough reassurance on labor market to rein in the soft default of successive cuts through the end of 25. Krishna joins us now for more. Krishna, welcome to the program, sir. When do those decisions start to become a closer call, start to get just that little bit harder?
Well, look, right now you could actually make the case against the baseline 25 basis point cut in October in two directions, right? You could say, well, you know, growth, it might be picking up. The markets are looking strong. The JOLTS and other data official data hasn't shown any break. The downside, so what's the hurry with a cut? You could make the argument the other way. ADP looked a bit scary yesterday. Perhaps labor market weakness is intensifying, and maybe we should consider a 50. I think the reality is 25 in October is just a very, very solid default. I think that the meeting that is up for grabs is December. And the question will be, what does the cumulative information between now and then tell us relative to what is still a baseline further 25 in December? Is it suggesting an accumulation of risk to the upside or an accumulation of risk to the downside? Otherwise, you're going to get that 25 followed by the 25.
Krishna, a lot of people agree with you. The markets agree with you. And right now, it's don't fight the Fed, buy brisk. And I wonder, financial conditions matter when stocks are going down. Financial conditions don't matter when stocks are going up. Is this essentially a Fed put where the Fed does not care, as long as things are not weakening, about cutting rates and what that does to potentially elevating asset prices?
Right. So what we've been emphasizing is that this is an incredibly risk-friendly moment because of this growth labor divergence. Right? So it looks like the growth side is fine, even maybe firming a bit, although we need to keep an eye on segments of the consumer. On the other side, the labor side is at a minimum soggy and perhaps weakening more. Fed, taking its cue from the labor side, is going to cut into that decent, perhaps improving outlook on the growth side. There's nothing not to like about that from an investor perspective. Now, the question is, as you said, does the fact of a Boolean market then come back into the Fed's reaction function? I think we heard loud and clear from Powell's latest remarks on this that they have their hands full balancing between employment risk and inflation risk. And financial markets, while in some level always factored into their deliberations, just can't drive the bus in this moment. So I think, the market wasn't quite sure what to make of those comments by Powell, I think about a week ago. But I think it made it very clear that they are focused on employment risk relative to inflation risk. And if making the right call in their eyes on that macro risk management is associated with markets going up, that's all right by them.
At this point, I wonder about the K-shaped consumer then and what this means for spending early next year and thus inflation. If you have the wealthier consumer seeing their 401ks, seeing their portfolios going to the moon as a result of this policy, how much does that juice spending and juice the inflationary momentum under the market heading into 2026?
Well, we actually think this is a K-shaped economy in two respects. First, the one that you absolutely correctly identified, the upper end consumer with the wealth effects versus the low to middle end consumer with less labor income growth adjusted for inflation. But there's also a K-shaped a recovery in terms of business sectors, right? You have the AI related sectors strong for secular reasons. You have the other sectors weighed down by uncertainty, by the drag from tariffs, by weak labor supply, which also, of course, weak growth in the number of consumers for many businesses. So you have a K-shaped economy in two really core dimensions. Now, as we look into next year, in a sense, the question is, well, how does that K-shape resolve itself? Does it resolve itself, A, with other sectors gradually firming as uncertainty recedes and some of the tax impacts support the economy? Or does the K-shape collapse the other way with AI spending perhaps plateauing and therefore no longer fueling that growth? Or in fact, do we continue to see that sectoral divergence? And then in terms of the consumer, is the consumer staying driven by asset prices? Then you're going to keep that K? Or are we going to see that some broadening of economic growth feeding into more hiring as uncertainty recedes? I think a key question is whether, as uncertainty moderates, which we assume it will moderate, is there a handoff from uncertainty to spreading AI productivity impacts, which mean that the growth side remains relatively soft relative to growth in 2026? That's the environment, of course, that would take this very risk-friendly moment into a much more risk-friendly secular phase, as companies were able to profit from growth without having to add labor. And of course, because the labor side would be soggy in that scenario, the Fed would still be able to deliver further rate cuts next year.
Krishna, besides the lack of data we're going to get because of the shutdown, what do you think the impact's going to be? Neil Dutta put out this note saying it doesn't feel like it might be the same song and dance. He says it's coming at a fragile time and some government workers might actually save more, maybe not spend because they're concerned about a prolonged shutdown.
So I think you're completely right that, this is a, shall we say, unfamiliar political situation in just so many respects in the US right now. And so we've got to be careful, not to be too sanguine just based on, historic track records. With that said, my colleagues who are expert in this area are relatively optimistic that we might be able to get the shutdown resolved within a week or two, because there are incentives pushing, particularly more moderate folks in the Senate, towards compromise in both directions. On the Republican side, I think there is some anxiety that they could end up getting pinned for this shutdown, and a recognition that actually they may need to fix some of the Medicare, the medical subsidies. Otherwise, that will be an electoral problem for them in the midterms. On the Democratic side, real concern about federal layoffs and a more extended shutdown in that direction. So we are cautiously optimistic that in spite of all the poison in Washington right now, and to some degree, sadly, in the country at large, that more likely or not, we actually will, the basic forces of compromise will push the two together, perhaps on a 1 to 2 year, 2 week type time frame. But I certainly wouldn't exclude the alternative.
Krishna, the clinic, as always. Thank you, sir. Krishna Guha there of Evercore ISI on the Federal Reserve, and just why this is such a risk-friendly moment for financial markets. Up next, Yelena Chulacheva of the Conference Board as the labor market braces for possible layoffs.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Krishna Gua of Evercore was absolutely fantastic just moments ago about why this moment is so risk-friendly. We talked about the corporate earnings labour market divergence. One is strong, the other is weak, and the Fed is responding to one and not the other, which is why so many people are comfortable chasing asset price inflation right now, and why one of the trades of this year has been to be long stocks and long gold.
Yeah, because ultimately stocks is a play on AI, but it's also a play on the idea that the Fed doesn't care about market conditions as long as the market's going up. Financial conditions only become an issue when markets go down. Money printer, let's do its thing.
Markets keep going up. 4-day winning streak on the S&P 500. Let's make it day 5, up by 0.2% on the S&P. Do you want the sound effect with that?
Sure, I don't get criticized
It's got
again.
a B on the front.
She was trying
the meme has a B on the
She
front.
was trying to get you to do it. I knew you weren't going to fall for it, but I was prepared.
Don't we have things to get to?
You want some of those buttons on the table?
Oh, I think that would be so good.
That's a different program. In the bond market, 2-year, 10-year, 30-year bond yields shaping up as follows. We look like this. 2-year yields at 354.29 on 10s, 4.09%. With your single names this morning, your morning movers, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Let's begin with AMD because to a certain extent this is a halo effect right from the OpenAI valuation at $500 billion now. But also it's the second day of gains for AMD on reports from Semaphore that it's in talks with Intel for it to supply Intel its manufacturing needs. Now, AMD had been reliant on TSMC for most of its manufacturing needs, so that would take out some potential geopolitical thorniness out of that equation as well. Now, talks are still in the early stages. Intel had a big run-up yesterday. As you can see, Intel is lower pre-market. Moving on to another AI-related name, and that's Nebius. Look, another 5.7% pre-market. Now, Nebius is like CoreWeaver Lambda. It's this new type of company that essentially rents out AI cloud ability, if you like, cloud vendors. Microsoft deal worth more than $19.4 billion. Now, we knew of this deal from Microsoft back in early September. The stock spiked then, but now we have more specifics. As part of it, Microsoft is freeing up its own capacity, and it's benefiting the likes of Nebius. And then let's finish off with a car maker. They're going to be in the news today, but Stellantis this time up 7%. Considering a potential sale of Free2Move, that part of the business, we know that the CEO, Antonio Filosa, is looking to turn around Stellantis and present a new plan to investors in the first quarter of next year. We also know he's trying to exit unprofitable businesses. He's brought in McKinsey to look at strategic advice from Maserati and Alfa Romeo, for example. But we also know the company has explicitly said that Maserati is not for sale.
Vonnie, appreciate the update. Vonnie Quinn there. Thank you very much. More from Vonnie later this hour. On our radar this morning, OpenAI completing a deal allowing employees to sell shares at a $500 billion valuation, making it the world's largest startup. The deal coming as OpenAI negotiates with Microsoft to convert into a for-profit company. And check this story out. President Donald Trump saying he'll press Chinese leader Xi Jinping to restart purchases of soybeans when they meet at the end of the month. Beijing hasn't bought any soybean cargo from the current harvest, instead relying on Argentina and Brazil.
This is becoming a huge problem for this administration. But remember, Trump won. We did say, in the end, about $28 billion in terms of a bailout to the farmers. So we could see that again. Trump's talking about all the tariff revenue coming in. We might need to give that to the farmers. But this is becoming incredibly uncomfortable for the administration politically, given the fact that the Treasury Secretary is talking about extending some sort of financial lifeline for Argentina. And guess what Argentina is doing? They're sending their soybeans and taking advantage of this moment to China. And the political question is going to be, for this administration, if you are going to help Argentina, should they not be alongside you putting up the walls when it comes to China?
This is exactly where I was going to go. The idea that soybeans are becoming ultimately an arbiter of who our allies are and who they aren't. And this does create a quagmire for Argentina. And right now, you're seeing a real test of the pledge that we saw from the Treasury Secretary, Scott Bessent, saying that we're going to support this economy, we're going to support the currency, and traders are saying, oh yeah, how about those soybeans? And guess what? They're challenging them. And that's going to be a real question. Does the U.S. actually step in to make good on some of those promises?
Did you see that photo in the last week?
Yes.
The Agriculture Secretary.
Brooke Rollins
texted the Treasury
texting
Secretary.
Scott Bessent, basically complaining, this is a big problem I'm having in the Midwest. We need to talk about it. And guess what? Milei is going to be coming back to the United States, according to Argentinian reports. And this is going to become incredibly political for this administration.
It's something the White House will no doubt address in the coming month, that's for sure. The White House also needing to address this. The Budget Director, Russell Vought, planning to swiftly dismiss federal workers as the government shutdown continues. Vought telling House lawmakers that some federal agencies will terminate workers within 1 to 2 days.
So they're trying to make this very painful for the Democrats, potentially carrot and stick approach to come to the table, or they're trying to use this crisis to actually shrink the federal government, which we saw them do with DOGE. The issue this administration is going to have is this is going to end up going to the courts, and maybe these people are going to end up back in their jobs.
Let's stay on the jobs front. Sticking with the federal job cuts, Yelena Shulacheva of the Conference Board writing the following: impact on official unemployment rate from a shutdown, if not furloughs, but permanent layoffs, could be anywhere between 0.1 to 0.5 percentage points, not including the spillover impact on the private sector. Yelena joins us now for more. Yelena, good morning.
Good morning.
We've heard this phrase so many times: low hire, low fire. When does the low fire start to change?
Well, the low hiring doesn't need to result in the layoffs. Just, mechanically doesn't happen. But it raises the risk of the layoffs. And the federal job cuts could actually exacerbate that trend. So I think, we have this shutdown dynamics right now, and it's very difficult to look at the data without having the data. But what our labor differential index says that the risks are rising, and I think we are entering a very difficult time.
So how does this cohere with what we're seeing in the rest of the market, where we are still seeing consumer spend, we are still seeing activity rebound, we are still seeing some hiring on the margins as companies gain confidence for the path ahead?
I think you're right. The hard data seems to contradict the soft data, which is the survey data, including the Conference Board survey. I think it's a timing issue. The big test for the consumer will be at the end of the year during the holiday shopping season. We do see prices rising, and consumers actually take a note of that, and they are telling us that they are very much concerned about it.
How difficult is it to aggregate data right now when each region in the United States is acting kind of as though it's dancing to its own music?
True, and especially like if you look at the DC region, for that matter, or the other parts of the country, we're just talking about agriculture. So I think you still can look at overall numbers, and the overall numbers are telling us that things are weakening, the risks are rising, and the Fed will probably take a note of that. I think if you look at our data at the Conference Board, you will see that 9th consecutive decline in the labor differential index. It's an established trend. So that tells you something. That tells you that the risks are rising.
But isn't it difficult to really understand what is impacting the labor market at this moment when basically entry-level jobs, we don't understand, is it actually there's no need, or the need has been outsourced to artificial intelligence?
So that's a separate question, of course, and it's a big concern for young adults, for the housing market, because that affects the housing market when young people don't have jobs. But I think, again, if you look at our data, we see a broad-based concern. Consumer confidence has been, trending down for all kinds of income levels and groups. So you do see a broad-based decline in those measures.
You also mentioned regions. Is it going to get worse for the D.C. area if we have a very prolonged government shutdown? Virginia, Maryland, this is the place where a lot of federal workers live.
And not just the federal workers, everybody else who depend on them. Think about a food truck. You go for a lunch, or you will forego that service. You will not be able to recuperate, right? You can buy goods when the shutdown ends, but services could go away forever. That is something that you cannot recapture.
Have the hawks on the Fed got a credible argument? And what is it?
Well, inflation will rise according to our forecast. It's taking time. You guys talk about this on the program all the time. It's a process, and I do agree with that. We do see inflation rising above 3% by the year end in terms of PCE inflation, and that will get into the consumers' minds, and that's why we expect
Will it get
a
into
slowdown.
the Fed's mind? Will they be uncomfortable cutting interest rates when we get back to a 3 handle? And I know we're super close right now, but when you're above that number, does the story change? Does it get harder?
It will feel uncomfortable for them. There will be a lot of disagreement on the Fed. But look at why they cut rates at the September meeting. They cut it because of the risks, not because of the data. They cut it despite the data, quite frankly, right? So look at the materials that accompany the Summary of Economic Projections, where they talk about the risks. They have a special metric there, and you see the rise in employment employment mandate risks, essentially, and that's why they cut. And the data that we do have is actually telling us that those risks continue to rise.
I feel like we've been spending the past 6 months saying we're in a dark room, we don't know what's going on, and we're still kind of in the same place. And I feel as though we're not really moving forward on the macro front in terms of having better visibility, which is the reason why people are going all in on AI and some of the trends they can identify and study. Has there ever been a time where it was more difficult for you, looking at all of this data, to project out where you expect us to be in 2026, where there is actually a fairly narrow range of possibilities that seems likely?
Well, we do run some macroeconomic models, and those big, models are telling us the impact, say, from tariffs will be actually really, really big. But we don't know, right? We don't know. We don't see that in the data. So that is very difficult. Trends have changed, but it doesn't mean that the economic laws will be broken altogether. So I do still believe that there are some relationships in economic data that will hold. So it's just a matter of time, I think.
Jobs are not plentiful. They're hard to get. We see that in your data, in the labor differential, and we appreciate your time. Thanks for being here.
Thank you.
Thank you very much. Yelena Shulecheva there of the Conference Board. Let's give you an update on stories elsewhere. With your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. At least 2 people were killed in a vehicle and knife attack at a synagogue in Manchester during Yom Kippur services. UK Prime Minister Keir Starmer cut short a visit in Denmark to chair an emergency meeting, writing this: additional police assets are being deployed to synagogues across the country. We will do everything we can to keep our Jewish community safe. Citigroup is now the main home for President Trump's money. Sources telling us here at Bloomberg the relationship started after CEO Jane Fraser called and congratulated the president on his second-term win. Banks were previously unwilling to take on Trump's wealth after failing to repay loans tied to his troubled business dealings. Tesla CEO Elon Musk urging his 227 million ex-followers to cancel Netflix subscriptions for, quote, the health of your kids. Musk making the comments to criticize a Netflix show featuring a teen protagonist who is trans. The animated series ran from 2022 to 2023 and has since been cancelled. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Those earnings come from Netflix on October 21, so we'll see if that shows up in subscriptions. Up next on the program, more of a boom than a bubble.
We think that over the next 2-year period, that's where you're really going to start to see some of those efficiency gains, some of those benefits from AI adoption. I would call it more of a boom than a bubble.
That conversation up next. Mike Powell of BlackRock joins us in just a moment, live from New York City. You're watching Bloomberg TV.
when we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Stocks are positive by 0.2% on the S&P 500, starting October and Q4 at all-time highs on the S&P. Four-day winning streak could become day 5. On the Nasdaq 100, we're positive also by 0.5%. In the bond market, 2-year, 10-year and 30-year. 2-year yields plunging yesterday following that weaker-than-expected ADP report. ADP, of course, taking on additional importance this week because we won't get claims later this morning, 43 minutes from now, and we probably won't get payrolls tomorrow morning at 8:30 Eastern Time following the government shutdown. Wanted to finish on the week ahead. No payrolls, no jobless claims. The ISM is kind of it right now going into the weekend. ISM services.
Yeah, and just think about how much the market could move on the heels of it because it is the only game in town. If you talk about that 2-year yield move, it was the biggest move in the 2-year yield going back to the August payrolls report when we saw a complete reset of what Fed policy would be going forward. And that's for a data point that has been highly contested in the past and in yesterday's revision. So take it for what you will.
So there's a feeling we get to the end of October, we cut interest rates again, and then maybe the decision after that is harder. December time when you have to put out new forecasts, maybe inflation's closer, or maybe it has a 3 handle. And does that make that decision to cut interest rates that little bit more uncomfortable?
The answer for markets, nope, not at all. Because what you can see from Fed funds futures is essentially almost a 100% chance of a Fed rate cut at the meeting later this month, and then again in December. So right now, it doesn't seem like that tough of a call, at least in the market's eyes, which seems to be influencing a lot of different trades right now.
Asset price inflation, a place to be apparently for both equities and gold and credit as well. Seen it across the board. Under surveillance this morning, more of a boom than a bubble.
I really don't think that we're currently in a bubble state. I would call it more of a boom than a bubble. Valuations are very rich. There's no two ways about that. It's a tough time to justify adding risk, but we do think the demand for compute is there. We think that over the next 2-year period, that's where you're really going to start to see some of those efficiency gains, some of those benefits from AI adoption.
So here's the latest this morning. AI optimism pushing global equities to fresh highs. Mike Powell of BlackRock writing, we think U.S. equities will regain global leadership as the AI theme keeps providing near-term earnings support and could drive productivity in the long term. Mike joins us now for more. Mike, good morning. Good to see you.
Great to be here.
Let's get into that quote and some of the things we've been talking about so far this morning. Why do you believe this is such a risk-friendly moment for financial markets?
So, a couple of things. One, I thought Krishna just a moment ago really captured the macroeconomic and Fed dynamic well. a strong growth environment, at least a resilient growth environment with labor market weakness, giving the Fed room to cut. That combination of pretty strong growth and a Fed cutting, that's a positive backdrop for risk assets, particularly when combined with a theme like AI that has such potential to be transformative, and we think is increasingly an important anchor for global portfolios.
Let's build on that. How difficult is it to get used to the idea that we can have a step down in payrolls growth, but a step up in earnings? That's something typically I think people would struggle with, but that seems to be what's happening right now.
Yeah, I agree. I mean, I think one way of squaring the circle, while agreeing that at the top line, we're seeing exactly that. We're seeing capex growth. We're seeing consumer strength in aggregate. At the same time, that K-shape is real. And again, I thought one of the things that was well discussed earlier was this K-shape isn't just about consumers, it's also about the business sector. And I think one of the things we saw in the updated GDP numbers a few days back was, as we were going through Q2 earnings, we were saying, large corporates, large public corporates seem to be quite resilient. But when you look at unlisted companies, when you look at smaller caps, that is where the struggle appears to be happening, in particular with respect to tariffs and input costs and the like. So I think one of the things that, again, kind of highlights why the AI theme is so important is not just that it's transformative on its own, and I think there's some building evidence there, but also that other parts of the economy are a little softer, and we see that in the data too.
What are the limits to bonds and stocks rallying together?
So I'd say a couple things there, and I think this goes to part of how some of the investors at BlackRock are thinking about it. There's not just the impulse that we're seeing from the macroeconomy, from technology, but also some of the pricing dynamics as well. I think that you look at some of our macro investors, they're saying, yeah, this is a constructive backdrop for risk, but there's been a pretty big run-up too. We might want to pull some chips off the table, even while maintaining constructiveness over that 6, 9, 12-month horizon today. And on the fixed income side, I think we've seen the U.S. rally versus other global bond markets. I think there too, kind of looking out over the next few months, a bit of an expectation that we could see something of a reversal, at least on a relative basis. See U.S. bonds underperform a bit as we see European bonds in particular poised to outperform.
Well, I guess that to build on that, there's this question of the idea that bonds and stocks are rallying, but the dollar isn't participating in it. And it raises this sort of conundrum. Is that the release valve? That this is an economy being run too hot, where there are questions around the independence of the long end of the yield curve. And essentially, if you're going to bet on bonds and stocks rallying together, and you bet on a weaker dollar, this doesn't have to do with something that is sustainable. It has to do with a policy that is currently concentrated on running things incredibly hot. I mean, at what point is that the correct way to look at things?
Yeah, so I think that we see that divergence between equities and the dollar as one of the key dynamics of 2025. And a way of squaring the circle is to say, as we've been talking about here, the equity story is really about large caps, is really about the AI transformation. That is what is driving that story, kind of above and beyond any macroeconomic dynamics in the United States. I think the dollar, that is a more traditional macro story. Concerns around the fiscal outlook, concerns around inflation that may be stickier out over next year than is currently anticipated, concerns around global allocators wanting to increase the degree to which they're hedging against the dollar. Those are dynamics that I think are, importantly driving this different response in equities versus the dollar. But I think you're right. The dollar is where you see the more traditional macro dynamics playing out than in equities, which is really, about this much different impulse around technology.
It feels idiosyncratic with equities to AI, and then everything else is driven potentially by a little bit of uncertainty in Washington, like the dollar. If you're looking for a hedge, isn't it just gold, or is there other opportunities out there?
Well, I think this is something we've talked about before. I mean, it is clear that gold has run up. It is clear, I think, to us that reflects investor demand for alternative sources of diversification in a world where the traditional sources don't look as reliable, like long-dated government bonds. I mean, I think this is where, we think that things like market-neutral strategies, things like uncorrelated strategies that can bring alpha into the portfolio are able to meet that same demand for alternative sources of diversification, but in a way that we think is more kind of underpinned by a reliable source of alpha looking ahead.
One thing you've talked about is regaining leadership, which suggests it was lost. And this year, what we've seen is European banks absolutely rip. So when you say something like we'll regain leadership, what does that mean for the European stock trade that's had its moment in the sun?
I mean, I think if you look at, that's correct about European banks. So if you take a step back and look at the broad indices, Europe and the United States, what you basically saw was a moment of European outperformance in the first quarter of the year. And then really from the nadir in U.S. equity markets on or about April 7th, the U.S. has regained leadership and has really been the place where we've seen outperformance since early spring. Now, the one thing I would say, and I think this goes back to the dollar point, yes, the S&P is up 13% on the year, is up over 35% since April 7th. But the experience of being an investor in U.S. equities for a European investor, for a global investor, given that dollar move, has been a more uncomfortable one if you're unhedged. And I think this is why one of the things we're hearing from global clients is, boy, the past couple of years, I've been willing to take that currency exposure on an unhedged basis, that I've been comprehensively bought into the U.S. exceptionalism trade. Now I want what U.S. equities can offer in terms of technology, in terms of AI, but I'm a bit more cautious on the currency, and I want to move back to something like my traditional degree of hedging to balance those risks a bit better.
That's been a change. Mike, it's good to see you, to get an update. Thank you, sir. Mike Powell there of BlackRock. Amazing to hear those words, isn't it? That we regained leadership 5 days after April 2nd. It's kind of crazy, right? 5 days after April 2nd, U.S. equity markets started to regain leadership.
This goes back to the idea of what Vito was talking about earlier from RBC. Do you just put on noise-canceling headphones and ignore the noise? Well, yeah, because ultimately that's worked every single time, and this is a primary example.
It's paid off over the last 6 months, that's for sure. Up next, David Stubbs of Alpha Corp, Ben Callow of Baird, Neela Richardson of ADP, Binky Chadha of Deutsche Bank. From New York City, the third hour of Bloomberg Surveillance is up next.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This isn't a thing where it's going to be a long-term shutdown. Trump is playing a different game by a different set of rules than I think the Democrats on Capitol Hill.
The market doesn't seem to really be paying attention to what's happening from, you know, the government shutdown perspective.
The data is the data, whether it comes out or not.
This means we're flying blind in a highly foggy environment, and this is very risky.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Stay in bed. No jobless claims, no payrolls. Live from New York City this morning. What will we do? Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. What will we do? Keep buying stocks. Up by 0.2% on the S&P. Following 4 days of gains, we add some weight to the rally. All-time highs for October and the start of Q4. In a bond market, a 2-year closer now to 350, 355. We're up a basis point today, but down a handful yesterday following a downside surprise on ADP and a not great ISM manufacturing. As for the rest of this week, it's going to be about ISM services. There is a big question mark around the payrolls report tomorrow, and I believe we have confirmation we will not get jobless claims in 29 minutes' time.
Yeah, and it's really unclear exactly how long it's going to take once the government does reopen before we get some of these data. So if you take that into consideration, you understand why ADP yesterday, usually a peripheral data point, had such an outsized move where the 2-year yield went down the most, going back to when we got that non-farm payrolls report that was disappointing in August. Right now, though, and I think this is the key point, and it's the key point for why people keep buying stocks, there is a rate cut completely priced into the market later this month, and there is another one almost completely priced in at the end of this year. So right now, it seems like the Fed's getting a huge green light by the markets to keep on cutting.
Exuberance on Wall Street. Misery and chaos down in Washington, D.C. The president saying this just moments ago. I can't believe the radical left Democrats gave me this unprecedented opportunity. They are not stupid people, so maybe this is their way of wanting to quietly and quickly make America great again.
So he's talking about when it comes to the layoffs and this potential to make them permanent. The president even questions in this Truth Social that he's working on whether or not these are going to be temporary or permanent when he meets with Russ Vought, the OMB director, today. This makes me think that that threat, was it just a threat to get Democrats to the table, or actually is this the Trump administration using this moment to shrink the federal workforce, which is something that they have been wanting to do?
The Federal Reserve believes this labor market is fragile. Those kind of developments aren't going to dismiss those fears.
No, especially in the Washington, D.C. region, if there are more layoffs, and then potentially what that means for some of the state and local governments, especially if there are fundings, there is funding that is brought back. Earlier this morning, we were talking about Polymarket and what the market is pricing in terms of how long this shutdown is going to go on. Right now, there is a 35% chance priced in that it will extend longer than October 15th. At that point, there starts to be some economic blowback, and then we're going to have some really serious conversations.
Economic blowback, individuals don't get paid. Most importantly, the men and women in our armed services, the military, that pay date is supposed to be October 15th. And then potentially this is when you get a lot of pushback from constituents calling up their lawmakers and saying, reopen the government, this has gone too much, especially the grumpy travelers when you have issues at the FAA.
They're going to be getting grumpier, that's for sure. If you're just joining the programme, welcome. Equities up again this morning by 0.2%, a marginal lift to this stock market. Going into the opening bell about 87 minutes away. Coming up on the programme, David Stubbs of AlphaCore as stocks trade near all-time highs. Ben Callow of Baird with Tesla set to report 3Q delivery numbers, and Neela Richardson of ADP following weaker than expected jobs data. We begin this hour with stocks kicking off October at record highs. David Stubbs of AlphaCore writing, I'm watching out for the peak of the AI boom. If AI hype ends, then volatility will increase before an eventual peak. David joins us now for more. David, good morning. Good to see you, buddy.
Good to see you.
Let's get into it. AI, any sign of that boom ending anytime soon?
Not really, no. I mean, I think you have to look for the signs ahead of time because we know how important it is, right? We know how important the AI theme since the launch of ChatGPT has been to earnings, to valuations, to capex. Is now driving, of course, the real estate sector, data centers, energy, etc. When you look and you compare it to other booms, and Azim Azar at Stanford has done tremendous work on this. Things look pretty good. Yes, it's driving like 1-2% of GDP. That's not outsized. If you look at the growth in revenue, and especially the funding sources up until this point, right? It's been funding out of cash flows, not too much debt. But around the edges, you can start to see that change a little bit, right? The disappointment around ChatGPT 5. Are we actually going to get this incredible technology, or is it going to disappoint? And then the Oracle announcement, very, very interesting, right? Stock jumped, and then that announcement of you're going to do a huge amount of debt to fund it. So if you start to see the sources of funding shift from cash to debt, if you start to see disappointment in delivery and a lack of revenue growth, that's when I think the key names are going to get volatile. That could be the sign of a peak. I have no idea if that's going to happen tomorrow or if that's going to happen a couple of years. I think it's probably a couple of years away, to be honest, but we've got to look at it for risk management purposes.
So in the meantime, the boom continues, and at the moment it's not driving a significant lift in employment. Is that de-emphasizing traditional indicators for markets?
I think the previous guests in the last hour have done a great job of discussing this very unusual moment we're at in macro, and it was hard enough before the data was cancelled, right? So you've obviously got like capex really being quite strong, and obviously job growth slowing. I think one thing to point out about the labour market, earned income's actually been pretty strong this year, right? Which is jobs times hours times earnings. That's been going on at about 5% annualized in the first half of this year. Pretty good this quarter. I do think that capex can only take us so far. Consumers have the ability to smooth through a quarter or two of lackluster job growth, right? They've got plenty of embedded wealth gains. Credit markets are wide open. But eventually, could we grow with zero jobs forever? Probably not. So I think that remains the key macro risk, and ultimately it'll be a macro risk which undermines the market's faith in the earnings trajectory at some point.
A lot of macro models try to follow history, right? And they try to understand how this relates to recent history and beyond. And one of the problems with this moment is it feels transformative. And as though maybe it's a corollary to, is it the dot-com bubble? Is it 1971? Is it 1944 when there were some really transformative mechanisms to the whole trade system? What's your corollary right now?
It's tough to find a specific historical corollary, but you can definitely look back at that launch of ChatGPT and say it was almost a structural break in the market's understanding of the future of the economy and productivity. Certainly, the AI's ability to, in theory, not just improve the productivity of manufactured goods, etc., but also to reach deep into the white-collar space, I think is different this time. And when we look at the labour market, there's been lots of very detailed studies pointing out that you can already see it in the lack of hiring of junior positions, especially in large companies, right? They're thinking, well, I don't have AI perfect now, but I know it's coming. Why do I need another generation of analysts? So there's been, by some measures, you're seeing a decline of 10 to 15% in hiring of juniors, and actually a little bit of an increase in mid-tier staff who've had that experience. Companies really value that. So I think we are seeing, the leading edge of AI in large companies hiring and in their margins, and you're seeing it spread out way out of tech. Great way to play this, of course, is the financials. Financials have two things that makes AI really work. Firstly, they have a bunch of basic costs that they can obviously automate away, back office, regular processes, and they have massive amount of proprietary confidential data. which they can use to offer better services to their clients. And I think that's why you see this idea that, the financials could be trading a little bit more like technology stocks. Jamie Dimon's always said, I'm actually running a technology company. I think AI is actually going to make that real when it comes to their margins and their earnings.
Everyone wants to be a technology company right now.
Yeah, do you remember that?
I mean,
that was when they were struggling to hire talent.
Exactly.
It was like, we're a tech firm too.
Exactly. I mean,
no, you're not.
Well, they're trying to make the pitch again. I'm just wondering, we've always said the stock market's not the economy. Has it ever been more so than right now? And does that mean that the correlation between bonds and stocks just completely breaks down? Just, they're dancing to their own music.
I think when you have this transformative trend that's really been playing out in the largest companies in the world that are based in America, you have then, of course, the weakness of the dollar in the first half boosting the earnings of the international larger companies there. That's obviously reinforcing that point about it not being the stock market's not being the economy, right? So I think that you do have at some point a linkage between the two. But right now we have the high-end consumer driving what consumer spending there is. The percentage of spending from that top cohort just grows and grows. The wealth of that cohort just grows and grows. And unless you get some type of clear interruption from a major macro decline, I don't see what would interrupt that.
When you think of clear interruptions, the president is truthing this morning that he's unsure yet whether or not he's going to make these, what should be furloughs in the past, usually, permanent layoffs. What kind of impact could that have?
Well, it's certainly unfortunate timing given how weak the private sector hiring has been, for sure. Again, I don't know, you'll know better than me, like how much of this is bluster, how much of this is a political game. I think that widespread layoffs will be popular in some parts of the country and very unpopular in others. I do think that this is part of the political posturing here, trying to blame both sides. We've been through these before. What worries me is that both sides are quite dug in here. There have been very clear asks from one side, which is very hard to deliver for the other. If I'm guessing, I do think we're going to be at this for a few weeks here.
Longer than October 15th, what we have on Polymarket? Maybe you should make a bet.
Well, yeah, I'm not going to give out betting advice on TV, but I think it's going to be weeks, not days, is my sense, but who knows?
That's wise, David. Let's finish on managing risk, and more specifically, concentration risk. I think people might be looking at other asset classes, other sectors within stock markets, and trying to diversify, but ending up in the same trade. AI, you mentioned financials. There are some financials that ultimately are giving people exposure to the same thing. I can think of some private asset managers getting exposure to private markets, but in the same thing. Are you worried about concentration risk, and how are you and the team managing that?
We are looking through all of our investments. In Alpha Core, we specialize in putting private investments and alternatives at the center of portfolios. If you work with your GPs to understand the themes that are driving those things, how they're invested, match those up as best you can with the public markets, you try to get at this kind of thematic concentration risk. And right now, it's very hard to avoid. Right? Good luck trying to find a high conviction play that's not AI related. I can think of a couple, but they are more niche. We talked about European banks in the previous segment, the broad re-leveraging of the European economy, the defense play outside of the US, the rebound in China tech. But again, it's China Tech AI. So I think you do have to, you absolutely, that's part of what good money management is. Try to find the risks, try to hedge them a little bit. It's very hard to move away from it right now. We're still, again, we are believers in AI in the medium term. We are still staying long that large cap growth space. But we are trying to find with our managers other key themes to drive the next 5 to 10 years. They're out there, but separating them from the AI, that's quite hard to do.
Pursuing that concentration has been the objective, at least for the moment, because it's working, and it's been working so well.
It's been the reason for U.S. exceptionalism in the equity markets. I'm just trying to research the biggest busts in the dot-com era to understand what the corollaries could be there. Because ultimately, you raise a really good point. Everything is concentrated around the same theme, or a lot of the winners are. So how do you decipher which are barking up the wrong tree?
David, good to see you. Thanks for dropping by.
Pleasure.
Thank you, sir. David Stubbs there of Alpha Core. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Apple is pausing a planned overhaul of its Vision Pro headset to focus on developing smart glasses. It's working on at least 2 types, including one that will pair with an iPhone and another that could rival Meta's Ray-Ban display. Apple's glasses will rely heavily on voice interaction and artificial intelligence. The race to succeed Bob Iger at Disney is heating up. A growing consensus among company insiders suggests Josh D'Amaro will be the next CEO. D'Amaro, who currently leads the Parks division, is reportedly one of 4 internal candidates the board is focused on. The others include entertainment co-heads Dana Walden and Alan Bergman, as well as ESPN chief Jimmy Pitaro. Bob Iger's contract ends in December of 2026. The Los Angeles Dodgers are the first team to advance in the MLB wildcard round, sweeping the Cincinnati Reds. Elsewhere, the New York Yankees have forced a decisive Game 3 against the Boston Red Sox after winning last night 4-3. The Padres and Guardians also fended off elimination. That sets up just the second time in baseball history there'll be 3 winner-take-all playoff games in one day. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate it. Seem happy with yourself?
I am happy. I'm
Good.
so excited. Jazz Chisholm had an amazing game after being
Bramo stare at you right now. I mean,
that really
when the camera picked you up, that was so much kinder. Because the one, you're quick. That expression changed. The one you were giving Marie before.
She's just wallowing in her mess.
If looks could kill. Up next, let's get you some morning calls. Plus, Ben Callow of Baird with Tesla set to report 3Q delivery numbers. That's coming up in just a moment. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
If we just go back to as recently as the tech bubble, things were practically primitive versus where we are today. This isn't the primitive stage of people saying someday we will have 1 million eyeballs on our website. This is companies that know you need billions of eyeballs and you need to be well capitalized.
It's real money. That's why it's so hard to fight. And that's why this market's performed so well, despite what we've seen in the labour market. John Stolfus there of Oppenheimer. This is what we see in the labour market this morning. Not going to see it. 15 minutes away. No jobless claims. You thought it was an accident, didn't you?
Crickets. Yeah, I did.
Okay.
I thought you were going to get really
TV,
upset.
magic.
Okay, I know that was
Just,
amazing. It was
theatre
good.
performance.
It was
I'm
good.
moving
I
on.
didn't even say anything.
Okay, all right. You know,
Call me out for
lost.
something I didn't even say.
Silence didn't work. Okay. Equities are up by 1/3 on the S&P, on the Nasdaq up by 0.5. Let's get you some morning calls. First up, KeyBank upgrading Nike to overweight, highlighting comfort in the company's turnaround story. Your second call from Canaccord, downgrading Lithium Americas to sell, saying its current valuation does not accurately reflect its deal with the U.S. Energy Department. And finally, William Blair downgrading RH to market perform, warning U.S. furniture tariffs may create challenges next year. Their stock is down 1%. They have had a tough go of it, RH, and that's going to make it harder.
Yeah, they said, look, you cannot raise prices. People won't buy it at the same time the prices are being raised. And I just want to say, you usually are so smooth, which is the reason why I was a little bit stymied in my
I said crickets.
reaction.
I understood
So
what he was putting down.
I know, but
I was expecting you to hit one of your noise machine buttons.
You know?
Yeah.
Okay, all right, we'll move on. Thanks for the smooth compliment.
I failed.
You're being
okay?
nice, I appreciate it.
Live
I'll
TV.
run with that. All right, let's turn to tech. Tesla releasing third quarter deliveries this morning with analysts predicting a slowing sales decline. Ed Ludlow's tracking the company. He joins us now. Ed, what can we expect?
Yeah, I mean, consensus is that Tesla does just shy of 440,000 vehicles. That's a 5% drop year on year, but it's an improvement sequentially from the balance of 2025. You said turning to tech. Are we turning to tech? This is just a moment in time where we're talking about the delivery of vehicles. And what I keep hearing from sources over and over again is look at the work that inside Tesla has done on advertising, paid advertising on platforms like YouTube and Instagram in the quarter, and also all of the marketing materials that went out about the end of the federal tax credit. So there's that typical scramble. But the reason I bring up the advertising piece is this is the delivery print before that critical November 6th vote on Elon Musk's comp package. He's been set the target by the board of delivering 20 million vehicles, the bread and butter business, by the end of the term and the full fulfillment of the tranches that he's to receive. It's conditional, right? It is a mandatory requirement. But a lot of the investor base, even those most loyal to Elon Musk on the retail side, have been calling for Tesla to do some advertising, some marketing, something that Musk has resisted for a long time. So that's what I'm hearing from people inside the company. They're kind of feeling that something changed in the quarter, but with a firm eye that there's a lot of pressure to get this vote through November 6th. And just this week, we heard from New York State Pension, right, that they will not be voting in favor of it. It's a really critical moment. The data informs more the long term than potentially what's happening in here and now. But broadly, the EV market in the US, as you know, John, there is some cracks showing.
The stock is up by 1.9% this morning. Ed, thank you. Looking forward to Bloomberg Technology. Ed Ludlow, Karen Hyde coming up a few hours from now. Ben Callow of Baird recently upgrading Tesla to outperform, seeing a string of catalysts ahead. Ben joins us now for more. Ben, welcome to the program, sir. As you know, you often talk about it. There's always tension with this stock, near-term fundamentals versus long-term dreams. The question I always ask about these particular stocks, the likes of Tesla, is what is driving it right now? What makes it go up or down? Is it the long-term story or the near-term fundamentals?
Thank you for having me. Good question. I think right now it's the long term. I do think that deliveries are going to be better than expected. We've seen analysts raise their numbers, and we've seen good data out of China, U.S. ahead of the tax credit, and in Europe. But I do really think that with OpenAI getting this $500 billion valuation, the real focus here is on physical AI. I think that the shareholder meeting will be a catalyst. People want Elon to be at the helm. I think Tesla stock wouldn't work without Elon there. Ambitious targets, but we've seen over the last two pay packages. Back in the first one, arguably I was labeled one of the biggest bulls out there, a perma bull. When I saw the targets, I didn't think they could do them. They did it in 2 years. The second package, same thing. They did it in 5 years. I think this one, maybe not as easy, but when you put the numbers together, you can get to a stock price of $1,500 or more. And I think that's where people are focused, less on the car business. The car business is needed to support growth because of the cash flow, but we've seen it rebound after really bad quarters over the last 3 quarters.
Ben, how is Tesla maintaining the cash flow from sales in China right now? How is Tesla even beginning to compete against the machine that is the EV creation coming out of the world's second biggest economy?
What we've seen so far is that they did the new Model Y variant, a long wheelbase. So far, the reception has been very good. Tesla competes very heavily there, and I don't think they had as much brand damage in China as in U.S. and definitely in Europe because of Elon and being the political spotlight. But the new Model Y, at the beginning of the year, they shut down all their factories to ramp up the new Model Y, and then the lower price vehicle that should come by the end of the year. That was a big task. But what we're seeing now is is uptake from as they get that production back going strong.
What's interesting to me, Ben, is that we're talking about this as though it's any other country, and yet a lot of U.S. companies have talked about how they're pulling out of China. They can't compete there. They're getting blacklisted there. They're not able to get the same kind of upper hand as some of the national champions. I would think that Tesla would be first and foremost among those companies that would be facing some of those pressures. Why don't we hear anything about that, given how much Tesla relies on their China sales?
Just bringing it back to Elon, for right or wrong, there's all these headlines hitting that, his net worth is $500 billion, and then the pay package would make him the first trillionaire. I remember Elon, unexpectedly went and had a meeting with President Xi. He has that type of power as someone that has a net worth of $500 billion. He can go meet with the heads of state across the globe, and I think that's it's different than the OEMs like Ford and GM and some of the Euro OEMs as well.
Well, he can meet with heads of state across the world, but is he still invited into the Oval Office? How damaging is that for the company?
Well, it was very damaging from a stock perspective when you get into a spat, to say the least, with the President of the United States. I think that we've seen them try to make up. I think that he is doing his best to do that, and that has helped the stock as he's tried to repair that relationship.
Hey, Ben, appreciate your time as always. Ben Callender of Baird, the latest with Tesla. They sat together recently, didn't they?
They did.
Had a little conversation,
yeah.
Broke the ice.
Had a conversation, broke the ice, but you don't see Elon Musk once again as this pervasive presence at the White House. Not only did he get a spat with the President of the United States, but there are reports that the President of the United States Treasury Secretary actually punched him. So this is bad blood at the moment.
Policy didn't break his way, didn't break the sector's way when it came to the EV tax credits. I just got a question moments ago about how much pull forward there might have been ahead of the expiry of those. I've heard from several people who have come on this program and spoke to us in a commercial break about buying EVs before that ended.
Yeah, so at a certain point, they could benefit from that. Maybe we get a sense of that later today. I'm just struck by this idea that the richer somebody is, and I'm thinking of Jensen Huang, I'm thinking of Elon Musk, I'm thinking about some of these magnates that are leading some of these technological drives. The more they can act independently as their own little diplomats and sort of go meet with the heads of state themselves, that to me is a game changer. It really reflects the sort of dual paths of a lot of these companies.
They are as big as their own countries, right?
Bigger.
So why wouldn't they have their own diplomatic wing?
But that's essentially the reason why the bigger you are, perhaps the more you have some degree of immunity from some of the policy uncertainty.
Where are we now? 4.5?
Yeah.
Trillion?
$1 trillion, T. And we could have a trillionaire in Elon Musk. I mean, who's next?
Amazing. Futures positive by 0.3 up next. Anita Richardson of ADP. We've got to get into that ADP number of the last 24 hours, the lowest in a few years from New York City. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second-largest economy, with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Equities a little firmer, up 0.25% on the S&P. The opening bell about 16 minutes away. This follows a 4-day winning streak. It could become day 5. Typically, we'd say it's at the mercy of the data, but we don't have any. Mike McKee joins us now for more. Good morning, Mike.
Oh, John, that's not exactly correct. I wouldn't want to leave you with nothing at this point. What's the first thing you might do after hearing that you've lost your job? You want to check out what your health insurance possibilities are. And the Labor Department has a website that explains how COBRA works, and they keep track of how many people have accessed that website each week. Last week, 245,000, which is a spike up from the previous 2 weeks. So it may be a kind of a little bit of a psychological substitute here for the jobless claims numbers. People are worried about whether they can keep their health insurance if they're laid off. This does not include all the government workers who left the payroll this week, but because they don't get COBRA, but it is something interesting. What else do we know about the labor market going into tomorrow's no jobs report data? Well, we know that the Challenger numbers came out this morning, and they showed the weakest September for hiring since 2011. JOLTS hiring in July was down 2%. Layoffs were up 9%. Conference Board job confidence, the lowest since 2021. ISM manufacturing hiring has been below 50 since January, the break-even period. And of course, we had the ADP numbers yesterday that showed a very disappointing negative 32,000 jobs, but I know you're going to be talking about that with Neela Richardson in just a moment, so I'll leave that one alone. The one thing I do want to point out for everybody out there who has a Bloomberg terminal, we have an alternative page. It's WSL ALTE, and it's a list of economic data that is privately provided that will be available on a regular basis. So if you want to look at alternative data, look at that WSL ALTE. Go on your Bloomberg terminal.
Mike McKee, thank you, sir. Only you could come up with this stuff. Appreciate it. Thank you very much. Thank you. He's not going to be alone, is he? A lot of people are going to look for new ways to track what's happening in this economy.
Never underestimate the ingenuity of Wall Street to find something to trade on. And that, I think, is what we keep learning and what we see this morning with talking about COBRA applications and the amount of traffic on that website.
Well, something to bet on.
Yes, exactly.
Which is a different story. Neela Richardson of ADP joins us now for more, following the lowest ADP we've seen, I believe, since March 2023. Neela, good to see you.
Great to see you as well.
What was behind it? How much weakness are we actually seeing?
First off, I think it's important to underline the prominent trend in the ADP data, which is a slowdown in hiring momentum that's been from January through this year. That has been consistently validated every single month. What we did this month, though, was a statistical regularity. We do it every year. We announce it in February with the January release, which is to do an annual benchmarking. Normally, this does not make news. This month it did, but what it does is it reattaches the ADP numbers to the source of truth that we have in the United States, which is this benchmark that comes from state unemployment insurance data. This kind of data data that we see weekly with the jobless claims numbers. And the importance of that is, if you really want the perfect data set, you would have the comprehensiveness of the state UI data covering 95% of US employees and the granularity of ADP data. We don't have that. So we make this trade-off of ADP estimating that state data that comes out with a 6-month lag. We reattach to it every single year.
So was it as bad as it looked yesterday? I mean, that's really what people want to know. This all sounds very complicated, and it sounds like, you know, there are a lot of things at play, but the granular data, does it display the same kind of negativity that the bond market took notice of yesterday?
Yeah, it does. This is our best estimate of what hiring was in September, negative 32,000. That is our best estimate. It is our most robust estimate. It's rigorous. It's tied to the QCEW. So no, you don't need to dismiss the number. Now, if you look at the series, we don't fully re-benchmark the year until February with the January release, but that September number is the number. So what it tells you, even if you look at the pre-benchmarked series, which I did, of course, you see the same trend. And this is what I want to underscore to your audience, because the takeaway is qualitative and the takeaway is firm, validated, that hiring momentum has slowed since the beginning of the year to a point where it is a weak labor market in terms of hiring. It is not a weak labor market in terms of layoffs. Very important to hold these two ideas together. The stock of the labor market is strong. The flow into the labor market is weak. The flow out of the labor market is weak.
So is the market breaking, or is it just an ongoing stagnation of the low fire, low hire that still has not broken in one way or another?
We have a stagnant labor market. And all of that consumer spending that fueled Q2, a 3.8% growth rate we just saw, was built on the backs of the labor market, because the labor market is supporting the consumer. So in that way, it's strength. But that strength is not strong enough in terms of consumer spending to create new jobs. That's a different level of economic productivity that we still need to see in the economy, that's missing the dynamism that leads to consistent job creation. We don't have it in the September number.
This time tomorrow, we would be debating and looking at the data when it comes to the BLS report. We're not going to get it. What do you make of the shutdown? How much of an impact is this going to have on the economy?
You know, it depends on how long the government stays shut. But what I will say is that the shutdown doesn't just affect federal workers. It does affect federal workers, but not just. If you think about all those private contract workers, the ones that operate the cafeterias, the ones in the national parks, the ones that drive government officials here and there, they are also without work as the government shuts down. So it's these reciprocal effects that I'll be watching in the private sector data to see if this leads to even more weakness in hiring because of all those private contractors.
In the past, did you see it bleed into the private sector?
Yeah, but it was always temporary. We know that the longest shutdown that we've seen recently was 35 days. That's a long time to be without a paycheck. I don't care who you are. It's a long time to be without a paycheck. And so that is going to have an effect in the labor market. It's going to have an effect in consumer spending. But if we can get a reopening that's much shorter than that, we won't see such a strong pushback in the labor market when it comes to hiring. I also will note that this just adds to the malaise of uncertainty that we've seen all year long. It's not just the data, it's not just the conditions, it's the fact that, you know, companies are going to operate through fog. If you're a private contractor, do you hire right now? And how much do you hire? That's the question before them as the government is shut.
The entire morning we've been talking to people who say that the U.S. economy can keep running at this very slow pace, and we can still see the incredible dynamism that's reflected in equity market pricing. Do you see the same relationship, or do you think that there is a greater warning flag in the labor market and the dynamic that you're seeing there for the other side of the equation?
You know, I feel like we are at this traffic light right now that is out. You know what happens to traffic when the light is out, right? You fall back on this, you take your turn, I'll take my turn. Sometimes we get that confused and we go at the same time. And once we're past the light, we're fine. That's where we are in the economy. We don't have the data we're used to seeing. There's some uncertainty about who goes next. We won't get the flow. There's bottlenecks. That's what gums up economic activity. But if you can get past that into some clarity, we have all the ingredients in this economy to push forward with strong GDP growth, as we saw in the second quarter. So some of this is just getting the lights literally back on and the data still flowing so we can keep that dynamism flowing.
That's the data. But when it comes to hiring plans, if there is a greater degree of mergers and acquisitions and certainty, at least from the economic trajectory, maybe not in the tariffs, do you expect the hiring to reaccelerate? Do you think this is going to break to the upside rather than further to the downside?
I think there's a potential, but right now it is not clear where that trigger of dynamism comes from. For employers to hire, what do they need? They need clarity, they need strong consumer demand, and they need the ability to invest long term. So they have some of those elements in place. I think we're still missing the clarity, and that's a really important component of whether or not you can add to your headcount, which is a long-term people investment. Now, one thing I'm hearing employers say is now if we can't hire our workforce, let's make sure the workers we have are more engaged. And when I talk to the big companies especially, there has been more attention on how to upskill their workers, train their workers, engage their workers, have more connection to get the most out of the people they have right now, even if they can't add to the headcount in a significant way.
Keep your people happy. That's what it's all about. I'm pleased we're getting back to that. That's good.
Yeah, did you hear keep your people happy? I
More of
heard
that.
Get more out of them and milk them for all you can. You can say keep them happy, whichever way you do it.
Happy people are more productive.
There you go.
There, yeah.
Nita, thank you.
Snacks.
Appreciate it.
It's
Nita
good.
Richardson there of ADP. Typically, we'd get jobless claims. We didn't. 225 was the estimate. 218 was the previous number. The 4-week average has been around 237, 238. Those numbers are pretty low, despite the fact we've had this massive step down in payrolls growth.
This is the whole idea of stagnation. You're not getting the firing, which raises the question, we've been in this place for a long time. Is it going to break one way or another, or are we turning into Europe?
Companies are investing a lot of money, but the companies that are doing that aren't the ones hiring. That's the problem.
Well, this is the reason why it's so difficult. And Anne-Marie, you were talking earlier about how much this is just AI replacement. There is an element of productivity being increased by some of this technology, which can prevent hiring, which makes me think in 3 or 4 years, the people coming into the labor market might have a really good chance because they haven't hired as much, and those people might be more conversant in AI. I might be selling a pitch for progeny who might be entering the workforce.
Of course, yeah. There's no bias here.
That's what I'm hoping for.
It's
anyway.
not about the Bramo family. That's all, is it?
This is literally what we're talking about, because right now it's making it very difficult for people who are graduating, other people in the family.
This is going to be a huge political issue. If AI is truly taking the jobs of young Americans coming out of college, where else are they to go? If you're not hiring entry level, how are they supposed to get on the ladder?
Which is why the H-1B visa issue of the past few weeks is so critical. It's a clear response to some of these issues, and I don't think that got enough airtime in the last 2 weeks. So that's going to be a major, major factor in all of this. That is a message to tech firms to say, look domestically first and hire American talent before you start looking abroad.
Yeah. Absolutely, that was part of it. The other political issue is going to, what we're already seeing is individuals lining up to get federal help to pay their electricity bills. AI is creating so many issues that the politicians are just way far behind on.
It's turning out to be regressive up front, and this is going to be an issue, I think, midterms.
You're right, next
Peter
year.
Cheer said it repeatedly from Academy. This isn't a multi-year story. This is a month-on-month story now. Those energy prices are real. That's going to be a factor next year.
Yeah, and how are they going to handle that? Which is the reason why I thought the Reuters story earlier was interesting. The idea that the government is going to try to take a stake in a number of different sectors, how they're going to try to get ahead of some of these issues for the midterms.
Let's get you an update on stories elsewhere. With your Bloomberg Brief, let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. OpenAI's valuation soars to $500 billion. That makes it the world's most valuable startup. Sources telling us here at Bloomberg, current and former employees sold more than $6 billion worth of stock, pushing OpenAI past its previous $300 billion valuation. This all as negotiations are underway with Microsoft to convert OpenAI into a for-profit company. Arab and Muslim leaders are pushing Hamas to accept the 20-point peace Gaza plan announced by President Trump this week. Sources telling us here at Bloomberg, a full Israeli withdrawal is a significant achievement despite the timing not being explicit in the plan. Qatar's foreign minister said Hamas is preparing its response. 2 Delta Airlines regional jets reportedly collided at low speed while taxiing at New York's LaGuardia Airport on Wednesday night. According to an ABC affiliate, no injuries have been reported. It's the latest in a string of incidents at LaGuardia in recent months that have prompted federal safety probes. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Up next on the programme, Binky Chandler at Deutsche Bank. He'll be joining us to talk about the equity market. Plus, Vonnie's back. She's got your morning movers, Tesla rising and Rivian falling, with the latest delivery figures out this morning.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
The market wasn't quite sure to make of those comments by Powell, I think about a week ago, but I think it made it very clear that they are focused on employment risk relative to inflation risk, and if making the right call in their eyes on that macro risk management is associated with markets going up, that's all right by them.
That was Krishna Gua of Evercore RSI. He was absolutely fantastic, really laying out why people are so comfortable taking risk in this market and why so many of you, yes, many of you, are willing to chase further asset price inflation. And why not, given the year we've had so far? Equities at all-time highs, adding some weight to the rally, up 0.25% on the S&P, with some morning movers going into the opening bell, 43 minutes away. Here's Vonnie with more. Hey, Vonnie.
Hey, John. Well, we're going to start with a whole industry overhaul. This right here is a fascinating story. So Fair Isaac, FICO, we all know it as, came out and said that it was going to start giving mortgage lenders the option to calculate and distribute FICO scores directly to consumers. Now, what does that do? Well, it disintermediates the like of Equifax and all of those other credit reporting companies. So think TransUnion and also Equifax, as I say, and Experian. So there were 3 of them, right? They're all down pre-market thanks to this decision by FICO. Investors repricing a whole industry today. Now let's move to autos, because that's also another industry very much in the bird's eye today. Rivian disappointing investors, even though it beat by a couple of hundred vehicles when it comes to deliveries. We know that the EV credit was expiring at the end of last month, and there might have been a little demand pull forward, so perhaps that's why the stock is down. Perhaps investors were looking for a little more, but it's a very niche company. We're talking about 13,201 deliveries in the quarter. The full year forecast, it narrowed that range, but that also met estimates. The estimates were 42,730, and there's a range in there. We are awaiting Tesla delivery figures as well. That's likely to please investors. That's why the stock is up pre-market. Sales numbers this morning should show just under 440,000 vehicles in the last 3 months. Now, that would be down 5% year over year, but would be a much better improvement over the first half of the year, where we saw sales down 13%. And of course, Elon Musk is back and quote unquote refocused at the company as well, with lots of milestones for him to meet to get that huge pay package. So he'll want those deliveries to come in strong.
Bonnie, thank you. Thanks for the update. Tesla up by 1.3%. On credit scores, always surprised by the average credit score in this country, that it runs in the 700s. That's pretty good, you know.
Yeah, it's very difficult to get to
Pretty
that level.
decent credit score.
Maybe a lot of people just don't have credit. You're correct. It seems like it's an incredibly high one, but don't you have one that's...
I'm not going to share those things. I've got a state-by-state background, though. Just in front of me.
Do
Do you want state by state? I've got one for you now.
Okay.
What do you think is the highest? I've got it in front of me. I think it's Minnesota at 730.
That makes sense.
Right? Why does that make sense?
I mean, I've lived out in that region before, and there just is a very strong
They check their credit all the time?
Well, there's just a very strong kind of pull your pants up by your bootstraps and,
okay,
you know, that kind of thing.
Mississippi, 675. I think that's the lowest. I'm just eyeballing this data right now.
Let's not come up with
It comes from Equifax. I'll send it over to you. You can have a look. It's an
appreciate
interesting read. All right. Sticking with markets, Binky Chatter at Deutsche Bank is one of the most bullish on the street with a year-end target of 7K. He writes, in our reading, however, equity positioning is only moderately overweight, and we see growth, not rate, as the primary driver to focus on. Binky joins us now for more. Binky, good morning.
Good morning.
Let's get into this. A lot of people would look at this market and say, well, everyone must be very, very long and overweight. What do you read? What are you looking at that tells you something different?
So overall, equity market positioning in our reading is clearly overweight. So if you think about it on a Z-score basis, normally we're in a range between -1 and +1. Our read in round numbers would be that the market's positioned basically at +0.5 or 0.5. So clearly, is that overweight is coming in our reading entirely from the positioning of systematic strategies. So if you think back to April there's April the 2nd, which is the lead in to April the 9th. And you have had basically on April the 2nd, you know, what I would describe really as a vol shock. So you have the VIX in the 50s, right, and then you have the relent on policies on April the 9th, and vol starts to basically come down. You get a strong recovery, and so the trend and vol basically coming down is pushing up by rules the positioning of systematic strategies. I would say the much larger part of the investor base, the discretionary investors, as opposed to systematic investors, and discretionary investors you want to think about as basically fundamentals-based investors, their positioning is basically at neutral by early July, and in our reading continues basically to hug neutral. So I would argue that actually positioning today, despite the run-up in the market, is a source of upside. Because if you look at the positioning of discretionary investors and what drives it historically, it's exactly what you would think it is, which is earnings growth. And so if you look at the relationship between discretionary investor positioning historically and S&P 500 earnings growth, it's a pretty compelling relationship. There are, of course, disconnects from time to time when other things are in focus. And if you look at their neutral positioning today, It's positioned for growth in the very low single digits, 1%, 2%, 3%. It moves around. And their positioning, like I said, has been this way since July. That's when we were getting second quarter earnings, which came in at 10% year-on-year growth, 9.5%. And if you think about what we're going to start getting in a couple of weeks, our take or preview would be that we're likely to get, actually somewhat of a pickup in growth, in earnings growth, closer to sort of 11%. And so the pressure is on, I would argue, for discretionary investors to buy in basically to this recovery where they haven't. They've really been focused on the risks, is what we would argue.
So this is the reason why you upgraded your target for the S&P for year-end to 7,000. That was earlier in September. I'm just wondering how much you see that continuing through 2026 to lead to some of the real bull cases that we've heard of 77, 7,800 on the S&P 500.
Yeah, so, our target for this year-end is 7,000, and the way I would put it is actually it's a reinstating of our target at the beginning of the year. We cut our numbers, our earnings numbers, and our market view. We remain sort of constructive that we would get a relent on policies and we would go a lot higher. But at the end of the day, I mean, I think the simple fact is, and as some of the guests earlier were saying, basically, you just don't see a lot of stuff in the data. I mean, if you think about, the reason for cutting was the tariffs, and they look to be having, a much more modest impact than we basically thought. If I look at earnings, so you start with macro growth. We got the second quarter recovery. You could say the 3.8% is partly a recovery from, slowdown in Q1. But we're in Q3 now, and the Atlanta Fed at last read was pretty close to 4%. So on macro growth, not much is showing up. And I would actually argue that a lot of the negativity and sort of the macro consensus that we would get, pretty significant slowing, that's a positive catalyst, and it's a mini version really of what happened in 2023 when the macro consensus persistently looked basically for a recession that didn't come. And so what you got is basically 15 months of positive macro data surprises, and markets are not necessarily going to go down when you're getting continuously positive surprises. We're having a mini version of the same thing. If you look at the Citigroup data surprise index, kind of went vertical late last week. And so, discretionary investor positioning is exactly actually in line with the macro consensus of a slowdown in growth and a slowdown in earnings growth, but we're not getting those things.
Torsten Slock of Apollo made a similar point in the last 24 hours. Torsten was like, we all need to take a long, hard look at ourselves. We're waiting for the consequence of something that took place 6 months ago, and it's not happening. And he thinks that the risks are to the upside, particularly for inflation into next year.
Well, this is the key question. Have stock markets really not really appreciated the gains that we've seen in the economic growth trajectory? Or are we just talking about the bond market, which actually is recognizing weakness that the Fed's going to respond to?
If this isn't a sign of appreciation, what is it, Brad? All-time highs, come on.
Exactly. This is full appreciation. I think people are really appreciative.
Binky Chandler at Deutsche Bank. Binky, always good to see you, sir. Going into the opening bout, 34 minutes to wait. Coming up tomorrow, Chris Verona-Strategas, Priya Misra of JP Morgan, Francis Donald of RBC, Nadia Lovell of UBS.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A cidade estava sitiada. Isso é o começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado. Porque no final, tudo é dinheiro. People back home, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sart in Le Mans, and this is Bloomberg. We are looking at an everything rally once again, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, market shake-off, government gridlock as a wave of good news from AI and semiconductor companies pushes tech stocks to new highs.
Courting drug makers, the White House could ink more deals with pharmaceutical companies after Pfizer commits $70 billion to the U.S.
And Berkshire Hathaway scoops up Occidental's chemical unit for nearly $10 billion. It's Warren Buffett's biggest deal in 3 years.
Well, Matt, you pointed it out, it is the everything rally. And this morning, that everything rally, be it here in Asia, is being driven by semiconductors. So we're watching those semiconductor stocks this morning. Micron, Western Digital, all of them look like they're poised to start trading at all-time highs. Micron barely up, but Western Digital up more than 5% this morning, Matt.
Tesla is also going to announce its third quarterly deliveries in any moment. Third quarter deliveries, I should say. Analysts were expecting 439,000 in sales, and we know EV sales shot up as consumers raced out to get the last of the EV credits. You can see Tesla shares up 3.25% in the pre-market. Danny?
Yeah, and to be fair, we did already get some Rivian numbers coming through earlier this morning that weren't as good as expected. The Tesla numbers now just hitting the tape. Here to break it down with us is Bloomberg Tech co-host Ed Ludlow. Ed, what are you seeing?
Yeah, it's a massive beat, almost 500,000 vehicles in the quarter. Consensus was 440. This is an important moment in time because it's the bread and butter business. And remember, on November 6th, shareholders will vote on a compensation package that has a mandatory requirement for Elon Musk to deliver 20 million vehicles over a 10-year term. It is a massive beat. What I kept hearing from sources inside the company all quarter long was, hey, have you seen the advertising that we've been doing on YouTube, on Instagram? As you guys know, Elon Musk does not believe in traditional advertising. What I'm hearing happened was they experimented with paying for ads in the energy business, and they saw a direct uptick in sales. So they were like, let's do this with the vehicles as well. Also bear in mind that at the end of this quarter, at the end of September, the disappearance of the federal tax credit. And there was so much marketing material sent out by Tesla, like, remember, you have 1 week left, you have 1 day left before you lose that credit. So this is really big. And, you know, I do think that advertising piece has been a really important factor here. I know it has, based on the conversations I've been having. But remember, even in the most loyal Musk and fan base within the investor group, they have also been saying, come on, Elon, like, please do some advertising. So I find that extraordinary, and shares up 3% in pre.
It is, I mean, we saw Ford's EV sales rise 30% in the month, right? And Ford had done horribly badly with EV sales. They were like single digits. And so I think the end of the tax credits can't be put aside as a massive, massive driver for EV buyers in the quarter.
Although, Jim Farley's been speaking all week, hasn't he, in various places, saying that by the end of this year, you know, the share of vehicles in the market that are EVs could come down. They're, you know, below the 10% where they currently are. What's so interesting, Caroline participated in this conversation with Robin Denholm as well. We tried to get her to define political activity, and that seemed very clearly tied to Musk having a formal role in government. The reason I bring that up is that this data, again, in the third quarter, Tesla delivered 497,099 vehicles. Consensus was 440,000. Doesn't seem to be that Musk's ongoing activity on social media is impacting things here.
Yeah, done. Shares up 2% in the pre-market trade. Ed, thank you so much. Bloomberg Tech co-host Ed Ludlow, and it is a Bloomberg Tech takeover of open interest this morning because OpenAI has completed a deal to help employees sell shares in the company valued at $500 billion. That makes it the world's largest startup, and we have none other than Bloomberg Tech's other co-host, Caroline Hyde, joining us. Caroline, so this usurps the private valuation of Elon Musk's company, which I think was $350 billion. I mean, these are eye-watering numbers.
So it's once again pitting Sam Altman versus Elon Musk, who of course co-founded OpenAI together, and we know the fierce rivalry that certainly Elon Musk has with Sam Altman and the lawsuits that he flings his direction. So interestingly, the OpenAI leapfrogs SpaceX in terms of valuation. What's extraordinary though is that they raised just back in March funding from SoftBank, and now they've eclipsed that in the $500 billion valuation as well, adding more than $100 billion. This is a company that at the moment is having such an impact on the idea of generative AI, the way in which we use it. They're just throwing out more and more ways in which we can use it. Sora 2 came out this week, the way in which we can do image generation, and they have their own standalone app. They've been thinking about the way in which that we're going to be able to purchase, doing deals with Stripe so that we can do shopping specifically within ChatGPT. But the main thing is this is the scale of disruption this company brings. I would point out is now, if you look at it from a public company traded versus Netflix is bigger in terms of market cap than Netflix, but Netflix not only has a lot more revenue, some $45 billion worth, whereas we understand OpenAI is only going to have about $13 billion worth this year. It's also profitable, and OpenAI is not profitable because of the sheer scale of the AI infrastructure they have to bring to bear.
I mean, if they continue to execute on AI, look, I have two ChatGPT accounts, right? Yeah. I have the work account and the personal account, and I'm not an anomaly, at least here at Bloomberg. So,
but how much are you paying?
$20 for mine a month, and I don't know how much the company pays, but I imagine it's not cheap. I want to get, though, to the Microsoft story because we've been talking so much about about CoreWeave, with you and with Ed. We had the CEO on, Romain Bosick show on The Close a couple of days ago, and now Microsoft is investing in a rival. Is that the case? In one of these neo-cloud businesses?
Well,
Nebius?
Well, this is Microsoft basically saying we should use more neo-clouds. Microsoft is in the business of building out AI data centers itself so it can offer Azure in the cloud to paying customers.
But they want more middlemen, right?
Yeah.
Who doesn't want to pay a markup?
Well, they've got to diversify, and they've got to be able to keep on scaling. This is a company that is an engineering force, a software force. Do they want to be ultimately a building force as well? They are having to use different and more creative ways of getting access to compute. You've seen that with OpenAI itself, trying to do deals with going with Oracle, with Microsoft, with neo-clouds as well. And we know that CoreWeave got a big deal with OpenAI. And then, of course, we've seen neo-clouds more broadly be serving the wider audience. I do think that you're going to see Nebius get money in from these various players. Look, Nscale just raised a pre-Series C days after having closed a Series B in the private market, so more than $1 billion. It was a record ever seen in Europe. Nscale is like the European version of a Nebius, of what's happening with CoreWeave. These companies are having to serve our extra need and desire for compute. Microsoft does want to diversify, so yeah, they're putting their money where their mouth is. Maybe they ink deals and they say, we're going to take your compute, but maybe they also say, we're going to take a bit of equity too.
Right, maybe it's also an admission that Azure just can't build enough of its own
And the CapEx is unnerving for some investors,
Yes,
right?
or both. All right, Caroline, we very much look forward to your show today. Caroline co-anchors Bloomberg Tech with Ed Ludlow. He's in New York this week. It's been a pleasure for us. Let's get, though, to the old economy. Berkshire Hathaway is ready to make its biggest acquisition in 3 years, the company reaching a deal to buy Occidental Petroleum's chemicals unit for about $9.7 billion in an all-cash deal. For more on this M&A, we're joined by Bloomberg Intelligence senior analyst Matthew Palazzola. And Matt, it's interesting because they already own a massive stake in the parent company, Oxy, I think like 27%, right?
Yeah, so they own about $11 billion worth of Oxy stock. I mean, I think it's a good deal, Matt, for both. The $9.7 billion price tag, that allows Occidental to deleverage a little bit, and they are highly levered compared to peers, which could help the equity. So while I think the business is a good business for Berkshire to get, it also helps Occidental in their goals, so it might help the stock as well.
Matt, it does seem like an era where heavy industry companies are looking at paying down debt, selling off parts of their business. Does it underlie maybe more stress or just a moment of transition for the wider industry?
Yeah, Danny, I'm an insurance guy, so don't kill me in the comments about the chemicals industry. But I think what is happening specifically with this deal is Oxy was very highly levered. Part of that was acquisitions they made. So they were lacking a lot of financial flexibility. So they kind of needed to do something. Part of their lack of financial flexibility was the preferred stock that Berkshire owns in them. So they needed to do that. We're at like kind of trough cycle earnings for the chemical industry. So it was another kind of disadvantage for Oxy and advantage for Berkshire in this deal.
Hey, Matt, thank you so much for bringing this to us. That's Matt Palazzola of Bloomberg Intelligence. A quick check on your equity market. About 20 minutes away from the start of cash equity trading, we're up 0.3%. The NASDAQ outperforms, no doubt, thanks to Tesla. But here we are in the second day of Q4, starting the way we ended Q3 at all-time records, a 29th record high yesterday. Matt, if we do it again today, 30th record high for the S&P 500.
Yeah, so we continue to fire on all cylinders in terms of the, I guess it's a FOMO play maybe, or no one cares about anything anymore. It's interesting also, though, that you continue to see yields under pressure. We saw yesterday the U.S. 10-year yield come down, and right now it's bouncing back a little bit, looking at 4.11, so it had come down to around 4.10.
But it's remarkable, even very underloved parts of this market, like healthcare, are now participating in the rally. Obviously something very specific there. But to your point, it's the everything rally, and Tesla adding to it this morning after those deliveries. Surprise to the upside, shares moving up by 3.2% this morning. And maybe the bar was low after some disappointing figures for Rivian, but is this just a sugar rush, to your point, Matt, after the coming end of tax credits?
It's also the everywhere rally, right?
Yeah.
Because we see emerging markets powering higher. We see Europe powering higher, the continent, mind you, not London, obviously. The FTSE down a little bit. But coming up, President Trump is raising the stakes as the shutdown enters a second day with little sign of a breakthrough. In fact, it looks like things are getting worse. They're talking now about actually going through with the plans they had for mass firings, which seemed like threats and a negotiating tool, but it was what they campaigned on. We'll talk about it in Washington next. This is Bloomberg Open Interest.
right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Let's get now to high interest and look at what's making headlines around the world. The EU plans on hiking tariffs on steel imports to 50% to align the bloc's rate with the U.S. Imports have been climbing as domestic output slips, and Brussels says it won't keep playing by rules that China ignores. The industry has been clamoring for tougher barriers. Now the Commission's draft plan sets quotas, adds review clauses, and gives itself sharper tools. If you can't beat them, join them. U.S. employers pulled back on hiring in September, announcing the fewest job additions for that month since 2011. Outplacement firm Challenger Gray and Christmas says companies plan to add just over 117,000 positions. That's down more than 70% from a year ago. The report points to a labor market that's losing momentum and hiring slowing, and layoffs, though not yet surging. With the government shutdown halting the official jobs report due tomorrow, the Challenger survey may be one of the few snapshots we get of the U.S. labor market. And the government shutdown is now in its second day. The Trump administration is raising the stakes in its showdown with Democrats, first by halting $18 billion in infrastructure funding for New York, then by signaling a willingness to fire thousands of federal workers. Vice President J.D. Vance, though, denies the moves are politically motivated.
We're not targeting federal agencies based on politics. We're targeting the people's government so that as much of possible of the essential services can continue to function. That is the question the president has asked the entire government.
President Trump, meanwhile, makes no bones about how he viewed the stalemate earlier in the week.
We're doing well as a country, so the last thing we want to do is shut it down, but a lot of good can come down from shutdowns. We can get rid of a lot of things that we didn't want, and they'd be Democrat things.
No politics or Democrat things. Let's get the latest update on the government shutdown with Bloomberg Washington correspondent Tyler Kendall. Tyler, where does the stalemate stand? Does it look like either side might budge and we finally end the shutdown?
Well, Danny, at this point, we really are at an impasse, though I can say that the lawmakers that Joe Matthew and I spoke to on Balance of Power last night did express cautious optimism. All of them confirmed that there are talks happening behind the scenes when it comes to Democrats' chief ask, which is negotiating those expiring ACA premium subsidies. Now, our analysts at Bloomberg Economics say that extending these expiring tax credits would cost $350 billion over 10 years. So there's a lot of issues that need to really be hammered out with this, including how long they would be extended and whether or not there's going to be a forcing mechanism to have lawmakers talk about this after the government reopens, or if pen has to meet paper before they can actually reopen the government and get Democrats fully on board. Because at this point, as I said, they're just talks. Our indication is leadership is not involved here, and we haven't seen emerge what's known as a Senate gang, essentially a group of senators that would serve as those bipartisan brokers. Now, a few different senators, Matt and Danny, did tell us that today the Senate is, of course, out in observance of the Yom Kippur holiday, but they expressed optimism that this could allow lawmakers to perhaps take a step back and continue these negotiations without the threat of a vote hanging over them. They are expected to reconvene tomorrow and vote again on the Republican version of a stopgap measure that would cleanly fund the government as it's known until mid-November.
I wonder, Tyler, how this administration will do in further reducing the federal workforce. That was something they campaigned on. It's something they pushed for at the beginning of the year. And this seems like their chance. Beyond negotiating with Democrats, beyond the politics of it, they could use this opportunity to really lessen the federal workforce. Are they going to actually do it?
Well, that's the big question that we're waiting an answer for, but perhaps we'll get a little bit more clarity later today, as President Trump did confirm in a post on Truth Social. He has plans to meet with the OMB director, Russ Vought, but I can also say that Republicans that we're talking to are urging caution when it comes to this issue. Take Senator Dan Sullivan, a Republican from Alaska, sat down with Joe Matthew on Capitol Hill yesterday, and he pointed to the federal workers in his state. A little less than 5% of Alaska's total workforce are federal workers, which reminds us that only about 20% of the total federal workforce is concentrated here in the Washington, D.C. metro area, which means that this really is going to be something that these lawmakers are going to hear from constituents nationwide. Now, it is worth pointing out that an analysis by Bloomberg of government agencies' contingency plans that they have to submit to the OMB in light of a shutdown did not outline permanent layoffs. So we don't have a lot of visibility into exactly who would be at risk unless we're going off of the OMB memo that we saw released and obtained last week, which did outline some of the different priorities that could be kept safe if they're in line with President Trump's agenda, while Russ Vought appeared to direct agencies to look into those areas that haven't gotten new funding from the One Big Beautiful Bill or aren't funded by mandatory funding. So those are sort of the areas that we're going to start to dig into to see whether or not this actually comes to light.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there reporting live from Washington. I will say that if you don't have access to non-farm payrolls data, and if you, well, we're not going to get that tomorrow, right? We're not going to get the CPI. We're not going to get all of these government-issued data points. Bloomberg on the terminal has a list of alternative sources you can look to for guidance. WSL space ALTE go is the best way to pull up that list.
And you know who's going to be needing that guidance and probably that function is the Fed. Austin Goolsbee yesterday saying the Fed is going to a period where we're trying to figure out, is this a transition? And then you're not going to get the data. It is just that much harder.
He said the non-farm payrolls number is literally the best piece of labor data in the world, which, I mean, in the whole world?
What's better, ADP? ADP has been a bad indicator for where this labor market is
going.
True,
but there are other countries. I imagine a command economy has access to nearly perfect data.
Okay, that is a fair point. I take your point when you say the world.
Coming up in the next hour, we're going to discuss the shutdown, deal-making, and more with Guggenheim co-chairman Jim Milstein. This is Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's look at some of the stocks moving ahead of the opening bell in about 7 minutes' time. Pharma companies are apparently fielding calls from the White House to ink deals like Pfizer's, which gave it a 3-year tariff reprieve. We're going to get more on this with our markets correspondent, Nora Melinda, in a little bit, Matt, but worth pointing out, healthcare was the only down sector before this most recent rally year to date.
Yeah, and it has really powered higher over the last 3 sessions. It's already Thursday.
Yep.
Congratulations. Monday, Tuesday, and Wednesday were awesome. Is this a pre-market board, Will? This is a pre-market board, right? So they're not doing well today, but they're just giving back some of the massive gains they've made. You saw FICO there. The other credit reporting companies are slumping after FICO, that's Fair Isaac at the bottom, offered mortgage lenders the option to calculate and distribute FICO scores directly to customers. As a result, everybody else is down and Fair Isaac is up 16%.
Well, the other thing lifting up markets that has been doing all of the legwork as of late is semiconductor stocks, Micron, Western Digital. They're all trading at all-time highs. And the sector is leading this everything rally we've been talking about this morning, Matt.
Yeah, absolutely. Crushing it. Let's dig into the rally with Bloomberg's markets correspondent, Nora Melinda. She joins us here on set. And Nora, it has been really the pharma stocks ever since Pfizer's meeting with President Trump, just powering this market higher. And obviously, the AI play, the tech trade also is helping to move things along nicely.
A lot going on right now, as we were talking about a bit earlier. I mean, a lot of these pharmaceutical companies, the executives there are fielding calls from the White House staff almost daily, and they're trying to strike a lot of deals. I mean, the White House has really talked about the fact that they want to invest in a lot of these companies here, especially the ones that are U.S. based here. They're really pushing a lot of these pharmaceutical companies to sort of develop a relationship with the White House. I mean, of course, if you think back to the conversations that we've been having earlier this week, just chatting about Pfizer and the deal that they struck with the White House to get a 3-year tariff reprieve there. You've also got Eli Lilly. They're really pushing that company to talk about different ways that they can finagle things to make it a bit more positive here for the government and the relationship that we have there. I mean, they're really just looking for industries across almost 30, especially as they're thinking about those are critical to national or economic security here.
Nora, only a minute, but it's not just pharma. It's also chip makers, adding so much weight to this rally.
Added $200 billion if you look across the globe here when we're looking at chip makers, especially as we think about the AI exuberance that's really being demonstrated if you look at the gains that we saw at the end of this past quarter. And of course, as you're continuing to see the rally into today, Mag 7 stocks, all of them up across the board.
I will say, you know, a couple of days ago, I gave out my email here on live TV. It's never recommended.
But you did. But any terminal user can find you anyway.
Mine is mtmiller@bloomberg.net. And I got an email from a guy, I'll call him Chuck. He said, there's a real shortage of gas turbines. And we have an amazing story today about Siemens selling a ton of them. And Caterpillar has had a huge rally because they apparently make them as well. So gas turbines, also a story in the AI supply chain. Nora, thanks for joining us. Nora Melinda there covers stocks for us. Less than 4 minutes to the opening bell. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Danny Berger is back. We're rallying. Everything is right with the world. S&P futures up more than 0.25%. NASDAQ futures with tech stocks leading the way up 0.6%. Even the small caps are along for the ride. You hear the opening bell down at the New York Stock Exchange. Crispy. Rice, I don't know what it's called, but KRSP is the ticker. By the way, yesterday, the guys who rang the bell here, Neptune, ticker NP, they were doing an IPO, up 24%. One of the founders is $1.2 billion richer today. They crushed it yesterday. You have Canada IM Venture ring the opening bell down at the NASDAQ. They seem very excited. It's an historic event. Why not? You know, celebrate with your closest friends. Danny, we're seeing everything up today. Tesla doing well. Sales are higher. It's a tech stock. It's a car maker. What can you tell us?
Yeah, I mean, it's a bad day to be a bear on this overall market or a Tesla bear. They posted a surprise gain, Matt, in quarterly vehicle sales. So shares up just under 2%. 497,000 cars is what they had in the third quarter. The expectation was for 439,000. But there is this question. Is this just a temporary sugar high? Because EV tax credits are expiring, Tesla, we're talking to Ed Ludlow about this big marketing push saying go and buy your Tesla before it expires. So how long lasting can this really be?
Yeah, that's a good question. We'll be watching to see. I will say other car makers doing well today. Stellantis was up like 6.5%.
Not Rivian, though.
Pre-market. Rivian, still sticking with that 400-volt architecture, which in my opinion, I'll editorialize a little bit here. Not the best choice. Semiconductor stocks are driving the global market rally with Micron and Western Digital hitting all-time highs. You can see it always helps when NVIDIA rises as well, 1 2/3%. When a $4 trillion company gains, you typically see all the votes rise. Let's bring in Wells Fargo Investment Institute Global Investment Strategist Veronica Willis. And Veronica, you're overweight these large mega cap tech companies still. Have you not been tempted to take profits and rotate out?
Yeah, I think it's tempting to really take those profits, but at the end of the day, we are still expecting these big companies in these sectors to still do well. We like financials and we like tech, and we think that this environment with the Fed cutting rates, we're expecting 2 more cuts this year, that financials are going to do really well. And we think with that longer term AI theme, that tech is still going to do really well.
It's kind of incredible because so much in this market has been rallying, and a lot of it has been what gets the residuals from tech, what's more productive. Pharma was one industry that was left for dead this year. Before this week, Matt and I were talking about it, it was the only sector that was down. Now it's full on participating in the rally because maybe striking some deals with the Trump administration. How do you think about pharma and generally when a rally is built off of policy coming out of the White House?
I think it's risky to think about the sustainability of a rally when it comes from policy because there's ultimately going to be a lot of uncertainty around policy. And so I'd just be a little bit cautious there, focus a little bit more on fundamentals and focus a little bit more on what we're expecting from the economy and how that's going to impact markets.
It's strange if I look at the, on the Bloomberg, you have to type SPX L1 index GRR to see a breakdown of just 11 industry groups. I look year to date and you see the defensive sectors all at the bottom. They're all gaining, mind you, but consumer staples, real estate, healthcare, energy, all the least best performers. Why do you think bullishness, optimism is so strong here? I mean, your target is for this year is 6,700 and we're above that now.
Yeah, I think that the market has done really well once we got through the worst of those kind of tariff uncertainties earlier this year. But we think that there are a lot of catalysts for some market volatility, and so we could see some pullback later this year. Even thinking through 2026, we are expecting the market to move higher, but I don't think it's going to be a linear move up. There's going to be some volatility along the way, and having a little bit of exposure to some defensives could help protect for that volatility. So we do like utilities right now for that reason.
Well, to be fair, some of the stocks facing mass consumers have been doing really bad. Bespoke put together an index. It has Walmart, Target, Costco, BJ's, some of the discount dollar stores. It's down 11.5% since the end of Q2 and pretty much a straight line downwards. Would you be avoiding, even though the American economy looks good, but any stocks that are facing mass consumers right now because of the whole K-shaped thing?
Yeah, I think it's really tricky thinking about the consumer. Consumer confidence has been weakening, but consumers have still been spending. But then you really have to look into what are they spending on. And so there's going to be this shift to spending on those necessities more than spending on the things that are a little bit more discretionary. And so that's part of the reason why we're a little bit cautious on the consumer discretionary area, because we do think with an economic slowdown, there's going to be a little bit of shift there in the consumer.
I will say, Danny, ever since Jonathan Levin wrote that piece on Costco's estimated PE, they're trading at 45 times next year's earnings, right? Walmart is trading at 38 times next year's earnings. Target, 11.
Wow, so Target is the underloved one. To be fair, that they've had to think of a whole strategy rethink Target has. So some troubles there, but the stocks haven't been doing as well.
No, I want to ask finally about small caps, Veronica, because some people have taken a punt, you know, and said, like, it's got to work this time, right? You don't favor small caps, but if the Fed starts to cut more aggressively, if we got, say, a 50 basis point cut, would you leg into them?
I think it could be a nice little bounce for small caps, but I don't buy that it's going to be something sustainable, especially with where we are with the economy. It's just not an environment for small caps to do well. It's more of an environment for those large and mid-cap companies to outperform, just because they're going to be able to be a little bit more nimble to navigate all of these uncertainties. They've got more cash on the balance sheet, and they're going to be able to do the shifts necessary to be a little bit more resilient.
Thank you so much for joining this morning. It's great to have you on a day where everything is going up. Veronica Willis of Wells Fargo Investment Institute, global investment strategist. Let's get a check on the stock market right now, about 6 minutes into your trading day. And again, here we are headed for, what is this, the 30th all-time record if we hit another record high today? We did yesterday, so by any stretch of the imagination, we will today. Matt, you pointed this out. It's the chip makers, thank you chip makers, that keep adding to this rally, $200 billion. It is NVIDIA leading the charge. A close second behind is Broadcom, who Nancy Tangler loves to call the poor man's NVIDIA. I don't know if you can call it that anymore, given the rally. To the downside, it's also tech. Netflix down 2%. There's been kind of this like Elon Musk-driven call to boycott Netflix. Not totally sure what's going on there, but seems another day of declines for them. Visa, Apple, JP Morgan also down this morning. Let's look at some of the individual sectors and how those are shaping up. You can see it's a really top-heavy day. Yes, we are gaining, but it's thanks to tech. It's thanks to NVIDIA, because you have real estate, consumer staples, utilities, communications, healthcare, financials, consumer discretionary. All those are doing worse. So Matt, it is another day where breath is not looking great, but thank you, tech, for saving the day and getting us to another all-time high.
Yeah, the big heavy hitters pushing us higher. Also, shout out, you saw Caterpillar there among the winners.
Yeah.
I love that turbine story Bloomberg News wrote today. And then FICO, offering mortgage lenders an option to give credit scores directly to consumers. That lets them bypass the Experians and Equifaxes of the world. Let's get a conversation going about this with Bloomberg Intelligence Senior Policy Analyst Nathan Dean. Nathan, I will say, you know, these credit score bureaus are the bane of many Americans' existence. So a lot of people celebrating the downfall of those companies. Are they going to go away?
No, I don't think they're going to go away. And one of those individuals that most likely will be celebrating is going to be FHFA Director William Pulte. He said on X that he's going to have a statement, and he's been pressuring Fair Isaac in particular to lower the cost for mortgages. Now, what Fair Isaac did here is they essentially cut out the credit bureaus. The credit bureaus, when they use a FICO score, when you go forth with a mortgage, they charge about $10 per score. What FICO is doing is now saying, look, we're going to cut you out, and we're going to charge $4.95. So how does the credit bureaus respond? Well, you know, we're talking about a significant portion of their revenue, but it's not everything. So they could potentially bundle this, whether it's services. Employment verification has become a new winner for the credit bureaus over the last couple of years, but they also have a rival score called the Vantage score, which they could be pushing further. But ultimately, for these credit bureaus, it's going to increase competition, really hit their margins on the mortgage space, and really pressure revenues.
And you can see just with the FICO move, Nathan, the stock just halted trading because of volatility to the upside, up 22%. I think a lot of people would look at this news and say, how does it help me? As Matt pointed out, people hate these credit rating agency bureaus because of the issues of transparency and understanding exactly what goes into it. Does it change anything for day-to-day people who look at their credit score and hope to improve it and hope to even understand it?
Not right now, but I will just say is we are awaiting this statement from FHF Director Bill Pulte, because I don't think this is the last of what we're going to see going on with credit reporting agencies in particular. You know, he's had several discussions with FICO. He's also had several discussions with the agencies themselves in terms of trying to lower the costs from mortgages. But why stop at mortgages? There's going to be other things out there that, you know, you're going to see policymakers be focused on to try and lower these scores, or not lower the scores, but lower the price of these scores in the impact that they have on everyday Americans. But that's why I think the credit bureaus have also been shifting their focus over the last couple of years. Like I just mentioned, employment verification, and also just into different types of information of when you need to verify who you are and verify, you know, your source of income and so forth like that. So, you know, I think the credit bureaus are going to be able to respond here in a way where I don't think they're going to be able to ultimately be able to claw back some of the lost revenue that's going to come with this move. But there's a real strategic reckoning coming for this industry, because, you know, the pressure is going to continue. It's not going to go away.
Yeah, and again, just absolutely giant moves in stocks reacting to this TransUnion. You see there down 13.8%. FICO up 22% before a trading halt. Nathan, thank you so much for that. Bloomberg Intelligence Senior Policy Analyst Nathan Dean. Coming up on the show, Tesla and Stellantis deliveries are driving those stock moves today. Stellantis up 8.5%. Tesla, some of the gains starting to lessen this morning. We're going to have details with our head of global auto coverage. That's coming up next on Bloomberg Open Interest.
Now, your co-headquarters is in Miami. You spend a lot of time in Miami and Florida. People often think the hedge fund world is centered in New York or London. Do you have enough access to talent and information in Miami, or does it make a difference anymore?
Information is, you know, everywhere at this point. So information's not the challenge. I think young talent tends to want to be in New York. I'd say 75-25, just because the ecosystem of young people and social reasons. We are having more big hedge funds, obviously Citadel being the most prominent, come down to Miami. And that causes management teams to increasingly come through Miami. So it is a perfectly good place to run a hedge fund, and there are many good hedge funds down there.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let's get you some top calls, some of the analyst ratings that we're looking at this morning. First up, Nike, that gets upgraded to a buy at KeyBank after its earnings that showed signs of recovery. The analyst over at KeyBank said that there's enough visibility to feel comfortable in the broader turnaround story. Those shares up 3.25%. Next up, chocolate maker Mondelez, that gets a downgrade at Berenberg. Berenberg warns of near-term industry weakness thanks to warm weather and price sensitivity weighing on European demand. So those shares down about 1%. Why don't people want chocolates? That's sad. Finally, JP Morgan is raising its price target on Alibaba, another one, to a street high of $245. That implies a 36% gain from its close yesterday. They see significant room for upside thanks to the company's strengthening cloud outlook and growing synergies between AI and its e-commerce operations. Those shares up 4.5%, just thereabouts. Matt, there's so much bullishness on the stock, and it's already doubled this year.
All right, is it Golden Week or what is it? It's a whole week-long holiday.
Yeah.
In China, I think we're getting into it.
I think that's right.
Everybody just shops the whole time.
My kind of holiday.
That is not bad for Alibaba. All right, Tesla posting a surprise gain in quarterly vehicle sales. Shares are just turning negative. At one point, we did hit a new record high in Tesla shares. They jumped up to over $1.5 billion, still trading at more than $1.5 trillion in market cap. The EV maker delivered more than 497,000 cars in the third quarter. Analysts were only looking for 439,000. Bloomberg's Craig Trudell leads our global autos coverage. And Craig, you know, we were debating earlier with Ed Ludlow from Bloomberg Tech about whether this is because, you know, the tax credit expired in the last quarter, at the very end of the last quarter, or if it's because Elon Musk is finally listening to some of his underlings and doing some actual advertising.
Yeah, I suppose the advertising could help a little bit on the margins. I do think the struggle that this company is going to have to sort of replicate this kind of success without the $7,500 tax credit cannot be understated. You have to give them credit for posting this number, of course. But I think, you know, it was clear that throughout the quarter here in Europe, the sales were extremely weak. I think even in China as well, you saw a sustained, you know, not so much of a drop as we've seen in Europe, but a real struggle to sort of keep up with the growth that you're seeing out of, you know, say Xiaomi or keep up with the numbers that BYD does in China. So you kind of by process of elimination have to sort of conclude that the U.S. is what really sort of carried things this past quarter. And it's no surprise in that we saw just yesterday across the industry, every manufacturer that's selling EVs sold a heck of a lot more of them before these tax credits go away, because this is a substantial perk for buyers. Consumers wanted to lock that $7,500 in before it went away.
I was going to say GM, Ford, Hyundai, all of them posting really strong numbers, to your point, Craig. So it's not just Tesla, but how exposed are some of these other car makers to the EV tax credits starting to go away? What sort of ramifications does it have for the industry as a whole if we're just now getting this temporary sugar rush that might fade out?
Yeah, I mean, Rivian's a good example of a similar trend where we saw a better than expected third quarter, and yet they offered an update on their guidance for the full year and narrowed the forecast range. The midpoint of that range is lower than what it was previously. The company already was calling for a decline and sort of I guess kind of calling for the fourth quarter being a substantial drop from what we saw in the last few months. And I think even sort of going into 2026, it's not just that that EV tax credits are going away. It's also that sort of less appreciated changes in policy, limiting limiting tailpipe emissions, and also setting standards for fuel economy. Those are all going by the wayside as well. So the likes of Tesla, Rivian, and Lucid, they can't count on being able to sell regulatory credits to other manufacturers that need help complying with those tougher standards. And that's another headwind that these companies are going to have to contend with.
It's a great point. I can't remember if it was David Welch or Keith Naughton or Gabby Coppola. We have an outstanding autos team who wrote the story that, GM and Ford and Stellantis, I guess, they're no longer going to pay like $1 billion, $2 billion, $3 billion a year for these credits. So that has to be a huge, like, multi-billion-dollar loss for Tesla.
Yeah, and this is, of course, the case that their regulatory credit revenue is not just limited to the U.S., but that is where they do, the substantial portion of their business. And it's also the case that here in Europe, we've seen the EU sort of blink when manufacturers were making a lot of noise earlier this year about, the next sort of leg up in fuel economy standards or emission standards for the EU. There was a willingness to kind of average out over a few years instead of making 2025 a next sort of step change in those standards. And so you'll also see some slack in terms of regulatory credit revenue for EV makers here in Europe. So this is a pretty global story for Tesla, and something that we're going to find out more about when they report quarterly earnings in a few weeks.
Yeah, in the meantime, a volatile day for Tesla. It's up, it's down. It was up moments ago, now down about 0.5%. Craig, thank you so much. Bloomberg's Craig Trudell. Coming up, pharmaceutical companies are exploring deals with the White House to avoid tariffs and political scrutiny. That's according to a recent Reuters report. We're going to have that for you next. You're watching Bloomberg Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Reuters reporting that pharma executives are getting near daily calls from staff at the White House to ink deals. It also follows Pfizer's $70 billion investment in the U.S. in exchange for a 3-year tariff reprieve. Let's bring in Bloomberg Intelligence senior pharma analyst Sam Fazeli. And Sam, if you look at the Reuters report and some of the things that allegedly is happening, talking about more deals with Eli Lilly, providing more medication, having AstraZeneca build in the U.S., there's some really big, bold calls here. We know Pfizer is moving forward with a deal. How likely is it that the rest of the pharma industry also inks deals?
I would say it's very likely. I'm expecting news next week. I think the president suggested Eli Lilly could be the one that's next. I think it's more likely that the US pharma companies are going to be closer than some of the Europeans, not necessarily for any reason other than they're based in the US. So, but I wouldn't be surprised to see AstraZeneca very soon there already. I think Pfizer set a very nice blueprint for how this can go forward, and investors have been happy. The companies, I think, are fine, and also the White House and the president is getting what he'd been hoping to get and looking for.
So at the end of the day, Sam, I think it matters to the White House, to the Republican Party, especially as we get closer to midterms, that drug prices do not go up, and would be beneficial to them, actually, if drug prices really, truly come down. I'm sure we're not going to see European-level prices, even if we get supposedly most favored nation status. But will we see that? Will we see a reduction in the amount that American consumers or their insurance companies pay at the drugstore?
Yeah, I think what we need to focus on there, Matt, is the net price that we've been going on about forever, not the list price, because the list price goes up with inflation, maybe slightly above inflation. What is focal point here is the net price, which is what's going to be hitting these direct-to-consumer platforms, such as Trump RX or whichever, whatever name it's going to have in the end. I think it has a different name. And Lilly has got its own platform. AstraZeneca's got a platform for one of their drugs. So I think you will see it there. And I'm pretty sure the White House will make a point of highlighting which of these drugs have actually had a reduced price, or at least access directly to patients at a lower price than they would be getting through the standard system. And the companies announce it. I think it's their incentive to do it. So I'm expecting to hear more and more. AstraZeneca's announced one recently. So we will see this, I think.
All right, Sam, great to get your take. Sam covers the pharmaceuticals for us, runs the coverage globally for Bloomberg Intelligence. Sam Fazeli there out of London. Coming up in the next hour, Cameron Dawson joins us of New Edge Wealth. We've got Guggenheim's Jim Milstein on the shutdown as well as deal activity. And we've got David Neeleman joining us. He, of course, the founder of JetBlue, now runs Breeze Airways. We'll talk about consumer demand for travel, all of that and more coming up on this day. Another record high day for the S&P.
On our way to a 30th.
Number 30. Could be. I mean, look, the gains are diminishing. This is Bloomberg Open Interest.
For Trung Tzu Bin, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEMs and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good educations, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging.
Yes, exactly.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Shock and grief in the UK after a deadly attack on a synagogue in Manchester this Yom Kippur.
Shot multiple times minutes into his stabbing spree, but the suspect has only just been confirmed dead. Specialist teams needed to make sure he wasn't wired with explosives. Prime Minister Keir Starmer breaking up his trip to an EU summit.
The attack in Manchester this morning is absolutely shocking, and all of our thoughts are with those affected.
Security's been ramped up at synagogues across the UK. 2 people dead, 3 others fighting for life in local hospitals. Vicki Barker, CBS News, London.
The U.S. government shutdown is now in day 2, and a political stalemate continues. Correspondent Christopher Cruz reports both sides are at odds over extending Obamacare subsidies.
Massachusetts Senator Elizabeth Warren says Republicans were warned in July that the issue would have to be addressed before Democrats voted to extend funding to avert a shutdown.
We have had now 3 months. We've been begging the Republicans to come to the table and negotiate. You know how many negotiations there have been? 0.
Republican House Speaker Mike Johnson says Democrats are being obstinate.
There's no negotiation right now because the Democrats have dug in.
They spoke on CBS Mornings.
Passengers on a couple of Delta regional jets got a scare when their planes collided while they were taxiing on a runway at New York's LaGuardia last night. CBS News producer Joey Annunziato was on the flight arriving from Charlotte.
Almost what it sounded like was like a sardine can kind of opening. Like it was like something was being sheared off, and lo and behold, we looked out the right side of the plane, and the wing looked like it was almost like off the plane.
The other flight was set to take off for Roanoke, Virginia. Airport officials say a flight attendant was injured. Royal Caribbean's Serenade of the Seas docked in Miami this morning after more than 100 people on board came down with the norovirus, a contagious stomach infection, while they were on a voyage through Central America and the Caribbean. Bob Pettit was among them. He tells CBS News.
I got violently sick, and I couldn't make it to the bathroom even.
The 19th outbreak of a gastrointestinal illness on a cruise ship this year. Todd Arrington, head of Dwight D. Eisenhower's Presidential Library, has resigned in a tug-of-war with the Trump administration over a gift to the King of England. CBS's Ed O'Keefe.
Sources tell CBS News Arrington's departure came after he resisted taking an original Eisenhower sword out of the library's collection to give to King Charles III last month during President Trump's unprecedented second state visit to the United Kingdom.
This is CBS News. An unlikely freshman football player is making news.
At Lycoming College in Pennsylvania, a nose tackle on the football team is older than his number 40 jersey.
I never went to college, but for years I just always had this burning desire to play college football.
Tom Sillo is 58 years old.
I have this competitive spirit and this fire that still burns inside me.
He's made an impression on teammates young enough to be his grandchildren.
It's definitely surprising that he can come out here every day and do this like the rest of us, but I think he's just like become a part of the team.
I'm just Tom now. I'm not the old guy. I'm just Tom. It's cool.
Steve Kathan, CBS News.
Tesla sales boomed in the third quarter. The company reports a surprise 7% jump in sales from the same period a year ago as consumers rushed to take advantage of a $7,500 credit before it expired Tuesday. The gain follows 2 quarters of steep declines. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. Scarlett Fu, Paul Sweeney live with you for the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Ed Ludlow, B-Tech co-anchor. He's here in New York. He's usually out there in San Francisco. Talk to us about OpenAI. Gets a valuation of $500 billion. So serious valuations for that business. Walter Todd, President and Chief Investment Officer and Managing Director of Greenwood Capital, will give us his market thoughts. Matthew Palazzolo joins us here. He's Bloomberg Intelligence Senior Analyst. He covers the insurance companies, including Warren Buffett's Berkshire Hathaway. Berkshire Hathaway to buy Occidental's chemical unit for $9.7 billion. So a pretty big deal for Warren Buffett's Berkshire Hathaway. Craig Trudell, Bloomberg Global Autos editor, talked to us about some of the EV deliveries. Saw Tesla had a big deliveries number, but again, a lot of folks are saying that's just to get in front of the expiration of the tax credit. So we'll see how it all plays out in the EV business. We got a lot coming up in the next 2 hours. Let's kick it all off as we do with Lisa Mateo and a Bloomberg Business Flash.
You got in this Bloomberg Business Flash brought to you by IBKR. Financial advisor, switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. You can learn more at ibkr.com/RIA. Well, we've got stocks advancing. This as investors remain kind of little phased about it. The U.S. government shutdown. We'll start with the NASDAQ, up 0.2%, 65 points. We have the S&P 500, little changed, up about 4 points.
points. The Dow, little change, up about 31. In the yield space, we go to the 2-year, 3.56%. That's up 2 basis points. The yield on the 10-year, 4.11%, and that's up 1 basis point. Gold extending its record-breaking rally. Right now, we have spot gold up 0.1%, $3,871 an ounce. Goldman strategists actually say there's room for gold to rally even higher. The government shutdown, it may have delayed factory order, jobless claims today, but we did get some insight on the labor market. Data from Challenger Gray and Christmas. It shows U.S. employers, they dialed back hiring plans in September, also announced fewer job cuts. And Paul mentioned it. Tesla reported surprise increase in quarterly vehicle sales. Looks like consumers, well, they just rushed out to make those EV purchases before the federal tax credits expired. Shares were higher right now. Tesla shares, though, down about 0.4%. Meanwhile, Stellantis, they reported a jump in third quarter U.S. sales. Their shares are, ADRs up about 6%. Shares in Italy up about 7%.
See?
There you go.
When I was in Italy 2 weeks ago, I was like, boy, there are a lot of Jeeps here.
There's a lot of Jeeps.
And I was like, what is that? There's no other American cars.
I know. I was like, Paul, I drive a Jeep. So
See?
I know.
So you're always on the lookout
I'm
for
always
it.
on the lookout for them.
Okay.
That is your Bloomberg Business Flash. Scarlett and Paul.
Right, why? I don't know, Jeeps in Italy, but...
I know, it kind of boggles the mind. It doesn't make a lot of immediate sense.
You can't park anywhere because everybody's parking on the sidewalks and...
Are these Jeeps also manual?
I don't know. Good question. Good question. So I don't know. We'll see. But it was interesting to see over there. All right, Lisa Mateo, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at today?
Well, Paul, let's take a look at Tesla more closely, shall we? So ticker TSLA. Those shares actually pairing or reversing even. Some of those opening declines of as much as 2.5%. They're now down 0.2% at the moment. So they did get good news, right? Third quarter deliveries exceeding estimates. The theory is that that is the big rush before the expiry of federal tax credit for electric vehicles worth $7,500. So that's not nothing. And, you know, the numbers that we got today, that is a precursor to their full earnings report, which is due on October 22nd. A lot of questions about just, you know, the overall sales and revenue picture for Tesla. Bloomberg Intelligence weighing in, saying that while the delivery beat was good news, it was primarily sales from the U.S. and internationally, and the European market is still weak. Meanwhile, China sales still flat. So, you know, it's a little bit of a caution, even though the deliveries headline number looks good.
All right. And of course, we'll dig into that a little bit further on because there's a lot to discuss there. But Christine, you're also looking at FICO. Those are the guys behind your credit score, and the stock is surging.
Absolutely, Scarlett. So FICO, it's the full name is Fair Isaac Corp, which I did not know because I just know it as FICO. But yes, sales, the ticker FICO. So at one point hit the circuit breaker. So they're trading back again. Shares up more than 24%. And that would be, if that holds through the close, that would be the biggest gain since November 2022. And that's because they announced a new program that will give mortgage lenders the option to calculate and distribute scores directly to customers. And FHFA Director Bill Pulte weighing in on that result. They are saying that he has had productive conversations with the FICO CEO, Will Lansing, and that he welcomes the changes that they're implementing. So analysts on the street, of course, commenting and saying that this is very clearly bad news for third-party providers such as Equifax and TransUnion. Those shares are falling today, of course.
Interesting. All right, Occidental in the news, a little M&A trade, not so little for them, but it was a nice deal, $9.7 billion, Warren Buffett.
Absolutely. So they're getting they were getting the Buffett effect earlier, but now the shares, ticker OXY, those shares down now more than 3%. So I think we're just seeing a little bit of buy the fact and or buy the rumor, sell the news action today in those shares. But yeah, as you mentioned, Paul, $9.7 billion in a cash deal. That is pretty good for OxyChem. And, you know, Bloomberg Intelligence saying that it's actually a good deal for both companies involved here. So for Occidental, obviously, it would give them financial flexibility because there's $6.5 billion earmarked for debt reduction. And meanwhile, for Berkshire, the valuation does offer them future upside. It's also interesting that, you know, after stepping back from acquisitions, right, the last one I think that Berkshire did was in 2022, buying up Allegheny for $13.7 billion. It's coming back to the market.
All right, very good. Christina Aquino, thank you so much. We appreciate that. Christina Aquino covers all the equity markets for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Another big trade happened today. I mean, the AI valuation story just gets bigger
every
and
single
bigger
day.
And
there's
more
a new
impressive. And it's because of this guy, Ed Ludlow, Bloomberg Tech co-host, joining us live here in our Bloomberg Interactive Broker studio. He's based in San Francisco. We've got him on the East Coast here for a little while. So, Ed, what happened? What's the deal that just put a valuation of $500 billion on OpenAI?
So actually, the mechanics of it are one of the most interesting parts. It's a secondary or an employee tender. In other words, if you are a existing employee or even a former employee, you can sell your shares in OpenAI. The eligibility requirements were that you held them or you had a vesting period of 2 years. But the reason I say that's interesting is that this is a valuation dictated by a third-party group of investors buying those shares from employees. Okay. So the company doesn't raise any new money, but there has to be a valuation set because a price has to be set. And so these investors wanted even more. They wanted like $10 billion worth of employee shares. In the end, they got $6.6 billion. So what does that tell you? There's probably a load of OpenAI employees that were like, you know what? I'm not going to sell. I'm holding on, because if I'm at $500 billion valuation, you know, and there's still a corporate restructure to go through, a future IPO maybe, then hold. So I thought that was really fascinating. But I would just point out that Shireen Ghaffari, a really talented colleague of mine out in San Francisco, Bloomberg Newsroom, she did break this story on August 6th. Awesome. So this is just the close of the round.
Okay, so now that OpenAI is valued at $500 billion, that puts it over SpaceX, which is valued at $400 billion. And I bring this up because there's a common thread between OpenAI and SpaceX, and that is Elon Musk.
Elon Musk
was once part of OpenAI before leaving under some clouds.
Yep, he has a fractious relationship specifically with Sam Altman, you know, the other founder and now CEO of OpenAI. You know, what I've written a lot about in Bloomberg Businessweek magazine and in some of the reporting is present day Musk has a little bit of a chip on his shoulder.
You think?
Well, specifically about the idea that XAI, his AI company, should have a valuation that is near to OpenAI's. So, you know, there's been litigation, you know, there's a public forum slinging match on social media between the two. Sam Altman gets asked about it a lot, but you know, I think the main thing is that remember also that XAI has, as we've reported, it sought to raise money at a $200 billion valuation this year. You know, it's tides and rising ships in that field, really.
So, do we know who was selling here in this round?
No, I mean, all I know about is the eligibility rules. You know, the one thing I've reflected on reading the story and speaking to sources at the company is, remember in November of 2022 when Sam Altman was briefly ousted from OpenAI? There was just a few hundred people that worked there at that time. Wow. You know, so that was 3 years ago. And almost 3 years ago, now there are thousands of people that work there. So yeah, some tenure would probably be a factor here.
Okay, so now the world's biggest startup, worth $500 billion, but OpenAI is not making money. It's not profitable.
Yeah. So on Monday, OpenAI has its Dev Day, its Developers Day in San Francisco, and I'll be going. And it's a good opportunity to ask hard questions like these. There's a data point that's going around right now, which is that OpenAI is only converting 2% of its free users to paid subscribers. Now that, for me, is an interesting data point. So
the spin on that is that there's a lot of room for growth.
Right, and so, you know, software, you know, this is core BI analysis, right? Software is traditionally a higher margin business. But the problem is that because of compute expenses and OpEx, now talent compensation, even the revenue they are making probably ain't that high margin, is it? You know, if at all. So the big question is, okay, if we know that you're not really doing a lot to convert the consumer from free to paid, what's your enterprise business look like? And that's probably the domain where we'll focus. Hey, when you even do a secondary or a tender with employees, you got to put a deck together that justifies the valuation. So those group of investors, they will have seen something in the data room that would say this is a $500 billion company. Like, of course they would. That's how it works.
Well, how come you haven't gotten your hands on that deck?
You know,
some intrepid reporter.
You know, no, I'll be honest about this. Like, Shireen has been smashing this story. She covers the cover so deeply, and I was on vacation for most of August. So, you know, I've not tracked it as closely. For me, you know, the big story to focus on with OpenAI is the corporate restructure, you know, from where you have a not-for-profit board that owns the for-profit company. That's going to change.
Okay.
So that's where I'm focused.
All right, great reporting from you, Ed, and from our team out there in San Francisco on top of this story. And the numbers are just extraordinary in this Bloomberg News report. There's a chart of the, you know, the really highly valued private company that Sharon Gaffney have put together, and just some big names, big valuation in AI, OpenAI, right at the top of the list. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Sure.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got stocks mixed. This is as the government shutdown enters a second day with little sign of breakthrough. Right now, the NASDAQ up 0.2%, 65 points. We have the Dow down 0.1%, 67 points. The S&P 500 little changed, down about a point. The two-year yield 3.56%. That's up 2 basis points. The yield on the 10-year 4.10%, and that is little change. We have the Bloomberg Dollar Spot Index. That's up about 0.2%. A lot of tech news. Sources saying OpenAI's valuation soared to $500 billion. That's after a share sale surpassing SpaceX as the world's largest startup. And speaking of OpenAI, shares of South Korea's Samsung Electronics, SK Hynix, they are higher after word that they partnered with OpenAI as part of that big Stargate AI push. Samsung up about 3%. SK Hynix was up about 9%. Global chip stocks rallying too. On top of that, we look at Broadcom up more than 2%. And ASML, they supplied chipmaking equipment to Samsung. Their shares, they're up nearly 4% in Europe. At AMD, higher, up more than 2%. Semaphore reporting Intel in talks to add the company as a customer for its manufacturing business. And I got to end with Apple. Sources saying they paused their Vision Pro headset overhaul to prioritize AI glasses to rival those of Meta. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, Lisa Mateo, with our Business Flash. I'm looking at a stock market, Paul, that is not doing a whole lot. The S&P 500, however, had been gaining for 4 straight days, even though we don't have a lot of headlines to work with here. I mean, there's no economic data that's coming out. The Fed is kind of stuck waiting for more data, and everyone's waiting to see when this shutdown will end.
Yeah, and we don't have earnings for another couple of weeks. So from your perspective, a little bit of a data desert out there.
Yeah, it's a bit of a drought. So let's get the perspective from an investor and find out what they're monitoring. Let's go now to Walter Todd, President, CIO, and Managing Director of Greenwood Capital. Walter, what is the catalyst here for the market? Because there's not a whole lot, and that momentum that was driving the S&P 500 to record highs has definitely fizzled out a bit here.
Yeah, good morning. Thanks for having me. Yeah, seemingly the market opens and it goes higher today, as you mentioned, pulling back a little bit. And I do think that speaks to what you were just referencing, the fact that we don't have a whole lot of data to go on. We're kind of in this window of time between, no data and earnings starting in a couple of weeks. And I think the market's kind of grappling with what to grab onto. But that being said, all the oxygen being sucked out of the room by the technology names. I heard the conversation about OpenAI, and it's like numbers have become, just 100 billion for you and 100 billion for you and 200 billion for you. These numbers are flying around, and you see these, kind of valuations of companies levitating. I think it's interesting. A headline today, you see what Berkshire and Warren Buffett are buying: petrochemicals. Very boring business, probably trading below book value. Not these other companies.
So how do you think about it, Walter, this strong move we've had off those October lows? Stocks up about 40% here in such a short period of time. Does that put some pause for you?
For me, it does, Paul. I mean, I think the market, listen, we've had a great run off April, as you said, but we think the market's a little bit over its skis. It's kind of, I heard someone say the other day, price for perfection in a very imperfect world. I think that's a good description of where we are right now. So we do see the opportunity for, some broader volatility, even though individual name volatility has been significant. And I think one thing that's been interesting over the last, call it week or so, is the weakness in financials. You've seen this in banks, but you've also seen it in some of those alternative asset providers and some conversations around, private credit related to the buy now, pay later businesses that have done so well. So that's, I think, something to watch, particularly as we get bank earnings here in a couple of weeks.
Yeah, definitely one to watch. I know the month is young. We're only 2 days into October, but you look at the best performing group, and it's healthcare, up 2.4%. And granted, this is mainly on yesterday's advance. But Walter, you see some interesting moves developing there, especially now that Pfizer has kind of created a template for how these pharmaceutical companies can work with the Trump administration.
Yeah, so healthcare has been a really bad performer year to date, worst performing sector through the end of the third quarter, and this stretches back over multiple years. But maybe we're starting to see some change there. We've seen a ton of money flow out of the sector, so there's not a lot of people there. And you referenced this deal that Pfizer did with the administration. Now, I don't think a lot of the other pharma companies are too happy about it, but it did catalyze a move of money flow back into the sector, specifically into those large pharma names and biotech names. But I think it's also interesting to note that we actually saw the funding of that move out of other areas of healthcare. So it wasn't necessarily people moving money net into healthcare. It's really selling out of some other areas like healthcare equipment and buying some of the life sciences, pharma, and biotech names as a result of that. So that is an area we see value in this market outside of the traditional areas that have done so well this year.
All right, Walter, thanks so much for joining us. I always appreciate getting a few minutes of your time. Walter Todd, he's the President, Chief Investment Officer, and Managing Director at Greenwood Capital, joining us via Zoom from Greenwood, South Carolina. Love getting down that part of the world. As Walter was mentioning, there was a deal today in this space, petrochemical space. Warren Buffett's Berkshire Hathaway reached a deal to buy Occidental Petroleum Corporation's petrochemical business for about $9.7 billion. Let's break that down with Matthew Palazzolo, senior analyst covering the insurance business, has been covering Berkshire Hathaway and Warren Buffett for many, many years. He's over at Bloomberg Intelligence, joining us via Zoom here. Matthew, talk to us about what a deal like this means for Berkshire Hathaway.
Hey, Paul. Yeah, I think it's a good deal for Berkshire Hathaway. When you really break it down, the $9.7 billion is 3% of the cash that Berkshire has on hand. So it's funny to say it, but kind of a low stakes deal for Berkshire. I think this deal helps Occidental. They really need to delever. So they're going to use $6.5 billion of that cash to delever, which could help their stock, which then could also help Berkshire's $11 billion stake in Occidental. So I think it's kind of a multi-layered win for Berkshire Hathaway.
What does it say about Warren Buffett's willingness to buy right now when the market is trading at much higher valuations than historically it has been? And I get that most of that is because of the tech industry, but even beyond that, overall valuation is not low.
Yeah, Scarlett, I would say Buffett's inclination to be buying anything is probably low at the moment. Berkshire has not been buying back their own stock, which is up 10% year to date. So their buybacks are essentially nil. They, in their equity portfolio, they've sold about $11 billion net year to date. So you're spot on to say valuations are high, and Berkshire's probably not buying a lot of stuff. I think this was probably just a unique opportunity. The deal valuation is pretty good. The terms are pretty good. So I think this was Berkshire taking advantage of their relationship with Occidental and doing something that could help both versus some sort of statement on wanting to buy more in the market.
All right. Well, on the same day that Berkshire Hathaway spends $10 billion on the petrochemical business, OpenAI, some employees there, sold some stock to private equity at a $500 billion valuation. How does Berkshire Hathaway think about tech? Because if you want to put money to work, there's some big valuations out there in the world of technology, but how do they generally think about tech?
Yeah, Paul, they've generally been tech adverse, right? I think Buffett has tended to invest in things that he has a deep understanding of. He has said it was a mistake to not invest in Amazon sooner, which, call it tech or retail, but he lamented that. Obviously, big investor in Apple, which though he kind of sees as a retail consumer company versus more than tech. So they have very, very little in the way of kind of cutting edge tech plays or AI investments. The investment managers will probably be a little more inclined to do that, and maybe Greg Abel. So Buffett has only got a couple of months left totally at the helm. I'm sure he'll be involved kind of tangentially, but you might see a shift, in the upcoming years towards more tech investments.
I'm so glad you mentioned Greg Abel, because this latest purchase of OxyChem, $9.7 billion, you were saying that Berkshire is not making a lot of purchases right now. Is this being spearheaded by Warren Buffett, or is this a Greg Abel call?
So we don't really know. I mean, the press release that came out had a quote from Greg Abel only in it. I would suspect that Greg probably did most of the work on this. Buffett has been saying for a while now that he's stepped back from the day-to-day operations of the company, and Greg is kind of doing a lot of that legwork. I would think on something of this size, even though I just said it was 3% of Berkshire's cash, it's still almost $10 billion, a lot of money. I think Buffett was probably involved, but if I had to guess, I would think Abel probably did a lot of the legwork on this deal.
It was a beautiful afternoon yesterday at the Jersey Shore. I hopped on the Vespa, went to the beach, and I could not believe how rough the surf is. And apparently there's a couple of hurricanes and storms out at sea that's really churning things up, which got me thinking about you, Matt. Talk to us about the hurricane season from the insurance perspective. How's it been so far this season?
Yeah. Thanks, Paul. Whenever you think of hurricanes, please think of me.
Yep. Natural disasters.
It was, exactly. So it's been a very mild hurricane season in terms of landfalls, right? You haven't talked to me much, right? So we haven't seen a lot. What actually happened was there was a hurricane coming, and it was headed right towards the Carolinas, and then another hurricane, which is a Category 5, completely over the ocean, sucked it away and kind of pulled it away from the U.S. coast, kind of saved the day for it. They are impacting Bermuda now. I don't expect major insured losses from that, but so pretty benign season. Good for reinsurance companies, Paul, your favorite stocks.
Yep.
And we do have something. The National Hurricane Center is identified another system that is brewing up and could develop into something next week. So we'll stay tuned for that. But mild season so far.
Yeah, I feel like I never want to talk about this because the minute you begin talking about how quiet it is when things really gear up.
Right,
and
exactly.
we get a massive storm like the next week.
Yeah, and that happens. So real quick, Matt, just overall, how are your stocks performing this year, the property and casualty insurers?
Not great. They're underperforming year to date. We've got tariff pressure. Everything costs more to repair. Lower interest rates are not a good thing for the P&C names. So Berkshire's actually a standout, not being an actual pure play P&C company. That stock's up 10% year to date, but the rest of the group is down year to date. So we're probably looking at peak ROEs, and valuations got peak before that. So I think that's what we're seeing with the P&C stocks.
All right. Matthew Palazzolo, thank you so much. Bloomberg Intelligence Senior Analyst, P&C Insurance Coverage. As Paul mentioned, the next time I go out to the beach and there's a surf, I'm going to be thinking of Matthew.
Yeah, exactly. And it was rough yesterday. Water was all brown. It was super rough. Couldn't even remotely think about going in. There's some police there making sure no knuckleheads with surfboards tried to go in there.
And that's why your mind went straight to Matthew.
Yes, exactly.
All right.
So it's working.
Thanks for that coverage, Matthew. All right, and a quick note here that if you happen to love crosswords, charts, or just a challenge, we've got a new game for you. It's called Alpha Dots. It is a daily word puzzle with a plot twist, and you can find it right now on Bloomberg.com/Alpha Dots. I don't know if you're part of the Wordle Brigade.
Totally, big time.
Are you?
Yes.
Okay.
I do all the New York Times things.
Yeah, I haven't gotten into that. That's like TBD.
Yeah, when you got long commutes.
Yes. That and the surf.
Exactly.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got a reversal in Tesla shares after reporting a surprise increase in quarterly vehicle sales, kind of dragging in the benchmarks. Right now, Tesla shares down nearly 1%. So we have the NASDAQ up 0.3%, but the Dow down 0.1%. The S&P 500 is little changed. In the yield space, the 2-year, 3.56%. That's up 2 basis points. The yield on the 10-year, 4.10%, and that is little change. Over to the Bloomberg Dollar Spot Index, that's up about 0.2%. Shares of credit reporting companies, they are sliding. This is after Fair Isaac announced a new program giving mortgage lenders the option to calculate and distribute those FICO scores directly to customers. So we look at FICO, their shares up 22%, but then you look at TransUnion down 11%, Equifax falling 7%. And it's official. Berkshire Hathaway has agreed to acquire Occidental's chemical business, OxyChem. It's an all-cash deal for $9.7 billion. Finally, McDonald's on a mission to open 50,000 restaurants globally. It's under a multi-billion-dollar expansion. The company wants to add almost 10,000 locations. That's over 4 years, a focus on those fast-growing markets, especially Texas. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Thank you, Lisa. Yeah, northern Texas, especially north of Dallas, is just exploding.
I didn't know that until I read that article.
Yeah, I was there for a work trip not so long ago, and we were checking out the master plan communities. They're massive. Wow. And this highway just goes on and on and on. And I saw a couple of McDonald's, but apparently there's going to be a lot more.
There's going to be more.
I mean, that makes sense. I mean, for the last several years, it seems like we hear one company after another going down to Texas. So there you go.
Yep. And of course, Elon Musk's company was one of them. Yep. Let's talk a little bit about Tesla right now, because it reported global vehicle deliveries, and it was a surprise to the upside. So that means we need to bring in Craig Trudell. He is our global autos editor for Bloomberg News, joining us from London right now. Craig, not a surprise insofar as there was this expiration of the federal tax credits for EVs coming up. So people were kind of rushing to make good use of those tax credits before they went away.
Yeah, that's exactly right. I think there was a widespread expectation that, given that the clock was ticking on those tax credits, that we were going to see a strong third quarter. But this was even better than was expected by analysts that follow the company. I think we did get indications as the month of September was coming to a close that more and more analysts were much higher than where the average was, the consensus, if you will. And also, I should add too, just on the energy side of the business, it was another record quarter of energy storage product deployments. So, that is still a much smaller portion of Tesla's top and bottom lines, but it was a business that was growing pretty rapidly. That along with the car business was struggling in the first half of this year. So to see that tick up as well is another positive for the company.
Craig, can you give us an update where we are in the U.S. in terms of charging capabilities? I mean, I know that's a gating issue for a lot of people. They just don't feel like there's enough charging capacity in this country. Where are we now, and what are some of the goals, do you think?
Yeah, I mean, Tesla, you have to give them credit for still being, really sort of ahead of the curve in that regard. And to the extent that other manufacturers have had, some progress in charging, getting better, it's because Tesla made this decision, not that long ago to open up its network to other manufacturers. I think that also is, something that, perhaps, if you look at in hindsight, maybe sort of created something of an opening for other car makers that, have made Tesla's life a little bit more difficult in the U.S. because they went from having a network that was, really intuitive and easy to use, that was all to themselves, to opening that to others. They, of course, that's become something of a business for them to be able to charge non-Tesla drivers for those charging. sessions, but that is, sort of a drop in the bucket relative to the car business for them.
Yeah, it might be a drop in the bucket, but I think it's a strong selling point because I agree with you, Paul. Every time I've gone to rent a car, they're always trying to push EVs on you. And the fear is that when you need to return that car because you need to make your flight, you can't find a place to charge it.
Right.
And I'd rather go pay up the premium for, filling it up with unleaded gas. So, Craig, over to you again. It's not just Tesla that reported quarterly numbers. Rivian, the other EV maker, also coming out with some guidance. What do we know about how it's faring with the expiration of the federal tax credits on EVs?
Yeah, they actually had a pretty strong third quarter as well. But as you mentioned, the guidance, they tightened it up a little bit, and it's a bit to the downside in terms of the forecast range that they were offering previously. So those shares are down substantially, about 8% at the moment. And even as Tesla had a strong quarter, both for the vehicle deliveries and for the energy business, those shares are down. I think I sort of go back to just 3 months ago when we had a really awful quarterly deliveries report from Tesla, and even as the performance for the quarter wasn't great, the stock shot up. I can only sort of assume that there's a bit of profit taking going on today because the month of September for Tesla was really incredible. They added a little over $400 billion in market cap in the month of September. And so, this is maybe just a little air sort of being let out of the balloon after a really torrid September.
Craig, where are we with the other major big three auto OEMs, the Fords, the GMs, the Stellantis? Where are they with their commitments to transitioning to EV? They were gung-ho there for a while, then seem to have lost some of the luster. Where are we? Where are those big companies now?
Yeah, I mean, if we go around Detroit, I think, the company that has had it most together in terms of a credible plan to really compete more head-on with Tesla, you have to sort of say that GM is front and center there, standing up a lot more EV and battery capacity in the U.S., and starting to get more traction with models like the electric version of the Chevy Equinox. I think Ford would be somewhere in the middle, and then Stellantis would have been very much the laggard, which really caused them some issues the last couple of years because you had a CEO in Carlos Tavares that was really eager to play catch up, and that did not go well, to say the least. So they've really been paying for that, not only because they were late to the game with electric vehicles, but once those did land, suddenly you had tax credits being pulled away. You had support for also just in terms of like emissions regulation and fuel economy being pulled, so they went from needing to really sort of change their ways and move away from, Hemi V8s to electric, models, to now they can kind of go back to what they, are known for, and what, in fairness to them, what Jeep and Ram buyers want, which is not electric. It's, combustion models and big trucks and SUVs.
Are car makers entering a period, not just for EVs, but also the ICE vehicles, where they need to offer incentives to people to continue buying because the price point for new cars has gotten really high? I think it's north of $40,000, $50,000 now.
Yeah, approaching $50,000, and I think we've seen that EVs have continued to be more expensive than the average average vehicle or average combustion vehicle, and the $7,500 tax credit was helping sort of bridge that gap, but it wasn't completely closing it. Very interestingly, this week, as we heard, before Tesla, a lot of manufacturers announced either for the month of September or the third quarter really strong EV sales, and yet also, several announced that they were going to at least temporarily sort of pick up some of the slack of the $7,500 tax credit going away, either by, sort of their finance companies buying EVs and leasing them out after the tax credit expires, or in some cases just footing the bill for really substantial discounts to try and keep from the bottom falling out for the EV market in the first months without Uncle Sam helping out.
All right, Craig, thanks so much. Appreciate that. As always, Craig Trudell, Global Autos Editor for Bloomberg News. He's over there in London joining us via that Zoom thing, talking about some of these EV markets. Tesla, again, put out some good delivery numbers for the latest period, but again, probably some people trying to get ahead of the expiration, which happened October 1st, of those tax credits. So we'll see how the deliveries play out going forward. But again, it's an autonomous company. It's an AI company. Don't worry about the cars. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
We were just talking about McDonald's and how we don't get a chance to go very often, even though there is a McDonald's, Paul, just across the street from us at Worldwide headquarters.
Well, I used to go to McDonald's and fast food when I was traveling in airports. That would be I'll go. That'll be my one time I'll go.
Yeah?
I don't have them anymore. It's just all high-end stuff.
Well, I think we need to move to northern Texas because that is where McDonald's is focused on in terms of expanding and building out restaurants. This is actually our big take story of the day. Christina Peterson is Bloomberg's food reporter, and she was the author of this story. And Christina, this is about how McDonald's is looking to build out 50,000 restaurants overall. Where are we in terms of that goal to get to 50,000? Is it like a third of the way there, halfway there, 3/4 of the way there?
They're more than that. They are in the 40,000 range. I think it was 41,000 about a year ago, so steadily getting closer. That actually will not make them the biggest restaurant chain in the world. That is Mixu, the Chinese bubble tea maker, is at 53,000, but they will definitely be closer to that goal.
I'll tell you, Subway, I bet you is up there too, because they're everywhere. Christina, so what's going on here with McDonald's? If you'd asked me, I would have said there's a McDonald's on every corner in every city USA. Why are they going on this expansion?
Right. Well, for years, they were actually shuttering more restaurants than they were opening. Between 2015 and 2021, they closed a net of 900 some stores. Some of them were inside Walmarts. But since 2022, they have been reversing that strategy and expanding, opening new locations. And they've really been trying to follow where the population is going. So, for example, North Texas is a place where people are just flooding. Texas in general has seen 2 million people move there since 2020. And so they are chasing those new diners, trying to get as close to where people are living now as they can. And McDonald's says that its goal is to be within a 5-minute drive from as many people as possible. So they're just trying to go where those people are now.
Yeah, we were just talking earlier about how Dallas has really exploded in terms of population growth, in terms of being a place where folks want to move to because of the lower cost of living. Is McDonald's an early bird or a latecomer to the population boom in northern Dallas, northern Texas? Is it, you know, the master plan communities are building out, but are there stores or brands that are ahead of McDonald's in that effort to populate it?
It's such an interesting point because they are still earlier than many other brands, but they are not as early in these spots as they once would have otherwise been. Oftentimes, McDonald's is one of the first businesses to open, and in places like this, they aren't the earliest. We see 40-some McDonald's in the Dallas area in the past few years, but the population there has been absolutely exploding. So they're still ahead of the full wave, but they were not the very earliest pioneers in these places where many people would have expected them to be.
Christina, I know you traveled to North Texas for this story. My question is, where's Texas putting all these people? Are they just building houses in the middle of the desert somewhere?
The houses are just popping up. When I was there, I would talk to people who had moved to the area weeks or even days earlier. There are an enormous number of houses being built, and they're expanding the Dallas North Tollway, which goes north from Dallas. Salina, where I went, was about 50 minutes away, and that highway is going to reach there by 2027. So you see, as transit gets easier, as it's faster to get to these places, more and more people are moving there.
So a company like McDonald's is massive, and I imagine that a goal to get to 50,000 restaurants takes some time to play out. So the fact that it's doing all of this, is this a move now to expand in response to conditions that it spotted, I don't know, a year ago or 3 years ago or 5 years ago? I'm just wondering how quickly McDonald's can decide on something and then execute on it.
Yeah, I mean, this is definitely years in the making. Being convenient is a cornerstone of their strategy, and I think they've just had to reconfigure where that convenience is, where the people are. They have a very extensive team that follows demographics. Other people in the industry watch to see where McDonald's open. We spoke to an executive who had previously been at Chipotle, and she said she knew when there were 3 McDonald's in an area, they were ready for other restaurants. So they're very sophisticated with these kinds of calculations.
Any early feedback on how some of these new stores are doing?
Yeah, we looked at third-party data that showed that these stores are not quite as busy as more established stores in denser areas. McDonald's told us it typically takes 2 or 3 years for a new location to catch up on traffic with older stores, and they see positive signs. So it could be that as these cities become more populous, these McDonald's will become more frequently visited. And it was interesting, other businesses in these Texas towns said they weren't being cannibalized by McDonald's opening. There's just a lot of business for everyone where cities are growing as fast as these are.
Christina, final question to you. How is this expansion going to show up in the financials? And I wonder whether investors will give McDonald's credit for it, because as you know, typically analysts track same-store sales at stores open for at least a year to gauge demand. And now McDonald's is building out new stores, which I guess don't quite filter into the revenue number in the same way.
Well, one thing that's interesting is that McDonald's has raised the royalty fee for many new franchise owners, so there is more revenue that they are getting from these stores. Same-store sales hit their lowest point in a decade last year, but have been more positive this year, so there are signs that this is good for McDonald's corporate numbers.
All right, very good. Christina Peterson, she's a reporter covering the food industry. Big take story, McDonald's. They're going to add 50,000 restaurants globally, starting with some of the big areas in North Texas. So
yeah, well, I'm going to head over to one of them right after the program to go get some McNuggets and fries. Christina Peterson, thank you so much, Bloomberg's food reporter. And for our listeners in the U.S., a reminder that you can listen to us via satellite radio on SiriusXM Channel 121, access the world's only global audio business network coast to coast, 24 hours a day, Bloomberg Radio on SiriusXM Channel 121, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence kicks off right now. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. We talk to this dude every day because he's down in D.C., and it's his job to follow what's going on in Congress and in D.C. So he is our go-to source here on this shutdown. Todd Gillespie, Bloomberg Finance Reporters, are going to check in on President Trump, his wealth. Once spurned by banks, now finds a new home at Citi. So he's got that story, which is getting a lot of readership on the Bloomberg terminal. Matthew Griffin, the Bloomberg Equities reporter, talking to us about Caterpillar emerges as an unlikely AI winner on turbine demand. Have no idea how that plays out, but we'll talk to him, so we'll get it all going there. And let's kick this hour off with a Bloomberg Business Flash with the Alexis Christophers.
Thanks, guys. Good to be with you this morning. So looks like stocks are pulling back from those record highs. Investors trying to make sense of what this government shutdown will mean for the markets, for the economy. We've got the Dow Industrials down 93 points now. The S&P 500 was at a fresh record high earlier, now down about 10. The NASDAQ, though, up 11. And we've got the NASDAQ 100 in record territory. Treasuries are higher, though, with the 10-year yield at 4.10%, the 2-year at 3.56%. The shutdown, of course, now delaying some crucial economic data, including today's weekly unemployment claims and tomorrow's monthly jobs report. Looks like the AI trade is back on in a big way. We've got NVIDIA climbing to a new all-time high as investors continue to pile in to the AI giant. NVIDIA now up better than 1%. And Tesla reporting a surprise increase in quarterly vehicle sales. Consumers racing to buy up those EVs before federal tax credits expire. The company delivered a record number of vehicles worldwide, up about 7.5% from a year ago. But as we know, Tesla is facing challenges beyond the U.S. market, like in Europe, where sales declined 22% in August. Tesla now reversing an earlier advance and down 1.5%. And the shares of credit reporting companies TransUnion and Equifax are lower after Fair Isaac Corp, better known as FICO, announced a new program giving mortgage lenders the option to calculate and distribute FICO scores directly to customers. Shares of FICO up 25%. And guys, it is the best performing stock right now in the S&P 500. Go figure.
All right, we're keeping an eye on all those movers. Alexis Christophers, thank you so much for that Bloomberg Business Flash. Scarlett Fu and Paul Sweeney here on Bloomberg Intelligence. Let's take a closer look at some of those stocks on the move today. Nora Melinda gets us started. Hey, Nora.
Hey, looking at those credit reporting agencies that we've been talking about this morning, looking at shares of TransUnion, they're down as much as 15%. That's the worst daily performance since 2023. Equifax down for its worst day since 2020. Of course, we know FICO, though, getting a boost here, up as much as 32%. That's its biggest gain on record in terms of one daily gains here. And this is after FICO announced a new program that'll give mortgage lenders the option to calculate and distribute FICO scores directly to customers. So we are seeing shares of FICO rallying, TransUnion and Equifax, though, pulling back. I actually worked on a story recently with Paige Smith on the finance team about VantageScore, which is the competitor of FICO. It's private, so not public yet, but we have been seeing shares of FICO down just based off of the fact that they are seeing some competition here from a potential competitor, VantageScore. So you are seeing shares. Yeah, it could be a big game changer here. Yeah. Shares of FICO down about 4% year to date. So this is a good boost for them today.
All right, yeah, it just seems, I don't know anything about that business, but it just seems like a complete game changer, how the data is accessed by consumers.
Most definitely. I mean, I think this is some really interesting developments here, and you're definitely seeing that reflected in the trade here.
All right, Occidental Petroleum?
Occidental Petroleum down as well, as we're looking at the comparison here, down as much as 6%. That's the biggest drop since April. And this is after the company agreed to sell its OxyChem petrochemical unit to Berkshire Hathaway for about $9.7 billion in cash. Analysts are really seeing this deal as a deleveraging the company, but they are noting that the sale is below the $10 billion that had been previously expected. And when you look on a year-to-date scale, shares of Oxy down about 9% right now year-to-date. That's ticker OXY.
I feel like this is classic Buffett. Everyone's talking about AI and buying AI-related companies, and he's buying a chemical company.
Yes, exactly.
Right.
That's exactly
What
right.
does that tell you? All right, let's go back to that AI theme. Tesla.
Tesla. So up year-to-date, up 12%, but today pointing lower, down more than 2% right now. That's ticker TSLA. It did report a surprise increase in quarterly vehicle sales. Essentially, U.S. consumers are accelerating their EV car purchases before federal tax credits expired. So they did deliver a record 497,000 vehicles worldwide during that period. That's up more than 7% from a year ago, but it just seems as though that's not enough to push things forward here. We are seeing shares seeing a bit of pressure this morning.
All right, Norma Linda, thank you so much for our equity movers of the morning. For more conversations like this, do subscribe to our new Stock Movers reports. You want to listen for 5-minute audio reports on the biggest winners and losers in the stock market? You can get them by subscribing to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen.
All right, very good. Let's get the latest on what's happening with this shutdown. It is day 2. I guess the number one question is, how long is this thing going to last? But there are some new pieces of news out there. We want to get to it with Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. He's down there in Washington, D.C. Nathan, I think kind of one of, particularly for your world, people down there in the district, in Maryland, in Virginia that work for the federal government. President Trump is talking about plans to use the shutdown to actually fire federal workers this week. What's the latest there?
Yeah, this is something obviously that's very important to those of us here in the D.C. region. I can just say anecdotally from the school pickup line, a lot of people are paying attention to this. You know, President Trump and then the director of the OMB, Russ Vought, have said that, you know, that layoffs are quote unquote imminent and that these layoffs may target Democratic cared for, I'm paraphrasing there, agencies. President Trump said that earlier this morning in a Truth Social post. Now, what I would say is when it comes to these layoff threats, they are certainly threats and they are valid threats. But I think what plays out is that you're going to see strategic, you know, instances of this happening over the next day or two, because negotiations, I think, between the Republicans and the Democrats will begin this weekend, you know, when the House Republicans come back. And, you know, as we've seen by some bipartisan senators that were on the floor yesterday, there are discussions, very high-level discussions of how this ultimately may end. We think the shutdown will probably last no more than 10 days. I think you'll probably see the most likely scenario is that it ends mid to late next week. But obviously, if President Trump and the OMB come out and say, look, we're going to do a widespread layoff, so we're going to begin to try and govern unilaterally without the Democrats, then the Democrats may just say, you know what, then we're just going to fight this and the shutdown continues.
Do you think that the two sides will address the issue of extending those Obamacare subsidies that were put in place back in 2021, you know, in the height of the pandemic that are set to expire?
Yeah, I think that's where this endgame scenario is that I think you're going to get an unofficial handshake that essentially says from Senator Thune, John Thune, the majority leader in the Senate, that there will be a vote sometime later this year to extend those subsidies. Now, it's challenging, though, from the Republican perspective, because there are some Republicans out there that want to see these Obamacare subsidies extended. Senator Tuberville from Alabama, for example, is reportedly working on an extension. But there is a lot more folks on the Republican side that do not want to see this go forth because, you know, Obamacare is something that has just never been very popular with the Republican Party. And even President Trump will say that, look, I want to see changes here. So we'll see how things stand out. But I think this ultimate endgame is a deal where the government reopens. The Democrats can say to their progressive base, yes, we have fought the president, and there is going to be a vote coming forth on these Obamacare subsidies, but we'll have to see how many Republicans are actually in favor of it.
I know the president is not in favor of Obamacare, but this surely must be something that matters to his base, his supporters, his constituents. Is there, I mean, could they repackage whatever they do to make it a Trump initiative and kind of brand it that way so that he can claim victory on it?
Absolutely. I mean, Senator Tuberville, for example, from Alabama, one of the reasons why I suspect he's interested in this is that he wants to run for the governorship of Alabama, and this is something that is going to impact Americans across the political spectrum. I would also say that this is going to come in the midst of an election year. November 2026, we have our midterm elections, and when the margins of the House are extremely thin and as thin as they can be, every single issue matters. So there are a lot of individuals in the House that I think are going to look at this and say, look, I may not be okay with the idea of Obamacare subsidies, but maybe let's talk about a one-year extension. Maybe let's talk about having income thresholds. Let's talk about other ways where we can kick the can of this issue to beyond the November 2026 midterms and at least be protected from that standpoint. So there's a lot of ideas that are being floated around right now, and I think ultimately President Trump would support something that gets this past the November midterms.
Just going back to the federal employees, can they be fired legally? Are they in a union? Do they have any other protections?
So the one guarantee that I can tell you is that if there are going to be any layoffs, they're most likely going to be headed to the courts. The federal unions that have already come out publicly and said, we're going to fight this. But the idea here at a very high level is that the White House is taking the approach that, look, Congress is just, not doing its job, and therefore we're going to do its job for them. It's very similar to what you've seen in the, tariff case that's making its way through the courts over the presidential use of the International Economic Emergency Powers Act, or IEPA. What they essentially said to the court there is that, look, Congress didn't say that we couldn't use it, so we are going to use it. So I think this is ultimately going to be headed for the courts, but I would just go back to this point that I think right now it's strategic political posturing for the next 24 to 48 hours. You may see a layoff notice come out, but I don't think you're going to see widespread layoff notices until mid to next week if negotiations break down.
All right, that's important to keep in mind, Nathan. Personnel is policy in Washington, D.C. Which folks are you going to be keeping your eye on, listening for as we try to figure out a way out of this shutdown?
So as much as I'd love to watch the House and the Speaker of the House, Mike Johnson, and the House Minority Leader, Hakeem Jeffries, it comes down to the Senate. We need to be looking at Senator Schumer. We need to be looking at Senator Thune. But we also need to be looking at the gaggle of bipartisan senators that were on the Senate floor yesterday. Senator Collins from Maine. I look for the Virginia and Maryland senators, Senator Tim Kaine, Senator Mark Warner, to potentially come in here, because if these layoff notices were to go into fruition, you're ultimately going to be impacting the Washington, D.C. area, Northern Virginia and Southwest Maryland. So I'd look to see those senators come forth and say, look, can we drive a deal that ultimately can be accepted here? Because remember, we're just talking about 5 votes in the Senate. 2 Democratic senators and a senator that's independent, Angus King out of Maine, have already voted for an extension of this deal. So we ultimately only need 5 Democratic senators to go across the line. And Senator Thune said that's what he's looking for to begin negotiating, is can he get 7 to 8 Democratic senators to say, look, let's try and make a deal now.
Nathan, great stuff as always. Nathan Dean, worth his weight in gold, that's for sure. Senior policy analyst for Bloomberg Intelligence down there in Washington, D.C. One of the most widely read or heavily read stories on the Bloomberg terminal today is about President Trump and his personal net worth. After years of getting shunned by major banks, Donald Trump's money has found another place to call home, Citigroup. The author of that is Todd Gillespie, finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. So that's good news for President Trump and his family and their interest. Tell us about this story here.
Thanks, Paul. Yeah, I mean, obviously President Trump might have multiple banking relationships, but what we do know, and has been widely documented, is that these have come at the cost of a lot of controversy over the years, given President Trump's personal finances, his business dealings, his criminal convictions that have led to various banks, major banks, debanking him over the years, and that's obviously led to a lot of political controversy in the banking sector and a lot of criticism recently by President Donald Trump on big banks in the U.S., in particular Bank of America, JP Morgan, that he claims have refused his deposits in the past. And now what we do know and what we've reported today is that Eric Trump, the president's second son, established a client relationship with Citigroup in the wake of the re-election of his father as president, and in doing so has established a trust at Citigroup that contains some of his father's money and is in the benefit of his father. His father is the beneficiary of this trust that Eric Trump essentially oversees, is the trustee of, as a client of Citigroup. So this is a new relationship that comes at a really important time, both for the president, obviously reestablishing his finances, becoming a much bigger multi-billionaire than he ever was, now worth nearly $8 billion, and also for Citigroup.
which is a bank that obviously needs the good graces as much as they can of the U.S. government, is under a lot of regulatory pressure right now. There's no suggestion here of a quid pro quo necessarily, but it's obviously, it doesn't hurt if you're a big Wall Street CEO under a lot of pressure from the government's agencies, and the president is now, placing his money at your bank.
Is this something that Citigroup is trumpeting? Are they, taking a victory lap on this?
No, Citigroup has declined to comment on our report. One thing that we do know, obviously, is that Citigroup has been trying to build out and revamp its wealth business right now. Scarlett, you and I have discussed before about a big spin-out partnership that they've got now with BlackRock, and also they've thinned out a lot of their ranks, and they've trying to hire more investment advisors as well. Particularly on the mass affluent side here, under new leadership under Andy Sieg, who himself, has been under investigation, as we've reported, for claims of mistreating employees. The bank has stood beside him. A lot has been going on at the Citigroup's wealth division in the past 2 years, and another prestigious client, is just the latest.
Any sense of how the other banks are thinking about President Trump in a second term? He seems to have a greater level of acceptance, maybe from the corporate community, executive community. Any change in banking?
Yeah, certainly. I mean, it's not clear. I mean, obviously, the president's finances are disclosed partly in filings that come, a year or so late. So a lot of this might be delayed. This trust at Citigroup may be disclosed in filings next year. We'll wait to see exactly how that plays out. But what we do know is that, Jane Fraser was one of 2 U.S. banking CEOs that attended a state banquet in the U.K. with King Charles and with President Trump. The other banking CEO, U.S. banking CEO there, was Brian Moynihan, the chief executive of Bank of America, who's been in his seat for a very long time now. He is the CEO of one of those banks that Trump claims rejected his deposits. So it seems perhaps, there are obviously signs that the bank, the bank's obviously trying to ingratiate themselves. They obviously prefer a lighter regulatory touch, generally speaking. Their stocks all rose after the president was elected in November. So generally speaking, the Trump administration is obviously seen as more favorable for the financial sector than the previous administration. But as we know, the president is someone who, takes personal slights and loyalties as well very seriously. And for companies that have crossed him in the past, this is still a very delicate time.
Absolutely. One of the more fascinating parts of your story is that idea that Jane Fraser, when she was attending that UK state banquet at Windsor Castle, was seated next to someone who is married to the former assistant of Jared Kushner, Trump's son-in-law. I mean, these are all personal connections that led to this.
Yeah, it was quite intriguing. I mean, we saw a seating plan of that banquet. I mean, there are 160 people at this dinner. About 10 of them were administration officials. So, the people they were sat next to, I mean, we don't know for sure that this was, necessarily planned or intended that way, but you can imagine a guest list like this and a seating plan is curated in some way. And for Jane Fraser, to be sitting next to one of those 10 or so administration officials who was there, and one who is a deputy White House chief of staff now as well, not just married to, the former assistant of Jared Kushner, whose family, by the way, has done a lot of business with Citigroup over the years. These are connections that are passing everywhere.
All right, Todd Gillespie, fantastic article here on the Bloomberg Terminal about Citi doing some banking business with the Trump family. From New York, this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:21 on Wall Street. I'm Alexis Christoforous. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with a minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. All right, folks, stocks now mixed as investors try to shrug off concerns tied to this U.S. government shutdown that has now entered its second day. A triple-digit loss for the Dow, off 147 points after being higher earlier in the session. The S&P 500 pulling back from its recent record high, now down about 12. NASDAQ hanging on with a gain of 20. We've got the NASDAQ 100 still in record territory. Yields are basically flat, the 10-year at 4.09%, 2-year at 3.55. OpenAI is officially the world's most valuable startup. The ChatGPT owner has completed a deal to help employees sell shares in the company at a $500 billion valuation that pushes OpenAI past Elon Musk's SpaceX to become the world's largest startup. Tesla booked blowout third quarter sales as buyers raced to make purchases before the $7,500 EV tax credit expired. But you know what? Shares of Tesla have reversed course and are now down more than 1%. And it's official. Warren Buffett's Berkshire Hathaway has reached a deal to buy Occidental Petroleum's chemical businesses as an all-cash deal worth about $10 billion. It's expected to close in the fourth quarter. Occidental is now down about 6%, but remember, guys, it rallied big the past couple of days heading into this announcement. That's your Bloomberg Business Flash. I'm Alexis Christoforous.
Alexis, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. All right, we know you can play NVIDIA, or you can play AI through NVIDIA, maybe some software stocks, maybe even, I don't know, some other tech names. But now I think the tap on the shoulder is going to like Caterpillar.
Wait, I understand NVIDIA. I understand the software companies. I even understand the utilities.
I know. So I have no idea, but we have a smart reporter here, a graduate of Duke, so he's got to be good. Matt Griffin, equities reporter for Bloomberg
There's a
News.
total bias there.
I know. Here in our Bloomberg Interactive Broker Studio. So Matt, talk to us about Caterpillar. We know it making these big industrial equipment and tractors and backloaders and stuff like that. What's the AI play for them?
Yes, this is a really interesting story, I think. You're right. I have the same reaction too when I hear the name Caterpillar. I think of an excavator. I think of a bulldozer. But something that this company also sells that you don't maybe think about as much is gas turbines, typically fired with natural gas. They can be used with as backup power for facilities. They can be used as primary power. And by facilities, a lot of investors think data centers. You have just booming power demand from data centers thanks to artificial intelligence. Investors are betting the company will be able to benefit from that. And something else that I've heard on Wall Street too is, you know, you got to put up a lot of buildings. You need things like copper. You need to physically do the construction, and that means that Caterpillar's mining equipment and their construction equipment may be in higher demand as well. So that's contributed to a 14% jump in the stock last month, more than 30% year to date. Better than the Bloomberg Mag 7 index, actually, if you're going to talk AI. So that's investors' bet on the company here.
Thank you for connecting the dots so nicely there. So it's like a second, third derivative play of the AI trade after all those chip makers have already been bid up. So this power generation turbine business, is this something that's easy for investors and analysts to track? I mean, does the company break out these results?
They actually don't. And that is something that does give people a little bit of pause. We don't know. We know it's not by any means their biggest stream of revenue. This is really a bet on future performance there. That being said, Bank of America does estimate that it's their highest margin business. They see it as the cause of the next upcycle in earnings for this company. You know, we're waiting for a rebound there. There's weakness in the construction market. We're kind of waiting for things to turn around. Investors, though, not necessarily waiting, because on these kinds of bets, we have the stock closing at a record high, closing out September, and really just rising since then in both of the trading sessions.
How's the company positioning the story? Are they out there kind of waving the pom-poms, hey, we're an AI trade, or are they just kind of playing it down, hey, we have some exposure here, and how are they kind of framing it.
I mean, you haven't seen, Caterpillar, the next generation AI play on the website. Like, they're not positioning themselves as an AI, speculative investment bet. If this were going to be their primary marketing, I think you'd probably see more specific numbers out of the company. So really, this is a narrative that's growing on Wall Street. And of course, it doesn't mean it's a guaranteed bet. The company is pretty richly valued. If you look historically, the highest valuation since 2021, as of yesterday, about 23 times earnings. That being said, investors don't necessarily need concrete numbers right now. Like, if you look at Fermi, an energy REIT that went public yesterday, they have no revenue. It's totally a future-looking bet, and their shares jumped 55% in the first trading session. So investors are really hungry for new ways to pile into AI plays, even if there's some risk involved.
Yeah, Matthew, this is a great story here. Just very quickly, Caterpillar, it is affected by the tariffs, and this is something that it had to warn investors about, right?
Yes, they actually said near the end of August that tariff costs were going to be higher than they expected. That came as the U.S. government added some new products to its list of these metal sector tariffs, said it's going to cost them up to $1.8 billion this year, and they just tweaked down their language about margins, said it's going to be near the bottom of the range that they'd previously given. That did give investors some pause. The stock fell after that. However, it has, of course, regained those losses since. There seems to be general optimism about the way the company is managing through, but I'm also hearing that it's something that people have a very close eye on, is what does this margin impact end up being? What's the inflation impact on their customers? How big of a deal is that? So it's something Wall Street's watching closely.
All right, Matthew, thank you so much. Appreciate that. Matthew Griffin, equities reporter. That was his first radio hit. I think he did a good job.
Gold star.
Gold star for the Dukies. Yeah, he's in there for Bloomberg News, covering this Caterpillar story, getting a little bit of love on the AI trade. We appreciate that. Let's get back to this economy here. I think that's a little less certain here, kind of where we are on the economy, jobs. What's the Fed going to do? You know who we like to talk to? Yelena Shuletieva, senior economist at the Conference Board. Yelena, what's the number one issue that you think the Fed's focusing on right now? Is it the labor market? Is it inflation? How do you think they're playing it right now?
Or, trying to make decisions in the dark, right? That's probably
Oh,
another.
you're right, with
just
no
to
data.
add to
Yep.
the list of those
Very
issues.
good.
So I think the big dilemma for them right now is that there are upside risks to the employment mandate, but there are also still risks to the inflation mandate. So, and that's probably the biggest issue. Okay. So that's why there are such a big diversity of views on the Fed. They are talking, some people are talking about inflation, some people are talking about risks to employment. And I think that's probably the key issue. Obviously, the lack of data adds to that list.
Yeah, I was just going to say, it doesn't feel like a Thursday because there's no jobless claims on EcoGo. Having said that, there is some certainty, at least when it comes to the makeup of the Federal Reserve Board, because we got word from the Supreme Court that Lisa Cook is staying put until at least January, when the Supreme Court will hear oral arguments. How much, I don't know, certainty does that give you? How much comfort does that give you as someone who's monitoring how the Federal Reserve moves forward?
I think there are still questions about Fed independence, regardless of what happened just now. I think we still don't know what happens to Chair Powell, whether he will stay or not next year as a board governor, and if there is continued pressure from the administration on the Fed. So I think that is an important thing to watch, regardless of what happened with the Supreme Court decision. And I think this issue will stay with us for quite some time.
Consumer confidence. How is the consumer out there, do you think?
So we just received the latest reading of consumer confidence from the Conference Board. We look at this survey very closely ourselves. We have seen continued declines in consumer confidence across different, income levels. It's pretty broad-based, actually, across party affiliations and things like that. One thing we're really watching closely is the Labor Differential Index, which measures jobs availability. It was the 9th consecutive decline in the index just released on Tuesday. So that is a trend.
Yeah.
That is something that you already can call a trend. And that is telling us that consumers are really concerned about their job prospects. There's also another measure from the New York Fed, for example, job finding prospects. That dropped recently to the level which is lower than during the COVID era. So I think that consumers are telling us something. They're sending a message that, you know, the risks to the labor market are real, even though maybe the data are not showing that to the full extent.
Because I see consumers out there spending. I mean,
shopping bags everywhere. Stores are packed.
Bars are full. I'm just
well, guys, are you looking in the city or
down the Jersey Shore?
You know,
I'm down with my peeps down there. I don't know. It seems pretty lively. I don't know. But I don't see inflation in the data. So.
Well, the inflation is a process. It's not just a one-time thing. It's probably still going to appear. You know, we in our own projections, we expect PC inflation to rise above 3% by the year end. A big test for consumer tolerance will be the holiday shopping season. Yeah. So yes, you don't see it in the data, in the spending data, but consumer spending on discretionary services actually, you know, kind of slowed a little bit if you look at year-over-year rate, and goods are better, but services which are more discretionary is not so much.
Yelena, final question to you. What's the number one issue that clients bring up with you?
They are asking about the impact of tariffs. And, you know, it's been with us for 6 months, right, already, and it's still a big question because we still expect that to hit growth, and I think it's still in the cards, and it's just that we haven't seen it yet, and that's the biggest puzzle. But I think it's still coming.
Maybe it is just what a lot of folks say, a one-time lift to costs, and then let's just move on.
But have we seen that one-time lift yet?
I think so, haven't we?
It's going to creep into the data more gradually, I think. So companies are picking up some of it now. Again, the big test is what happens in December, November, December.
All right.
Yelena Sholyacheva, senior economist at the Conference Board on this U.S. economic outlook. We're all waiting for inflation. It's waiting for Godot.
Yep.
Just wait.
Maybe it's not going to happen.
Yeah. By the way, Bill Winters and Keanu Reeves, or Alex Winters and Keanu Reeves, are reprising their roles as Bill and Ted in Waiting for Godot on Broadway.
Is that right?
Yeah.
Loved how you tied that in there. Not sure how
Waiting for Godot,
Yep.
you know, Bill and Ted's Excellent Adventure. Thank you so much, Yelena. By the way, if you love crosswords, charts, or just a challenge, we've got the game for you. Alpha Dots, that's what it's called. And it is a daily word puzzle with a plot twist. And you can find it right now on Bloomberg.com/AlphaDots. Yelena was talking about a puzzle. That is another puzzle for you. In the meantime, we are looking at investors puzzling out what this economy means and where we're headed when it comes to these markets. The S&P and the Dow in the red right now. The NASDAQ holding on to a gain thanks to advances in tech names. And of course, yields are mixed right now. The 2-year yield slightly higher. The 10-year yield also marginally higher at 4.10%. Paul Sweeney and Scarlett Fu here on Bloomberg Intelligence on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Alexis Christoforous. Looks like an early rally has faded as investors try to understand what this government shutdown now in its second day will mean for the economy and the markets. The Dow Jones Industrial Average now down 103 points. The S&P 500 was at a fresh high earlier, now down 13. NASDAQ, though, up just about 8 points. We've got the NASDAQ 100 still in record territory. The ChatGPT owner, OpenAI, now has a valuation of $500 billion, surpassing Elon Musk's SpaceX as the world's most valuable startup. Shares of credit reporting companies TransUnion and Equifax are lower after Fair Isaac Corp announced a new program giving mortgage lenders the option to calculate and distribute FICO scores directly to customers. Shares of FICO up about 20% right now. TransUnion is down 12% and Equifax giving back 9%. McDonald's embarking on a multi-billion-dollar global expansion to increase its store count and revenue. The fast food giant plans to add around 50,000 global locations over the next few years, including in places like Texas, where it has fallen behind. Shares of McDonald's up just 0.2%. And that's your Bloomberg Business Flash. Back over to Paul and Scarlett.
Thank you so much, Alexis Christoforous. And that McDonald's story is something we've been talking about for a while now. Throughout the program of Bloomberg Intelligence, this idea that McDonald's is so big, you didn't think that there was anywhere where they hadn't saturated the market.
Yep. Exactly.
And apparently northern Texas is now growth opportunity for these guys. So go figure. All right, let's talk a little bit about the FTC and the action it has taken against Zillow and Redfin. Zillow and Redfin just put together this partnership, and we want to get the details now from Justin Teresi. He is Bloomberg Intelligence antitrust litigation and policy analyst. Justin, great to see you.
You too, Scarlett.
So let's just back up for a moment here, because Zillow and Redfin put together this partnership. It's not an M&A deal, but it involves payment.
It does. So I think the concern here is that maybe it looks a little bit too much like M&A, and I'll break that down for you as to what exactly happened. But earlier this year in February, Zillow and Redfin entered a partnership, or a so-called partnership, where Zillow essentially paid Redfin $100 million to allegedly end its own multifamily listing service for rentals. And also what they're doing is syndicating Zillow's rentals on their own website. So essentially, in antitrust terms, it looks like they might have paid a competitor to back out of the marketplace. And under the law, the FTC says that's probably an issue.
What are the companies saying?
So right now, we haven't heard too much about this yet, but the plot thickens a little bit here too. Not only was there a payment for Redfin to back out of this marketplace, what also happened, allegedly, is that Redfin was told to terminate its employees who worked on these rental listings under part of that arrangement. Those employees were then transferred over to Zillow, and so were the customer contracts from Redfin that involved these listings as well. So all of this all together, it's almost like an M&A had happened. Those items were acquired by Zillow from Redfin, and the FTC is basically saying you might have to give those back.
Okay, so the FTC's complaint indicates that this so-called partnership would reduce the number of websites offering listings, leaving consumers with fewer places to search, and that would drive up prices for buildings that want to advertise.
Right.
So is the FTC arguing on behalf of landlords or on behalf of prospective tenants?
So they're really taking a double approach here, if you will. They're talking about the tenant side and how maybe there are less listings to look at, but they're really pointing to advertisers here too and potential harms they might be facing, right? If they're just going to Zillow for this source now to make their listings, there isn't this competition maybe in the marketplace and different pricing between those two competitors that there would be without this arrangement. So I think that's a chief concern here. And it's been echoed by a group of state attorneys general who have filed a similar complaint and I think want to manage their own litigation outside of the FTC, just in case things get closer to settlement in that case itself.
Is this Federal Trade Commission, from your perspective, how is it performing these days? Is it taking a lighter touch under a Trump administration? Is it noticeable, if any, any changes taking place?
That's a great question. This is the first new antitrust case we've really seen in quite a while from the FTC. There's been a little bit of action around smaller mergers over the last few months, but this is the first big one, if you will, involving an antitrust situation. They've been more active with consumer protection cases than antitrust the last few months, but it seems like things might be rolling together here. Whether or not we see more is still a really questionable issue as we head into the fall.
your note points out, Justin, that the FTC filed this case on the Eastern District of Virginia's Rocket docket.
Yeah.
What does that mean? Why is that important?
Yeah, so, things move much faster there. And when I say much faster, I mean much faster in the context of litigation. So I wouldn't say it's lightning speed, right? But, I'll give you an example. The DOJ case against Google involving their advertising technology, it was filed there in 2023, and we've already had a trial now with a finding in the liability phase, and we're into a remedies phase of that case. That's extraordinarily fast for litigation. A similar case filed in Texas in 2020 still hasn't even gone to trial. So if that gives you an idea of the speed involved there, that's really the benefit of being in Eastern District of Virginia. The case will probably go through to its conclusion during this term while the FTC is still under control of this current White House. I think that's probably some benefit in that venue as well.
What are some of the other deals that are being reviewed either by the Department of Justice or the FTC that you guys are kind of monitoring?
Yeah, so on the deal front, Jen Rhee is the expert in all of that. But, I think from an actual perspective of challenges to deals, things have been relatively quiet, right? There was this big controversy, if you will, around the HPE Juniper deal, which ended in a settlement a few months ago. A little bit of a shakeup at the DOJ antitrust division purportedly related to that. But in terms of actual lawsuits to stop mergers, we haven't seen too much activity from the government on that just yet. And I'll just point out as well, we're seeing all this activity in AI, and it doesn't seem like it's raising any issues with the current bent of the administration.
Right, with the current bent of the administration,
right.
is the key phrase there. How much of what the FTC is doing is left over from the previous administration? Do they just kind of wipe the slate clean, or do they take on some of those cases?
Yeah, so look, this one relates to a partnership just entered in February, right? So this is fresh, this is their work, and I won't say that it was a previous administration's, but a great example of prior work and continuing things is the Bots Act case that was filed the week before last against Ticketmaster. That investigation started during the Biden administration and reached its final phases. So there are investigations continuing, and there are cases continuing too. The case against Meta, the antitrust case, went all the way through to trial this year, even though it was started years ago under previous FTCs, if you will.
Yeah, that Live Nation one, that one's going to be tough to defend, I would think.
I think so, but it's interesting the interplay between that and the antitrust case that Jen Rhee is covering as well. Does a resolution of one maybe detract from the resolution in another? But Jen is your expert on that, so I will defer to her.
I like what Jen had said, though, which is that, bringing legal action against Ticketmaster is politically popular. It doesn't matter which side of the aisle you're on. You will find an audience for that. You will find supporters for that kind of stance.
Yeah, absolutely. What's the next kind of thing in your world that you're looking at? Or what do clients ask you about the most?
Yeah, this case, the Zillow case, is getting a lot of interest, I have to say. And I don't know if it's because it's the first real significant enforcement action we've seen in a while. But I think there are the typical questions about M&A and are things different under this administration? Where are things headed from an enforcement perspective in the future? And to be quite frank, it's a lot of reading of the tea leaves yet. When we think that an investigation on big tech, for example, might turn into a case, we see things like the White House's AI action plan that says, hey, FTC, back off. So it's really, reading of the tea leaves, I think, in a lot of ways still with what's coming down the pike here.
And the FTC is a part of the DOJ, right? So we're looking, is it?
No, a separate commission. So they both have antitrust authority, which is the confusing aspect of how these statutes are written, but they both have their own antitrust authority. So they can and do their own thing.
So the DOJ could do something separately from the FTC when it comes to something like the Zillow and Redfin partnership, if it wanted to.
Yeah, typically the two agencies won't bring something around the same subject matter, if you will. But yes, they both have that authority under the law. And, whatever turf battles might be going on between the two for who gets what, that's a whole entirely different question we don't have an answer to.
The shares of Zillow, they're unchanged, pretty much flat for the year. So it's not suggesting like, oh, this is terrible for the company.
Right.
So
well, it isn't just a partnership, remember?
Yes, right.
$100 million payment partnership.
Yeah, very good. Justin, thanks so much. Always appreciate chatting with you. Justin Teresi, antitrust litigation and policy analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. And again, Zillow, stock kind of flat on the year, trailing 12 months up 16%. Kind of market cap just under $18 billion from Redfin is privately held. So we'll keep an eye on those names. S&P down 12. Dow minus 86 points, no big deal there. The Nasdaq's up 13 points, so no real direction. We'll keep an eye on it. The Tom Keene VIX still below 17.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Local Live Radio, and that's where you'll find us. All right, let's talk about this transition to renewable energy, facing some headwinds from the Trump administration, more so than perhaps under the Biden administration, which was more supportive, kind of creating some question marks as to where to invest, how to invest in this transition. Laura Haim, she joins us. She's Global Head of Solar Research for Bloomberg News, joining us via Zoom from London. Laura, I know you guys just came out, Laura, with your latest global solar market outlook. Give us the headlines.
Yeah, sure. I mean, what we said in this report is that the solar industry is now entering what we call the new phase. So China, which has been the engine of growth in the last decade or so, is peaking this year in terms of solar capacity additions. And we also expect to see the slowest growth in 7 years this year as well. But having said that, solar remains highly competitive when you compare it to other forms of electricity generation. So it's cheap, it's relatively easy to deploy, and therefore when we look ahead, we expect the growth in the sector to still be sustained, but at a much lower rate.
Laura, maybe by geography, generally speaking, what areas are doing a little bit better than others?
Yeah, sure. I mean, as I mentioned, China is peaking, and what we're seeing is that the center of gravity of the growth is shifting from markets like China or US and Europe to more of the new and emerging markets like Saudi Arabia and India, which we expect to carry forward the growth and ultimately still ensure that solar will continue to play a central role in the global energy transition.
Talk to us about the regulatory environment. At least here in the U.S., seems to be less supportive than for some of these renewable energy sources. How does that play into the outlook for solar? Because I think I see a lot of solar panels all around this country here.
Yeah, certainly. I mean, policy and trade uncertainty is definitely one of the factors behind the slower growth that we're seeing at the moment. As you mentioned, particularly in the US, the changing tax credit rules and the escalating tariffs are creating uncertainty and certainly delaying the investment decisions at the moment. And trade barriers are also adding to this uncertainty as well. The other thing to mention behind the slower growth that we're seeing is that there is saturation in a lot of markets, in a lot of the mature markets, I guess. So solar's share in electricity generation has grown quite significantly in some countries, including the US. So this means that installations are now facing headwinds, particularly in terms of infrastructure limits. So you need to either wait for a long time to connect your projects, for example, to the grid, or even if you do manage to connect, your electricity generation may be curtailed quite significantly. So we're seeing this in Brazil at the moment, which is the 5th largest solar market. And the curtailment levels there in the first half of this year has reached 21%. So there's certainly some significant headwinds, and policy and trade uncertainty is definitely not helping as well.
You mentioned solar remains the cheapest and easiest power source to deploy. Can you give us some context around that? Like solar versus, I don't know, nat gas or some of the more traditional methods?
Yeah, I mean, solar, pretty much in most of the world, solar is now the cheapest source of new electricity generation. And not only that, but we're now getting to a stage where basically developing these new solar plants is cheaper than running your existing gas plants as well. There's also delays with obviously gas turbines as well, which is another disadvantage to the other technologies. As I mentioned, solar is cheap to deploy. We've seen module prices come down very significantly in the last few years due to the oversupply situation. So it's certainly amongst the other technologies, solar is in a particularly strong position, I would say, to meet electricity demand growth.
If I want to install solar on my house here, will those panels, are they subject to tariffs? And if so, how much?
Well, that is constantly changing. So day by day, the news on trade barriers is shifting very quickly. I mean, what we've seen is basically what US has imposed in terms of tariffs and restrictions have forced a rapid shift from production in Southeast Asia to other markets like Indonesia and Laos. So solar manufacturing can shift quite quickly. So depending on where the tariffs are imposed from the US, the factories basically just move around. So they've now moved to Indonesia and Laos. Now these markets are under investigations from the US as well. So they will likely move elsewhere. But ultimately, the result of this is the higher cost for US buyers. It ultimately is 6 times more expensive to make these modules in the US compared to the imported modules. So the ultimate impact is, more expensive equipment within the
All right,
US.
Laura. Thank you so much for this. Laura Haim, Global Head of Solar Research for Bloomberg News, joining us from London. For our listeners in the US, a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. S&P 500 down 3 points. The Dow is down, call it 50 points. That's 0.1%. But the NASDAQ, it is trading higher by about 60 points. That's about 0.25%. WTI crude oil down another $1 here, right at $60.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Deadly attack outside a British synagogue on Yom Kippur.
It's devastating to hear on the holiest day of the year for the Jewish community.
2 dead, 3 seriously injured.
I'm Vicky Barker in London. After this morning's car and stabbing rampage at a Manchester synagogue, Scotland Yard confirming
Counter-terrorism policing has declared this as a terrorist incident.
Police are being praised for their speedy response. 3 minutes after the first emergency call, specialist armed officers were being scrambled. 7 minutes after, they shot the suspect dead.
2 other people arrested in that case. CBS's Cammie McCormick reports European leaders are trying to counter Russia's aggressive drone behavior.
Denmark's prime minister opened the meeting.
Russia will not stop until they are forced to do so. And they are a threat, not only to Ukraine, but to all of us.
She said peace with Russia can only be achieved through strength.
We have to make our common Europe so strong that war against us becomes unthinkable.
Here at home, CBS's Nicole Skanga has more on the Trump administration's troop push in several American cities.
The National Guard is expected to arrive in Portland imminently. We also know that the National Guard is expected to arrive in Memphis within the next few days or so. What we know at this point is that they won't be armed or masked. They also won't be making any arrests. Instead, that's going to fall largely on law enforcement.
On day 2 of the government shutdown, the White House is poised to order layoffs and cut Democratic programs. Press Secretary Caroline Leavitt.
It's likely going to be in the thousands, and that's something that the Office of Management and Budget and the entire team at the White House here, again, is unfortunately having to work on today. These discussions and these conversations, these meetings would not be happening if the Democrats had voted to keep the government open.
An immigration judge has denied Kilmar Abrego Garcia's bid for asylum. He can appeal. CBS's Michael Wallace.
He was first denied asylum in 2019, but a judge did not deport him to El Salvador at the time because a gang there was targeting his family. When the Trump administration deported Abrego Garcia this past March, the Supreme Court ordered he be brought back, after which he was immediately charged with human smuggling.
A Royal Caribbean cruise ship that docked this morning in Miami was not a pretty sight. This passenger says the norovirus hit hard.
The last time I looked, they said there were like 98 people, but my guess is there were probably hundreds of people. Hundreds. My wife told me she went to the ladies' restrooms and we're all pretty messed up.
Checking Wall Street, right now the Dow is down 54 points. The S&P is down 4. This is CBS News. A new book could have a distinctive aroma.
Now you can ward off vampires while you read.
I'm not dead, am I?
No, you're not dead. Not yet.
Just in time for Halloween, author Jennifer Armentrout's teamed up with Hellman's for a new edition of her best-selling romantic fantasy, The Primal of Blood and Bone. The one-of-a-kind book is printed with garlic aioli-infused ink to repel the tome's bloodthirsty craven monsters. Anyone who buys a copy at Armentrout's bookstore, Miss Willa's, in Charlestown, West Virginia, gets a free craven-proof bottle of the Mayo Maker's new aioli variety. Deborah Rodriguez, CBS News.
Zillow, the nation's leading real estate company, is facing a class action lawsuit for allegedly tricking consumers into using agents affiliated with Zillow on 2 platforms. The suit says that led to inflated commissions and inflated home prices. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Day 2 of the shutdown. Welcome to the Thursday edition. With the government funding lapsed and few signs of this ending, we're going to get the latest from Mike Dorning on our Capital Influence team right off the top. And we're going to talk solutions in an important conversation with Democratic Senator Jeanne Shaheen of New Hampshire. She could be forming the gang that figures this out. We'll review these ideas with our political panel, just as President Trump talks mass layoffs today with his budget chief. With us, Bloomberg Politics contributor and Republican strategist Rick Davis, alongside Democratic strategist Caitlin Legacki. It's all after a look at Wall Street. Let's see where we're starting here. Setting the baseline with Alexis Christoforous in New York. Alexis, how's it look?
Thanks so much, Joe. Looks like a morning stock rally is running out of steam as investors now shift their focus to the government shutdown. Now in its second day, the Dow Jones Industrial Average reversing an earlier advance, now down 73 points. The S&P 500 pulling back from an earlier record high, off about 7 points. The NASDAQ, though, in the green with a gain of 46. We have the NASDAQ 100 in record territory. The Russell 2000 is down just a little bit right now at 24.42. The yield on the 10-year, 4.10%. Yield on the 2-year at 3.55%. President Trump says he will confront Chinese President Xi Jinping about soybean purchases when they meet at the end of the month. In an interview this morning on CNBC, Treasury Secretary Scott Bessent says the president has American soybean farmers' backs.
It's unfortunate that Chinese leadership has decided to use the American farmers, soybean farmers in particular, as a hostage or pawn in the trade negotiations.
Was Treasury Secretary Scott Bessent on CNBC. OpenAI's valuation has soared to $500 billion after current and former employees sold about $6.6 billion in stock. OpenAI is now the most valuable startup, topping Elon Musk's SpaceX. And speaking of Musk, his EV company, Tesla, posting record sales in the U.S. last month as customers rushed out to buy their EVs before that tax credit expired. Even so, shares of Tesla reversing an earlier gain, now down about 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Let's send it back to Joe Matthew and Balance of Power.
All right, Alexis, great to have you along today. Welcome to the Thursday edition of Balance of Power here on Bloomberg Radio. We're on satellite radio, always Sirius XM channel 121. You can hear Bloomberg all day, just like you can watch it on YouTube. Search Bloomberg Business News Live on YouTube. We'll bring you in the studio. It's one of the coolest things we've got going. You can pause it, back it up, and that's all of our shows from New York to Washington throughout the day. Subscribe to the podcast as well, because we've got a lot to talk about. It's day 2 of the shutdown. And I'm just going to walk out on a limb here and say that there will be a day 3 and 4 and a day 5. It's probably a day 6. And we just might get to a week. The reason why I say that is because, well, first of all, it's Yom Kippur. So there's no voting today. And to all of our Jewish viewers and listeners, I hope you have an easy fast. When we get back to it on Friday, there'll be more voting on the CRs that are expected to fail, just like they did yesterday. These are the same continuing resolutions that we've been voting on for the better part of a week now. John Thune had said we're going to do it every day until this is done, but they're not apparently going to hang around for the weekend. That's a new bit of news here. It looks like they will go home for Saturday and Sunday. So government stays shut. We wake up Monday, still closed. And this is happening as Donald Trump meets today with Russ Vought, as he writes on Truth Social. He of Project 2025 fame, to determine which of the many Democrat agencies, he says, most of which are a political scam, he recommends to be cut, and whether those cuts will be temporary or permanent. Interesting, because I remember talking to members of the Trump campaign, Republicans, throughout the whole cycle, and bringing up Project 2025 was a non-starter. Remember when President Trump, then candidate, said he hadn't read it? Enter Speaker Mike Johnson, who has nothing to do right now other than kind of fan the flames on something and maybe be in town for a deal, because they're not in session today, but he did update reporters this morning. Let's listen.
Don't ask the Republicans what we should be doing or what we should be negotiating. I don't have anything to negotiate. I sent them in good faith exactly what they had voted for before. We did not put any Republican provisions in that, and we tried to make this very simple, in good faith, so the appropriations process of the people can continue.
All right, let's get down to it right now with Mike Dorning, with us from our Capital Influence team here in Washington. It's great to see you. Mike, you've been through a couple shutdowns. By the way, it actually happened. How about it? We've been talking about the possibility of this for weeks. Now that it's closed, and we're going to hear from Jeanne Shaheen a little bit later on this hour. I spoke with her last evening in the Senate, and we saw them on the floor kind of chirping a little bit, spitballing, as somebody called it, just maybe the beginnings of a gang that might help to solve this. But this could be at least a week before it's done, right?
It could definitely be a week, and as you're saying, there's some mechanical reasons why you wouldn't expect anything to happen before Monday, at least.
Give us a sense of the makeup of this shutdown. You just heard me read the Truth Post. Things could start to break in a very different direction in this shutdown, with 750,000 furloughs that could become layoffs. What is the president, what's the administration up to?
So he's handling this in a totally different way than any other president has handled a shutdown. He's using this now to drive his agenda and essentially punish Democrats and Democratic constituencies for this through cuts. It carries risks. You know, he looks like the prime mover and shaker of this shutdown. It's hard for him to be doing all these cuts that don't usually happen and still blaming Democrats. On the other hand, he's furthering his agenda. He's using an opportunity to get done what he wants to do as president. So it's part of this fast-moving, seize every opportunity kind of presidency.
No one's really talking outside of the informal chats that I've already referred to. You don't have Hakeem Jeffries in a room this weekend with Mike Johnson, Chuck Schumer, and John Thune. Maybe when that happens, we'll pay attention. But this is going to roll for a little bit. And as the president also wrote in this post, I can't believe the radical left Democrats gave me this unprecedented opportunity, he calls it, an opportunity. They are not stupid people, so maybe this is their way of wanting to quietly and quickly make America great again. I don't think that's probably true. But is there a Machiavellian component here where Hakeem Jeffries is saying, you know, if we just let these subsidies expire and we let President Trump fire everybody he wants, we own the midterms?
Well, I think what they're doing is framing what their stand and their message to the American people. And that's very hard for congressional Democrats to do because they don't control anything in Washington, and because President Trump is very good at delivering a message and making it connect with the people. So they're using this shutdown to show, hey, we have a strong message on health care, that we really want to preserve those Obamacare subsidies and be the party that's the party for access to health care, and they would say against versus billionaire tax cuts. So they've got a moment where they can really reinforce that message through this shutdown. So that's the Machiavellian part of it. The shutdown is really a messaging opportunity for them. But Trump is using the shutdown as an opportunity for this fast-moving president that gets what he wants. So they're both using the shutdown for different purposes, but to seize the moment to drive their own agendas.
So if everybody's using this to their advantage, what makes us think this stops anytime soon?
Because at a certain point, they'll each have done what they can do here.
When does that dry up?
It's hard to say. I could make a guess, but it will be their own perceptions that they each have gotten what they can get out of this, and that the risks are outweighing the rewards. I would guess that would be sometime in the middle of next week that, the Democrats are talking about all this and highlighting their support for health care and possibly creating enough pressure on Republican moderates that they say, hey, we got to do something and do something soon. Meanwhile, to the extent Trump wants to use this as an opportunity to get rid of parts of the government, to punish Democrats, whatever, he'll have had enough time to do that, and there'd be no more upside to it continuing from either side.
Interesting. It seems to me that the easier way for Republicans to get to the finish line is just to pick off a few more Democrats without having to rewrite anything or even make a deal, whether that's good for the nation or not. Politically speaking here, you had 3 Democrats vote yes the other night. And when I say Democrats, I include Angus King, I guess, who's caucuses with the Democrats.
Democrat aligned.
Yeah, that's right. So you pick off, a Maggie Hassan, Gary Peters, a couple of more folks who voted for the CR last time, and you're getting pretty close to this being done. John Fetterman is on board now. So,
and it's those, ultimately, those Democrats may make the decision, hey, we've made our stand on health care. I don't see a point in continuing.
So if John Thune keeps bringing it back to the floor next week, is there a chance that on a Monday or Tuesday this thing passes?
There's a chance, but I think the chance when it will pass will be when Democrats have decided they've made their point.
That's a party decision, though.
It's a party decision if the party doesn't push those vulnerable moderates beyond their point of comfort. If
Kevin Cramer was talking about a prison break when he was on with us last that's what Republicans are hoping for.
It may be that Maggie Hassan and Gary Peters reached that decision at a different point than Chuck Schumer, and then Chuck Schumer has to either go along with them or suffer the humiliation of a prison break.
This only gets us through November 21st. In a best-case scenario here, what makes us think we don't shut down for Christmas if they figure this out?
It's possible they might. It's also possible that the Republicans, when it comes time, November 21st, November 28th, whenever, give Democrats an offer that's too good for them to refuse. So they say, okay, we're going to do, whatever we think is a reasonable offer on the Democrats' public message complaints, and then the Democrats, you look to the public, and the public will say, that seems like a reasonable offer. Whether Democrats or not think it's reasonable, they might go and take that. Or maybe the Democrats think it's reasonable.
Does it matter this time? I think we've illustrated how different this shutdown is, politically speaking. Does it matter that Democrats have control of Congress and the White House at this moment when it comes to the blame game?
Republicans have control.
Thank you.
It certainly does matter. Because it's a unified Republican Washington.
Do voters look at it that way still?
I think that voters definitely look at it that way. I don't know that voters really a year from now are going to be spending a lot of time on the shutdown. It's like, how's America doing?
Yeah, right.
And the Republicans will wear the shirt for that.
Fascinating, as always. To tap the experience of our friend Mike Dorning, who helps to run our Capital Influence team here in Washington. We thank you, as always, Mike. And we're going to hear from the aforementioned Jeanne Shaheen coming up, Democratic Senator from New Hampshire, quietly talking solutions on the Senate floor. We'll bring you that conversation straight ahead, only here on Bloomberg.
12:21 on Wall Street. I'm Alexis Christoforous. Stocks have turned mixed as investors turn their attention to the government shutdown now in its second day. After starting the morning higher, the Dow Jones Industrial Average is now down 54 points. The S&P 500 was at a record high, now down just 7. The Nasdaq Composite, though, in record territory with a gain of 42 points. The dollar is little changed. Yields are higher as traders deal with the temporary blackout of key economic data due to the government shutdown. The yield on the 10-year 4.09%, the 2-year yield at 3.5%. Gold is taking a break from its record rally, and oil lower for a fourth straight day with WTI down 2% to $60.50 a barrel. Fair Isaac Corporation, better known as FICO, is up now about 19% after unveiling a program that lets mortgage lenders calculate and deliver FICO scores directly to consumers. Shares of credit scoring companies TransUnion and Equifax taking it on the chin. You've got Equifax down 7.5%, TransUnion down 10%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis, great to have you with us today. Live from New York, I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg Radio. And great to have you along on the Thursday edition. Yes, you made it to Little Friday. The government, though, is still closed, and it likely will be when the week opens next week. Because there's no voting today with the Jewish holiday, things are out of session in Washington, even though lawmakers in some cases are still in town. They're going to come back to vote again Friday, and then we're out of here. This is something that has emerged in just the last 24 hours. John Thune has decided to send everybody home for the weekend. So that brings us to Monday, and it's kind of unclear, as we just discussed with Mike Dorning, what happens then. You're going to see and hear, and you already have been. We were in the Senate the last 2 evenings talking with members of both parties. You're going to hear a lot of blame. You're going to hear a lot of posturing. You're going to hear a lot of talking points. That's what shutdowns bring to us here in Washington. And to think it actually happened, well, it's even more intense this time around. Yeah, everybody's angry. Yes, there's a lack of trust. But I can tell you firsthand, having been up on Capitol Hill yesterday, that there are quiet conversations happening that will likely lead to a deal to end this. There is actually some real lawmaking being done, at least in the infant stages here with the government shut down. And we had a chance to speak with someone spearheading some of these talks. Again, we don't have a gang of 8 together yet. We don't have a conference committee. The leadership is not involved. But that's the whole point. When you see somebody like Senator Jeanne Shaheen making her way around, literally crossing the aisle on the Senate floor to talk to her colleagues about different ideas, maybe extending Obamacare subsidies, making both sides happy, putting up guardrails. What do you want? Here's what I want. That's how this stuff happens. And I had a chance to sit down with Senator Shaheen, the Democrat from New Hampshire, spoke with us in the Russell Rotunda up on Capitol Hill, and I spoke to her about these early talks that are underway. Let's listen.
We're not really that far apart. And I think if people can sit down at the table and negotiate, I've talked to a lot of members on both sides of the aisle. I think people want to get this done. They understand that neither a government shutdown is in the interests of the people of this country, nor is kicking millions of people off of their health insurance. And so it's in everyone's interest to find a resolution that both sides can buy into.
So are you finding willing players? And I'll confess to you, I was watching the feed from the Senate floor today. You were talking to a lot of folks. Is there a group that's forming?
I don't know that it's a group that's forming, but I think people are talking to each other, and that's the first step.
There's even reporting that Senator Tuberville, not exactly a progressive, is realizing that this could have a major impact on his state of Alabama, and he's on board. Could this gang of whatever number it may be, in fact, include elements from both extremes of both parties, progressives and conservatives coming together?
Absolutely. Over 70% of states that went for President Trump, so red states, are affected by the loss of these premium tax credits, the subsidies that help people afford health insurance. Over 50% of congressional districts that are Republican are affected. So, or over 50% of people live in Republican congressional districts. That's a better way to say it. So I think everybody understands that it's really important for us to address this in a way that helps people so that they're not going to see their insurance rates double.
Republicans, and in some cases the administration, have been telling us on Bloomberg that the matter of Obamacare subsidies is a policy issue that is handled by the end of the year and has nothing to do with a spending or funding mechanism at the beginning of October. How do you answer them?
I think we ought to be able to do both of these things. The reality is the Affordable Care Act marketplace opens on November the 1st. In order for that to happen, insurance companies need to have their rates announced. So that happens sometime in October. So in order to address this, we've got to work on it now. There is some urgency about this. And as I said, over 50% of people who get these subsidies are in Republican congressional districts. And I said it wrong. It's over 70% live in states that President Trump won in the election. So there's a real incentive for everybody to figure out how to do this in a way that doesn't kick all of those people off of their health insurance or see costs that rise dramatically.
What does your gut tell you here? Because I keep hearing it's different this time because of a promise by Russ Vought to pursue mass layoffs, that the dynamics have changed, the rescissions that we saw changing the dynamics. Everyone's going home for Yom Kippur tomorrow. It's going to be at least a couple of more days, but could we be in for weeks of a shutdown?
I hope not, and it's certainly, again, in everyone's interest to get this done as soon as possible. There are people who are really going to be affected by a government shutdown, and so we need to get back to the table. We need to negotiate. We need to work together and figure out how to get government open. We can do both of these things. We can get government open. We can reach an agreement that extends the premium tax credits to help all of those people who need it.
Do you take the administration at its word when it talks about mass layoffs? We see 750,000 federal workers furloughed today. Some suggest they may never come back.
Well, the fact is, since Donald Trump took office with his Doge group and all of the actions that have been taken, they have been furloughing and laying off and riffing federal workers from day one. It started with ending foreign assistance and firing all of those employees from the U.S. Agency for International Development. It continued to the Department of Veterans Affairs, to the Department of Agriculture. Almost every federal agency is affected, and that's happened because, for whatever reason, the Trump administration decided that they didn't think the federal government should provide services to people.
So this shutdown becomes the Doge on steroids. If you take the administration at its word, and maybe you don't, is that a negotiating ploy?
Listen, I think it's unfortunate that the way this administration has looked at government effectiveness and efficiency has been to willy-nilly fire people regardless. And what we saw in the early days is they fired people and then they had to hire them back because they realized they needed people who could inspect what was happening with food safety, who could make sure that they could address health concerns. So I think this administration has no credibility when it comes to federal workers and what we need people to do in this government.
You've been very close to military issues for the balance of your career, and I wonder your thoughts on paying troops out of the extra, the $150 billion, I believe it was, the extra funding for the Pentagon and the president's big, beautiful bill. That was supposed to be for innovation, for procurement, for other reasons. Should they use that money to fulfill paychecks?
I think what we need to do is to ensure that our military is doing the job keeping this nation safe. I think deploying the military to the cities in this country, calling back all of the top military brass to have Pete Hegseth and President Trump give them a political rally is an embarrassment. And the country should not be doing that. You know, one of the strengths of our military is that they're not political. We have the strongest, most lethal military force in the world. And one of the reasons it's viewed and has so much respect and viewed so favorably is because it is apolitical. It's not political. and politicize. And what this administration has done from day one is to try and politicize the military.
Senator Jeanne Shaheen, the Democrat from New Hampshire, talking with us on Capitol Hill, important with her positions on the Foreign Relations Committee, Armed Services Committee as well. She's ranking member on Foreign Relations and has deep experience as well as a member of the Appropriations Committee. So you're talking with someone there who's balancing some pretty important positions in her portfolio when it comes to policy here. And now that we are in day 2 of the shutdown, maybe that gave you hope that this could in fact be resolved in the days ahead. Wall Street certainly doesn't seem to be worried about it. There was a time when we thought these would be our year-end targets, 6,700 on the S&P. I had to chuckle when I heard people are upset. The S&P is down 4 points right now. We're basically still at all-time highs, despite the confusion that still exists over some of the tariffs. And now, yes, a government shutdown with no signs of ending. We wanted to compare notes with Christine Aquino, managing editor for Bloomberg Markets live blog. It's just been great helping us watch Wall Street. Christine, it's great to see you. Are we whistling past the graveyard? I know I use that cliche a lot, but I can't think of a better one.
Well, Joe, it's definitely difficult to shake the optimism that's currently supporting this market, particularly equities, and even though we are grappling with this idea of a shutdown and investors are waiting to see how long it actually lasts, there's just an overwhelming base of positive support for the stock market at the moment, and enough of positive factors that can keep investors really positive in the stock market until potentially year end.
Well, that's amazing because, with all the columns say that we're getting frothy, analysts are getting nervous, we're primed for a 5 to 10% correction, but it's risk on, right? I mean, you've got Bitcoin now back above 120,000. We're looking at the Mag 7 just on a daily basis defying gravity. We could see a new all-time high for Apple, for crying out loud. I'm looking at chips. I'm looking at cyber. Where isn't the market working?
Yeah, I mean, that's a difficult question to answer, Joe, because you'd be hard-pressed to find a pocket of the market
Isn't that the point?
Yeah, exactly. And, I think there are signs of caution building in this current environment. We have seen some traders kind of putting on hedges against potential declines in the equity markets in particular, but it's not necessarily sort of a reaching for the exits scenario. We're very, very far from that. And we're just about to head into the third quarter earnings season as well. Expectations are that there are going to be upgrades for earnings estimates and more positive outlooks than we got from the previous period. And so these are offsetting a lot of kind of the concerns about this shutdown. Now, I think where the equation might change is if it goes much longer than investors are expecting. I think we've seen from history that in about 5 days, that's when you start seeing kind of a modest impact, for instance, on treasury yields, and they tend to fall a little bit.
All right, that's good to keep in mind. It's going to feel weird without that jobs report tomorrow, I'll tell you that. Christine, it's great to see you and great to spend some time on this. Christine Aquino did not, by the way, reach for the cliche of the rotation to quality and the broadening of the market, which should tell you something about the way she looks at things. We'll assemble our political panel next. Obviously, we have a lot to talk about. Rick Davis is with us, along with Caitlin Legacki on day 2 of the shutdown. Maybe they can help us figure it out. I'm Joe Matthew in Washington. Stay with us here on the fastest show in politics. This is Bloomberg.
It's 12:40 on Wall Street. I'm Alexis Christoforous. We've got a mixed market as investors try to make sense of what a government shutdown might mean for the U.S. economy and markets. The Dow Industrials down 67 points in the broader market. The S&P 500 had been at a fresh record high earlier, now down 6. The NASDAQ, though, rallying 50 points. Treasury yields are mixed, with the 10-year at 4.08%, 2-year at 3.54%. Gold slipping from its recent record high, and crude oil now at $60.61 the barrel. More evidence of a slowing job market. Layoffs fell in September, but companies' hiring plans stood at their lowest level since the Great Recession of 2009. That's according to data from the firm Challenger Gray and Christmas. Private data is now taking on new importance since government data, including tomorrow's monthly unemployment report, have been postponed during the government shutdown. Nvidia climbing to a new all-time high as investors continue to pile into the AI giant, and Tesla reporting a surprise increase in quarterly vehicle sales last quarter as U.S. consumers accelerated their EV purchases before that tax credit expired. Tesla down, though, about 3%. And McDonald's is embarking on a multi-billion-dollar global expansion to increase its store count and sales. The fast food giant aiming to open 50,000 new locations within the next 4 years. Shares of McDonald's up about 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Let's send it back to Balance of Power and Joe Matthew.
All right, Alexis, thanks. She'll be back at the top of the hour, 1 p.m. Eastern Time, with more on Wall Street. Alexis Christoforous watching the markets for us as we talk politics here with a breaker, at least a confirmation of reporting that we mentioned to you earlier, that they're going home this weekend. No voting today on Capitol Hill on this day 2 of the government shutdown because of the Jewish holiday. That's not a surprise. We knew that would be the case. They are back tomorrow. They're going to take 2 more swings, right? This will be, I guess, the 4th attempt here by the time we get done with the Republican and the Democratic versions. No, they've already done 4. That'll be 6. Either way, John Thune, just talking to reporters, says that they are going to go home to stew a little bit. If that fails, he says, we'll give them the weekend to think about it. We'll come back and we'll vote again on Monday, right? This is why we can't have nice things. You go home and think about what you've done, because everybody knows what Russ Vought is up to. The president saying it out loud today on Truth Social that indeed mass layoffs and steep budget cuts could be coming. Why mince words? He says he's meeting with Russ Vought today, he of Project 2025 fame, to determine which of the many Democrat agencies, most of which are a political scam, he recommends to be cut, knowing, of course, that Republicans not only helm those agencies but work in them. Speaker Mike Johnson asked about the vote effect when he met with reporters. He's actually here today. The House is not in session, but the Speaker was answering questions from the media earlier. Let's listen.
Russ has to sit down and decide, because he's in charge of that office, which policies, personnel, and which programs are essential and which are not. When he sits down as the director of OMB, he will obviously have a subjective determination on the priorities. And what do you think he would do? Because what would any OMB director do under any president? They're going to look to see for the administration's priorities first and ensure that those are funded.
The headline in the Washington Post this morning reads, senior government officials privately warn against firings during shutdown. The Trump administration, of course, telegraphing mass firings are coming, but Post says senior federal officials quietly counseling several agencies against firing employees while the government is shut down, warning the strategy may violate appropriations law. That, according to 2 people familiar with the matter, speaking, of course, on the condition of anonymity, because that's the only way news is made around here. This is not a concern for Mike Lee, Republican senator, on Fox News last night. It's going to harm them, he said. Russ Vought, the OMB director, has been dreaming about this moment, preparing for this moment since puberty. Russ Vought has a plan, he said. This is going to be Democrats' worst nightmare. Let's assemble our political panel and see where they're at on this. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, partner at Stone Court Capital. Today, joined by Democratic strategist Caitlin Legacki, Senior Fellow at Third Way. It's great to have you both with us here. Rick, is he right? Is Russ' vote going to be Democrats' worst nightmare?
I think he's been Democrats' worst nightmare. He authored Project 2025 at the Heritage Foundation during the campaign, and Democrats invested hundreds of millions of dollars of ads against that, talked about it at their convention extensively. They've waged a campaign on the ideas and the individual Russ vote. And I think that he is the target in this administration. He is taking center stage. He is more relevant today than Donald Trump is on this shutdown. That is both a good thing and a bad thing if you're a Republican. The good news is they're not attacking Donald Trump. The bad news is this guy could do serious damage. I mean, if you look at the things that he has talked about doing in Project 2025, the elimination of government agencies and functions, including things like Head Start, he starts ticking those off, Democrats are going to go insane.
And you wonder if voters will too. Caitlin, it's great to have you back as part of our conversation. Is Russ vote Democrats' worst nightmare, or the reason why Democrats will win the midterms?
I think it's a little of both. I mean, part of the challenge that Vote and Trump have to solve is that it's very easy to take this too far. Obviously, voters want to eliminate waste, fraud, and abuse from the government, but they also want to make sure that they're still receiving the essential services that they rely on, whether it's Head Start or SNAP or Medicaid. And so part of the issue is that a lot of the programs that Vote is eager to eliminate benefit significant numbers of Trump voters. And it's very foreseeable that he eliminates these programs, he gets to do what he wants, but then they alienate those voters for decades, because they are, this isn't a conversation about firing Washington bureaucrats. This is a conversation about eliminating essential services that real people rely on. And I think it's easy to couch this in a much more process-heavy, DC-focused story about eliminating bureaucrats. But when you eliminate the people that process the checks or schedule a kid's IEP, you make it much more difficult for American families to get by and to get the services that they rely on.
Rick, the Washington Post is telling us today that federal regulations governing reductions in force say that agencies can dismiss employees, to be clear, for one of several reasons, including a lack of work, a reorganization, or a shortage of funds. That has never been interpreted to refer to a temporary lapse of funding, though, because Congress couldn't get its job done in time. Will this all end up in court like everything else the president's been doing when it comes to the federal workforce?
Absolutely, and this administration welcomes that, right? They've got a lot of government lawyers on payroll over at DOJ and other agencies to litigate, and this is how they've conducted the administration's cutbacks throughout the term so far. And so I would anticipate that they will act first and litigate later. And we'll, if it follows the same trend, they'll win some, they'll lose some. The ones they lose, they go back and they reinstate employees, but not 100% of them, because some will have left the agencies for good. And those headlines aren't anywhere near as screaming as the headlines when they start riffing these employees and shutting down these programs. So they'll win on the public policy debate just by taking first action, regardless of whether or not the courts require them then to unfurl those actions.
Yeah, it's starting to sound familiar. Caitlin, regulations say employees must be given 60 days notice as well of their layoff. So we're pretty far from 60 days at this point. Do you take the administration at its word? The president today boasting on Truth Social that he's going to be meeting with Russ Vogt, that in itself, the meeting is sort of a threat. And he refers to him, this is interesting, he of Project 2025 fame. I got clawed back every time I mentioned Project 2025 during the campaign. The president said he wasn't even familiar with what it said, he hadn't read it, and that the campaign had nothing to do with what was coming out of the Heritage Foundation. Do we now know different?
I mean, I think many of us knew different at the time, but the Trump campaign was willing to outright lie to reporters and the public about what their plans were. I think part of the issue that we're going to find is what Rick said is exactly right, which is that the Trump people are willing to act first and litigate later. And I think too many Democrats are relying on the courts to save us from this when, as we have seen throughout the last 8 months, by the time the courts adjudicate these issues, it's a little bit too late to put Humpty Dumpty back together again. And so part of what Democrats have to do is change our way of thinking about how to address these attacks, but then also how to change the way we're thinking about what happens next the next time we have power or we're in charge. And I think that's really hard to do.
Rick, bring us inside the Senate. You understand the upper chamber and what makes it tick better than most. We heard earlier this hour from Jeanne Shaheen, because we can talk about a lot of bad stuff here, but there's always a few quiet ones that end up being a gang of 7 or a gang of 8. And it appears that gang may be forming here with the help of Shaheen and other moderates who are quietly talking. We saw them on the floor crossing the aisle, kind of whispering, talking in low tones about maybe getting together on some common ground and figuring out a way to get beyond this when it comes to Obamacare subsidies and so forth. Do you see that progressing through the weekend? Could we feel like we're in a different place next week? And is that partly why John Thune is sending everybody home?
I don't think that's why he's sending everybody home. I think that's, a bit of a tactic to just keep from having to take more irrelevant votes. And I'm shocked, frankly, having worked with John McCain over the Gang of 12 and the Gang of 8 and the Gang of 4. Yeah. I mean, like that in every one of those instances, those bipartisan groups were put together to stop these kinds of things from happening. They weren't done after the fact. They were done in anticipation of the fact. And in each of those instances, the reason they're even numbers is because there's an even number of Democrats and Republicans who would get together publicly, not behind the scenes in fear of their futures, and say, I want to work toward a solution. And I'm actually stunned that there has not been a more effort and energy put by leadership of both parties to try and find a group to do this. And it's happened in the near term. There were deals put together on immigration when no one thought they could be. And I think that will happen here. And there are plenty of Democrats. And the question is, who are the Republicans who will join them?
Do you see a failure in leadership in this sense as well, Caitlin? How come we didn't have a Gang of 8 4 weeks ago?
I don't view this as a failure of leadership. I think a lot of these groups often come together organically because members themselves are frustrated with leadership and their inability to iron this out at the leadership level. But I think when you look at people like Jeanne Shaheen, who is a very senior member of the caucus, she's been there for 3 terms now. And now that she's retiring, I think she's really, she's not the kind of person who had a lot of patience for politics previously. And now that she's retiring, she definitely doesn't have patience for politics for the sake of politics. So I'm hopeful, because she's leading the charge on the Democrat side, that we're going to be able to find our way out of this mess and make sure that we are able to protect the healthcare subsidies that are so critical. Without looking to score cheap political points, because, as a deal maker, she's a very substantive, serious person, and Republicans respect her for it. So I'm hopeful she'll be successful.
Less than a minute here, Rick. It is kind of amazing, right? You need to have retirees now, those who know they're not running for re-election. Is that the only way you get these negotiations going?
Well, we've seen the sun set on political courage a long time ago in the United States Senate. And so, yeah, I think that is the only way you're going to get that done. And that's why I mentioned, it's equally important to know who the Republicans are stepping up to have these conversations with her. Because Caitlin's right, it's probably not leadership, right? They're playing out their own, strategy. And so it's going to take rank and file Republicans who in a group can go to leadership and say, okay, we've got a deal we think we can work. We've worked out with some Democrats. They're going to work Schumer. We're going to work Thune and see whether or not we can actually get a legitimate vote.
Fascinating conversation. We've got a great panel today. I love coming into work and talking to these guys. Rick Davis, Caitlin Legacki will be back in our second hour as we seek solutions on another front. Geopolitical risk rising in Gaza again. If there's any further to go, we'll have more on that coming up in our second hour here on the fastest show in politics on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The government shutdown enters its second day with no signs of ending. Welcome to the Thursday edition of Balance of Power here on Bloomberg TV and radio as Congress observes the Jewish holiday and President Trump meets with his budget chief to talk about possible mass layoffs. I'm Joe Matthew alongside Tyler Kendall, who's in for Kaylee today in Washington. Tyler, it's likely the government will be closed straight through next week.
Right. I mean, it looks like we're barreling towards that, particularly as you had the House Speaker Mike Johnson earlier today saying, quote, I quite literally have nothing to negotiate, seeming to tamp down on what I heard as some cautious optimism, at least from some of the lawmakers that joined you last night on Capitol Hill.
That's true. There are talks happening in the background here, but actually getting to voting, getting leadership on board is a whole different prospect. And when I say through next week, I mean into next week. There's no voting today. There will be votes on CRs tomorrow. John Thune just told reporters they're going home for the weekend, Tyler, so we will likely wake up Monday with the government still closed.
And you're alluding to really the context behind all of this, which is that the pressure is starting to ramp up as we wait for some details from this call between President Trump and the OMB director, Russ Vought. Caroline Leavitt today saying that we could see permanent layoffs in the thousands.
Coming up, we're going to get a live update from Capitol Hill from Bloomberg's Eric Wasson, who's been knee-deep in this since before it started. And we'll spend some time with members of the House from both sides of the aisle. Congressman Joe Morelli, Democrat from New York, Congressman Brian Stile, the Republican from Wisconsin, will be part of our conversation alongside our great panel this hour. And it's all after a look at Wall Street. Alexis Christophorus has Wall Street covered for us. Her view on the markets from New York. Alexis?
Thanks, Joe. And investors are trying to look past the government shutdown now in its second day with seemingly no end in sight. We've got a mixed market right now with the Dow Industrials down 18 points. The S&P 500 was at a record earlier, now down just about 3. But the NASDAQ in record territory, up 58 points. Yields are mixed. We've got the 10-year yield at 4.08%, the 2-year at 3.54%. Gold stepping back from its recent record run, but WTI crude down nearly 2% now at $60.61 the barrel. Nvidia, though, surging to a fresh record high as investors' confidence in the AI boom continues. We've got shares of Nvidia now up better than 1%. And OpenAI was valued at $500 billion in a recent secondary share sale by current and former employees. That puts the ChatGPT creator ahead of Elon Musk's SpaceX as the most valuable privately held company. We've also got Warren Buffett's Berkshire Hathaway reaching a deal to buy Occidental Petroleum Chemicals business for about $10 billion in cash. Shares of Occidental now down about 8%. That's after rallying ahead of that news. And Morgan Stanley raising its Apple price target to $298 from $240, citing stronger sales for the new iPhone than originally thought. And we've got Yahoo reportedly in advanced talks to sell the legacy media brand AOL. Yep, it's still around, to the Italian tech company Bending Spoons for about $1.4 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorus. That's a Bloomberg Business Flash. Back to Joe Matthew and Tyler Kendall and Balance of Power.
Many thanks, Alexis. We'll have more on Wall Street with Alexis Christophorus coming up in about 20 minutes here as we track the bead on Capitol Hill. There's not much to track today. There are lawmakers in town. The leadership is here, but there are no votes on this Yom Kippur. They will resume tomorrow. John Thune suggesting that we'll get 2 votes again, one on the Republican version, another on the Democratic version. They did this yesterday. They both failed on this shutdown day. There are big questions, though, about what comes after the weekend and whether a deal will come together. The president's on the horn today with Russ Vought, as we've told you, talking about potential cuts in the meantime, whether or not they are permanent. And the Speaker of the House is in town, even though the House is out of session. He spoke earlier with reporters. Listen.
Don't ask the Republicans what we should be doing or what we should be negotiating. I don't have anything to negotiate. I sent them in good faith exactly what they had voted for before. We did not put any Republican provisions in that. And we tried to make this very simple, in good faith, so the appropriations process of the people can continue.
If we can't ask the Speaker of the House, then we'll ask Eric Wasson. Bloomberg congressional reporter is back on the Hill today as if he ever left. It's great to have you here. Eric, what's the mood up there? It's a quiet day, and I suspect one of reflection. Will it lead to any different outcomes tomorrow?
In the Senate, but they're not really around right now. We could see some back channeling. Mike Rounds is one of the Republicans, Shelley Moore Capito. These are people who are very interested in the Obamacare subsidies being extended. They're reaching out an olive branch saying maybe we can get some kind of process going, but they're also holding the line saying we can't insert these healthcare policy changes into the stopgap spending bill. And that's the line that Mike Johnson was just saying right there. But inflaming all this potentially are these mass layoffs that the Trump administration may start conducting, may start announcing. The White House spokesperson saying they could be in the thousands. There's a lot of legal questions about that, whether they could be carried out without violating appropriations laws. And so far, Democrats are digging in, saying, Republicans were going to try to do these layoffs anyhow. We're not going to be intimidated. So it could actually make it harder to get to a final deal because they don't want to seem to be bullied.
Eric, can you give us a sense on where leadership discussions are right now? Are counterparts talking to each other? Any idea on if there's going to be another White House meeting? Considering that we heard the Democratic leadership come out of the meeting earlier this week saying that President Trump's going to be the ultimate decision maker here.
Yeah, I don't see any sign of a White House meetings. There could be a meeting between Thune, the majority leader in the Senate, the Republican, and Chuck Schumer when he returns from the Yom Kippur holiday on Friday. We'll be staking that out, seeing if there's any kind of movement. One thing that I'm looking for, one potential solution, is Democrats getting some kind of commitment on an up or down vote on an ACA extension bill. Something stronger than just vague promises of a conversation later. But so far, the Speaker of the House is saying, yeah, we'll talk about this before the end of the year. Democrats say that's just not enough. Just pledging to talk in the future. They need something more. So there's ways to bridge that gap. Maybe an up or down vote on a bill by Jennifer Kiggans, one of the vulnerable House Republicans who's put forward a one-year extension or some version of that.
You put your finger on it there, Eric, as we heard a number of senators acknowledge your point last evening that guarantee, not of passage, but an up or down vote, bring it to the floor, might in fact be enough to get the gears turning again here. I just want to ask you while you're with us, Eric, because you've been very deliberate in your reporting on some of the talking points that we've heard. One of them from Republicans is that Democrats want to give health care to illegal aliens. This is something that's been batted around every day on cable news and in the halls of Congress and in the briefing room at the White House, where J.D. Vance yesterday, in fact, spoke to that, talked about how that was working when undocumented immigrants, for instance, show up at the emergency room for care. They're obviously not going to just bleed out, so somebody has to pay for that care. There are some other untruths, though, when it comes to people who are considered presently lawful, like those who are on TPS or in the DACA program. Are there some truths and untruths to this?
It's a really complicated issue. What we can definitely say for sure is that the president, when he says $1.4 trillion in the Democratic proposal for illegal alien health care, that's a complete exaggeration. It's a tiny fraction of that. The most solid thing they're standing on is this emergency services Medicaid match, which is reduced in the Republican tax bill. Some states do cover emergency services for the undocumented. This would reduce that from a 90% match to a lower rate. So in some ways you could say, because money is fungible at the state level, this is reducing potential health care for undocumented immigrants, and repealing that would cause an increase. The gray area really is around parolees and asylum seekers. These people do have documentation to be here. They were previously able to get Obamacare subsidies. The law bans that. Republicans continue to call these people illegal aliens, mostly referring to the way that they likely entered the country, but nonetheless, they did have papers, so Democrats are saying it's a lie. So it's kind of a mixed bag, but certainly we can say it's an exaggeration. And I think in the end of the day, Democrats are not insisting on this provision. It was in their offer, but the key thing for them is this Obamacare subsidies, which will see millions of people see their premium skyrocket, and that's where the deal lies.
I really appreciate you delineating that for us, Eric. Thank you for continuing your great reporting on the Hill. Eric Wasson, Bloomberg congressional reporter. Look for him on the terminal and, of course, online. That is just another reminder, Tyler, of, it's not often what you hear from the politicians, but there's frequently an element of truth to what they're talking about. Sometimes you have to do a little bit of digging, though, to see where it is.
Right, really important context there from our Eric Wasson. And I sort of feel like I'm almost having deja vu, because we're hearing a lot of the same conversations that we were having over the summer as we got closer to passing the one big, beautiful bill related to these provisions when it comes to Medicaid. But then also, importantly, the idea that the administration was trying to streamline bureaucracy, make these spending cuts that some in the House Freedom Caucus, for example, really wanted to see. This whole idea that we're seeing perhaps emerge from the OMB reminds me of the negotiations that we saw hardline conservatives having with the Senate over the summer.
That's true. If only we could get some negotiations started now. That seems to be the point. As Eric Wasson mentioned, the two leaders could, in fact, get together tomorrow if we, in fact, saw John Thune and Chuck Schumer in the same room, you would tend to think that maybe the ball is starting to roll again, because they haven't been together since that meeting in the Oval Office that not only ended poorly, but resulted in the meme videos that President Trump was sending out and so forth about Chuck Schumer and Hakeem Jeffries. There's been a lot of bad blood in this conversation.
It feels like we are really past the breaking point when it comes to trust. That is something that lawmakers on both sides of the aisle really do keep telling us. And there's pressure really coming from the White House on Republicans on multiple fronts when it comes to this issue, including, of course, threading the needle when it comes to potential permanent firings. That's something that we're going to be watching really closely.
We'll see. Maybe we get headlines on that today as the president speaks with Russ Vought. As we mentioned, this hour, we're going to be speaking with members from both sides of the aisle. A bit later, Congressman Brian Stile, the Republican from Wisconsin, and right now, Congressman Joe Morelli, the Democrat from New York's 25th District, is with us live from Capitol Hill. And Congressman Morelli, it's great to have you on Bloomberg TV and radio. I think this is your debut on Balance of Power, and we appreciate that very much. What are you doing in town? Everybody was, I thought, going to head out for Yom Kippur today. There does seem to be this element of wanting to be present on both sides of the aisle, for that matter, in case something happens. What's happening today for you on Capitol Hill?
Yeah, well, sadly, I'm going to be, not sadly that I'm going home, but I'm going to be going home in a little while. I had some meetings this morning I wanted to make sure that I was present for. So not much happening here, though. We were here in the House, and House Republicans didn't come back to Washington. So after a few days, it seemed prudent to go back and talk to folks who are going to be impacted by all of what's going on.
So, Congressman, can you give us any sort of inside view? Are there any negotiations happening right now behind closed doors? Are we any closer to solving this to get the government reopened?
Yeah, I don't think we're very much closer than we were the last day or two. I think what will happen is people will go home. They're going to talk to constituents. I think they're going to get a feel for how people feel impacted by that. And hopefully next week, our friends on the Republican side will recognize that if you want people to compromise, you have to sit down and find common ground. And we are very committed to the idea that the health care changes that have been made over the last several months, where nearly 20 million Americans will be either have no health insurance any longer, or will be paying double or triple what they're currently paying in premiums, is untenable. And we want our Republican friends to understand that destroying the healthcare system and, frankly, using that money instead to benefit literally the wealthiest of Americans isn't something that's in the interest of the American people.
You're, of course, on the Appropriations Committee, Congressman. If somehow there's a deal and we get a CR through Thanksgiving, roughly, would it be possible to come out of that period of just on spending bills looking something like regular order?
You know, Joe, it's a great question. I mean, I marvel at this. Unfortunately, Congress has rarely in the last 30 years been able to pass appropriation bills, which is the true spending plan. And instead, we have these continuing resolutions which kick the can down the road. Frankly, if I had my druthers, we'd be working on the 12 appropriation bills which fund the government full time. That's really what we ought to be focused on. And instead, we're here on a short-term spending plan that doesn't meet anyone's needs, and we get caught up. It's kind of the Washington inside the Beltway problem, and I think we need to address the structural long-term issues of getting spending plans done at the start of the fiscal year.
So in order to get that on track and ultimately reopen the government, I want to go back to what you were saying about Democrats holding firm when it comes to health care priorities. What specific enforcement mechanism are you looking for from the GOP in order to agree to a deal that would ultimately reopen the government and lead to those negotiations? Or does all this have to be sorted before that can happen?
Yeah, Tyler, it's a great question. I think there's two things that concern us. One is the actual cuts. I mean, the reconciliation bill basically jeopardizes 15 million Americans' health insurance. The bill before us right now that we're being asked would probably add another 4 million Americans to the rolls of the uninsured. So there is that issue and how we deal with it. Second is that the administration seems to do whatever it wants without regard to what Congress says. So Congress has the power of the purse. We talk about it all the time. Article 1 of the Constitution gives that authority to the Congress. But even when Congress appropriates with the president money in accordance with the law, the president has impounded money. He's done pocket rescissions. So the second part of it is once a real problem, not just for now, but that's a real problem going forward.
Well, I'm glad that you brought up the timeline there, because realistically, these are complex issues that need to be hammered out. What sort of timeline do you think that this could actually get done?
Well, look, I think when people of goodwill are committed to it, you can move mountains, and I think we need to do that. The problem is we're so far apart right now. And look, I don't even think this is Democrat values. These are American values. I think people back in our communities, they want us to fight for lower costs. And lower costs means lower health insurance premiums. It means being able to provide health care for your family, for your children. If something goes wrong, and by the way, whether you have health insurance or not, you're going to go to a hospital if you have a child who's sick. But what that does is it impacts the ability of hospitals to do their job well and puts them on the brink and sometimes of insolvency. So this isn't just a problem of people on Medicare or Medicaid or on the Affordable Care Act insurance plans. It really affects all Americans, and that's why we're so committed to this. But I do think if people of goodwill sit down, we can work this out, but you have to have the will to do it.
What's going on in your office, Congressman? Are you able to take constituent calls? Is your staff showing up without being paid?
They are showing up, and they're all essential in my mind. They do all the great work that we need to do. So we're working. We've talked to them about what to expect, but they're working hard, and they know how important this moment is. And I'm kind of anxious to be back in Rochester, to be at Wegmans or to be at the dry cleaner, and in addition to all the official meetings we have, of course, just to hear what people have to say and what their concerns are and what their fears are. This is an important moment. And look, we're going to have to figure out a way in this moment to bring people together in Congress and in the country. I am deathly afraid of what's happening in America, where people are picking sides before they even know the facts, just based on what they think their tribe has to say or their team has to say based on their political views. This is really, I think, a troubling point in American history. And I would look to the president. He has the opportunity to unify people, bring people together. But I don't think you can do it by demonizing people. I don't think you can do it by saying, I hate my enemies, I hate my opponents. That, in this moment, I just think that is such a divisive and, frankly, counterproductive position to take.
In the final minute we have with you, Congressman, you mentioned Rochester. You represent New York's 25th district. We have seen the White House pull some federal funding for projects in New York City. Are you concerned at all about the administration making similar moves in your district?
Yeah, look, he has canceled in the last 24 hours 223 projects across the United States. You know, 216 are in blue states, 7 are in states that he won. So, I mean, the president is really weaponizing this and using it as a way to go after both political enemies. He perceives adversaries. He uses the government in a way no president of any party has ever done before. And I think when Americans see that, that's not what we're about as Americans. We're about fair play. We're about trying to get together and making this thing work. And so I'm definitely concerned. I mean, the Second Avenue subway and other projects are on hold or have been canceled. So we got a lot of work to do.
All right, Democratic Congressman Joe Morelli represents New York's 25th district. Thanks so much for joining us here on Balance of Power. We'll have more up ahead. Our political panel is on their way in next. This is Bloomberg.
121 on Wall Street. I'm Alexis Christoforous, and Wall Street is basically unfazed by this government shutdown. We have got stocks mixed at the moment. The Dow Industrials, though, down modestly, off just 4 points. The S&P 500 about to get back into record territory, down just about 2.5 points now. The NASDAQ, though, in record territory on a gain of 59 points. Gold pulling back from its recent record rally, but we've got West Texas Intermediate crude down nearly 2% now at $60.62 the barrel. A blowout sales quarter for Tesla. The EV maker saw vehicle sales jump 7.4% worldwide as consumers rushed to buy up those EVs before the federal tax credit expired. Even so, shares of Tesla down 3 1/3% right now. McDonald's announcing a multi-billion-dollar global expansion to increase its store count and boost sales. The fast food giant planning to open 50,000 locations over the next 4 years. We've got shares of McDonald's barely budging on that news. And chip stocks having another great day. NVIDIA actually at a record high now, up better than 1%. And AMD, best performer in the S&P 500, up 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash.
Alexis, thank you. Great to have Alexis along for the ride today as we make our way through the Thursday edition of Balance of Power here on Bloomberg TV and Radio. I'm Joe Matthew alongside Tyler Kendall in Washington. Thanks for spending part of your day with us here. Tyler, we're not doing great with deadlines this week. We missed one a couple of days ago with the fiscal year. That's why this is day 2 of a government shutdown. And if we take the president at his word, this is also deadline day for Hamas. Remembering, you pointed out earlier, that was just on Monday when Benjamin Netanyahu was in town, which seems like a month ago at this point. But it was on that day that the president and the prime minister rolled out a 20-point peace plan. Remember, they promised a news conference and they took no questions on this. But in his remarks, President Trump said he would give Hamas 3 to 4 days to respond. This would be day 4 as the Israeli military tightens its siege now on Gaza City.
Right. This was the 4th in-person meeting between President Trump and Israeli Prime Minister Benjamin Netanyahu. High-stakes talks taking place behind the scenes at the White House. We got the details of this 20-point plan, including that it would include the immediate release of all remaining hostages, as well as the remains of those that died in captivity. And then we would see a gradual withdrawal of Israeli troops from Gaza.
It doesn't look like that's about to happen as the Israeli military issues warnings now that it will stop any Palestinians from returning to the north of the enclave, calling anyone who remains a militant and supporter of terror. We assemble our political panel for their take on all of this. Bloomberg Politics contributor Rick Davis is with us, partner at Stone Court Capital, Republican strategist, alongside Democratic strategist Caitlin Legacki, senior fellow at Third Way. Rick, is this peace plan already in the past? Or should we not be surprised that Israel is not wasting time to move further into Gaza City?
Yeah, I think Israel's attitude, and probably rightly so, is that until at which point in time they get a signature from Hamas on this deal, they don't have a deal. And in the meantime, he's going to continue to prosecute every effort he can to destroy and rid Gaza of Hamas. And so this shouldn't surprise anybody. It's pretty much been his attitude on all previous ceasefires and peace plans. Hamas has not taken the opportunity to get the high ground and say, yeah, we're actually willing to stop fighting. We're actually willing to release hostages. And we still don't know if they're going to. I mean, I believe Donald Trump on Tuesday gave Hamas 72 hours to respond. I guess we're getting toward the end of that. And so we'll see. But I think really the ball is still in Hamas's court to make this happen. All these other Arab countries, 8 different countries, all with majority Muslim and Arab communities, citizens, have put on pressure for Hamas to act. And I think this is just Israel's way of continuing the pressure campaign.
Well, actually, I'm really glad that you brought that up, Rick, because, Caitlin, we have this great story out on the Bloomberg terminal today that says that Hamas is being pressed by Arab and Muslim states to accept President Trump's Gaza plan. Can you talk to us about how we've seen the administration leverage partnerships in the region? What has that meant to this White House's foreign policy goals when it comes to ending this war?
Yeah, I mean, I think it is an extension of the same kind of thing that the Biden administration tried to do, which is that We know that those other countries in the region are trusted partners. They are clearly invested in the Palestinian people and making sure that they have a chance to survive. And so it does create a little bit of a healthy tension in that they are trusted messengers on these issues about what is good for the Palestinians, what is good for Muslims throughout the world. And so I think it's a smart thing for the Trump administration to do. I think it is the best possible course to get something resolved. But as Rick said, until Hamas agrees to this, we're in a little bit of a stalemate.
You know, the plan was endorsed after this was released Monday night, Rick, by the foreign ministers of Saudi Arabia, Jordan, UAE, Indonesia, Pakistan, Turkey, Qatar, and Egypt. Does regional pressure mean anything at this point with what's left of Hamas?
Absolutely. Really, the one name that's not on there is Iran. That's probably the most influential. We don't know where their heads are as far as wanting to see peace in this part of the region. But at the end of the day, this group has been funding the Palestinian governments in the West Bank and in Gaza for decades. They are the financial muscle that has kept these folks politically above water financially. And so they have a lot of influence within the Arab community, but also in the finances of the Palestinian Authority and even Hamas. We remember only a few years ago a lot of U.S. outcry on Qatar for having funded Hamas, a terrorist organization. You know, these are people with deep-seated relationships in that community. And the fact that they're all acting in concert is a first, and that does warrant a lot of attention by everybody in that region.
Caitlin, I'm wondering what you make of the negotiating coalition that we've seen come together that ultimately helped to craft this plan, including U.S. Special Envoy Steve Witkoff, the president's son-in-law Jared Kushner, but also the former U.K. Prime Minister Tony Blair. There's a lot of different players here, and I'm curious your thoughts on how this administration has approached this plan leading up to today.
Yeah, I mean, you know, the one place where I think this administration it really excels among others is their willingness to get to yes on a deal is pretty unprecedented. I think previous administrations would have found process reasons or ideological reasons to not move forward with the broad cast of characters that we see here. But I also think it speaks to the extent to which everyone, regardless of which side of this issue they're on, thinks it has gone too far. And so I'm hopeful that it represents a coalition of responsible adults who are eager to put an end to this, because what is happening is horrifying. It's a humanitarian disaster, but it's a geopolitical problem. And, I think the fact that Witkoff is able to get all of those people in a room and look for ways to get to yes is a huge benefit. Whether we actually find a way to get to yes on this deal obviously remains to be seen, but I think it's important that they're willing to just hash it out and look for a solution that ends the violence, because it has really gone too far.
Does the government shutdown mean anything to all of this, Rick? When we're talking geopolitics, our intelligence apparatus, our national security apparatus, all considered essential. Are there other elements that we should be considering?
I would say humanitarian activity maybe takes a step back, but there's limits to what they can do today anyway. So I think that for the purposes of this exercise, trying to bring peace to Gaza, it probably isn't a factor. Probably doesn't weigh heavily on any of the principles trying to execute on this plan. So I don't think the government shutdown is much. I do think it's a distraction, right? We left last week, at the beginning of this week, it was all about an amazing visit by Bibi Netanyahu to the Oval Office, getting on the phone with the Qatari emir, apologizing for having attacked the country. There are many who think that attack spurred on September 5th a reaction that has brought us to this unification of the Arab states in support of getting a deal done. So, I mean, like, this is what we would be talking about if there were not a government shutdown. And so it does take some of the oxygen out of the room.
Well, Caitlin, I do want to stick on the shutdown and talk about some of the actual potential policy we might see out of it. We know that the longest shutdown was 2018, 34 days. Have we ever seen shutdowns used as negotiating tactics to actually get tangible policy out once the government reopens?
No. Typically, it is not a good lever to pull to achieve policy outcomes. I think what's unique here is that with Republicans in a unified government, there are so few opportunities that the Democrats have to negotiate for important provisions like the Obamacare subsidies that they really have to take this. And I think the good news is that Democrats are not gleeful about this shutdown the way that I think, historically, when you saw the Republicans shutting down the government over Obamacare, defunding, Democrats have a very clear objective. They have a very clear request. They are taking a posture that we want to get to yes on a deal, and this is what it's going to take. And I think it helps their case that at the exact same time this is happening, millions of Americans are getting notifications that their healthcare costs are going to double or triple. And so as we see more of that, it is only going to strengthen the hand that Democrats have to play. And frankly, they're increasingly in a position to say to Republicans, help us help you, because if these costs triple, we're going to make sure that every single voter knows who was in charge of the government when that happened.
Rick, Jean Shaheen made the point, as we discussed yesterday, that we're actually closer than a lot of people are making this out to be, that in many cases, Republicans want to see a deal for these Obamacare subsidies. In our remaining moment in change here, I just wonder where your gut is at this point and what it's going to feel like by the middle of next week when we're talking about a week-long shutdown. Staffers aren't getting paid. Doesn't that bring everybody to the table?
Yeah, probably not. Look, we saw one of these go 35, 34 days in Trump's first term. Look, let's not kid ourselves. This is going to revolve around Donald Trump's interest in getting a deal. He's calling the shots in Congress. He has an agenda in the White House driven by Russ Vought, who wants to accomplish certain things in the reduction in the scale and size of the federal government. If they think they can survive politically in this process, they'll continue this shutdown till they accomplish their goals. And only then, I think, will they give permission to the GOP leadership to end it.
All right. Our political panel today, Rick Davis and Caitlin Legacki. Thank you both so much for joining us here. And stick with us, because after the break, we'll have a conversation with Republican Congressman Brian Stile of Wisconsin. You won't want to miss it. This is Bloomberg.
It is 1:40 on Wall Street. I'm Alexis Christoforous, and stocks, the major indexes, back in the green now as investors look past the first government shutdown in 7 years with no end in sight. The Dow Jones Industrial Average now on the plus side by 33 points. The S&P 500 at a fresh record high on a gain of just a point at 67.12. We've got the NASDAQ Composite also in record territory on a gain of 74. Gold pulling back from its recent record rally at $38.43 the ounce. NVIDIA climbing to a new all-time high on a gain here of about 1% as investors continue to pile into the AI trade. Shares of credit reporting companies TransUnion and Equifax coming under pressure after Fair Isaac Corporation announced a new program giving mortgage lenders the option to calculate and distribute FICO scores directly to customers. We've got shares of FICO rallying 23% on that news. And Yahoo is reportedly in advanced talks to sell AOL to an Italian technology company called Bending Spoons for about $1.4 billion. This is as Apollo Management looks to shed one of the most recognizable names of the early internet era. For on-demand 24-hour news, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Now back to Joe Matthew and Tyler Kendall and the Balance of Power.
Alexis, many thanks. Alexis will have more on Wall Street coming up at the top of the hour, 2 p.m. East Coast time as we get into Bloomberg Business Week Daily. We're still in Washington talking politics. For those who are still here, it's day 2 of a government shutdown and no voting, as we've told you today, on Capitol Hill because of the Jewish holiday. Lawmakers, in some cases, are still in town. We spoke with one a short time ago, in fact. The gentleman from New York, Congressman Morelli, bringing us the Democratic point of view on this day 2. We do expect more voting tomorrow and the same result, reminding us that both parties are still pretty far apart. Here's the congressman from earlier this hour.
I don't think we're very much closer than we were the last day or two. I think what will happen is people will go home. They're going to talk to constituents. I think they're going to get a feel for how people feel impacted by that. And hopefully next week, our friends on the Republican side will recognize that if you want people to compromise, you have to sit down and find common ground. And we are very committed to the idea that the health care changes that have been made over the last several months, where nearly 20 million Americans will be either have no health insurance any longer or will be paying double or triple what they're currently paying in premiums, is untenable.
Congressman Joe Morelli speaking to us earlier this hour on Balance of Power. But now for the view from the other side of the aisle, we're joined by Republican Congressman Brian Stile. He represents Wisconsin's 1st District. Congressman, it's good to see you, and thanks so much for joining. So you just heard from your Democratic colleague saying that there's really not much movement. What's your take here? Take us inside these negotiations. Is there anything that we can glean that would be fruitful towards opening up the government?
Well, the fact that we're here in the first place is absolutely ridiculous. The spending process in Washington is absolutely broken. I actually carry legislation that would end all federal government shutdowns and remove the partisan brinksmanship that we have seen in Washington time and again for decades. The fact that Republicans put forward a clean CR, meaning adding no additional policy, simply funding the government for a stopgap period of time for 7 weeks, it was only a radical position by those on the left that are rejecting that. That would give us the window to actually negotiate out fiscal 26 spending as well as other policy priorities that members have. And so what we should do is cooler heads hopefully do prevail as many folks are home on the Jewish holiday today or over the weekend. And we come back and we see the Senate have the courage to reopen the government, allowing us that period of time to finish negotiations on fiscal year 26 appropriations, as well as other policy priorities.
Thanks for coming on to see us, Congressman. I think you're referring to the Eliminate Shutdowns Act, and we just, in the last 24 hours, talked to Dusty Johnson and Senator Ron Johnson. They both helped to craft this piece of legislation. It would basically do what the title says. Anytime we had a lapse in funding, it would trigger, I believe it's a 14-day continuing resolution. So it would end shutdowns as we know it. What would compel lawmakers to make a deal if there was never a deadline?
Well, I view this as actually, I call it the Wisconsin idea. It's exactly the underlying law here in the state of Wisconsin, where it's a hyper-partisan environment with divided government. The difference is we don't shut down. Why? Because we actually have this law in the state of Wisconsin. We have what is effectively an automatic continuing resolution, which forces the parties to come to the table to better negotiate how to spend taxpayer dollars. And if we actually look at what's been going on since the current process has been in place since 1974, it can't get worse. And so this would simply just remove the brinksmanship from being part of the negotiations. Things would go in fund at the current levels that they are going forward until a new appropriations law would be put in place. I think it would dramatically improve the process in Washington and allow us to actually go through and determine whether or not there's waste, fraud, and abuse in programs, remove those programs, and then identify what the priorities are and spend on those priorities. The entire spending process is broken, and I think the most significant change we could make would be putting in place this legislation that would end these federal government shutdowns, which are just wildly unproductive for everyone.
Well, you perhaps alluded to there the idea of streamlining bureaucracy and perhaps adding a little bit of pressure to this round of the negotiations around keeping the government opened, now reopened. Perhaps is the idea the threat of permanent layoffs. And I'm wondering what you make of this. President Trump set to have this meeting today with the OMB director, Russ Vought. Is this a negotiating tactic for the administration, or is this part of something bigger?
Well, I think there's always an opportunity to look about how we root out waste, fraud, and abuse inside the giant federal bureaucracy. I'd rather do that through the legislative process while the federal government is open and operational. Frustratingly, while Republicans passed the 7-week stopgap measure to allow us to continue the negotiations, Democrats, led by Chuck Schumer in the Senate, have rejected that overture. And so this is really our opportunity to pass that legislation in the Senate, reopen the government for the seven-week gap period, and avoid all the ramifications that a shutdown has across the board. Would be far better off to have the federal government open rather than closed as it currently is.
Milwaukee Journal-Sentinel says you have about 18,000 federal workers in Wisconsin. Do you consider them all essential, Congressman?
The federal government should have no one that's not essential, right? And that's a broad understanding. There's a technical term as to what that means inside a federal bureaucracy. But this is about getting the federal government open and operational to do the people's work. Yes, we should always be working to root out waste, fraud, and abuse, but there's also incredibly essential roles that the federal government plays, some of them more urgently essential than others. So it could be as simple as processing a passport. Many of those offices are now closed, but it could be as essential as the United States military, which is open, although the next paycheck for our service members is at risk if Chuck Schumer and Democrats in the Senate continue to refuse to reopen the government. And so we only want essential workers in our federal government, but at a period of time when funding has lapsed, the federal government is making decisions about who is and who is not coming to work at this period of time.
I do want to stick on the labor market because tomorrow the Bureau of Labor Statistics is going to delay what was expected to be the September jobs report. This, of course, is considered to be a leading indicator for the health of the jobs market. CNN is reporting that Senator Elizabeth Warren is calling for the BLS jobs data to be released despite the shutdown. Do you think that data collection should be deemed essential amid a closed government?
Well, again, the easy answer is reopen the government and let the federal government operate as it is intended to be operating. And so the fact that Chuck Schumer and Democrats in the Senate shut the government down and didn't simply fund the government for the 7-week stopgap period of time creates all these challenges and problems. The OMB, Russ Vought, and others in the administration are making really tough decisions about how to operate at a period of time when funding has lapsed as a result of Chuck Schumer and Democrats in the Senate. The easy answer to all of this is to pass the stopgap measure, give us that 7 weeks of breathing room to finish the negotiations on fiscal year 26 appropriations and other policy priorities.
When you consider those tough decisions that Russ Vought is making, Congressman, I was struck by the words of Senator Mike Lee last evening on Fox. He said, Russ Vought has been dreaming about this moment, preparing for this moment since puberty. This is going to be the Democrats' worst nightmare. What's motivating him right now? Balancing the books or firing as many workers or eliminating agencies as he can in this period of time?
Well, I've known Russ Vought for a number of years. He is a strong fiscal conservative and a good man. I think the broader point here is many of us on the conservative side do believe that there is bloat inside the federal government, that there's programs that should not be prioritized as they are. That said, I'm of the belief that the best way to root this out is through the traditional legislative process of the appropriations committees doing their job and weeding out the waste, fraud, and abuse that does exist inside the federal government. To allow that to occur, what we need to do is to reopen the government. When we close the government, as the Democrats did by failing to vote for this seven-week stopgap measure, they significantly empowered the administration to make determinations as to what is and what is not essential. Again, if people have concerns with that, the easy answer is to reopen the government and allow Congress and elected leaders to engage appropriately in that debate.
Congressman, could you give us a sense of what other priorities might be on the chopping block here? For example, we saw in a post on X yesterday, Vought saying that they're going to pull some funding, federal funds, from clean energy projects in states that ultimately didn't vote for President Trump during the 2024 election.
Well, the challenge that any administration has faced in a period of time of a shutdown is making determinations about what is and what is not essential, and what funds in different programs are available. I'll tell you, I'm most concerned about making sure our troops, our men and women in uniform, who are often stationed in dangerous locations around the globe, receive a paycheck when their pay is due, most likely for many of them on the 15th, coming up in less than 2 weeks. And so all of these decisions are being made by the administration. I'm of the belief that let's turn the spigot back on. Let's reopen the federal government. Let's end the brinksmanship. Let cooler heads prevail and avoid the process of exactly what's going on right now, where the administration is in a very difficult position of making decisions about how to utilize the remaining funds that are available. The answer to all of this is pretty simple. End the brinksmanship, pass the clean CR that the House has already passed, reopen the government, and get on with the work and the negotiations that do need to occur between now and the end of the year.
Of course, we should remind everybody you are chairman of the House Admin Committee, Congressman. That gives you a certain purview over elements of the federal government, including the Smithsonian. As I understand it, the Smithsonian last evening said government shutting down, it does have prior year funds to remain open until at least October 6th. I don't know if you have any further insights on that, but do tourists need to worry about their plans to travel to Washington, the school field trips and so forth?
Yeah, everybody is hurt when the federal government's closed. It's why I'm so darn frustrated about what took place in the United States Senate when Chuck Schumer led his colleagues to vote against this 7-week clean CR. And so as funds expire and are drawn down to zero, many of these agencies of the federal government are forced to close. And whether or not the Smithsonian closes on any specific day, I can tell you that a whole host of important federal government functions can't operate without an ongoing appropriations from Congress. And so people are being hurt. It's darn frustrating. And those of us that are actually trying to do the job of legislating and moving this country forward are just incredibly frustrated with the position that Chuck Schumer and Democrats in the Senate have taken by rejecting a clean CR that is simply saying, let's just continue the funding as we have it while we complete these negotiations.
Congressman, just in the last 30 seconds, we have you to pick up on Joe's point. In all seriousness, we've actually seen some outrage about what could potentially be the shutdown of the panda cams at the National Zoo. I'm wondering if you have any sort of assurances to Americans that are looking at this, because they actually were shut down during the last government shutdown.
Yeah, you know, it's all sorts of programs that people realize the federal government is involved in. I have no knowledge of panda cams or anything else that's sometimes playing out online, but I can tell you that people are impacted in small ways. Maybe it is by the panda cams, but I can tell you my focus is on what I would view as the big ways. And there is, to me, nothing more important than making sure that our men and women in uniform are paid while they're out sacrificing and risking their lives on our behalf for our freedoms and liberties. There's nothing to me more important than that. But there are so many essential programs that have been put at jeopardy by Democrats in the Senate.
He did not take the opportunity to say that Chuck Schumer hates the pandas. Congressman, it's great to have you back. Brian Stile, Republican from Wisconsin. Maybe we'll be back open next time we speak. We'll meet you for the late edition of Balance of Power. Starts 5 p.m. Eastern, only here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. I'm Carol Masser, along with Tim Stenivek. And yeah, it's Jobs Report Eve. Wait, it's not, is it?
No, I don't think it's going to happen. Government shutdown entering day 2, Carol. And yeah, we are seeing some movement in the markets as a result of some data that we're getting, but it is not government data that we're getting because that government shutdown not helping us in that regard.
Yeah, and the rally was running out of steam, but now we're off our lows. There's a lot going on. All right, so ahead this hour, what are we going to tackle? President Trump is weighing slashing thousands of federal jobs. It's a key topic for a meeting with his budget director, Russell Vought, on the U.S. labor market. As Tim mentioned, we're going to talk about some of that private market data. We're going to talk about the U.S. economy, Fed policy. We'll do that with our own Michael McKee and Nikki Lanier. She's formerly of the St. Louis Fed, so we'll have a deep roundtable on all of that.
And strap in because we are blasting off with the president of the space telecom company, AST Space Mobile, taking on Elon Musk and SpaceX, and the stock has been on a tear.
Unbelievable, the run-up that we've seen this week. And the Conformable Decoders Research Group at the MIT Media Lab. If you feel kind of stupid because you don't know what it is, join the crowd, because we weren't either. But we did a deep dive. It's on a mission, a long-term mission, to shape the minds of young people who will drive the future. Why you should care. We're going to get into that in the next 60 minutes.
All that and more coming up in the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Here she is, Alexis Christoforous, in for Charlie Pellet. Hey, Alexis.
Thanks, guys. Yeah, it is day 2 of this government shutdown, and you know what? Stocks are rallying to records. We've got the Dow up 82 points right now, the S&P at a fresh all-time high on a gain of 4. NASDAQ also in record territory, climbing 77. Treasury yields are mixed. We've got the yield on the 10-year at 4.08%, while the 2-year is at 3.54%. Gold taking a breather from that recent record run, but we've got West Texas Intermediate crude down for the 4th consecutive day at $60.45 the barrel. Tesla reported a surprise increase in sales in the 3rd quarter as the electric car maker likely benefited from a rush by consumers to take advantage of that tax credit before it expired. Even so, shares of Tesla now down 4%. And McDonald's is embarking on a multi-billion-dollar global expansion to increase its store count by 50,000 locations over the next 4 years. It's also trying to be within a 5-minute drive from as many people as possible. Shares of McDonald's up 0.4%. And chip stocks on a tear once again. NVIDIA at a record high on a gain of nearly 1%. AMD and Broadcom along for the ride. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Over to Carol and Tim.
All right, Alexis, thank you so much. She has set us up for, what do we have, about 2 hours to go until the closing bell. A lot coming at investors once again. Hey, one of the things we wanted to get into is what we've heard from D.C. and the White House. President Trump said to be weighing cutting thousands of federal jobs ahead of that meeting that he is having with his budget director, Russell Vought. This is as the White House looks to really ratchet up pressure on Democrats to end a government shutdown that has entered its 2nd day. Meantime, we got another read on the U.S. employment picture from the private sector. Timmy had U.S. employers dialing back hiring plans in the month of September. They announced fewer job cuts, according to data from outplacement firm Challenger Gray and Crispin. We're getting a lot of data points, but we're not getting government ones this week.
With the latest on the U.S. economic picture, back with us is Bloomberg radio and TV international economics and policy correspondent Michael McKee. He joins us here in the Bloomberg Business Week studio. Let's talk about the Challenger Gray and Christmas data. There have been a couple different narratives. There's low hire, low fire environment, and then we've also heard about a no hire, no fire environment. Is that what we're in?
Yeah, I don't think you can even discern the difference between the two at this point. When you figure your starting point is there are 170 million jobs in the United States. So if you're talking about even 100,000 jobs, companies last month announced plans, according to Challenger Gray and Christmas, to add 117,000 jobs. Now, that's worldwide. That's not just in the United States. So it's really hard to figure out the impact of all this stuff. I think that when you look at the Challenger data, and we don't usually consider it a frontier level
I was thinking the same thing. Like yesterday we're talking ADP, today we're talking Challenger Gray and Christmas.
Welcome to the new world order.
The problem with Challenger is that it is A, worldwide, and B, it doesn't account for time periods. So when companies say they're going to release people, how long is that going to take? How many of them might be moved into other jobs? How much is attrition versus firing? So it isn't an easy read to say this is going to happen because they said that. but you can sort of take trends from it. When you see a big increase, as we did earlier in the summer, of layoffs, you get an impression that, people are cutting back. And we saw that when all the tech companies were cutting a year ago.
Yeah.
Now they're saying that the plans to add jobs is the weakest September hiring intentions since 2011. And they say that companies are at the low end of estimates for hiring people for the holiday season. So you could probably say those are relatively accurate observations of the labor situation at the moment.
Did you see, and forgive me if I mispronounce, Revelio Labs? They had some data out today. It showed employment increased about 60,000 in September, an improvement from a month earlier. Again, strange times. We would never normally probably talk about this.
Well, they're new anyway, so
Okay.
we're just getting used to their data. We haven't got a lot to benchmark it with it. But the overall, the 60,000 jobs they say were likely added in September is within the scope of what economists were thinking in terms of the non-farm payrolls. They say 57,000 in private sector jobs. Again, that's sort of in line with what was expected. So you can take that for what it's worth. We'll see how close they came when we finally do get the data. And if it turns out to be a very reliable indicator, then of course everybody's going to start following that.
Mike, Carol, go ahead, Carol.
No, go, please.
So I wanted to go with what Carol mentioned about the federal workers and the president's meeting with Russell Vought of OMB, Project 2025. We know how Russell Vought thinks about federal employees, and increasingly the president making it clear that during a shutdown, this could be an opportunity to actually fire thousands of federal employees. What do you think is the economic impact of that, or could it be?
Well, it could have an economic impact depending on how, let me put it this way, it will have an economic macro impact on the country depending on how many people are fired. Obviously, has a big economic impact on any particular person who loses their job.
Yes.
I think one starting place for thinking about any of this is that the president can get rid of federal workers any time if he follows the proper procedures in the Administrative Procedures Act. So this is really just an excuse, using the shutdown as an excuse to fire people. They chopped thousands of people from the federal payrolls, the Doge people did, and that wasn't during a shutdown. So, I wouldn't take the here's an opportunity thing. Yeah, it's an opportunity for PR, but it's not a reason why they have to cut people. It's not the shutdown is requiring them to cut anybody. Then it just depends on who's cut and where they're cut. The state with the most number of federal employees is California, and so if you cut all the people in California, you're going to have a big impact there, but maybe less of an impact than you would have in Maryland or Virginia, which are third and second on the list and are concentrated right around the Washington, D.C. area. Obviously, a big reduction in force there would have a big impact on the local economies.
We should point out that the president did put out a social media post earlier today saying, I have a meeting today with Russ Vought, he of Project 2025 fame, to determine which of the many Democrat agencies, most of which are a political scam, he recommends to be cut, and whether or not those cuts will be temporary or permanent. He goes on to say, I can't believe the radical left Democrats gave me this unprecedented opportunity. They are not stupid people, so maybe this is their way of wanting to quietly and quickly make America great again. And of course, signed by the president.
Just one thing that struck me about this post, Mike, was the way that during the campaign, if we were talking a year ago, the president, before he was elected for this term, really distanced himself from Project 2025.
I don't know anything about it. I'm not going to do any of that.
They delayed the publication of the book that had the foreword by Russell. That's completely, he's embraced it.
I think the president's relationship with the truth is something everybody realizes is not very tight. So you kind of have to take that into consideration. And then all of the florid language that Carol was reading, that's the way he talks. And so it's really a question for economics of what is the actual impact going to be. And for that, as I said, we need to know who's being cut and where they're being cut.
We want to bring someone in. One last question to you, and then you're going to join us in this roundtable. But when you always remind us 1 month's report and so on and so forth. At this point, we look at the trend line, and I pulled up non-farm payrolls. Of course, we are not expecting a read tomorrow, but the trend line has been for lower and lower job creation.
Yes, if you look at the other indicators that have come out this week, the ISM manufacturing report's still under 50, suggesting contraction or very low hiring. The ADP report, which obviously got a lot of people's attention, suggesting low hiring. And then when you look at the Conference Board's consumer confidence numbers about job availability, they are the lowest since 2021. So people are absorbing the idea that it isn't a great labor market right now.
We certainly hear that for college grads and others. Mike's going to stay with us. Let's bring in Nikki Lanier. She's former St. Louis Fed Senior Vice President. She is now CEO of Harper Slade. They're a racially equity advisory firm that emphasizes inclusive leadership, but she also, of course, keeps a close watch on what's going on at the Fed and the global economy and the U.S. economy for those folks that she advises. Nikki, how challenged is the U.S. economy in your view? And what do you hear from the mayors, the governors, the Fed members, Fed presidents, and business members or business leaders that you talk to? What are their concerns about the U.S. economy?
Oh my gosh, there's just so many. There's so many concerns. I'm hearing this overwhelmed, the sense of being overwhelmed, this theme of feeling as though the sky is falling, the elusive exhale that seems to have been in place since the beginning of January, since the beginning of this regime. And, you know, markets, businesses, governments, both local and otherwise, households have come to find respite on some level, in some level of stability and predictability ushered in by the United States government. And to the extent that this regime seems to be entirely focused on the injection of chaos as the standard bearer for their ethos, for their decision making, it is de facto disruptive, not just to the economy, but to hearts and minds and to feelings and the fundamental understanding of how government ought work. And so it just feels like a really untenable time for people to make decisions about anything, given the flooded realities of kind of the uncertainty that seems to be unrelenting.
And yet, Nikki, and I want to make sure, you know, you cover and focus on the macroeconomic environment and you understand the economy, but we can't ignore markets here. You say all that, yet we see equity markets at record highs and optimism when it comes to how CEOs of companies are feeling about the environment right now. How do you explain that?
Yeah, so I mean, there's all kinds of opportunities where we have seen my days with the Fed, where we see what feels like conflicting data. And so we are 2 days into this shutdown and however many months into this administration. And sometimes the economic realities are a little bit slower to catch up to economic sentiment. And I think that might be what we're seeing here. There are real consequences to the choices that are being made from Washington, D.C. And sometimes those consequences feel more acute. They feel more localized before they are metastasized and felt in reverberating ways across the United States and across markets as a whole. But I don't believe with any fiber of my being that we will remain unscathed as a competitive marketplace, given the posture and the priorities of this administration.
Well, let me ask you who you think is being scathed at the moment. Are we seeing the kind of traditional first in, first out kind of economy here where people at the lower end of the income scale are already starting to suffer, but maybe it doesn't show up as much because what they spend is so much lower than what the upper half spends?
I think that's true. I think that's right. It's harder to see that manifest in the data in what is relatively a short term into the administration's tenure. But yes, I mean, I think that's absolutely right. I think the acuity will always be and has always been felt by those who have the least and those who are oftentimes have less accessibility to some of the stabilizing frameworks that the country has put in place to ensure, you know, economic resiliency and sustenance. I think it's going to be some time before we actually see how this plays out, but most certainly bearing the brunt of the decision making that's coming from our president and coming from the White House are the most vulnerable citizens, certainly minorities, citizens, and people who are in need of services and who've become very reliant on the stability of the government for the same.
Nikki, what I want to ask you then, so because there are those that feel the economic pressure more here now and aren't maybe reflected in a record stock market, the so-called K-shaped, economy or recovery that we saw coming off of COVID, how might that lead to a Fed policy misstep, meaning maybe being more helpful to those who are struggling more, but maybe that's not the right thing, maybe paying more attention to the other side, but then that hurts those who are less fortunate economically?
Yeah, if I might, Carol, just kind of add to what adds complexity to what you're asking is the absence of the data that the Fed has become reliant upon. So data problem is huge, both at macro and micro levels at this point. And the reliability of that data is de facto compromising to the way that the Fed can consume the information that it needs for purposes of meaningful and material deliberations around policymaking. And so one of the things that I think the Fed has been attuned to, at least when I was there a couple of years ago, is really thinking about the costs of inequity at macroeconomic levels versus the microeconomic levels. We know that there's some real demographic realities that are in front of us that are changing the landscape, if you will, of who is available to work, who's available to buy and spend and invest and save, who's available to purchase homes, who's available to attain higher education. That is ever more increasingly more women and more Blacker and browner citizens. And that's a reality that our monetary policy frameworks and economic studies have just not necessarily been able to contemplate in years past. But we'll most certainly need to do so now. And so I think that we're just seeing that compounded with the realities of what's coming out of DC policymaking that just makes this extraordinarily daunting to unpack.
You say that the policymakers are going to have to take this into account. That was part of their monetary policy framework for the last couple of years, and now they've dropped it in part because they're getting a lot of pressure from the politicians who say that the socioeconomic part of this is not the Fed's job, it's the Fed's job just to keep prices in line. So how do they go about that?
And just got about 30 seconds here, Nikki.
Okay. Yeah, so it's a complex issue. So I think that the Fed has struggling with whether it is a socioeconomic issue alone versus a macroeconomic issue that will at some point impact how the entire economy is able to sustain itself, given the need for us to rely on the population that we have. We have to be able to activate the full human capital construct in order to run our country. And if there are encumbrances in our ability to do that, that becomes a macroeconomic issue that the Fed has to pay attention to.
Good to discuss, considering we focus so much on the kind of day-to-day headline, and there are bigger macro issues at play. Nikki, thank you so much. Nikki Lanier, former St. Louis Fed Senior VP, now CEO of Harper Slade, and of course, always our thanks to Bloomberg TV, international economics and policy correspondent and radio, Michael McKee. Coming up, the other space race and how to compete against Elon's Starlink. That's next.
It's 2:21 on Wall Street. I'm Alexis Christoforous. Stock market is staring down day 2 of a government shutdown and rallying to record highs. The Dow Jones Industrial Average at its best level of the session now, up 127 points. The S&P 500 gaining nearly 10 at a record high, I might add. The NASDAQ Composite also in record territory on a gain of 91 points. NASDAQ 100 also rallying to a fresh high. Gold pulling back from that recent run, though, and we have got WTI crude lower for the 4th straight day. It's official. Warren Buffett's Berkshire Hathaway has reached a deal to buy Occidental Petroleum's chemical business. It's a $9.7 billion all-cash deal. It's expected to close in the 4th quarter. Shares of Occidental Petroleum, though, under pressure, down more than 7% after rallying ahead of this announcement. And the maker of the Jeep Wrangler and Ram pickup truck, Stellantis, reporting a 6% jump in U.S. sales last quarter, snapping a streak of quarterly sales declines. Shares of Stellantis up better than 8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, Alexis, thank you so much. You are listening and watching Bloomberg Business Week Daily. Well, if you think of satellites in space, you often think about Elon Musk and SpaceX, and yet there are a few other players in the space, among them AST Space Mobile. Shares of the company, man, they are taking off this week, up about 30% in the past 2 days, hitting an all-time high today, up 210% year to date. It is a nearly it's more than $23 billion market cap. It's a wireless telecom company deploying satellites in space to be accessible for smartphones. And just yesterday, Barclays raised the firm's price target to $60 a share from $37 and keeps an overweight rating on the share stock at 65 and change. Delighted to have with us Scott Wisniewski. He is president of AST Space Mobile, as we said, joining us from Boston. So great to have you here with us, Scott. You've got to be busy. It sounds like you're super busy. If I do a search, there's like various press releases coming out. Your Bluebirds satellites, 8 to 16, they're in various stages of production. My understanding is you guys have planned launches every 1 to 3 months on average this year and into next year. You're on track to complete 40 phased arrays by early next year and expect 45 to 60 satellites in orbit by the end of 2026. Tell me if I've got it all right, and tell us about this build out and capabilities and who ultimately is signing up to use it.
Well, thank you for having us. Our company is entirely focused on this opportunity of providing wireless access from space directly to the phone in your pocket. So to do this, we're vertically integrated. We build our own satellites, as you were just discussing. And we're based in Texas, here in the United States. And we're partnered with over 50 mobile network operators globally. That's how we go to market, because those are the folks who have the customers today, nearly 3 billion of them with the partners that we have. So we're focused on building this network out. We have about an 8-year history as a company. We have over 3,700 patent and patent pending claims on developing this new technology. It sounds far-fetched at first, talking to your regular small phone in your pocket from low Earth orbit, but that's the capability that we have. And this is really important, I think, for everyone, because there's 6 billion phones out there in the world. And as we know, we depend on connectivity so much, and it's very important that that phone works, whether it's convenience, peace of mind, or emergencies, and that's what we're focused on.
Starlink has partnered with T-Mobile. You have partnered with AT&T and Verizon. What can you tell customers about when they can actually expect continuous coverage nationally and perhaps even globally as a result of this partnership?
Right. And so we actually have investment from about 6 different mobile network operators around the world, as well as American Tower, who's the largest tower company in the world, and Google. And so in the United States, yes, like you said, we're partnered with AT&T and Verizon, both investors. And it's very important for us to have that close relationship, because the way we've built the company, our service is purpose-built for the mobile phone in your pocket, so that it just works. And the key there is to be deeply integrated with the operator and solve the operator's problems so they can deliver value to their customers. So we're organized today around getting service out next year. And we're currently have about 5 satellites in orbit. We just announced our plans to deliver number 6 and 7 to the launch pad. And as you said earlier, we're looking to put up 45 to 60 by the end of next year. And so this capability is just very important in the United States, but also around the world.
Well, tell us like who you anticipate or who are right now your biggest customers. I'm curious about commercial, residential, and I'm also curious about government.
No, that's right. And the important thing about our company too is, space has historically been a bit of a niche. If you live in a rural area or if you're on a plane and you want connectivity, there are nice little markets there. But this is about going to the mass market, the 6 billion mobile phones in the world. And so that goes for people who live, work, and travel, go in and out of coverage, who have greater ability to pay and want that convenience, as well as people who live perhaps in rural areas who don't have good connectivity or are willing to pay a little bit more a month to have cellular broadband. Again, this is not a text service. This is a cellular broadband service that we'll be selling. So that's our U.S. and really developed economy story. When you go around the world, there's many countries, though, where there's over 2 billion people today who don't have good 3G or better service on their phones. That means 2G or nothing. And so market by market, our service is valuable to the users and to the operators who support those end users. And then you mentioned U.S. government. That's been a relatively new add to our story in the last 2 years. But given the defense and space backdrop in the United States, this is something that's been front and center for us for the last 2 years, and we're already providing services to the U.S. government from orbit.
So, Scott, you probably know this little company called SpaceX that is out there. And I'm just curious, they did a deal with EchoStar. They became the first company to amass control of the satellite constellations in outer space, the launch infrastructure to deliver them there, and the potential for direct connections with mobile devices on the ground. So there's SpaceX. They're kind of the big behemoth there, the big player. There's you guys. There's Amazon.com. There's Global Star in the race for ubiquitous coverage. How do you plan to compete with Starlink, which already has thousands of satellites in orbit?
Right, and I think for the layman, it's important to distinguish between service to a dish that you might put on your house or on a car or on a plane, and then the phone in your pocket, right? We all have Wi-Fi at home, and then we have a cell phone for when we're on the go. So this is a market, the cellular market from space, that's brand new. You've seen some players start to enter it, including Apple and Starlink, but we've been at this for about 8 years. This solution is tailor-made, purpose-built for this solution. This is not an add-on new service for us. This is all we do. And that's why we've been able to garner such incredible support from network operators globally, like AT&T and Verizon in the US, Vodafone in Europe, Rakuten Mobile in Japan, Bell Canada, who we just announced cellular broadband testing from Canada today with, who's also an investor in us. So these are capabilities that have been developed with the network operator in mind. We are focused on making their network better so that they can deliver the value to the customer.
Are you not saying that you're competing with SpaceX and Starlink, that you're completely different businesses?
Well, we plan to go after the cellular user through the mobile network operator. They also have a strategy, as you said, that they're pursuing. But this is a market that we think is big. It's going to be worth tens of billions of dollars. There's 6 billion phones out of there out in the world that go in and out of coverage. And all of us know that feeling when we don't have a signal. You're helpless. And so we think that, and all of our over 50 network operator partners think that this is something that really enhances the value of the cellular plan that almost all of us have, certainly in the United States. And so that is a strategy that's good. That's going to be a nice, robust market. And we expect with our technology to be the leader in that because we're doing broadband from space.
You mentioned your work with the U.S. government over the last 2 years. Can you expand on that a little bit? What exactly are you doing for the U.S. government?
Yeah, so it's probably worth taking a step back. We currently operate the 5 largest satellites in low Earth orbit commercially. That low Earth orbit for the layman is, that's where the space station is. It's much closer to the planet. It's that lag you experience when you have a geosynchronous satellite. LEO solves all that. So we have the largest satellites deployed in low Earth orbit. The one we're shipping to the launch pad in 2 weeks is 3 times the size, over 2,400 square feet. So this is a unique technology that was developed to talk to the small phone and to do it well and to navigate crowded cellular airwaves. But it also has other applications. So with our U.S. government business, we see up to 10 different use cases, both communications and non-communications, that can support the U.S. government mission for defense. And importantly, one of the ones we're testing in orbit today has, and we've been doing it for over a year, has really strategic and valuable implications, including potentially for the Golden Dome project.
You also mentioned the notion that it's not just texting and being able to make calls. This is broadband delivered from a satellite to wherever you are in the world. That's the idea here. What is the experience using the phone in that environment, and how could that be different or similar than using a 5G LTE network? What are the speeds we're talking here?
That's right. And so from the beginning, and again, this is why we've been partnered with the network operators. They've been in the room with us testing and developing this tech for 5+ years. And what means is we're integrated on the back end. You remember, everyone's got a vision in their mind of calls in the old days where someone would be connecting the call and doing this. Well, that technology still exists in the world. It's just done with servers and with software. And so we're deeply integrated on that side of the business so that the phone just works. And so this is a native cellular broadband experience. The user doesn't know that there's a difference unless we want them to. And they can do text, calling, native calling, video, streaming, and they can do all these applications, and it feels just like you're using your phone on an LTE and 5G network.
So how fast? Like, what are we talking megabits per second here? Up and down?
So we've tested over 20 megabits per second to the cell in the past couple of years with our satellites in orbit. With the, there was mention of a spectrum deal a moment ago. We did our own spectrum transaction earlier this year, very similar type of spectrum, which is about 40 plus megahertz in the United States. And with 40 megahertz, we can deliver 120 megabits to the cell on the ground. Now, how you manage all the network traffic and how do you go to market is a critical decision we make with our partners around the world, including in the United States. But there's only one way to get broadband capabilities from space, and that's with a big satellite, and we have the biggest.
On the connection side of things, we're wondering too about the experience of being inside and outside. Anyone who's used like a Garmin head unit, for example, on a bike knows that you have to use it outside to get the cell signal. Can this coverage go inside buildings?
That's right. We can do one wall in. So some of the success factors for that are the fact that, again, we have a big satellite, and we also use low-band spectrum. That's part of our partnership with AT&T and Verizon, is combining some low-band spectrum that they have from decades ago. And so the low-band spectrum propagation characteristics are the best. And as you go into mid-band, even then, it's still pretty good. So we can do about one wall in, which means a building, means a car, means a plane.
Okay, that's what we were, because I think there were some folks like kind of messaging, what is he talking about? Hey, you mentioned that you guys have picked up spectrum, 40 megahertz. Do you want to buy any more if some comes up for auction?
Well, in the space world, there's two big bands of spectrum that matter. It's called L and S. We just purchased long-term access to the L band in the United States and Canada earlier this year, and that gives us a big chunk of spectrum, the biggest available in the most valuable wireless market in the world, which is the US. We also purchased an international filing that allows us to go around the world and pick up other pieces of spectrum for space. So we're pretty happy with our spectrum position now after those two moves. This, again, is consistent with our historical strategy of sharing cellular spectrum with the operators, but it gives us more lanes of traffic and the ability to do better services to more subscribers. So we like our strategy in both of those two bands that matter.
All right, we've got to run. So appreciate this deep dive. I hope you'll come back, keep us abreast of what you guys are working on and how things are going. Scott, thanks. Have a great rest of the week and weekend. Scott Wisniewski, he's president of AST Space Mobile, joining us here. When we come back, cutting edge tech and women's health.
It's 2:40 on Wall Street. I'm Alexis Christoforous. Stocks rallying to records despite day 2 of the government shutdown and President Trump threatening thousands of federal workers could lose their jobs. The Dow Jones Industrial Average is up 133 points right now. The S&P 500 gaining 10. The NASDAQ Composite up 95. Each of those indexes in record territory, as is the NASDAQ 100, up now 95 points. Gold, though, pulling back from that recent rally run at 38.47. Employers dialed back their hiring plans in September and also announced fewer job cuts. That's according to outplacement firm Challenger Gray and Christmas. This shutdown is delaying crucial federal economic data, including today's weekly unemployment claims and tomorrow's monthly jobs report. The artificial intelligence trade is alive and well. We've got shares of NVIDIA up 0.8% to a record high, and Tesla's shares are actually down about 4%, despite the EV maker posting record U.S. sales last quarter as customers race to buy EVs before the federal tax credit expired. And OpenAI's valuation soaring to $500 billion, topping Elon Musk's SpaceX to become the world's largest startup. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much. So I got to say, I love when we learn something new, and conformable decoders. Raise your hand if you know what they are when it comes to the human body. Tim's not.
I'm not raising my hand. I have no idea what you're talking about.
I did not, but I found out. We did some deep diving. It's all about converting the patterns of nature and the human body into beneficial signals and energy. Disruption, folks. We talk about it a lot. Yes, AI. Yes, crypto. Yes, other things. Yes, it plays into our next guest and what she's looking at. Our next guest joined the MIT Media Lab back in 2017 to establish and direct, at that time, a new research group called Conformable Decoders. So let's get to our weekly Business Week Women's Health segment, where we focus on key issues in developing technologies that are impacting the present and future of women's health around the world. Joining us right now is Dr. Janan Dadiran. She is Associate Professor of Media Arts and Sciences at MIT, Director of Conformable Decoders Research Group at the MIT Media Lab, and she joins us from Cambridge, Massachusetts. Dr. Dagdiran, it is good to have you here on Bloomberg Business Week Daily. You set up this lab, 8 years ago? Tell us what it's all about and the work you're doing.
Thank you so much, first of all, summarizing my work very elegantly. I really appreciate it, and great to be with you today. And my work at the Media Lab underlines conformable, malleable, flexible, and stretchable technologies that you can simply laminate any part of your body, all the way from breast to skin, which is the largest organ, or even implant in deeper regions in your body, such as brain. And we need to do that because imagine we live in an ocean of physical patterns, heart rates, respiration, neuronal activity, and all this information, biological language that I call, contains information inside. And we need to create technologies which can have intimate integration with your body part to extract this biological language and simply, like a Google translation, translate the biological language into electrical language so that we can create a smart interface between individuals as well as medical doctors who can do interventions in a smart and personalized way.
When you talk about interventions, what we're talking about is essentially helping people cure disease or live longer, healthier, happier lives. But specifically, the technology that you're working on, what does it address? Like, what is the hope that it solves?
Great question. First of all, this project, which is a conformable ultrasound technology to empower women to enable early breast cancer detection, is a multi-year project. It's not we do it like within a night or so. So I would like to emphasize the dedication, the efforts that we all put together with a diverse team of students, collaborators, and so on. And this technology is a technology which can be a part of your personal bra, and you can wear it, and while drinking your coffee, within sub-seconds, it can tell you any anomaly with pinpoint accuracy and with the coordination. And you may ask, why this is important? It is important because half of the population, which is women population, has a long-lasting problem that needs to be addressed, which is breast cancer. And current standard care of screening is mammography. And if Carolyn experienced this, it's a very painful technology.
It's not fun. It's lousy. I'm just going to put it out there.
It's not fun, exactly. It smashed very personal part of yourself. And plus, it doesn't work perfectly on me because I have a high breast density. I am 40 years old, so I need to have an adjunct technology, which is ultrasonography. And majority of the high-risk women, patients, like around 40 percentile of this woman, develop breast cancer in between 2 mammographies, which is called interval cancer. It's the most aggressive phenotype. But by the time you are diagnosed, your survival rate decreases to 22 percentile. So we say, imagine a world in which a technology can enable you to check your breast tissue regularly because it is safe and non-radiative, and you can use it simply at home, and within, again, sub-seconds, you can check the anomalies. And by collecting a lot of data, and also co-integration of the AI open new paths, by using lots of data, we can even estimate what will happen to your anomaly, or under medication, throughout the medication, how your breast cyst or tumor is changing over time. So we can give all this information on time and very effectively and safe. And with this, we can increase the survival rate up to 98 percentile, which is amazing.
Which is amazing. It's unbelievable. Dr. Dagdiran, so is this being used? Is it in test trials? Because it sounds like so logical. And I'm just curious, though, or is it expensive if we all have one of these devices? So that's where the problem is. Why aren't we doing this? And I know you've recently launched a women's health program, WHX. So you're looking at this and what can be done to kind of close some of the gaps that are out there between men and women. So something like this, are we using it, or is it just in a test phase? And how soon do we get kind of move towards this kind of diagnosing and really being on top of healthcare, women's or other?
Yeah, again, amazing question. The current situation with our technology, we are conducting our intensive human trials here at MIT as well as at MGH, where our medical collaborators are. And we are getting very promising results, and we publish multiple papers and patents. And of course, later on, one of the main goals of WHX that we launched newly at MIT Media Lab is to do translational aspect of the work. Of course, as a researcher, writing a paper, raising new generation of students, and the patents, writing the patents are great, but it's not enough. So we really want this technology to be real in the market and used by the people who are in need. And with our best estimation, of course, with the substantial financial support to run our experiments and do the trials, we hope this technology will be available less than 4 to 5 years. And
wait,
currently we are already
45 years. What?
4 to 5 years.
Oh, 4 to 5.
4 to 5 years.
Okay, I'm good with that. One of the things, I know Tim wants to address something, because we've been talking a lot about wearables and technology. That's, Tim, stuff that's already out there in the market.
Yeah, we've spent a lot of time talking about wearable technology, and specifically the Oura Ring, for example, increasingly popular, $11 billion valuation. Just very briefly, when will we start to see this technology in consumer tech?
For this kind of medical diagnosis or monitoring technologies, we definitely need FDA approval. And to do so, we also need, we need to collect many data. So specifically for our research, not only we do the human trials, we also get feedback from the human subjects, so that we can address the changes in our technologies, because adherence is an important aspect. Imagine you have the technology, it's in the market, but it's not used properly or not used by multiple populations. So our hope to make it affordable, which is extremely important and vital for us. And even now in the research
Doctor, we unfortunately have to leave it there. So let's try and continue this conversation in the future. This is Bloomberg.